doing amazing. So today we are going to start with our CMSL revisions. I hope you all are studying very well and your preparation is going amazing. So everybody, those who are watching it live, please drop me a message in the chat box and let me know if I am properly visible and audible to all of you so that we can start our today's session of CMSL revision. And I'm so excited today because this is something which has been requested to me by most of the students, and I received the messages from lots of you for CMSL notes and CMSL revision lectures. So trust me guys, you just stick with me and you're going to be very confident in this subject called CMSL. And basically I'll give you few information about this revision series, that this revision series is properly exam oriented. We will study from the exam point of view all the important topics, which are, we will do ABC analysis also, topics which are most important for your examination, and from which lessons you can expect most of the weightage. And at the end of this particular session we'll be also doing practical questions series, because practical questions also covers around 10 to 15 marks weightage in your CMSL examination. I can see a lot of people in the chat box. Yes, a lot of people are watching it live. Everybody just drop me a quick message in the chat box, everyone. Yes, hi Rakshita, hi Priya, hi Amulya, hi Pradyumna, hi Prajwal, hi Anand. How are you all? How are you all? It's so good to see you all after so long. Yes, everybody. Everybody, I want, see, this revision series, I want you to make most out of it. And for that, the most important thing is for you to participate. No matter how introvert you are, just drop a message in the chat box. I want to see every one of yours name in the chat box. Everybody drop a message in the chat box. Yes, hi Darshan, hi Prajwal, hi Chandan, everybody. Yes, Prajwal is fine. Great. Good afternoon, Rakshita. Okay, I want everybody of you to drop a message in the chat box before we start our CMSL revisions. Amulya, it's very good to see you, ma'am. It's very good to see you too. Keshav, hi Keshav, how are you? Vinita, hi Vinita. Yes. Uh, who else is watching? Who else is watching? Quickly drop me a message in the chat box. Hi, Sketch by Payal. Hi, Sanjana. Hello, everybody. So I can see your excitement there in the chat box. And guys, so let me give you a few details about our CMSL revisions. This CMSL revision is going to be a chapter-wise revision. We will revise one by one all the chapters of your CMSL. So we'll be starting with our lesson number 1. So we'll go like proper lesson wise, lesson 1, and then lesson 2, lesson 3, and then so on. So first we'll be completing your part A revisions, which is not very difficult, and part A, basically it is concise and short as compared to part B. So we can complete part A revision in the least time possible. And yes, everybody. And most important thing, most of you said, ma'am, CMSL material is very bulky. How to revise this? Trust me, guys, if you have already gone through your CMSL material, then these short notes are going to be very helpful for you for revising your subject called CMSL. Hi, Vandana. Hi, Alicia. Hi, Yulag. Hi, Aditya. Yes. Okay. Good afternoon, everybody. So, today, as we all know, without further ado, let's start with our today's revision series, and we'll be starting with your lesson number 1, basics of capital market. Okay. So, if you start this particular lesson, the first topic that you see is your what is financial market. What is it? Is it like a vegetable market? Just like in a vegetable market you can buy and sell vegetables, financial market is a marketplace where anybody, like anybody, yeah, anybody, like people, government, companies, they can buy and sell what? They can buy and sell financial instruments like shares, bonds, commodities, currencies, anything. You can purchase and sell. It's like a sabji mandi of shares, debentures. So here anybody, and this market where anyone, any public government can buy and sell. Basically, they can trade in financial instrument, they can trade in shares, bond, that is known as financial market. If this definition comes in your examination, you can easily slay in this definition by writing these particular pointers, that financial market is a marketplace where people, government, companies, they can buy and sell any shares, debentures, bonds, commodities, currencies, etc. So basically, in short, we can say it is a place where securities are bought and sold. Very easy, ma'am, settled in our brain. So the next topic that you have to do from your examination point of view is functions of financial market. Now, ma'am, functions of financial market. What are the functions of financial market? It's a very important question from your examination point of view, plus it can give you easy 4 marks in your examination. So lot of functions are given here, which we already know. So basically, the first function of financial market is it collects saving from the household and direct them in most productive uses. Imagine Soumya has some 1 lakh rupees saving. What she will do with that? If you will keep it in your pocket, after 10 years it will be same 1 lakh. But if you invest it in the stock market, in the financial market, you can double and triple your money. So what happens in financial market? It helps you to mobilize. Mobilize means move your savings from household to companies. I have extra saving. Reliance need that money. I can invest that money in Reliance and I can get returns. It's a win-win situation. So it helps you mobilize and channel your savings, means move savings from individuals to the companies. Price discovery, who decides share price? Not you, not me, not government. It is the demand and supply which happens through this particular financial market. So it helps in the discovery of price of shares, debentures and all the securities. Provides liquidity. Bro, I have shares, I have 100 shares of Reliance. Where can I sell those shares? In the financial market, in the secondary market. So I can convert it into cash if I need money. So it provides liquidity, means investors can easily sell their securities to convert them into cash. Next is basically your facilitate exchange, which we already know. Exchange means buying and selling of shares, which is your financial asset, shares, debentures. It facilitate exchange means it facilitates buying and selling of financial assets. Financial assets means shares and debentures. And the last one is your cost reduction. What do you mean by cost reduction? Cost reduction, basically this particular financial market regulated by SEBI. It provides you all the information about all the companies and all the stocks and all the assets. So it provides all the information about the securities, which helps in cost reduction. So these are the easy 5 functions of financial market. Ma'am, very easy to remember. Mobilize and channelize savings, price discovery, provides liquidity, facilitates exchange, cost reduction. Can we make a memory technique? Yes, my aunt punched little evil clowns. Oh my God, your aunt is so dangerous, ma'am. Okay, I am not dangerous. My aunt is dangerous. I can't do anything. My aunt punched little evil clowns. M for mobilize, P for price discovery, L for liquidity, E for exchange, and C for clown, C for cost reduction. This is your memory technique. Acha, I want you to just stare at this particular functions of financial market, because this is going to come again. Yes, it is like that particular fake friend of yours who don't leave you. So this will not leave you. This will come again. So I want you to look at it. 5 functions of financial market. In order to make most out of this revision series, you have to repeat along with me. Keep shouting, keep speaking, even if your family members get irritated. So keep speaking and speak this 5 financial functions of financial market with me. And if you're clear with it, drop all right in the chat box. Drop all right. I want to see all right in the chat box, so that you can increase my enthusiasm, which can increase your enthusiasm, which can improve your results. So it's a win-win situation. I want you to drop all right in the chat box. Yes, everybody. I want you to drop all right in the chat box. Everybody. Yes. I want you to drop all right in the chat box. Every one of you. Those secret watchers who have not sent a single text message till now, I want to see all right from you. Yes, all right. Tejaswini, Amulya, Aditya, Pradyumna, Rakshita, Priya, Prajwal, everybody is all right. Okay, you looks all right. So with this, can we move towards next topic? Yes, we can. So guys, now if you come to types of financial market in India, which is again a very easy marks giver, and don't think that only difficult question will come. Your question paper is going to be a mix of easy and difficult question. So types of financial market, there are two types of financial market: money market and capital market. Imagine money market as a short term market. If the words are not clear, I can zoom it for you. I hope it is clear now. Yeah, it's clear now. So types of financial market in India, the first one is money market and the second one is capital market. Money market, you can imagine as it as something which is, oops, oh wait, yeah. So money market is something which you can imagine as a short term market where you can borrow and lend money or you can invest for short term. Short term means you can say within a year or less than a year. Okay. So if you want to invest money for short term, within a year, you can invest in money market. If you want to invest money for long term, like a medium or long term for more than a year, then you can invest in capital market. Now guys, as we all know, this your subject called capital market. Capital market is regulated by SEBI, guys. Your capital market, this is your whole subject that we are going to study. It is regulated by SEBI. On the other hand, when we talk about money market, guys, money market, because it deals with the short term funds, which is very risky. In that particular case, it is regulated by not only SEBI but also by RBI, and mostly, you know, money market is regulated by RBI. So money market is regulated by RBI and SEBI. Capital market is regulated by SEBI. Now, if you talk about the nature in transaction, yes, usually in money market, there are small number of people buying in large amount. Like let's say one big player or one big investor is buying in crores. So a small number of players buy in large amount, but in capital market there are large number of people, millions and billions, and that's what government wants. Government wants more and more people to invest in capital market. Government wants to promote it, and it is getting promoted. People are investing in capital market, so there are large number of players. Instrument, very good difference between money market and capital market. What are the instruments in capital market? Ma'am, we already know, ma'am. Shares, debentures, stock, bonds. Usually, when you buy and sell shares, debentures, stocks, bonds of any company, it comes under capital market. So you can buy, and when you buy and sell shares, debentures, it is done through capital market. It is known as capital market. But there are some short-term instruments where you can invest for less than a year. For example, TVs, not that TB, treasury bills, commercial paper, CP, not Connaught Palace, certificate of deposit, COD, not cash on delivery. So TBs, CPs and CODs, these are the instrument in which you can invest for less than a year, and that's why they can be done through money market, which is regulated by RBI mostly. So next is why money market? It helps in monetary policy. Monetary policy deals with your overall government monetary policy. So it helps in monetary policy. Okay, yeah. And capital market is also known as barometer of the economy. Barometer means something which measures something. So if you want to measure your economy, how's your economy doing, then you can check that through capital market. So if our, you know, overall we say Indian market is going up or Indian market is going down. So if we say Indian market is going up, so we basically judge our Indian economy. So it is dependent on a lot of factors. One of the factors is capital market. So on the basis of market, we decide how is our economy doing, how is our country doing. If the market is going up, country is doing good. If the market is going down, country is doing bad. So it is known as barometer of the economy. It can come as a question. What kind of question can come from this? Capital market is also known as barometer of Indian economy, explain. They can simply give you a statement that capital market is also known as barometer of Indian economy, full stop, explain. So these kind of explain or simple statement questions can come in your examination, where you simply have to explain about capital market. You can give these pointers about capital market, and you can explain how they are the barometer of Indian economy. Okay, now there are two types of capital market, primary and secondary, which we are going to study in the next slide. And what is the risk? Of course, in money market, money is invested for short term, less than a year. So the risk is low. And in this case, the risk is high in the case of capital market. And return on investment, low risk, low investment. And in capital market, high risk, high investment, high return on investment. Risk hai to, I hope you complete this particular statement. Risk hai to, yes, you are right, ishq hai. So if there is high risk, then high return on investment. It's very easy to particular catch up with this particular functions of financial market, that is money market and capital market. Yes, money market and capital market. Once again, quick revision. Money market, short term. Capital market, long term. Less than a year, more than a year. Regulated by SEBI, regulated by RBI and SEBI. Instruments, shares, debentures, bonds, etc. Instrument, TBs, CPs, CODs. Okay, low risk, low investment, high risk, high investment. It helps in monetary policy. It is known as the barometer of the economy. Are we good? Are we good? Are we good till now? Are we good to move towards next slide? Drop all right in the chat box. Acha, not all right. All right is boring now. Drop okay, madam, in the chat box. Okay. Drop okay in capital in the chat box. Okay in the chat box if you're good till now, and we are good to move towards the next slide. Everybody. Yes. Everyone, are we good? Drop okay in the chat box. Yes, Pradyumna, I'll send it in the group right after our lecture. Yes, drop okay in the chat. The Priya is like, okay, very long, okay. Okay. So now, capital market, as we all know, it is also known as securities market. Now, what is the need of capital market and what are the functions of capital market? And if you can recall something, nostalgia, yes, this is same what we already studied. Guys, don't you think we already studied functions of financial market? My aunt punched little evil clowns. Same to same in my language, shame to shame. Okay, so my aunt punched little evil clowns. Remember, mobilize, it helps to mobilize your savings, it helps in discovery price, it provides liquidity to sell your assets, it facilitates exchange of a financial asset, that is shares and debentures. Do you remember these functions of financial market? So if the question comes on functions of capital market, you can just write the same answer, because capital market and financial market are one and the same. So it's like buy one get one free. Really? Yes. So what are the functions of capital market? First, it mobilizes savings into investment, copy paste. It facilitates discovery of price. It provides liquidity. Oh, I forgot to highlight the word liquidity here. Okay, it provides liquidity. It facilitates buying, selling, or exchange of securities. And lastly, it facilitates settlement of transaction. Through stock market, we settle transactions. We do settlement, means transfer money from one person to another, transfer money from buyer to seller, and transfer the shares or securities from seller to buyer. So it facilitates buying and selling and facilitates settlement. Even if you close your eyes, you can write these points from your own way. Again, many students ask me, ma'am, do we need to write like all the points as it is from the material? The answer is no. No, you are not a mind reader or photogenic memory. You don't have photogenic memory that you can remember everything. What you can do, you can understand the concept, you can learn the basic keywords like liquidity, like price discovery, like mobilize, and you can frame your sentence on your own, but make sure the meaning is correct and clear. So it's not necessary that you write the exact same work. You can reframe this in your own language without changing the meaning of the same. Okay, got it, ma'am. Now, what is the need of capital market? You know what? Buy one, get one. Remember, I said you these functions of capital market will not leave you. So if the question comes on need of capital market, then the answer is going to be Same. Why do we need capital market? Because it helps you to mobilize your savings into investments. If I have savings, I usually prefer stock market to invest my money, or mutual funds. If there is no stock market or mutual fund, I cannot imagine putting all my money in FDs. That will be horrible. It's safe, but it does not give you that return now. So it helps to mobilize your savings. Mobilize means move your savings and make it into investments. It is a good source of investment. For me, the best source of investment is stock market. That is capital market. It promotes overall country's growth. More and more people will invest in stock market. It will promote country's growth, economic growth. It will support technological advancement, and you can see where we are today. AI, god, technological advancement. Somewhere capital market is also a contributor, to for this technological and advancement, and today we are in the epic of technological advancement. It helps in risk management and improve corporate governance. Corporate governance means complying everything in the true and letter spirit in a good way, because SEBI is our regulator, so SEBI makes sure that everyone maintains corporate governance. So these are the importance of capital market. Yes, so basically functions of capital market will come. You can write the same points of functions of financial market which we studied in the first page. And regarding need of capital market, these are basic points. You can learn just few points like mobilize saving into investment. It is a good source of investment. It helps in economic growth. It helps in technological growth. It helps in corporate governance. Just these basic points. That's why we need capital market. Are we good till now? Are we good? Are we good? Yes. Okay. If we are good, drop high in the chat box. High. If you're high in energy, if you are high in energy, if you had your lunch like me, please drop high in the chat box. Everybody, yes, everybody, drop high in the chat box if we are good to move towards next page or the next slide of this particular lesson, capital market and securities law. Everybody drop hi in the chat box. Acha, now I want to see hi from those people who have not messaged till now. Now I want to see some new name. I'm like bored of new names. Don't take it personally. No, I'm just kidding. I want to see some new names in the chat box. Hi Anushka. Yes. Okay. Great, 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 great. Hi Vidya. Everyone is hi. Priya, Rakshita, Chandan, Tejaswini, Vandana. Great. Okay. So we are ready to move towards next slide, which is difference between primary market and secondary market. Okay. So I'm not getting if this is clear to you, or should I zoom? Just let me know in the chat box. Should I zoom it, or how much should I zoom it? If I zoom it this much, is it clear? I hope the text is clear to you. Make sure that your YouTube settings resolution is in high. Okay. High resolution. Okay, great. So without further ado, we are starting our next topic, that is difference between primary market and secondary market. Primary market and secondary market, it's like selling new products and it's like selling second hand products. Imagine a new car showroom where you can buy a new Hyundai car. That is a primary market. Imagine OLX where you can buy second hand car which is already purchased by someone else and which is already used by someone else, and that is your secondary market. Okay madam, this much is clear. It's a new market to buy and sell new securities, and it's a secondary market to buy and sell those securities which are already issued earlier. It's like a second hand security. Okay, everybody. Meaning, what is the meaning of primary market? It is a market for, I should change the color. Yeah. Issue of new securities by company or government, such as shares or debentures or securities. Shares or debentures or securities. So primary market is a market where companies issues shares for the first time, debentures for the first time to the public. So we issue basically new shares for the first time, new securities. We issue new securities for the first time to the public. Who can issue? Anybody, like usually companies or governments. So if companies issues new shares, then that market is known as primary market. Okay, so let's say Reliance is coming up with an FPO, further public offer. And Lenskart ka IPO recently came. Yes, how many of you subscribed that IPO or applied for that IPO? Let's say Lenskart is coming up with IPO for the first time, and I applied for Lenskart IPO. I bought shares directly from Lenskart, directly from company, that is primary market. Now I have Lenskart ka shares. Now I don't want it anymore. I want to sell it. I need some money. So I'll go to secondary market and I'll sell those shares to some Raju from UP in the secondary market. So what is secondary market? Secondary market is the market for buying and selling on securities that have already been issued by the company. So it's a basically market for second hand products. Those shares which are already issued by company, now you can exchange it among yourself. In the primary market, one party is company and one party is the subscriber. I am purchasing shares directly from the company. But in the secondary market, public are buying and selling among themselves. Company is not involved here in the secondary market. I hope this is clear to you all. Who are parties to transaction? In the primary market, investor uh, purchases directly shares from the company. So who are the parties to transaction? Parties to transactions are investors and company. But in the secondary market, investors purchase and sell among themselves. One investor purchase from another investor. Okay, how does fund flow? Fund flow means money. How does money flow? Money flow from investor to company. I purchase share from company, I give money to company. In this, fund flow from one investor to another. I purchase share from another investor, so I give money to him. Utilization of fund. Now, fund received by company become the capital of the company. Guys, since you are commerce student, you know share capital very well. You know share capital of the company. So the funds received by the company becomes a share capital of the company. So when anyone purchases the shares of the company and invest money, that is known as share capital of the company. And here funds received become the income of another investor. One investor, yeah, sorry, yeah, one investor purchases from another investor and then it becomes the income of another investors. Okay, now price. Who decides the price? So in this particular case, price is mentioned in the prospectus. At what price we will be issuing our shares, it is mentioned in the prospectus. When company comes up with the IPO or FPO, then price is mentioned in the prospectus. In secondary market, price is determined by demand and supply. According to demand and supply, price fluctuates. Price keeps on changing every second. We have watched stock market in our classes. Yes, ma'am. Yes, we have watched stock market in our classes. And we have seen that when the market is open, every second price fluctuates. Okay. Yes, madam. Next, primary market is also known as new issue market, and secondary market is also known as after issue market. Next is interrelation. It creates a merchandise for secondary market and it promotes the growth of primary market. Basically, they are interrelated to one another. If there is no primary market, there will be no secondary market. If you sell first time, then only you will be selling second hand, right? So it creates merchandise for secondary market, because if there is no primary market, there will be no secondary market. And the last one is, who are major intermediaries of primary market? Underwriters, merchant bankers, because they help in IPOs, they help in public issue. Who help in public issue? Underwriters, merchant bankers, they are the intermediaries. And who are the intermediaries here? Brokers, DPs, etc. Because when you want to sell your shares in the stock market, you need to open your demat account and trading account with brokers and DPs. So these are the intermediaries here. So you can just keep staring at this particular topic, primary market and secondary market, once again, everyone, once again, quickly. It is a market where new shares are issued, new securities are issued. It is a market where shares are bought and sold which were already issued earlier. Here company sells to investor. Here one investor sells to another investor. Okay. Now here fund flow from investor to company. Here fund flow from one investor to another investor. It is also known as new issue market. It is also known as after issue market. So if your question comes, let's say, explain after issue market, don't get confused. They are simply asking you to explain secondary market, because secondary market is also known as after issue market. Who are the intermediaries here? Underwriters, merchant bankers, etc. Here brokers, DPs, etc. Are we good? Acha, in case of any doubt, na, you can drop it directly in the chat box only. I'm having my eye on the chat box. So if you are having any kind of doubt or any confusion, you can drop it in the chat box. And if you are understanding everything and you are able to recall everything, drop what? Drop amazing in the chat box. Amazing is one of my favorite word. I keep using it again and again. So drop amazing in the chat box. Drop amazing in the chat box. Okay. Drop amazing in the chat box. Everybody, if you are understanding everything. Yes, if you are a Yeshas student, I'll send this particular PDF in the Telegram group. If you're not a Yeshas student, you can text me personally in Telegram, Instagram, anywhere, and I'll send you the PDF of this particular notes. Yes, drop amazing in the chat box, everybody. Everybody, drop amazing in the chat box. Oh, yes, I can see a lot of amazing. Teju, yes, Pradyumna, Amulya, Prajwal, Priya, and a lot of people are not texting. Maybe I should call you right now. But yes, I can see you. Yes, I can see you. Drop amazing in the chat box. Those who have not texted till now, drop amazing in the chat box. Vandana, yes, okay. So we are good to move towards our next slide, which is basically that topic, that initial topic of capital market is done, and now we are good to start with our participants of capital market, which is another important topic, which is easy also, you can say. So we are going to start next topic, that is participant of capital market, that is Q, and the first participant of capital market is QIB. Keshav is asking, ma'am, if we invest for short term in stocks, will it be capital? Yes, it will be capital market. Basically, the intention is key. You can invest. People do intraday trading also in the stock market, right? It is a capital market, but the intention is they offer you long term period also, where you can invest for long term also. You can invest for years also. But the money market is something where you can't invest for long term. They have a deadline like 90 days. It will get liquidated in 90 days. You have to sell it in 90 days. Are you understanding? So yes, you can invest for short term also, but basically the main intention is it gives you that flexibility that you can invest for long term. Keshav, I hope your doubt is clear. Hi Payal. Yes, I got to know. You are Payal. Yes, everybody, I want to see amazing in the chat box. I want to start next topic QIBs only after I see amazing from all the 40 people watching the lecture, 41 in fact. So from all the people watching this lecture, I'll start the next topic only if I see amazing in the chat box. Yes. Okay, so the next topic that we are going to do is QIB. QIB. QIB, because we invited B. That's why BI. Okay, bad PJ. But coming back to this topic, QIB. Okay. So, participants of capital market means which all people are basically involved in capital market, or they are the part of capital market. And the first one is QIB. Now, let's understand QIB as a big investor. They are big investor matlab they don't invest in like 1 crore 2 crore, they invest in 100 crores 1000 crores, like that. Huge investors, which people like us retail investors, we can't do that, such a huge investments. Okay, so they are like big investor, understand them as a big investor. Now usually now they are in the form of, usually they are in the form of large institutional buyers. They are also known as what? Large institutional buyers. I need you to memorize this particular word. If the question from QIB will come, you need to write this. What? They are large institutional buyers. Institution matlab they are in the form of some company or some institution. And large buyer means they buy in bulk. they buy in huge amounts. Okay, so they buy securities in bulk. So they are the large institutional buyers that buy security in bulk, and it is in the form of institution, not individual. QIBs are never a human being. QIBs is mostly a company or an institution, right? Let's example who can become QIB. Let's say bank or insurance companies or mutual funds. They are QIBs. They are the institution who buy shares in the company, who buy securities in the company in large amounts and in large quantities in bulk. Okay, example mutual funds. Mutual fund invest in companies in huge amounts, and they are the expert in investments. They do thorough research, detailed research and analysis before deciding in which company to invest. So QIBs are expert in investments. They are financially knowledgeable. They have complete knowledge about investment, about companies, and they do thorough research to invest in stock market. They do thorough research to invest in stock market, meaning it's not like if QIB is investing in any company, then that company must be good, like good. QIBs don't ऐसा आंख बंद करके ऐसा invest in any company. No, they do proper research before investing in any particular company. So basically they invest in large amount, this we already know, and they collect large amount of money from small investors and invest collectively on behalf of them. Men, what do you mean by this? Do you know mutual fund? Do you know mutual fund? Yes, we know mutual fund. So what is mutual fund? Imagine there is a mutual fund. Okay, so now mutual fund collect money from lakhs of machhars. Machhars matlab, sorry, machhar means lot of small chindi public investors. So these are like lot of small public investors. They invest small amount in mutual fund, and mutual fund collects money from crores of people, from lots of people, and then that money they invest in companies. That so mutual fund is a type of QIB. So why mutual fund is a type of QIB? Because it collects money from small people who cannot invest by themselves, so they can collect their money in a mutual fund, and then mutual fund can invest that money in any particular company by doing thorough research, detailed analysis, and after checking whether this company has a growth potential or not. Okay, so what we see here, these QIBs, they are a institution. They collect money from people and then invest it in the company. Okay, so they collect large amount of money from different people, from small investors like you and me. Imagine a bank. Okay, imagine a bank, HDFC Bank, or imagine a mutual fund, Axis Mutual Fund. Axis Mutual Fund is collecting lot of money from people like us. Okay, and Axis Mutual Fund is investing that money in Reliance. So this is a QIB. I hope it is clear to you. And lastly, they are registered with SEBI under SEBI QIB regulations. So SEBI have a separate regulations for QIB, which is SEBI QIB regulations. I hope all the points about QIB are clear. Very easy to write from the examination point of view. Just 4 points. Just 4 points, guys. If questions from QIB will come, I'm pretty sure you can definitely write. First point, everybody. They are large institutional buyers. They buy securities in bulk, and they are in the form of institution. They are experts. They are financially knowledgeable, and they do thorough research before investing. They invest in large amount. Now that large amount, from where does it come? They collect money from small investors and then invest in large amount, and they are registered with SEBI. I hope you can learn. I just wish it was an offline class so that I can just pinpoint any one of you and ask you to tell all the 4 points, but I can't do that right now because it's a virtual class. But imagine I'm doing that. Imagine I'm asking these 4 points to you right now and just start answering. Imagine I'm standing in front of you and just start answering these 4 points about QIB. I'd be very happy if you can tell all these 4 points without looking in the material or in the board. Okay, so the crux, they are large buyers. They invest in huge amount. They collect money from small investors. They are experts. They do research, and they are registered by SEBI. Arth, Aita, everybody. Now one more point about QIB. One more point about QIB. Who can become QIB? Oh my God. Who can become QIB? So basically, these people can become QIB. Some funds are there. Okay, so if you see, mutual fund can be registered as a QIB, venture capital fund, alternate investment fund, foreign venture capital investment fund, provident fund, pension fund, but only those provident and pension fund who have the minimum corpus of 25 crores, who have the minimum corpus of 25 crores, national investment fund, scheduled commercial bank, NBFC, non-banking financial company. SI means systemically important NBFC. Public financial institution, multilateral and bilateral financial institutions, insurance fund, insurance company, SIDC, State Industrial Development Corporation, and lastly FPI, foreign portfolio investor. So there's a memory technique to remember all the points, and the memory technique is, you are going to like it, FBI cuddles FPI. Now don't just go into your imagination, just come back here. FBI cuddles FPI. So F stands for funds, so you have some 7 points with respect to funds. B stands for banks and FI. So you have some 3 points relating to banks and FI. I stands for insurance. So you have 3 points with respect to insurance. And cuddles, C stands for corporation, which stands for SIDC. FPI, last point is your FPI. So FBI cuddles FPI. Oh, very easy to remember, ma'am. FBI cuddles FPI. Who can become QIB? FBI cuddles FPI. F for funds. Which all funds? You can just pinpoint certain funds. Mutual funds, venture capital, try to learn. Mutual funds, venture capital fund, alternate investment fund, FVCI, provident fund, pension fund with a minimum corpus of 25 crores. You have to speak along with me wherever you are, at your home, at your office, library, not library. You have to speak along with me, okay? National investment fund, these are funds. Next, banks and FI. Say banks, banks, NBFCs, and public financial institution and multilateral bilateral financial institution. Banks, NBFCs, public financial institution, multilateral bilateral financial institution. Insurance, say 3 points. Insurance fund set up by Army, Navy, Air Force. Insurance fund set up by Department of Post. Basically, government insurance fund. These are government now. Navy, Air Force, Department of Post. So insurance fund set up by Army, Navy, Air Force. Insurance fund set up and managed by Department of Post. Third is your insurance company. And lastly, SIDC and FPI. I hope it is easy to remember. I want you to remember and just shout out all the people who can be registered as a QIB. So these people, imagine banks, insurance companies, mutual funds, NBFCs, these people, when they collect money from public and then they invest in the stock market, they can register with SEBI as a QIB. Who can become QIB? Very easy, 5 marks. Very easy, 5 marks in your examination, guys. Who can become QIB? 7 funds, 4 banks and FI, 3 insurance, and then SIDC and FPI. Your memory technique is FBI cuddles FPI. Okay, try to remember this. Are you able to remember this? If you are able to remember who can become QIB, then drop what? Drop, ma'am, learnt in the chat box. Drop learnt in the chat box. If you are able to learn all these points of QIB, drop learnt in the chat box. Everybody, drop learnt in the chat box. Okay, one last time. Who can become QIB? Close your eyes and tell me, ma'am, who can become QIB? 7 funds are there. FBI cuddles FPI. F for funds. Mutual fund, VCF, AIF, venture capital, AIF, FVCI, foreign venture, provident fund, pension fund with a minimum corpus of 25 crore, national investment fund. And then banks, NBFCs, financial institution, and then insurance funds, insurance companies, SIDC and FPI. Ma'am, done, 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 done. Ma'am, done, done, are done. Okay. The next one we are going to do is a little heavy topic, but don't worry, because we are going to do it amazingly. As I told you, it is my favorite word. So anchor investors. Anchor investors. This is not the stage anchor. Oh, I am anchoring the program. Anchor investors are QIBs. So they are a type of QIBs, you can say. So who are anchor investors? Anchor investors, they are QIBs, but they invest in what? IPO. As you all know, IPO जैसे लेंस कार्ड का तो बहुत ही ज़्यादा sorry, during the lens card IPO, lot of what we say, what we say lot of conversations were there in the social media regarding whether it's a good or bad. So I hope you all know about IPO, and you do, because we have done ICDR chapter where we study about IPO. So these are QIBs who invest in IPO. And as you all know, when companies do IPO, they do in main board. And when small and medium companies, SMEs, they come up with public issue, they do in SME exchange. So there is a main board for big companies, and then there is SME exchange for chikkadu companies, small companies. Okay, so no matter whether you are doing IPO in the main board for big companies, or you are doing IPO for the SME, in the SME board for SME companies, in both the cases, if you are a QIB and you invest in IPO, then you are known as anchor investor. Who are anchor investor? You are QIB and you invest in IPO. You are QIB and you invest in IPO. You are QIB and you invest in IPO. Then you are anchor investor, and they invest in IPO before the public offer is open to general public. So in IPO, as we have learned, that before IPO opens for general public, it opens for these people, QIBs. So why this particular thing happens, as we all can remember, so usually when IPO comes, people don't have trust over the company. Like, people were scared to invest in Lenskart ka IPO, like dead scared, because the company was in negative profitability and all. They manipulated the accounts to show profit in the company. The point is to gain confidence of the people. Before company makes public offer, before company opens the public offer, one day before that, we offer shares to QIBs, and so that if QIB will purchase the shares of our company will have a good image. Public will have faith in our company कि अगर QIB खरीद रहा है तो अच्छा ही होगा. Like, if QIB is purchasing these shares or this company, then definitely this IPO is going to be good. So why company issue shares to anchor investors? To get public faith, to get public trust. Yes, okay. So bidding opens for them. For them means for anchor investors, one day before bidding opens for all. So before public offer opens, let's say public offer is opening today. What is today? 2nd December. One day before, on 1st December, we will offer shares to anchor investors, and same day we will allot shares to them. So bidding opens for them one day before issue opens for all, and shares will be allotted to them the same day of bidding. The day when they will do bidding, same day we will allot shares to them. That is before issue opens for everybody. And those shares will be locked in for 30 days. Locked in for 30 days means for the next 30 days, anchor investors cannot sell those shares. You have to remember, locked in, not 3 months, just 30 days, just 30 days. And lastly, why they act as a trust builder investor. So who are anchor investors? Once again, ma'am, anchor investors, they are nothing, they are QIBs who apply in IPO, who invest in IPO, so they are known as anchor investors. Those QIBs who apply in IPO, those QIBs who apply in IPO, so let's say mutual fund, Axis Mutual Fund is applying in IPO, so Axis Mutual Fund will be known as anchor investor. They are QIBs who invest in IPO before IPO is open for general public. One day before they apply and they get the allotment. They cannot sell shares for 30 days. Now, some investment requirement. Here comes the learning part. Here comes the learning part, everybody. I want you to be with me. If public issue is done on the main board of stock exchange, then some different requirements are there. If public issue is done on the SME stock exchange, SME means for small and medium companies, then different requirement is there. Okay, so if any company is doing IPO on main board, anchor investor has to apply for minimum 10 crore rupees. They can't apply for less than 10 crore. They have to apply for the shares of at least 10 crore. They have to apply for minimum 10 crore. But if it's a SME exchange, if any small company is making public issue in SME exchange, then anchor investor have to apply for at least 2 crore. Anchor investor have to apply for at least 2 crore. Everybody, main board mein 10 crore, SME mein 2 crore. Now everybody. Okay. Now, if the total amount that we have decided to allocate to anchor investor is only less than 10 crore, if the total amount that we want to allocate to anchor investor is less than 10 crore, then maximum 2 anchor investors can apply. If the total amount that we have to decided to allocate to anchor investor is more than 10 crore up to 250 crore, then 2 to 15 anchor investors can apply. Minimum 2, maximum 15. And if we have allocated more than 250 crore rupees ke shares for anchor investors, then 2 to 15 investors can apply for up to 250 crore, and additional 10 investors can apply for additional 250 crore or whatever is extra than 250 crores. I hope this is clear. And per investors ko we have to allot minimum 5 crore. Per investors, we have to allot how much? Minimum 5 crore ke shares. Minimum shares worth rupees 5 crore. Here also and here also. Once again, you need to learn this, guys. You need to learn this. Okay. If IPO is done on the main board, then anchor investors have to apply for minimum 10 crore. Every anchor investors, they have to apply for minimum 10 crore. Now, if the company has allocated up to 10 crore for anchor investors, then only maximum two investors can apply. If the allocation is 10 crore to 250 crore, then 2 to 15 investors can apply. If the allocation is more than 250 crore, then 2 to 15 plus additional 10 investors for additional 250 crore can apply, subject to minimum allotment of 5 crore per investor. Okay, now here comes the learning part. Okay, let's learn. 10 crore mein 2, 10 to 250 crores, 2 to 15, and then more than 250 crores, 2 to 15 plus additional 10 investors. Easy to remember. Now, if you can remember this, then you can easily remember this. If it's an SME exchange, everything is same, just the amount is reduced. In the case of SME exchange, if you apply for at least, in case of SME exchange, anchor investors have to apply for minimum 2 crore. Now, if the allocation is less than 2 crore, then maximum 2 investors can apply. If the allocation is more than 2 crore or less than equal to 25 crore, then 2 to 15 investors can apply. If the allocation is more than 25 crore, then 2 to 15 investors can apply plus additional 10 investors for additional 250 crores. Is this clear? Is this clear? So if company wants to allot only 2 crore to anchor investors, then maximum 2 investors can apply. If company wants to allot more than 2 crore but up to 25 crore to anchor investors, then 2 to 15 anchor investors can apply. If company wants to allot more than 25 crore to anchor investors, then 2 to 15 plus additional 10 investors can apply. Now let's try to learn. See, if you will compare this, the right hand side is same. Okay, only in the left hand side, here there is 10 crore, here there is 2 crore. Here there is 10 to 250, here there is 2 to 25. So instead of 250, you can just remove one zero and you can make it 25. Here there is more than 250, here there is more than 25. So if you compare it, it will become very easy. So this is like copy paste, only replace 10 with 2 and 250 with 25. That's it. Rest all is same. Okay. Rest all is same. I hope this is clear. Can you remember this? Yes, everybody. If you can remember this, then drop um, drop Bahubali in the chat box. If you can remember this, then drop Bahubali in the chat box. Yes, guys, if you can remember this, drop Bahubali in the chat box. Can you remember this? Yes, ma'am. Here also in this case, minimum allotment per investor should be 5 crores. Minimum investment per investor should be 5 crores. I hope we are done with this. Yes, everybody. Okay. Now, QIB almost done. One last point about the QIB is that out of total amount allocated for QIBs, only 60% can be allocated to anchor investors. Whatever amount company wants to allocate to QIBs, out of total amount of QIBs, only 60% can be allocated to anchor investors. For example, if company has decided to allot 100 crores के securities to QIBs, then only 60%, matlab only 60 crore के shares can be allotted to anchor investors. If company have allocated 100 crore for QIB, then iska 60%, maximum 60 crore can be allocated to anchor investor, and out of total portion of anchor investor, 1/3 will be reserved for mutual funds. Mutual fund is also a type of anchor investor. So out of total portion reserved for this anchor investors, that is 60 crore, 1/3 of this means divide by 3 is equals to 20 crore will be reserved for mutual fund. 1/3 of this, 1/3 of this amount, 1/3 of what is reserved for anchor investor will be reserved for mutual fund. So if we are going to allocate 60 crore to anchor investor, then 1/3 of this means divide by 3, 20 crores we will reserve for mutual funds. Allocation will be done on discretionary basis, means it is up to company how much to allot and whom to allot. That's all about QIB. Sorry, anchor investor. That's all about anchor investor. I hope we are done with anchor investor. That's all about anchor investor. Everybody once again, okay? So we are doing a technical topic, and everybody, anchor investors, they are QIB who applies in IPO, and for them bid open one day before bid opens for everybody else. They are allotted on the same day. Their shares are locked in for 30 days, and out of total QIB ka portion, only 60% can be allocated to anchor investors, and out of anchor investors ka portion, only one third will be reserved for mutual fund. That's it. Now, if you are applying on main board, you need to apply for minimum 10 crore. If you are applying on SME, you need to apply for minimum 2 crore. Okay, and then this table, if company allocated only 10 crore, 2 anchor investors can invest. If company allocated 10 to 250, 2 to 15 investors can invest. If company allocated more than 250, 2 to 15 plus additional 10 can invest. And same way, in case of SME, just replace 10 crore with 2 crore and replace 250 crore with 25 crore. Are we okay? Are we okay? If we are okay with this particular topic and we can learn this thing right now, right here, yes, drop Bahubali in the chat box. Yes, Pradyumna, Keshav, Yulux, Amulya, Vinay, Jivan, Teju. Yes, everybody. Okay, so we are good to move towards our next topic, which is your FPI, foreign portfolio investors. Foreign portfolio investors. Very easy topic to cover. Now, foreign portfolio investors are foreign people. Name itself suggests they are not Indian, they are foreign. Justin Bieber, remember? Okay. They can be individual or they can be institution. Individual means human being, Justin Bieber. They can be institution like foreign bank, for example. Okay, so they are foreign individual or institution. Secondly, they invest in Indian stocks. Okay, foreign portfolio investors means they are foreign people, they invest in Indian stocks, and they have to get registered with SEBI under SEBI FPI regulation. Easy peasy, 3 points. If question comes on FPI, can you write these 3 points? Very easy, ma'am, we can write. They are foreign individuals or institution, they invest in Indian stock market, they are registered with SEBI under SEBI FPI regulations. Very important. Two types of FPI, category 1 and category 2 FPI. If you can remember the memory technique that I told you during the lectures, remember our real friend and fake friends. Can you trust your real friend who is like genuine and real to you? Yes, you can trust them. But your fake friend who are good to you, but they are not that trustable. They are not that trustable. You cannot rely on them. So that is your category 1 and category 2 FPI. Now, who all comes in category 1 FPI? Category 1 FPI mein these 4 people will come: government related people, governments, financial entities, some funds, and some entities from FATF member companies. Okay, now let's see one by one. Who will come in the category 1 FPI? Who will come in the category 1 FPI? The first will be your government related, like foreign governments, foreign banks, central banks, sovereign wealth funds, multilateral organization, or any other agencies which is owned 75% by government. So basically, these are government related bodies like foreign banks, central banks, foreign wealth funds, sovereign wealth funds, multilateral organization. Multilateral means it is a organization of multiple countries, multilateral organization, and any other agencies owned 75% or more by government. These people, if they invest in Indian shares, it is trusted. We can trust on them because they are regulated by foreign government. They are highly trusted, so there is less risk. Okay, so they are government related people. If they invest in Indian stock market, they are known as FPI. Secondly, regulated financial entities like foreign banks, foreign insurance companies, AMCs, asset management companies, investment manager, investment advisor, portfolio manager, brokers. These are intermediaries, kind of. We all know these are intermediaries: investment manager, investment advisor, portfolio manager, broker. So these are known as financial entities. So if foreign financial entities, foreign financial entities, what's wrong? Okay, something is wrong. Let's leave it. So if foreign financial, these are financial entities like banks, insurance, investment manager, investment advisor, portfolio manager, broker. All these are financial entities. If they invest in Indian stock market, it will be known as FPI. It will be known as category 1 FPI. Third is some funds like foreign pension fund and foreign university funds. So two funds are there: pension fund and university funds. Fourth is, you need to take some closer look here. Fourth is your entities from FATF member companies. Entities from FATF member companies. Now, countries. What do you mean by FATF? Financial Action Task Force member countries means there is a international scheme called Financial Action Task Force. Now, in that, many countries are a part of it. Okay, so those countries which are a part of FATF, they are known as FATF member countries. Now, from these countries, if there is any regulated fund, they will come in category 1 FPI. Let's say Pakistan. Can we blindly trust on Pakistan? No, we can't trust on Pakistan. So, if any fund from Pakistan will want to invest in India, we will not put them in category 1. They will go to category 2. First of all, whether we'll allow them to invest or not, that's a question. So, only which countries will come in category 1 FPI? FPI means foreign investment. Foreign people are investing now. So only those countries we will take which are a part of FATF, Financial Action Task Force member country. Now, even in those countries, if there are regulated funds, okay, we can trust them. They will come in category 1. So it's like all the good qualities we are putting in category 1 and all other we are putting in category 2. Okay, regulated funds, we can trust them. We can blindly trust them. They are safe. Yes, they will come in category 1. Secondly, unregulated fund will come only if their investment manager is regulated. Someone should be regulated. Okay, so even unregulated funds, even even unregulated funds will come here in this particular category 1 FPI if and only if their investment manager is regulated. And third one, those entities, now you need to literally have a closer look. Let's say there is a foreign entity. Let's say there is a foreign company whose investment manager is whose investment manager is from FATF member country. Okay, secondly, takes all the responsibility that if anything bad happens, I will be responsible. Simply he's taking all the responsibility, and either he is registered as a category 1 FPI or he in that 75% of the ownership is taken by these entities or these regulated fund, then even they will come in category 1 FPI. Once again, those companies whose investment manager is registered as a category 1 FPI, even those entity will be category 1 FPI because their investment manager is registered as a category 1 FPI. So those entity whose investment manager is registered as a category 1 FPI, then those entities will also be considered as a category 1 FPI. Or else those entities whose 75% is owned by these entities or these regulated fund, then even those entities will be considered as a category 1 FPI, provided the investment manager takes all the responsibility. And lastly, any university fund from these countries, FATF member countries, Any university fund which is in existence for more than 5 years. They need to be in existence for at least 5 years. Who are in existence for minimum 5 years, they'll be considered as category 1 FPI. Okay, let's do it again. Let's do it again, everybody. Category 1 FPI, they are the more trusted people. Basically, they are regulated by foreign government, so we can blindly trust on them and we can allow them to invest in India. So government related, like central banks, sovereign wealth funds, multilateral organization, or any other agency which is 75% owned by government. Foreign financial entities like banks, insurance, investment manager, AMC, investment advisor, portfolio manager, broker, funds like pension fund, university fund, and regarding from FATF member countries, regulated funds, unregulated funds only if their investment manager is regulated. Any other entity only if their investment manager is either registered as a category 1 FPI or their investment manager is owned 75% by this or these regulated funds. And lastly, those university funds which are in existence for more than 5 years, you need to go through it at least 2-3 times and then it will settle down in your head. I'm pretty sure about it. Now coming to category 2 FPI. Category 2 FPIs are those FPI which are not blindly trusted. They are like that fake friend whom you cannot trust blindly. Okay, basically they are not regulated by foreign government. So if they are not regulated by foreign government, we need to check before allowing them to invest in India. So that is category 2 FPI. They are not tightly regulated, so they are less reliable. So all the good quality people are in category 1, rest all are in category 2. You can see who are in category 2. Mostly those funds which are not in category 1. Automatically we are simply saying that those funds which will not come in category 1, they will automatically come in category 2. Next, unregulated funds. Unregulated means those who are not regulated by foreign government. Next, companies, families, individuals. Individual. Justin Bieber, bhai, if Justin Bieber wants to invest in Indian stock market, he will come in category 2, not category 1, because he is not regulated by foreign government now. Are you understanding? Like American government. So individuals, human beings, families, companies, like a normal company. Okay, so companies, families, individuals, unregulated fund, and those regulated fund which are not covered in category 1, and charitable organization like NPOs and all, they will come in category 2. Easy peasy. Easy, ma'am, easy. Who will come in category 2? Individuals, families, companies. Let's say there is one very rich family, just like Ambani family is very rich in India. Let's say there is one very rich family in UK. They want to invest in Indian stock market. They will come in category 2 or category 1. They will come in category 2. Families, companies, unregulated funds, regulated fund which are not eligible under category 1, and charitable organization, they will come in category 2. Rest all is done, and that's all about your FPI. I hope this point is clear to you. Now that's all about FPI. Everybody, please let me know if this topic is clear to you, FPI, and can we move towards another topic? Yes, everybody, can we move towards another topic, everyone? So FPI means they are foreign individuals or institution. They invest in Indian market. They are regulated by SEBI FPI regulations. Two types of FPIs are there, category 1 and category 2. Category 1 are basically some government related banks, sovereign wealth funds, multilateral organization, and agencies owned 75% by government. Financial entities like banks, insurance, funds like pension and university funds, entities from FATF member countries. Who will come in category 2? Individuals, families, corporates, unregulated funds, regulated funds, and charitable organization. If we are clear with FPI, foreign portfolio investors, drop all right in the chat box. If we are clear with this particular topic of foreign portfolio investors, drop all right in the chat box. Drop all right in the chat box. Yes. If we are clear with this particular topic, drop all right in the chat box. Yes. I can see a lot of all right here. Prajwal, Rakshita, Priya, Kiru. Who's Kiru? Oh, this is Kavya. Okay. Teju, Jeevan. Yes, everybody. Okay. I can see a lot of all right in the chat box. Now moving towards the next, I don't know what happened with this. Oh yes, it's clear now. Now moving towards the next particular topic, which is your AIFs. AIF is a very easy topic. AIF, alternate investment fund, and very quickly we'll be doing this. Just like mutual fund. What does mutual fund do? Mutual fund. What does mutual fund do? Mutual fund collect money from lots of people, from lots of people, from lots of public, and then invest in stock market or invest in a particular purpose. For a particular purpose, usually they invest in stock market. That's what mutual fund does, right? Mutual fund collect money from a lot of people and then invest in stock market. Same is your AIF. AIF collect money from people and then invest for some purpose. But the main difference between mutual fund and AIF is that mutual fund is a public fund. Public fund means open for all. Anybody can invest in mutual fund. I can purchase any mutual fund I want. But AIF is a private fund. Some people privately pool money together, make a fund, and then they invest for a particular project. That is your AIF. So it is a private investment fund. Private investment fund means not open for all, not open for public. Only some rich people. Imagine some Ambanis and Adanis and Tatas and Birlas making a fund together, these 4 or 5 people contributing huge amount and making a fund and then investing for a purpose. That's AIF. Simple, very simple. Yes ma'am, done, understood. What do you mean by private investment fund? What do you mean by AIF? AIF is a private investment fund. Private means not open for all, only few people, like HNIs. HNIs means high net worth individuals, big companies or large institution, rich people, you can simply say rich people. Exam mein don't write rich people, exam mein write HNIs or big companies or big institution. They pool their money together, make a fund, and then they invest as per a pre-decided strategy. So simply some rich people, HNIs, big companies, collect their money together, bring their money together, make a fund, make a private fund, and then invest as per the pre-decided strategy. That's AIF. So if you will see the definition of AIF, it is a fund that is established in India, of course, Indian fund, and that fund is in the form of either trust or company or LLP or body corporate, and it is a privately pooled investment vehicle. Privately pooled means not open for public. Few people privately collect money and make this fund called AIF, which collects money from investors. Those investors are basically small in number, few rich investors. They can be Indian or foreign investors. The investors of AIF can be Indian or foreign investors, and they invest according to the pre-decided strategy. They invest in according to the decided investment policy. It is not a mutual fund or CIS. Why it is not a mutual fund or CIS? Because mutual fund and CIS are public funds. It is a private fund. AIF is a private fund. Once again, which is in the form of either trust or company or LLP or body corporate. It cannot be in the form of partnership. Okay, so it is in the form of trust or company or LLP or body corporate. Now it is a private investment vehicle where some rich people, some rich investors, Indian or foreign, they invest money, they collect money together in the fund, and then they invest in accordance with the pre-decided investment policy. Now the most important thing that you have to do is what is included and what is excluded in AIF. What is included in AIF? It includes VCF, PE funds, debt funds, infra funds, hedge fund, commodity funds. So basically these are some of the examples of AIF. Venture capital fund, startups wala, they are also known as AIF. PE funds, private equity funds, they are also known as AIF. Debt funds, infra funds, hedge funds, commodity funds, all these are included in AIF. What is excluded in AIF? Very important, very important. What is excluded in AIF? Firstly, mutual fund CIS is not an AIF because it's a public fund. Family trust, ESOP trust, employee welfare trust, gratuity trust. Can you see a lot of trust here? Can you see a lot of trust here? Yes. Why this trust? Because they are regulated by Companies Act and they are regulated by some other law. So that's why they will not come in AIF. Some trust, family trust, because it is made for the benefit of family members. ESOP trust, employee welfare trust, gratuity trust. Why? Because it is made for the benefit of employees, not general public. It will not come in AIF because it is made for the benefit of employees. ESOP trust, employee welfare trust, gratuity trust. Family trust is made for the benefit of our family member, let's say child and etc. Next, SPV, securitization trust, fund managed by securitization company, holding company, or any other fund regulated by any other regulator. So basically, if any fund is not regulated by SEBI, it is regulated by RBI or any other regulator, then in that case it will not come in AIF. And lastly, SPV means special purpose vehicle, securitization trust and securitization company. Why? Because they are regulated by RBI. So that's why they will not be covered in AIF, because AIF is regulated by SEBI. So these securitization companies and trusts will not be covered here. So inclusion and exclusion. What things are not included in AIF? First of all, mutual fund and CIS. Everyone have to speak along with me. Which funds are not included in AIF? Mutual fund, CIS, okay, done. Family trust, ESOP trust, employee welfare trust, gratuity trust. Why? Because these are for the benefit of employee, and this is second one is for the benefit of family. And then some SPV, securitization company. Why? Because they're regulated by RBI, then holding company, and lastly any other fund regulated by any other body. Acha, what is included in AIF? Simply we know venture capital fund, PE funds, etc., etc., etc. So basically, if I have to sum up, what is AIF? It is a private fund where some rich people like HNIs and big companies, they collect money together and then they invest for a pre-decided purpose. Okay, they invest in huge amount. Now it is a private fund, it's not a public fund. That's why it is not a mutual fund or CIS. They are in the form of trust or company or LLP or body corporate. Now, one thing about AIF is your categories of AIF. Okay, so the next topic is your categories of AIF. There are three categories of AIF. Now remember, if you can remember what we did in the class. Can you remember what we did in the class? Yes, yes. What are category 1 AIF? They are nation builders. इनको लगता है कि देश को यही बचाएंगे. Just like stranger think kids think that they will save the Hawkins from Vecna. Same way, this category 1 AIF thinks they will save the nation. They will build the nation. Okay, so basically they try to invest. It's a fund which invests in kind of startup companies, SMEs, small and medium exchange, infrastructure projects, social beneficial projects, innovation. Basically, they try to invest in those areas which are desirable by government. So they are like they are trying to please government. Oh, we are investing in the those areas where you need us. So here we are saying that these category 1 FPI AIF, sorry, they invest in socially and economically beneficial funds. They invest in those areas, those companies which are socially and economically beneficial for our government and for our country. So they invest in areas desirable by government, like they invest in startups, small companies, infrastructure, social impact project, innovation, because this is where government need you to invest. Example of category 1 AIF. Best example of category 1 AIF is your venture capital fund, is your venture capital fund, VCF, because they invest in startups. SME fund, because they invest in small companies. Infra funds, because they invest in infrastructure. Social impact funds, because they invest in social projects which are beneficial for government, which are beneficial for public. These are like nation builders. We will build the nation. They invest in these areas which are needed by government. Example, VCF, SME fund, infra fund, social impact fund. All these are category 1 AIF. Understood, ma'am? Next is your category 2 AIF. Category 2 AIF are basically the one who are neither category 1 nor category 2. Those who will not come in category 1 and they will not come in category 3, then they will come in category 2. One correction. Category 1 and category 3. Those who will not come in both category 1 and category 3, then they will come in category 2. So basically they play safe. They are like, we don't want to take too much risk, and we don't want to care about government, we don't want to care about country, we want to make profit. They are like bhaan mein jaye sab kuch. They are like you know uh, they are like what, okay, I was thinking of a pun, but ignore it. Basically they are like, we don't care about country, we don't care about startups, we don't care about small companies, we don't care about infrastructure. We will invest in those areas where we will get profit. We just care about our profit. So best example is private equity funds. So usually they invest in like private equity, and they invest in like real estate, because this is where they get the most profit. So usually they invest in like real estate and private equity. So the example of category 2 AIF are private equity funds, PE funds, real estate funds, and debt funds. Okay, best example is PE funds and real estate funds. They invest to get return. Their only motive is, we will invest money, we will get returns, and we will say tata bye bye go. We don't care about government. We are not nation builders. We are not people pleaser. Okay, we will invest in private equity, we will invest in real estate, we will get our return, and we are happy. So example of category 2 AIF are private equity, real estate, private equity, real estate, private equity, real estate. Okay, now category 3. What is category 3? Category 3 FPI mean, defaulter people will come. Remember class mein I told you defaulter, khatron ke khiladi. Yes Amulya, khatron ke khiladi. So category 3 people, aggressive, they do aggressive investment. These people are like that ki even if they don't have money, they will take loan and then they will invest. Matlab they do leverage, they do they do hedging. Hedging means applying different strategies which are very risky to get some extraordinary returns. They are like, they don't play normally, they play extraordinary. So these people are very aggressive, they take too much risk, they take loan in order to invest. They take loan. This is known as category 3 AIF. Category 3 AIF is basically, category 3 AIF is basically, they follow high strategies. They follow some high strategies. They take borrowed money. Borrowed money means leverage. Leverage. They take borrowed money to maximize their returns, and they invest in derivatives. Derivatives like options, call, put. Derivative is very risky. Normal people don't do derivative unless and until they are ready to take the risk. Derivative, options, tradings, futures, they invest in derivative. Example, hedge fund, commodity funds. Example, hedge funds, commodity fund. Your question can come, give us examples of category 1, category 2 and category 3 FPIs. Once again everybody, category 1 FPIs are like the nation builders. Category 1 FPI, they are like the nation builders. They will invest in the area where government need us, for India, for the growth of India. They will invest in startups, SMEs, infrastructure, social impact project. Example, venture capital fund, SME fund, infra fund, social impact fund. Category 2, they just care about their profit. So they will play safe. They will invest in private equity or real estate. For example, PE funds, real estate funds. They are neither category 1 nor category 3. So they invest in those areas which are beneficial for them, and they don't invest in socially beneficial area. And secondly, they don't borrow money. But category 3, they are to super khatro ke khiladi. They take high risk and they follow high strategies. They take loan, borrowed money, and they invest in derivative. Example, hedge fund and commodity funds. Okay, category 1 ka example, venture capital funds, SME funds, infra funds. Category 2 example, PE funds, real estate funds. Category 3 example, hedge fund, commodity fund, hedge fund, commodity fund. I hope you can remember all the 3 categories of AIF. Category 1, category 2, category 3. If this is clear to you, if this is all clear to you, drop outstanding in the chat box. If this is clear to you, drop outstanding in the chat box. Everybody, all those who are watching, if this three category of AIF is clear to you, drop outstanding in the chat box. Everybody, and have a water. And I would like you to speak all these types of category 1, 2, 3 AIF where you're watching. Trust me, guys, speaking, subconsciously helps your brain to remember things. And I have experienced it myself. So instead of saying this in your, just without speaking inside your brain, try to speak it out loud. Try to speak this along with me. Just like I'm speaking, you speak at your home from wherever you are watching. Speak these three types of category AIF and try to revise this. Speaking helps you a lot in memorizing and learning. As a teacher, we are able to learn all the topics. Why? Because we keep on speaking this. In order to explain you, we have to speak on these topics, right? Automatically it gets settled in our brain because we keep on speaking on this topic. So speaking helps you a lot to remember. I would suggest you to please revise, by speaking all the topics. Okay. Yes, everybody. So we have got a lot of outstanding in the chat box. Rakshita, Priya, Keshav, Yulaks, Amulya. Still, I can see the Josh. Jeevan. Yes. Chandan. Pradyumna. Yes, everybody. Okay. So the next topic here we go is your venture capital fund, which is a very, very, like a very small topic. So venture capital means we all know it is a type of AIF. Which category of AIF, guys? Can you tell me? Can you tell me? Yes, you can tell me. VCF are which category of AIF? You got it right. VCFs are the category 1 AIF. So can we see it? Can we see it? Yes, we can see it. VCF are the category 1 AIF. Category 1 AIF means they pool money from lot of rich people like HNIs and all, and then they invest in some purpose. Where they invest? Since it's a venture capital means they invest in startups. Yes, you got it right. Venture capital means startup. They invest in startups. They invest in newborn babies, not babies, newborn companies. They invest in startups. So it is a fund. What do you mean by VCF? VCF is a fund which invests in startups or early stage privately held companies, very chikkadu private companies, newly made, newly born, early stages private company. In exchange of shares or ownership, in exchange they purchase shares of the company. They don't invest for like long term, but they usually invest for 3 to 5 years. After 3 to 5 years, when their money gets double or triple, they exit. They sell their shares and exit. Do they take control of the company? No. They simply provide money for the startups. That's it. So it is a type of category 1 AIF who invest in only and only startups, and early stage ventures. Okay, now, is it a private fund or a public fund? It is a private fund. Not anybody can contribute to this fund. Only some rich people like HNIs and big investors and big institutions like angel investors, like let's say Anupam Mittal, my favorite angel investor. So let's say HNIs, big institution, angel investors, they privately pool their money, make a fund called venture capital fund, and then through that fund they invest in startups. Okay, and they focus on areas like innovation, technologies, biotech, medical, etc. So usually they focus on those startups which are doing some innovation, which are doing some technological development, biotech, which are working on biotech, medical, etc. That's all about VCF, guys. You already know about VCF. Few points to remember about VCF once again. Okay, once again, few points to remember about VCF. तान्या मित्तल, बिग बॉस देखते हो क्या प्रज्वल? ठीक है, तो few points to remember about VCF, that it is a type of category 1. It is a type of category 1 AIF, and in this some people, private people like angel investors, HNIs, they pool their money, make this fund, and through this fund they invest only and only in startups and some early stage companies in exchange of shares. Usually they invest for 3 to 5 years and they focus on areas like innovation, technologies, biotech. That's it. We are done with VCF. Next is your private equity, and it's a very interesting topic. You know, people who are working in private equity, huge respect for them. Private equity is, again, it's not a public fund, it is a private fund. And can you recall something? Yes, we can recall something. Can we recall something? Is it a type of AIF? Yes, we can recall that private equity is a type of category 2 AIF. Can we remember this? Yes, we can remember this. Category 2 AIF. Private equity fund is a type of category 2 AIF. Now, if you can come here, private equity. Yes, everybody, along with me. Private equity, it is a type of category 2 AIF. Now, what's the difference between venture capital and private equity? So, simply venture capital, they invest in startups, new companies. Private equity, they don't invest in startups. They invest in mature companies which are already mature enough, which are already making profits, which have already started and doing well. Okay. So, private equity, they don't invest in startups. Where they invest? So, basically, they invest in operating company which are not publicly traded, that is unlisted company, operating but unlisted companies. They don't invest in listed companies. Private equity, one of the best example, Belgian waffle, sorry, Belgian waffle, you know, it's a private, sorry, it's an unlisted company. And in that, one of my friend who's working with a Marathon Edge private equity fund, it's a private equity fund, and he's working there, one of my friend. So he basically told me that their private equity fund invested in Belgian waffles, which is an unlisted company, which is operating company. It's not a startup. It's not a startup now. It's an operating company. So basically, private equity fund, they invest in operating companies, not a startup. Operating matlab they have already started and they are doing well, but it is unlisted company. Okay. Now, if we invest in a listed company, we convert it into private. We convert it into unlisted. So basically, if we invest in listed company, then we intend to make it private. We intend to make it private matlab ki usually we don't invest in listed company, we invest in unlisted company. But if we are investing in listed company, then we'll make sure that we convert this listed company into unlisted company. Next, guys, we know where do they invest. So basically, if you will see, VCF and PE funds are same technically, but the difference is that VCF invest in startups, PE invest in operating companies which are already grown up and which are unlisted. And if we invest in listed company, then we make it unlisted. Now, guys, next point. This PE funds, they find significant share ownership and take control over the company. Major difference between venture capital and PE funds. Venture capital, they just take 1-2% shares of the company. They don't take control of the company. But private equity, they usually take around 20 to 50% shares of the company, like a significant ownership of the company, and they take the control over the company in exchange of their investment. So let's say our private equity, Marathon Edge, we are investing 10,000 crore in your company in return of 50% share of your company. So we are taking like significant ownership, and we also take the control over the company. Acha, who invest in this private equity fund? Who invest? It's a private fund. It's not a public fund. Not anybody can put money in this PE fund. In this PE fund, only some rich people can invest money, like HNIs, angel investors, or big institutions like banks, insurance. So only this few rich people. Who are few rich people? HNIs, angel investors, and large institutions. They pool their money together and they make this fund known as private equity fund. And using this private equity fund, they invest in some mature companies. Okay. Now, that they do large amount of investment, of course, usually for long term. They don't invest for short term. So these PE funds, when they choose a company and when they invest in a company, they invest for long term. Usually they exit after IPO. They are like you only when after we have grown this company to the level of IPO, when your company will make IPO, then we will exit. So usually they invest for long term and they sell their shares, they exit only after IPO. Lastly, they get high returns on investments. As we all know, private equity funds may they invest in huge amount, and they take the control of the company also, so they get high return on investment. And few extra point, when they invest in any company, now it becomes illiquid. Illiquid means it cannot be easily sold. It's not easy. Private equity investment is a big step. Like once you marry, you don't prefer taking divorce very easily. Like it's a big step, right? So in a private equity fund, once you invest, it is not easy to be sold. So it becomes illiquid. Illiquid matlab cannot be easily sold. And sometimes they use debt also. Debt matlab they borrow money also to invest in the company. That's all about private equity, guys. And some comparison that I want to do. Venture capital, it is a category 1 AIF. Private equity, it is a category 2 AIF. Venture capital, they invest in startups. Venture capital, they invest in startups. PE, they invest in operating companies but unlisted companies. Okay. Now, venture capital, they invest for like 3 to 5 years, and these PE funds, they invest for like long term. Okay. And they exit usually after IPO. And these people, like they also invest good in large amount. These people also invest in PE funds, also invest in large amount. So this is basically about the venture capital and PE fund. Now, what we have to do is types of PE fund. There are three types of PE fund. One is your leverage buyout, LBO, one is your venture capital, and one is your growth capital. Very easy to remember. Types of PE fund, types of private equity fund: leverage buyout, venture capital, and growth capital. Now, what do you mean by venture capital, guys? Venture capital, we already know venture capital. They invest in startups. Don't you think you already know about venture capital? They invest in startups and early stage ventures. They invest in startups and early stage businesses. Now, ma'am, this too we already know. Ma'am, what about growth capital? Growth capital PE funds means they invest in those companies who are looking for expansion. Let's say Belgian waffle is very good and doing good business all over India. Let's say they want to expand in Dubai also. Now they are looking for business expansion. For that, Belgian waffle need money. Now who will give that money? PE fund. And this is known as this PE fund, which invest in such companies who are looking for expansion. They are doing good, but now they want to expand. So when we invest in such companies who are looking for expansion, it is known as growth capital PE fund. So what is growth capital PE fund, guys? Growth capital PE fund means we do some not too much investment, because it's already established company, we just want to expand. Minority investment in when we do in expanding business, when we invest in those companies which are expanding in the sense, let's say they want to enter new market. Let's say you want to start more outlets, you want to enter international market. You are selling in India, now you want to sell abroad also. You want to enter new market, you want to do some restructuring, you want to do merger, acquisition, takeover. You want to do these kind of restructuring or merger amalgamation, takeover, or you want to enter new market, or you want to expand. In such companies, when we invest, such PE fund is known as growth capital. We are doing good, now we want to grow more. Okay. And they usually don't take the control of the company. They invest small amount, take minor percentage of shares, but they don't take control over the company. So once again, such PE fund who invest in expanding business, that is growth capital PE fund. Such PE fund which invest in startups, they are known as VC PE funds. And such PE funds who take loan to invest, that is known as leverage buyout. As we all know, what is the meaning of leverage? Ma'am, we know leverage means borrowing money. Oops, yes, leverage means borrowing money, taking loan to invest. Taking loan. So when you take loan, when you borrow money to invest in any company, that is known as leverage buyout. Buyout matlab we are buying by taking loan. Okay. So when you buy a company, by taking loan, by borrowing money, that is a leverage buyout. And here you target mature companies, matlab who are already doing well and they are already generating cash flows. So with this, we are done with three types of PE funds. Once again, I'll repeat. Very easy to remember, guys. PE funds, three types of PE funds: leverage buyout, venture capital, and growth capital. See, Leverage buyout simply means we are using loan money. We are using borrowing to buy a company, and here we focus on mature companies who are doing good, who are generating good cash flow. Venture capital when we invest in startup. Growth capital PE fund when we invest in expanding business who want to do restructuring, who want to do merger amalgamation takeover, who want to enter new market. Khalas. If you understood PE fund, private equity fund, type type khalas in the chat box. Can you type khalas in the chat box, everybody? Yes, it sounds funny, but yes, khalas means khadam. Okay, like khadam, your topic khadam. Okay, so khadam means like over, done, completed. Okay, so if you have understood this particular private equity fund, type khalas in the chat box. Yes, Kiru is very happy. Okay, outstanding. Okay, yes, type khalas in the chat box, everybody, so that we can move towards our next point. Yes, if you are clear with this, type khalas in the chat box. Khalas. Yes, Amulya has written khalas. If you don't know the spelling, you can see Amulya's message. Yes. Okay, people. Okay, people. How are we doing? कैसा लग रहा है आप लोगों को? Share your feelings with me. How are you feeling till now? Ma'am, yaad aa raha hai. If you have already studied this, then you must be able to remember this. And I'm hoping that before attending this revision, you have at least gone through your study material once. In order to do this from the short notes, I want you to go through the study material once, which I already hope. So that's why I texted all of you. Just go through the study material once, and then we will do the revision from short notes. So I'm really hoping that you have gone through your. I know it's bulky, but it's important for your exam. Trust me, sometimes you have to get through the pain to get the reward. So you need to go through your CMSL material once, and then only you need to come for this revision. So I'm really hoping that you have gone through your material once at least. Yes, khalas everybody. Prajwal, Jeevan, Amulya, Pranjal, Kavya, Priya, Rakshita. Yes, everybody. Okay, Prajwal, Keshav. Okay, good, everybody. So now next topic is very chickadoo topics, very chickadoo topic, angel fund and HNI. So basically we know angel investors and HNI, they are similar points. So 2-3 points you have to learn about angel funds, some very basic points about the angel funds we have to do. Now angel funds, who are they? So basically the fund created by angel investors. Now who are angel investors? They can be HNIs, angel investors, or a group of rich people. So basically, when these rich people, let's say Anupam Mittal or rich people, angel investors assume them as rich people who have lot of money to invest, like lot of money. Imagine all the people who are coming in the Shark Tank. Okay, Alag Ghazal, okay, Anupam Mittal, HNIs, all the HNIs, rich people, angel investors, and groups, when they create a fund to invest, that is known as angel fund. Usually, angel fund invest in startups, so they are a type of VCF. They are a kind of venture capital fund. We have already done venture capital fund, so they also usually invest in startups. They also usually invest in startups, and angel fund basically is created by angel investors. It is created by angel investors. They invest in startups in exchange of debt or convertible equity. So usually they take like equity shares or convertible preference shares or convertible or debt. Okay, so usually in exchange of their investment, they invest in the startups. In exchange, they take either convertible equity or debt. And lastly, these are the earliest equity investment in the startup. Earliest matlab first investment in the startup. Usually in startup mein first investment is done by angel investors. Like you, if you see Shark Tank, many people, many companies come for their first investment, seed capital. So usually first investment in startup is done by angel funds, and they help companies to build their business model, to build their plans, and to give them advice without taking control. Anupam Mittal has invested in 300 companies. Is he controlling 300 companies? No, they don't control the company. They only give them advice. They only help them make their business model. That's it. So these angel investors, let's say Anupam Mittal invested in some company that came in Shark Tank, let's say Cinnamon Kitchen. So if Anupam Mittal invested in this business, Anupam Mittal will not take control over the company. He will only help them to build their business model, to build their plans, and to give them advice. So these angel funds or angel investors, they only help the startups to build their business models, plans, give advice without taking control. And They are a type of category 1 AIF. As we all know, angel funds, they are like VCF. They are like VCF only, like a venture capital fund. So they come in category 1 AIF. Okay. So you see here I have also written they are similar to venture capital but smaller in size and run by individual. So usually what is the difference between VCF and angel funds? They are same only. The only thing is angel fund is little smaller in size as compared to VCF, and VCF may companies and institutions can be there, but institutions and companies can invest in this fund. But in angel fund it is usually like an individual or a group of people. So like one rich person or 2 3 rich person, they make a fund known as angel fund to invest in startup. So once again, angel fund, once again everybody, angel fund, it is created by one rich person or 2 3 rich person, angel investors or group of them. They invest in startup. They are usually the first investment in the startup. In return they take equity and they only give advice and help in developing business model. They don't take control. They are category 1 AIF. That's it. That's all about angel funds. I hope we are clear about angel funds. If you are clear about angel funds, the next topic is your HNIs, high net worth individual. And who are your HNIs? In short, I call them rich people, simply rich people. Who are HNIs? They are wealthy people. हाँ, exam में rich word थोड़ा सा अजीब लगेगा, but you can write wealthy people, like a wealthy individuals. Who are HNI? They are wealthy individuals and who are distinguished from others based on their investable surplus. Now, what do you mean by investable surplus? The extra amount that I have with me, which I can invest, is known as investable surplus. So, let's say if I have 2 crore rupees to invest, 2 crore rupees extra, which is not needed for my day-to-day expenses. Apart from that, I have 2 crore rupees extra to invest, or let's say 25 crore rupees extra to invest. ठीक है, तो 2 crore I should say. In that case I will be called as high net worth individual. मतलब apart from your whatever expenses you have 2 crore extra which I can invest in other companies. That is known as investable surplus. So if I have more than 2 crore investable surplus, usually I'm considered as HNI. But again, this HNI is not defined anywhere. So this definition can change from person to person. Usually banks, when they categorize HNIs, they take 2 crore as a threshold, that if you have more than 2 crore extra money to invest, then you will be called as high net worth individual. So the day, imagine the day when you earn sufficient money that you have 2 crore extra to invest, you will become an HNI. Okay, high net worth individual, which we call wealthy people. So they are distinguished from others on the basis of their net worth or on the basis of their investable surplus. There is no specific definition of HNI, but usually individuals with more than 2 crore investable surplus, they are considered as HNI. Now if you have less than 2 crore but more than 25 lakhs investable surplus, you are considered as emerging HNI. So if you have 25 lakhs to 2 crore investable surplus, you will be known as emerging HNIs. And lastly, this is all about HNI. That's all about HNI. Now once again, HNI means rich people, wealthy people who have more than 2 crore investable surplus. Acha, if I have less than 2 crore, more than 25 lakh, then I am emerging HNI. I am upcoming HNI, future HNI. And lastly, whenever any IPO comes, if you apply in IPO for less than 2 lakhs rupees, usually you are considered as retail investor. See, different IPO comes, you apply for different IPO. So if in a single IPO, let's say Lenskart ka IPO came. So in the Lenskart ka IPO, I applied for 2 lakhs ke shares, more than 2 lakhs, then I'll be called as HNIs. But if I applied for, let's say, even if I'm HNI, but if I applied for less than 2 lakh ke shares, then I'll be called as retail. I'll be categorized as retail investors. Usually, now this is generally, it is not defined anywhere, but generally companies use this particular threshold that if in an IPO you apply for less than 2 lakhs rupees, then you will be categorized as retail shareholders. That's all about HNI. Once again, HNI, rich people with more than 2 crore investable surplus. Ma'am, more than 2 crore but less than 25 lakh, then you are emerging HNI. Lastly, if you apply for less than 2 lakh in IPO, you will be categorized as retail shareholder. That's all about HNI. Please let me know if till now it's all clear to you. I need you to go through this PDF once again immediately after our session will end. So as soon as our session will end, I'll send this PDF in the Telegram group, and I need you to go through it once again on your own with full focus. Acha, till now, if everything is clear, drop me a message in the chat box. Till now, if everything is clear, drop me what in the chat box? Drop me understood in the chat box. If till now everything is clear, drop me arthaita in the chat box. Drop me arthaita in the chat box. I too, nay, drop I too, sorry. Drop I too in the chat box. If everything is clear till now, drop I too in the chat box. Yes. Okay, guys. Now we'll be moving towards our next topic, which is Fudusa topic. Like, very easy. Don't get offended by my words. I just take it as a joke. Okay. So, guys, pension funds. Pension funds. What is pension funds? As we all know, ma'am, pension fund. We all know, just very easy topic. It is a fund, retirement fund for the benefit of employees. So this is created by employer for the benefit of employee, which he can get during his retirement or when he leaves the company. Okay. And in this, money is contributed by both employer and employee. So there will be employer's contribution and there will be employer's contribution. That's all about pension fund. That's all. Pension fund, very fudusa chotusa topic. Done, ma'am. Pension fund done. What do you mean by pension fund? Very easy and small topic. Pension fund, it is a fund where employees, sorry, it is a fund where employees retirement fund is saved. Matlab, it's a basically employees retirement fund ki whatever money we put in this fund, it is for the benefit of employee. He will get when he retire from the company, and this fund is, in this fund is contributed by both employer and employee. Employer contribution, employer also contributes to this fund, employee also contributes to this fund. Now, who manages this fund? In some cases, if it's a big company, they do in-house management of their funds. In some cases, these pension funds are managed by financial intermediary like asset management companies. Okay, once again, who manage pension funds? Which is created by companies. In some case, if it's a large company, sometimes they do in-house management. In some cases, it is managed by financial intermediary. For example, there is one pension scheme called National Pension Scheme, NPS. If you have heard about it, NPS, it is managed by, there is an AMC called UTI AMC. It's a government, you can say public body, UTI AMC, UTI AMC, UTI. The name of that UTI AMC, the name of that AMC company is UTI Retirement Solutions. That's it. Now, these pension funds, let's say employee will retire after 10 years. So till 10 years, what they do, whatever money is there in the pension fund, they invest in the stock market. So these pension fund, they invest whatever fund is there in the shares, debentures, bonds, or stock market or government project. That's all about pension fund. Once again, pension fund is employees retirement fund created by employer. Fund is contributed by both employer and employee. It is managed by in-house in some large companies. Some cases it is managed by AMC. For example, NPS is managed by UTI AMC. And lastly, the funds in this pension fund is invested in stock market. That's all about pension fund. Are we clear till now? We have done like a lot of topics. Are we clear till now? So basically, pension fund is like an employee welfare fund. Angel funds is like angel investors who invest in startups. Okay, HNIs are like rich people, more than 2 crore, more than 2 crore. Okay, and private equity is like they invest in mature companies, operating companies, but which are unlisted and not public, and they take control over the company. However, venture capital, they invest in startups. They invest in startups. They don't take control over the company. These VCs are category 1 AIF, private equity are category 2 AIF. Then we did AIF. AIF means it's a private fund where few rich people like HNIs and all, they contribute money, make this fund and invest as per the pre-decided strategy. Examples of AIF: venture capital fund, PE funds, debt funds. We have already done. An example of what will not be included in AIF: mutual fund, CIS, because it's a public fund. Yes, family trust, ESOPs, trust, employee welfare trust, gratuity trust, because these are for the benefit of employees and families, SPVs and other cases. Now, types of AIF: category 1, nation builders. They are like startups, SME fund, infra fund. Category 2, they want their returns. Example: PE fund, real estate funds. Category 3, derivatives, options tradings, risky, hedge funds, commodity funds. After that, we did FPI. They are foreign people who invest in India. Now, category 1 में all the foreign registered people will come, good people, and category 2 में not so reliable people will come, who are not regulated. Category 1 में regulated entities will come, and category 2 में unregulated entities will come, like individuals, families, companies, unregulated funds, etc. And after that, we did anchor investors. Anchor investors, they are QIB, who invest in IPO, who invest in IPO, but there is some minimum deadline given that how many investors can apply and minimum how much they have to apply in the main board, in the IPO of main board and IPO of SME exchange. Before that, we did QIB. QIBs are large buyers who are experts, they are financially knowledgeable, they do thorough research before investing, they invest in large amount. Who can register as QIB? FBI cuddles FPI. These funds like mutual funds and all, banks and NBFCs, insurance companies, etc. So this we have done QIB, and before that we have done some basic topics like financial market, primary market and secondary market. Are we clear with all the topics that we did today? Yes, everyone. Are we clear? Are we clear with all the topics that we have done today? Everybody. The last topic is capital market instrument, which is pretty easy. That we will I want you to cover from the material, because it is a very very fudu topic. The last topic, if you can see, I'll just quickly cover the last topic. Okay. Now, acha, if everything is clear till now, I want you to drop all right in the chat box. If everything is clear till now, are we good till now? Are we good till now? Everybody understood everything till now? I wanted to drop all right in the chat box. Yes, everybody. Payal, Jeevan, Tejaswini, Teju, Rakshita, Pradyumna, Kavya, Mulya. I wanted to drop all right in the chat box. Now, one thing I want to mention. Okay, I'll mention it at the end of the lecture. Now, in the capital market instruments. Okay, in the next topic, capital market instruments. Okay. So, the last topic of this particular chapter, number 1, that is capital market instruments. First topic is equity shares and preference shares, which we don't need for revision, as this is the easiest topic which we can do on your own. What is equity shares? Basically, it represents the ownership in the company. Equity shares are two types: same voting right and differential voting right. And preference shares are basically which are not equity shares, and in that they get preferential treatment with respect to payment of dividend and repayment of capital. So equity shares and preference shares you can just go through on your own. And the second topic that is there is debentures. Now, what do you mean by debentures? Few points you need to just remember about the debentures, that just like equity shares are equity instruments, same way your debentures are your debt instruments. Okay, they are issued for fixed term. In that, company pay interest. So in debentures is kind of a borrowing. So it's a debt instrument. It represents borrowing. These few points you can write if the question comes on debentures. What do you mean by debentures? It represents borrowing. Okay, so debenture are the borrowing of the company. They are the debt instruments. And now there are some types of debentures that you need to do. Is first is CCD, compulsory convertible debentures, which has to be, in which it will be compulsorily convertible into debenture. There is no option. Next is NCD, which is not, sorry, once again, CCD means those debentures which are compulsory convertible into equity shares. NCDs means those debentures which are not convertible into equity shares. Now PCD means partial convertible debentures which are partially convertible into equity shares, means some part will be convertible and some part will be not. And last is optionally fully convertible debentures, means they are optionally convertible, means at the option of share debenture holder. If they want, they can convert it into equity shares. If they don't want, then no need to convert into equity share. Next topic is your bond. Now, what do you mean by bond? Bond, again, it represents borrowing. It is a debt instrument just like debenture, and it is also for all the same points you can write for bond also. It is issued for fixed term, and in this company pays interest. Companies repay the principal amount also, and companies pay the interest. Very basic points. You can just write it in your own words. Now, the important thing that I want to discuss is types of bonds. Okay, so quickly let's revise types of bonds. The first type of bonds, see, depending on who is issuing the bonds. If government is issuing the bonds, then it is known as government bonds. You can simply write, if the bonds are issued by government, it is known as government bonds. Acha. If the bonds are issued by company, then it is known as corporate bonds, depending on who is issuing. If it is issued by company, then it is known as corporate bonds. If the bonds are issued by banks or financial institution, then it is known as banks or FI bonds. And lastly, if you invest in some bonds, you will get tax benefit. So they are known as tax saver bonds. They are known as tax saver bonds, in which government gives you tax benefits. So there are four types of bonds. If government is issuing the bonds, it's known as government bonds. If companies are issuing bonds, it's corporate bonds. If banks are issuing, then it is banks and FI. And if you are getting tax benefit from the government, then it is known as tax saving bonds. Now, two topics that we have to discuss is FCCB and FCEB, foreign currency convertible bonds and foreign currency exchangeable bonds. Now, first thing, foreign currency convertible bond. Who issue it? Issued by Indian company, of course, issued by Indian company. It's in foreign currency, forex. It's in foreign currency, that is forex. Let's say it is in the form of, for example, dollar. So let's say it is in the form of dollar. Now, foreign currency convertible bonds means when Indian company issues bonds in foreign currency, but which is convertible into equity share of same company, convertible into equity shares of same company, then it is known as foreign currency convertible bond. But if it is convertible into, if it is convertible into equity shares of any other promoter group company, promoter group company, then it is known as FCB. That's all about FCCB and FCEB. Acha, simply to whom we issue? Issued by Indian company. And one more thing, we issue this to, issued to PROI, PROI. Who issue? Indian company. To whom? Person resident outside India. India के बाहर. Imagine Reliance issuing FCCB, FCEB to Justin Bieber. Okay. Indian company issuing bonds to PROI. Person resident outside India. That is FCCB, FCEB. It is also in foreign currency. It is also in foreign currency. Not in Indian rupees. Foreign currency. The only difference is that FCCB is convertible into equity shares of the same company, and FCEB is convertible into equity shares of our holding company, subsidiary company, any group company. Are we clear with this? Are we clear with FCCB and FC? Yes, drop yes, ma'am, in the chat box, everybody. Everyone, yes, drop yes, ma'am, in the chat box. If we are clear with FCCB, FCCB, if we are done with that, then the next topic that we have to do is IDR. What do you mean by IDR? Indian Depository Receipt. Simply, uh, simply imagine this is India. Okay. Now, someone from foreign company, when a foreign company issues shares to an Indian citizen, they issue in the form of IDR. They issue in the form of IDR. So what they do, this foreign company, they, sorry, this foreign company allot shares to foreign custodian, and that then this foreign custodian authorizes Indian depository. Who is Indian depository? Yes, NSDL or CDSL to to create IDR, and then they issue IDR to Indian citizen. So basically, a foreign company, imagine Apple is issuing IDR in India. Let's say a foreign bank, Standard Chartered Bank, a foreign company, banking company, Standard Chartered Bank issuing IDR in India. I am purchasing IDRs of a foreign bank. What is IDR? It represents equity share of foreign company. So just like ADR, JDR, Indian company issuing shares to foreigners in the form of ADR, JDR. Same way, foreign company issuing shares to Indian citizen, it in the form of IDR, that is Indian Depository Receipt. How they do? They give physical shares to foreign custodian. They authorize Indian depository to convert the shares into IDR, and then they issue IDR to Indian citizen. So it's like foreign company issuing shares to Indian citizen in the form of IDR, and this is the process of issuing IDR. So it is instrument. What is IDR? IDR is an instrument which represent equity share of foreign company, which represent equity share of foreign company, which represents equity share of foreign company, and it is denominated in Indian rupees. It is denominated, that's why the name is Indian Depository Receipts. Now it is denominated in Indian rupees. That's all about IDR. The next small topic is warrant. Warrant simply means right to purchase equity shares of company at certain price. What do you mean by warrant? Warrant is not shares, but it is your right to purchase share. Remember in class, we discussed movie coupon tickets. I think if you have a coupon to buy 2 free movie tickets, then those coupons are not movie tickets, but they are the right to buy movie tickets. So what is warrant? It is not share, but it is your right to purchase the equity shares of the company at a certain price. So if you have warrant of Reliance, so it means I have right to purchase certain shares of Reliance at certain price. So warrant are not shares, but they give you right to purchase certain number of shares at a certain price. That's all about warrant. Okay. Acha, next is writ and invit. Writ and invit we will do in the CIS chapter. वैसे तो writ is very important. I'll just give you small hint. What do you mean by writ and invit? REIT means Real Estate Investment Trust. InvIT means Infrastructure Investment Trust. This is there in the CIS chapter also. It is a type of CIS. Now, what do you mean by CIS? They collect money from public. RIT, it is a public fund. It is a public fund. It is a public fund. They collect money from lakhs and thousands of public, and then they invest in real estate. They invest in real estate. That is your RIT. Very simple, ma'am. What do you mean by InvIT? They also collect money. They collect money from public, and that money they invest in infrastructure projects. They invest in infrastructure project. That is all about your InvIT. Are we clear with RIT and InvIT? They both are public funds. They both are a type of CIS. They both are public fund. They collect money from public. The only difference is that RIT invest in real estate, InvIT invest in infrastructure. This is known as real estate investment trust. This is known as infrastructure investment trust. I hope we are clear with RIT and InvIT. Are we clear with this? Yes. Acha. Can anyone, my question is, can anyone invest in RIT? Quickly, you have to answer. Question for you, my dear. You have to invest. I told you this is public fund. Hint. Okay. Now tell me, can anyone invest in RIT or InvIT? Or it's a private fund on and only some private individuals can invest? Or can anybody like me and you, can we invest in any RIT and InvIT? Can we invest? Can we invest? Can anyone invest in RIT and InvIT? Question for you. Everybody have to answer in the chat box. Everybody have to answer in the chat box. I want all the people who are watching to answer this question because I want to just you to feel confident. Okay. Can anyone invest in RIT and InvIT? The answer is yes. Yes, Keshav, just few more minutes and we are done. And yes, everybody of you are correct. Priya, Amulya, Ulux, Keshav, that anybody can invest in RIT and InvIT. Why? Because it is a public fund. Now, what are the benefits of RIT and InvIT? Sometimes, why do you invest in like RIT? Why do you invest in real estate through RIT? So, a lot of benefits are there. What are the benefits of investing in RIT and InvIT? Like some of the benefits are, I'll just quickly discuss what are the benefits of investing in RIT and InvIT. For example, like you can get tax saving, tax benefit you can get. Okay, you can get large returns. You can get large returns. You can get um, easy to buy. See, if any real estate project is of 1 crore, I don't have 1 crore to invest. It's not easy for me to buy, but it's easy for me to buy RIT and InvIT. I can easily invest in real estate through RIT and InvIT. So it's easy to buy. So these are the benefits of RIT and InvIT. And the last topic, SDIs, it will be covered in the further topics also. Securitized debt instrument. In short, I'll just tell one line about securitized debt instrument. SDIs. What are securitized debt instrument? What is SDI? Basically, in this SDI, banks convert their loan into instrument that is known as SDI. For now, this much is enough. If question comes on what is SDI, you can write this particular things, that whenever banks have any loans or NPAs, they have given any loans which are NPAs, they convert their loans into securities, and those securities are known as SDI, securitized debt instrument. And the last topic of this chapter is municipal bonds. Very easy topic. Municipal bonds. What do you mean by muni bonds? So municipal bonds is a very easy topic. So basically, when municipal corporation, it's a part of government body. It's a government body. When municipal corporation, they need money for long term, they issue bonds to public. They issue bonds to public to raise money from public, to raise money from public in the form of bonds, in the form of bonds, and that is known as Munni bonds, and they give interest on this to the public. So what are Munni bonds? Munni bonds, municipal bonds, nothing but they are the bonds issued by the municipal corporation when they need money for any project, when they need money for any government project, when they need money for any government project. Example, metro, building metro. Let's say building metro. Example, building metro. So for any of this thing, let's say for building metro, municipal corporation need money, so they can issue bonds for, let's say, 5 years to raise money from the public, and then later after the maturity they will repay the money and we will give them interest. This is known as Munni bonds, when municipal corporation issues bonds to the public. And with this we are done with our lesson number 1. With this we are done with our lesson number 1. Please tell me, are we good? Are we confident about lesson number 1? Yes. Yes. Are we confident about lesson number 1? Everybody, I want to see a smiley face made after the end of your lesson number 1. The PDF I'll be sharing in the group, and those who are not a Yeshas student, you can just text me to get the PDF. Yes, everybody. And that's it for today. In order to make the most out of this particular session, it will just take you less than 30 minutes. You just go through the PDF once. I'll share it to you. Just go through the PDF once and try to recall all the topics. Still, if you have any doubt, you can drop it in the Telegram group. If you have any doubt, you can drop it in the Telegram group, or you can text me personally, or you can drop it in the group also if you have any doubt in lesson number 1. With this, we are done with our revision of lesson number 1. From tomorrow, we will be doing our lesson number 2 and 3 and so onwards, and I need you to go through your lessons once before we are doing the revision. It will be more beneficial for you. So let's say tomorrow we are going to do lesson 2, so I need you to go through lesson 2 once before we do the fast revision, so that you will be able to recall all the topics. I hope this all the topics are summarized for you and easy for you. ठीक है. Yes, Akriti, Kiru, Kavya, Priya, Payal, Amulya, Tejaswini, everybody who is still there, drop me a message in the chat box, because you are the real champions, because you are still here after 2 hours 30 minutes. You are 2 hours, yes, you are still here. Are these notes enough to contain main points and key points? Yes. Yes. In this notes, trust me, all the points are included from the examination point of view. I'm the person who don't want to skip the topic, because what if we studied 90 topics from a chapter, skipped one topic, and that one topic come in exam, then what you will do? So it's better to go through all the topics. So these notes are prepared from your study material only, and from your ICSI weightage point of view, ICSI examination point of view. The language is very proper. You can study the same language of the notes. Where is the notes? Okay, I closed it. So the notes that we discussed in this particular class, the same notes you can refer for your revising one day before the examination. You don't need to refer study material if you do lesson number 1 from the short notes. And only this last topics, easy topics, equity share, preferential, that we have done from material. Apart from that, all the difficult topics you can go do only from the short notes. That's enough. If you have studied from the main material earlier once, now you can only go through the short notes. That is, all the points are included, everything is included. You don't need to revise study material one day before the examination. These short notes are complete from your study material in proper language, and you can fully be reliant on this, because I have prepared it from my own hand in my own handwriting. Okay, so I hope it has it took a lot of effort in making the notes and preparing for this particular revision class, and standing here and teaching since last 2.5 hours, for the last 2.5 hours. So I really hope you appreciate this. If you like this particular revision lectures, do share it to all your friends, those who know, who may find this helpful, and who are about to give the module to examination. And do let me know for any doubts. You can drop message in the Telegram group. Okay, so we are good to start with our lesson number 2. And in lesson number 2, if you will see, the first topic is your, something is wrong. Okay, A particular point is missing here. Okay. Today we'll be doing our lesson number 2, that is secondary market in India. Lesson 2 we'll be doing secondary market in India. Are we all ready? Are we all ready to start secondary market in India revision? Lesson number 2. Guys, once again, you already know, but those who are joining today for the first time, I want to tell you that this revision is going to be exam oriented. Number 1. Number 2, we'll be revising from the short notes. The short notes are prepared from your ICSI material and from the study material. So you can completely rely on this. And if one day before the exam, you go through these short notes, these are enough for your one day before examination revisions. Okay? So guys, in this chapter, we have to study about what is stock exchange, what is the role of stock exchange, what are the trading platforms in India, and about index, Sensex, Nifty, and some basic topics. So this is an easy chapter, and most of the topics of lesson 2 are repeated. So that also we will see. Everybody is saying start. Payal, yes, everyone. Amulya 1, Amulya 2. Okay, both the Amulyas are ready. Great. So lesson number 2, first topic is stock exchange. So what is stock exchange? Stock exchange is a marketplace to buy and sell security, to buy or sell securities. First topic. If question comes, what is stock exchange? Very fuddu, easy question. So if question come, what is stock exchange? It is a place to buy and sell security. So basically, earlier it used to happen online. Now it happens, earlier it used to happen offline. Now it happens online also. So in this stock exchange, imagine as a vegetable market, same. There you will find all the sellers and all the buyers who want to buy and sell vegetables. Same way, what is stock exchange? Now, in order to do trading in India, we do trading using stock exchange. So it is a place where you can buy and sell security. You can write particular this sentence in the examination about what is stock exchange. So in short, we can say it provides liquidity to investor. Now, what do you mean by liquidity? Liquidity means you can easily sell your shares or debentures through stock exchange. So, stock exchange provides liquidity. Liquidity means a place where you can easily sell your shares. You can easily find buyers if you want to sell any shares. So, it provides liquidity to the investors. That's all about stock exchange. The next topic is your role of stock exchange. The next topic is your role of stock exchange. Okay, everybody, very easy topic, very easy. We'll be doing with all the enthusiasm. Everyone along with me will be doing this particular topic of role of stock exchange. Everyone along with me. What is the role of stock exchange means? What does stock exchange do? What is their function? How do they help us? What is the purpose of Bombay Stock Exchange, National Stock Exchange? The memory technique is PS, stay calm. PS, stay calm. So from P, there are 2 points. It determines the price of security on the basis of demand and supply. We already know stock exchange helps you to determine price, like the share price which goes up and down. So it determines the price. Next, it protects investors by controlling the company. So they keep a control over all the companies to protect the public investors, to protect the investors. So this is your P. Next is your S. S say there is ensure safety of capital. Make sure that there is proper safety. So make sure that company does all the compliance and their money is safe. Secondly, ensures healthy speculation. Speculation means, acha, this is not satta wala speculation. No, not that. Healthy speculation. Healthy speculation means I can do study of a particular stock, let's say Asian Paints. I can do study of Asian Paints and I can see whether Asian Paints will go up or it will go down. I will do analysis on the basis of proper technical and fundamental analysis. This is known as healthy speculation. So this is S. Okay. S done, calm. C for exercise control over the companies. All the listed companies who are listed in stock exchange, they are controlled by stock exchange. So let's say Asian Paints is listed in Bombay Stock Exchange. So Bombay Stock Exchange controls Asian Paints. Next is A, calm. A for act as an economic barometer and act as a continuous market. Continuous market means it doesn't, it's like it opens every day. It is a continuous market which keeps on going. It will never, close down. Continuous market, any time when the market is open, you can buy or you can sell. Next is act as an economic barometer. Economic barometer means you can see whether our country is growing on the basis of market. If market is growing, if stock exchange, if market is growing, then we can say our country is growing. So it acts as an economic barometer. Next, L for ensures liquidity. We already know liquidity means you can easily sell your shares or debentures or security through stock market. And last is M for mobilized savings. Mobilized saving we have already done yesterday. Mobilized saving means if I have some savings, then I can put it in the stock market through stock exchange. I can invest it. So mobilized saving, very easy to remember. Let's try to learn role of stock exchange. PS, stay calm. Okay, very easy, 5 marks. Role of stock exchange. PS, stay calm. P for determine price of security, protect investors. Okay, S for PS, S for ensure healthy speculation. Stay ka S again, S for ensure safety. Calm, C for exercise control over company. A for act as economic barometer, act as continuous market. L for ensures liquidity, and M for mobilize savings. Easy. Even if you are able to remember at least 5 to 6, that's also enough. Okay, so you can choose whatever is your favorite points. PS, stay calm. Role of stock exchange. Okay, what does stock exchange do? Provides liquidity, mobilize saving, act as a continuous market, act as an economic barometer, ensure safety, ensure healthy speculation, exercise control over company, protect investors, and determine price of the securities. Are we good with it? Are we good with it? Are we good to move towards our next topic? Yes, everyone. Are we ready? Role of stock exchange, very easy to do. Just stare at this particular topic. And are we good to move towards next topic? Quickly drop next in the chat box. If you are good with role of stock exchange, drop next in the chat box. Drop next in the chat box. Yes, everyone. Drop next in the chat box. Are we good with role of stock exchange? Drop next in the chat box. Next, so that we can do the next topic. Drop next in the chat box. Next. Yes, everyone, next. Okay, great. The next topic is your trading mechanism. Trading mechanism. As we all know, you can trade in securities in electronic mode, which is known as demat mode. So instead of having a physical shares or debentures or security, you can keep it in your demat account in electronic mode, just like you keep your digital cash with bank. Okay, I can keep either physical money with me or I can keep that money in the bank account. Same way, you can keep either physical security or you can keep it in the electronic mode with the depository, that is NSDL or CDSL. Now, today we'll be doing, next topic is your trading mechanism. Trading mechanism में simple points are, if today I buy any share, when will I get the delivery? It's like online Amazon order. If you, I purchased a dress from Amazon. So I placed an order today. They tell you expected delivery date. Madam, delivery after 7 days. So there I placed order today, but I will get my delivery after 7 days. But in stock exchange, since everything happens electronically, so trading, you get the delivery within 1 day. So what is the settlement cycle, guys? The settlement cycle is T plus 1 day. T plus 1 day means next day delivery. Next day delivery matlab next day settlement. Next day means here T means transaction day. So let's say today on 3rd I placed purchase order. When will I get my demat shares? Tomorrow, that is on 4th. Are we clear with this? T is equals to transaction day. If today I will do the transaction plus 1 day, next day I will get the settlement. And who does this settlement? There is a body called CC. Remember, guys, remember, pyar se we call it CC. CC. Yes, Nanna Prithya CC. So there is a body called CC. They do the payment and settlement thing. So all the settlement is done by CC on the next day. To calculate this, holidays are excluded. So if there is Saturday, Sunday or any public holiday, in that case, for calculating this T plus 1 day, holidays will be excluded. So let's say tomorrow is a Sunday, then delivery will be settled by Monday. So Sunday will be excluded. Last point, guys, as you all know, earlier there was T plus 2 days settlement. Earlier they used to take 2 days to deliver, 2 days to settle. Now, since we are in advancement, technological advancement, now we are taking only 1 day. So currently we are in T plus 1 day settlement cycle, but in near future we are going to see T plus 0 day, matlab same day delivery. You can see in many apps, online apps, you get same day delivery. Flipkart has started now 30 minutes delivery. Matlab now you place order, same day you will get the delivery. So this stock exchange have also started T plus 0 day settlement, which is known as same day settlement. Same day settlement, but it is not fully introduced. Only a trial version is introduced. Trial version, we are just trying this on some stocks. Okay, it is not fully applicable. Currently, the system is T plus 1 day. We are testing this T plus 0 day. In future T plus 0 day will come for all the stocks, but it is just trial. The trial of T plus 0 day is going on. Only the beta version is released, and currently T plus 0 day settlement is applicable only on some stocks, only on some selected shares. Okay, and only with some limited broker and non-custodian client. Non-custodian client means who don't keep their shares through custodian, who maintain their shares, their securities themselves. So basically, T plus 0 day settlement is introduced, but on a trial version, beta version, only for some stocks, 25 stocks as of now. In near future, within a year or two, it might be possible that we introduce T plus 0 day settlement for all the stocks. Are we clear with this? Yes. Now, trading happens online through electronic platform, just like Amazon say. Do you go to Amazon store and place order? No, it's an online platform, mobile app or software. Online, you go to Amazon website or app and then you place the order. Same way, you have to go through your broker app like Zerodha, Grow, or whatever. So it is an electronic platform through which you can do the trading. Okay, so trading means if you want to buy and sell the shares, you do through electronic platform, and it happens in demat form. Demat form means online you make the payment, and online you get the delivery of the shares in your electronic account, in your demat account. You don't get any physical shares, you will get electronic. Just like you maintain electronic money in your bank account, same way you maintain demat shares in your demat account. I hope this trading mechanism is clear to you, everyone. Trading mechanism, once again, simple. It is done in electronic platform through demat account. Currently, settlement is done within T plus 1 day, excluding holiday. For only 25 stocks, trial version of T plus 0 day settlement is introduced. I forgot to write here day, T plus 0 day. That's it, guys. That's it. Now, coming towards benefit of trading in demat form. Now, this you can write on the basis of your common sense. Common sense. Why common sense means? You tell me, if instead of physical trading, I will do electronic trading, what are the benefits? Save time, save energy, more accurate. People from anywhere can trade anytime when the market is open. So these are the benefits. So what are simple advantages of trading in demat form instead of physical form? So if instead of physical form, you will trade in demat form, what are the advantages? It will be more fast and accurate. Fast and accurate matchmaking based on price, time, priority. How does matching is done? Guys, if I am selling my shares through stock exchange, I don't know who is the buyer. I will simply place sell order. Let's say this is me. I will place sell order, and this is another person. They will place buy order. And if we place the order at the same time, at the same price, then our trade will be executed. But I don't know who's the buyer, and buyer don't know who's the seller. This is done through a mediator called stock exchange. So here trades are matched. Matched matlab matchmaking. Matchmaking matlab buyer and seller. How trades are matched? On the basis of price, time, priority. Means if we both place order, I place purchase order, he place sell order at the same price, at the same time, then our trade will be get executed. Next, it reduces time, cost and efforts. No fraud. Physical में scam 1992 physical shares was full of fraud and scams. So if it is done electronically, there will be saving of time, saving of cost, no error, no fraud. You can trade from anywhere. Sitting here in Chhattisgarh at my home, I can trade with some Raju from UP. Okay, next, full anonymity. Anonymity means I don't know who's the buyer, he don't know who's the seller. Next, perfect audit trail. Audit trail means there is a record of each and everything. All the electronic trades are recorded for dispute resolution, so that if there is any dispute between parties, we have the record, we have the proof of evidence, we have the record. Every transaction that is done through stock exchange is recorded. Recorded means they have audit trail. Audit trail means they have record, they have proof. Are we clear with this? Very easy. Benefits of trading in demat form. Are we clear with this? If we are clear with this topic of trading mechanism and benefit of trading in demat form, type clear in the chat box. Type clear in the chat box. Yes, I want everybody, all the people who are watching now, right now, I want them to type clear in the chat box if this is clear to you. Yes, everybody, I want you to type clear in the chat box. Yes, Priya, Prajwal, Aditya, Chinmay, Gayatri, Amulya, 1, Amulya, 2, Rakshita, Keshav, Surbhi, Pranjal, everybody is clear. Okay. Now, one small topic is your, what do you mean by listed security and what do you mean by permitted security? Very easy, very easy. Just stare at this. You can take the screenshot also, but anyway, I'll be sending PDF, or if you want, you can take the screenshot also right now. What do you mean by listed security or permitted security? See, let's say we are introducing we are listing a new company, Aether Energy. Okay, so now Aether Energy is listing its equity shares. So we are listing equity shares. So one small point. Okay, so let's say we are a company called, is this visible? No, this color is not visible. Is this visible? Yes. So let's say we are a company called Aether Energy. Now we want to list our equity shares on Bombay Stock Exchange as well as National Stock Exchange. We want to list our equity shares on BSE also, NSE also. Now, don't you think listing process is very long? We have already studied. So why to go through the same process two times? With BSE also, with NSE also. What we can do? We can do listing agreement with BSE. We will follow all the listing process and then we will get listed in BSE. So BSE will officially enter into listing agreement with company called Aether Energy. Okay, and it will officially list the equity share of Aether Energy. Are we clear with this? So that is known as listed security. Listed security means the company signs listing agreement with the stock exchange. Let's say Aether Energy signs listing agreement with Bombay Stock Exchange and they are officially listed on the stock exchange. So this equity shares of Aether Energy will be officially listed in Bombay Stock Exchange. But what do you mean by permitted security? Now, Aether Energy will be like, why to go through the same process again with NSE? So we will just apply to NSE and we will say, NSE, we are already listed in Bombay Stock Exchange. Why to go through the same listing process? Please permit our equity shares to be traded in NSE also. And NSE will say, okay, you are complying with all the requirement now. And since you are already listed in Bombay Stock Exchange, NSE will say, since you are already listed in Bombay Stock Exchange, I will allow your equity shares to be traded in NSE also. That is known as permitted security. So permitted security means listing agreement is not signed. So Aether Energy will not sign listing agreement with National Stock Exchange, but it is not listed on National Stock Exchange, but only National Stock Exchange allows their trading because they are already listed in another stock exchange. Are we clear with listed security and permitted security. So in this particular case, equity shares of Ather Energy are listed security for Bombay Stock Exchange and they are permitted security for National Stock Exchange. Are we clear with this? Yes. Are we clear with this? Are we? If we are clear with this topic, type clear in the chat box so that we can move towards next topic. Type clear in the chat box so that we can move towards next topic. With this, we are done with this topic of trading mechanism and what do you mean by listing securities and permitted securities. Okay, type clear in the chat box if we are clear with this topic. Everybody type clear in the chat box. Ma'am, upload all the notes in Google Drive. Surely I will do. Yes. Type clear in the chat box. Well, yes, I am also uploading all the notes in my Telegram group. So you can search in Telegram @ CS Executive IAC. In that Telegram group, you can find all the notes. Ma'am, can you? So listed security means when you are listed in stock exchange. So when you enter in proper listing agreement with Bombay Stock Exchange, we entered into listing agreement. So it's a listed security. But with National Stock Exchange, we are not listed there. We did not enter into listing agreement, but still National Stock Exchange allowed our equity shares to be traded. That is permitted security. Yes, Gayatri, I hope this is clear now. Everybody moving towards the next topic. And the next topic is very interesting. And that topic is right entitlement. Everybody, right entitlement. It's just like right issue. Those who have already attended module 1, they know right issue. They have studied right issue. So now we are going to do right entitlement. What do you mean by right entitlement? It is basically means right offer. So it's like I am being biased to my family members. Just because you are my family, before offering the cake that I made to outsider, I will offer that cake to you. I made a cake. Before offering my cake to outsiders, I will offer that cake first to my family members because they are my family members. So right entitlement means right offer. Right offer means whenever we come up with a public offer, before making offer to outsiders, first we will give offer to our existing equity shareholders. Do you want shares? Do you want shares? So we are making offer to our existing shareholders, giving them right to purchase more shares in the company at a discounted price. So what do you mean by right offer? Simply right offer means we are giving a right. It is the right given to the existing shareholder. Those who are already existing shareholder, we are giving them, do you want more cake? Do you want more cake? So we are giving them right. Do you want to buy more shares, new shares of the company at a discounted price? Others ko we are offering at 500 rupees per share, but since you are our special, we are offering you at 400 rupees per share at a special discounted price before outsiders can. So right entitlements, it's like a right offer. It is a right offer where we give right to our existing shareholder that they can buy more shares in the company at a discounted price. And usually that right offer is made in the ratio 1:2. For example, if you are already holding 2 shares, you have right to buy one more share. You have right to buy one more share. It is in ratio. For example, 1:2 means if you are already holding 2 shares, you have right to buy one more share. Which means, let's say if Priya is holding 10 shares of the company, then she has right to buy 5 more shares of the company. Next, ma'am, right entitlements. You know this right, RE means right entitlements. This right that I got, let's say I am the existing shareholder of Lenskart. Now I got right offer. That right offer, either I can exercise, or if I don't want to exercise, I can renounce it to someone else, means I can sell it to someone else. I'll give you an example. Let's say I got right to buy I have already, right offer was made in the ratio 1:2. I already had 500 shares of the company. So now I got right to buy 250 more shares of the company at a discounted price. At a discounted price. Okay, so I got right to purchase 250 more shares of the company at a discounted price. Let's say if I don't want to buy this 250 shares, even if it is available in discount, even if it is available at discounted price, if I don't want to buy this, I can sell this right to someone else. And that is why, even this right entitlements are traded on stock exchange, just like equity share. Just like equity share is traded in stock exchange, same way even this right are traded in stock exchange. You can purchase and sell these rights in demat form. And just like every security have a unique number which is known as ISIN, just like equity shares have ISIN, debentures have ISIN, same way even this right entitlement have a separate ISIN. What is ISIN? Unique number given to every security. And lastly, it is valid only till the offer period. Let's say I got offer only for 3 days. I got offer only for 3 days. Offer is open only for 3 days. If I want to exercise this right, I have only 3 days. After 3 days, offer will expire. Offer is open only for 3 days. So it will be valid. The right entitlement will be valid only for 3 days. After 3 days, offer will go away. Offer will expire. Are we clear with this? Yes, madam. Now, if you'll come here, what are the options available to equity shareholders if right is given to you? Let's say I have right to purchase 250 shares of the company at a discounted price. What I can do? Just imagine, this is common sense. What I can do? So if you'll see here, oops, okay. So what I can do is, either I can apply for all the shares. I will exercise all my right. Yes, company, I want 250 shares. So either I can apply for all shares, or let's say I don't want to buy all the shares, but I want only 100 shares. So I can apply only for a part. Are we clear with this? I can apply only for a part. Next, I can apply for all the shares plus request additional shares. Let's say I want 300 shares. So first I will apply for all my rights. I have right to purchase 250 shares. So first I will apply for all my shares, plus I can request for additional share. I can request to company one more piece of cake. I'm very foodie, one more piece of cake. So you can apply to company for even additional shares. Okay. Next one is, you can apply for the part and renounce the rest. What you can do, let's say I have right to purchase 250 shares of the company. Out of 250, I want to buy only 100 shares. I want to buy only 100 shares. So what I can do, the remaining 150 shares, I can renounce. I can renounce. Renounce means I give the right to someone else. I'm selling this right to someone else, that okay, you can purchase this 150 shares. So I can apply for only a part, and rest I can renounce in the favor of someone else. And lastly, renounce all RE. If I don't want to purchase even a single share, what I can do? I can renounce all. All 250 I can sell to someone else. All RE to purchase 250 shares, I can renounce to someone else. Are we clear with this? What are the 5 options available to the equity shareholders to whom right is given? Very easy to understand. Once again, either I can purchase all shares, or I can purchase all shares and request extra, or I can purchase only some part of that rights, or I can purchase some part and other part give to someone else, and lastly all give to someone else. Renounce all RE. Are we clear with options available to equity shareholder? Acha, what if equity shareholder neither subscribed nor renounced? I have right to purchase equity shares, but I did not exercise the right myself, and I did not renounce that right to someone else. I did not give that right to someone else. Matlab, I did nothing. I was just sleeping like a Kumbhakaran. So neither I subscribed nor gave that right to someone else. Then automatically the rights will expire. It's like imagine I have a coupon to buy 2 movie tickets. Either I can use that coupon myself to buy 2 movie tickets, or I can use one coupon to buy 1 movie ticket for me and give another coupon to Radhika. Okay. And or what I can do, I can give both, I can sell both the coupon to Radhika, or if I did nothing, neither I use the coupon myself nor I gave the coupon to Radhika or anybody else, then automatically that coupon have an expiry date. After that, coupon will automatically expire. Are we clear with this? Everybody, options available to equity shareholders. Now, since you have already done this, we already know renunciation means. What do you mean by renunciation? Renounce. What do you mean by renouncing or renunciation? Renunciation means giving your right to someone else. I have two coupons to buy movie tickets. I don't want to go and watch movie. Now, however, let's say Pranjal wants to go and buy movie ticket, so I can give those, I can sell those two coupons to Pranjal. I'm selling my coupon to you. That is known as renunciation. Renunciation means giving your right to someone else. Giving your rights by selling them to someone else. That is known as renunciation. Now, renunciation is two types: on market and off market. Very easy. On market means when you just trade them through stock exchange. You place the sell order in stock exchange automatically finds the buyer and your trade will be executed. So you sell your rights through stock exchange via your broker. Just like you sell shares in the stock exchange, same way you can sell your rights on the stock exchange. This is on market renunciation. What do you mean by off market renunciation? Off market means, let's say I personally know Radhika and Radhika wants to buy this rights. So I don't need to go and place market through stock exchange. Other than stock exchange, privately I can sell it to Radhika through my DP. I will ask my DP, transfer these rights from my demat account to Radhika's demat account. That's it. So it's like a private transfer where I transfer my rights to someone personally. So that is off market transaction. Off market means directly transferring your rights to a specific person through your DP, not via stock exchange. Not via stock exchange means not through stock exchange. It's a kind of private transfer. With this, we are done with your topic of right entitlements, and I'll quickly repeat this once again. Everybody, right entitle, it's like a right offer where you give right to your existing shareholders to purchase new shares of the company at a discounted price. Okay, and these right entitlements are traded on stock exchange. They are in your demat form and they have a separate ISIN. Are we clear with this? Okay. Now, what options is available when right offer is given to you? When right offer is given to you, either you can buy all the rights, you can use all the rights, or you can buy all the shares and request for extra, or you can buy only a part of it, or you can buy only a part of it and remaining you can renounce, and lastly you can renounce all. If you don't do anything, it will automatically expire. Acha, if you want to renounce it, you have two options. Either you can sell it through stock market or you can privately sell it to someone you know. That's it. Acha, one small point is given here. Ma'am, what if, वैसे तो this is practically not possible now because every companies except for small companies are required to have their shares in demat form. So here one point is given कि if you are a physical shareholders means right now you don't have demat shares, your shares are in physical form, then how you can get your right offer? Right offer will be given only and only in demat form. So in that case, if you are a physical shareholder, you have to give your demat account details to the stock exchange in order to receive RE. Otherwise, you will not get right offer. So if you want right offer, then you have to give your demat account details at least 2 days before the offer closes. At least 2 days before offer closes, so that they will transfer rights to your demat account 1 day before the offer closes. Okay, this is applicable only if you are holding shares in physical form. If you are holding shares in demat form, then this pacheda will not be there. This will be there only if you are holding shares in physical form. Then you have to give your demat account details at least 2 days before offer closes, which will be credited to your demat account at least 1 day before the offer closes. That's all. Acha, if how does company gives right offer? By issuing a document called Loo. Remember, प्यार से I call it Loo. Loo means letter of offer. Just like when company makes IPO, we have to issue prospectus, a document called prospectus. Same way, whenever a company makes right offer, we have to issue this document called letter of offer. And with this, we are done with all the points of right entitlement. Please type Arth Aita in the chat box. Arth Aita. Type Aitu in the chat box if it is clear. Arthaita, guys, Arthaita about what is happening. Yes. If the right entitlement topic is clear to you, type I2 in the chat box. Arthaita, guys, Arthaita, type I2 in the chat box if this is clear to you. Yes, everybody, if this is clear to you, type I2 in the chat box so that we can start next topic. We can start next topic, guys. Type I2 in the chat box. Okay. So, moving towards the next topic, that is trading platforms in India. As we all know, we know stock exchange, BSE, NSE, Bombay Stock Exchange, and National Stock Exchange. They have four sections of trading platform. Just like when you go to a clothing store, let's say Reliance Trend, they have four sections: men's wear, kids wear, women's wear, and some phalana wear. Now, trading platforms in India, all the stock exchange have these four categories, these four trading platform, these four sections. One is your main board, one is your SME board, one is your IGP, another is your SME. IGP, SME is covered in ICDR chapter, so we will cover this with ICDR chapter. In this topic, we will be covering with your main board and SME. So just like BSE and NSE, they are the two recognized stock exchange in India. They both have main board also, and they both have SME platform also. So what is the SME platform of BSE known as? The SME platform of BSE. Oops. What is wrong? Arey jana. I'm so technology noob, okay, guys. So, okay, coming back to this topic, what is the SME platform of BSE known as? The SME platform of BSE is known as BSE SME, and what is the SME platform of NSE known as? SME platform of NSE is known as NSE Emerge. NSE Emerge. Okay. Now coming to the main board, guys. If you talk about the main board, in the main board, if you want to get listed, so if you want to get listed, let's say physics wala PW, it's a competitor, so I should not take its name, but since it's listed, so okay, let's take it. So what is main board? Main board, if you want to list in the main board, just imagine ki this is adult wear and this is kids wear. Okay, so if you are below 18, then if you want to buy your clothes, it will be available in this kids platform, and men's and women's wear. If you are above 18, then you will get your clothing in the main board section. So if you have minimum 10 crore ka paid up capital, then we will say you are a big company. If you have minimum how much? 10 crore. It's not small, it's huge. Okay, if you have minimum 10 crore paid up capital, you can list in the main board. But if your paid up capital is less than 10 crore, then you cannot list in main board. We will say you are a chikkadu company, you are a small or medium company, then you can list in this SME platform. So what is main board and SME? This is for big companies and this is for small companies. If you are a big company with a minimum paid up capital of 10 crore, then you can list in main board. Otherwise, you have to list in, if you are a small company with less than 10 crore paid up capital, then you can list in SME platform. Are we clear with this? Okay. Now, everybody. Okay. Yes, derivatives is discussed along with practical video, Keshav. So derivatives alag se we will do with the practical session. ठीक है? Yes. No. All the topics are covered. Some of the topics are also covered in another lesson. Derivatives, we will do separately because it's a practical question. Okay, mainly derivatives, a practical question will come majorly. Okay, now yes, Amulya. Okay, now coming back to the main board. Main board, mein what are we saying? Main board, you must be eligible and you must fulfill all the requirements prerequisite before getting listed in the main board. And what steps are needed basically for getting listed in the main board? You need to get your draft prospectus approved, you need to submit a listing application, and then you need to do your IPO registration. So basically this process we have studied in more detail in lesson number 3 also, but here just a summary is given that if you want to get listed in Bombay Stock Exchange or National Stock Exchange, what is the listing process? It's in very detail. They have just summarized here that first you have to prepare a draft prospectus. You need to get your prospectus approved by the stock exchange. You need to submit a listing application and you need to do the IPO registration, and also you need to fulfill all the requirements, all the conditions, prerequisite. Now, only for listing of NCD. NCD means non-convertible debentures. So if you want to make an IPO of not equity shares, if you want to make IPO of non-convertible debentures, then you need to follow a particular law which is known as SEBI issue and listing of non-convertible security regulation 2021. Guys, we have a whole lesson on this. Issue and listing of NCD. We have a whole lesson on this. Okay, so basically if you are making IPO of NCD, it will be covered by these regulations. So for this we have a whole lesson, we have a separate lesson on this, and these are listed on the separate segment of stock exchange. So stock exchange have a separate segment called capital market segment. There they are listed and they are assigned a separate symbol, a proper symbol, a separate symbol for their identification is given to them. So this is some points regarding main board. Acha, this is some general point regarding listing in SME. Now if you'll come here guys, these are general points. This four are general points. You may just go through it and you can write this in your own words. Here the point is given, why SME platform, why we came up with SME platform. So benefits of SME platform are given, like they help small companies from unorganized sector to enter organized market. Those bechari chikkadu companies, small companies who have less than 10 crore paid up, so what option is available to them? So we provide them platform to get listed through SME platform. Next is we provide entrepreneurs and investor friendly listing environment. So it's, you know, entrepreneur friendly, investor friendly, so that it will be easy for them to get listed. It helps emerging business. Emerging business means startups, new companies to raise capital, and they provide opportunity, they give investors opportunity to invest in startups. So when small companies are listed in SME platform, even investors get opportunity to invest in startups. So these are some basic benefit of SME platform, that chikkadu companies can get listed in SME platform and even investors can invest in this chikkadu companies and startups. Are we clear with this? So these are some like basic benefits of SME platform. If I have to summarize, the big companies can get listed in the main board by making IPO, and the small companies, SME companies, startup companies, they can get listed in SME platform. Now, coming to the topic, there is a difference between NSE emerge and main board given. Now, the SME platform of NSE, there are two SME platforms in India, एक BSE का, एक SME NSE का. Bombay Stock Exchange has SME known as BSE SME, and National Stock Exchange has SME known as NSE Emerge. NSE Emerge. There are two SME exchange in India. We are talking about NSE Emerge. So if you'll compare NSE Emerge and main board matlab where big companies get listed. Now, if you want to get listed in the main board, you need to be a company under incorporated under Companies Act. You need to be a company under Companies Act. You need to be incorporated under Companies Act, meaning any other body cannot get listed in stock exchange. You need to be a company. Next is post issue paid up capital. If you want to get listed in main board, you should have minimum 10 crore paid up capital, otherwise you are not eligible to get listed on the main board. Now if you want to get listed in SME, then your post issue paid up capital should be less than equal to 25 crore, meaning you have to prove that you are chikkadu. And what is the threshold for you, ceiling limit for you? The ceiling limit for you is 25 crore. If your post issue paid up capital is less than 25 crore, then only we will say that you are chikkadu. If it is more than 25 crore, then you are not chikkadu, then you cannot get listed in SME platform. Are we clear with this? Next is, if how many allottees should be there? Minimum allottees should be there 50. In case of SME, see, it's a small and medium exchange now. So here less number of people are the investors, and each investors invest at least 1 lakh. Are you understanding? Minimum how many allottees should be there? 50. Not much, not thousands, not lakhs of people. Only 50 ka requirement is there, because it's a small company now. Small company gets listed in SME exchange. It's difficult to find more investors. So how many investors should be there? If there are minimum 50 investors, it's fine. If there are minimum 50 investors, it's fine. And in case of main board, there should be minimum 1000 investors. Usually in main board now there are lakhs of investors. So what is the minimum requirement? Minimum 1000 investor is there. Now per investor, per lot, what should be the application size? The per lot ka application size should be minimum 1 lakh in SME and minimum 10 to 15,000 in main board. So in main board, if you will see, per lot ka application size is around 10 to 15,000, and which is more in SME because less number of people are there. So per person has to invest more. So your lot size will be at least 1 lakh. Next is, in when you prepare DRHP. DRHP means draft red herring prospectus. Simply understand this as a prospectus. So when you prepare prospectus, if you are a SME, then it is approved by stock exchange. But if you are in a main board, then it should be approved by SEBI. So your prospectus will be approved by stock exchange if you are getting listed in SME platform, and your prospectus will be approved by SEBI if you are getting listed on the main board. Next is underwriting. Underwriting is compulsory in SME exchange, not compulsory in main board. So in main board now, underwriting is not compulsory, but usually companies do underwriting. So why? Because in main board now there is a requirement of minimum subscription 90%. Minimum subscription means at least 90% should be subscribed, otherwise offer will fail. So underwriting SME में तो compulsory है ना, it's a small company, we should make sure that it gets successful, it should not fail. So here 100% underwriting is compulsory, and at least 50% should be underwritten by your own merchant banker. A company makes IPO through merchant banker. Are you understanding? We need merchant bankers for making IPO. So your merchant banker should underwrite at least 15%. Are we clear with this? Overall, it should be total 100% underwritten, and at least 15% should be underwritten by merchant bankers. But in main board, underwriting is not mandatory, but there is a requirement of minimum subscription 90%. Are we clear with this? Now, market making. Market making means it is mandatory in case of SME, but it is not mandatory in case of main board. Why? Because when a big company gets listed in main board, we don't need to worry about it. Why? Because anyway it will be publicly traded, so we don't need to create an artificial demand. Are you understanding? But in case of SME, it's a small chikkadu company which is getting listed in SME exchange. So sometimes we need market maker. Market maker means they are SEBI registered, they place buy order and sell order, to fluctuate, to influence the price, to create the demand and supply. So that is mandatory in case of if you are getting listed in SME platform, then market making is mandatory. And the last point, post issue requirement, post issue reporting requirement. Guys, after your issue, if you are getting listed, if you are listed in SME exchange, then half yearly you have to give report to stock exchange. Half yearly means twice a year. And if you are getting listed in main board, then you have to do quarterly reporting requirement. These are some of the difference between SME, that is NSE emerge, and main board. So basically, if you will see quickly, if we will revise what is the difference between what is the difference between NSE emerge and main board. So if you see here the minimum capital should be 10 crore, and in SME the maximum capital should be 25 crore. Here minimum 1000 allotee should be there. Here minimum 50 allotee should be there. Here application size should be 10,000 to 15,000, and here application size should be 1 lakh. Okay, here prospectus is approved by stock exchange, and in main board prospectus is approved by SEBI. In SME, underwriting is compulsory. In main board, underwriting is not compulsory. In SME, market making is compulsory. In main board, market making is not compulsory. In SME, you have to report half yearly, but in main board, you have to report quarterly. I hope we are clear with this topic. Please let me know if we are clear with this particular topic of main board and SME. Are we clear with this trading platforms in India, that is main board and SME? Yes, main board and SME. Are we clear with this topic of main board and SME? Everybody? Yes. Drop yes ma'am in the chat box if we are clear till now. Drop yes ma'am in the chat box. Drop yes ma'am in the chat box if we are clear till now. Drop yes ma'am in the chat box. Yes, everybody. Yes. Why, ma'am? Why ma'am, shouldn't the application size in the main board be more than SME? No, application size here means per lot ka application size, because here less number of people are there. So less number of people are there. So per person they will invest more. So that's the logic basically here. Here more people are there now. So lot size now, usually na retail shareholders apply for one lot, two lot, not more than that. So that's why in main board lots of people are there now, thousands and lakhs of people invest. So per lot ka application size is 10,000 to 15,000, because more people are there. And here application size is more because less people are there. Are we clear with this? Yes, Keshav, is your doubt clear? Keshav, is everyone clear with the trading platform in India? If yes, now we will be doing about BSc SME. BSc SME, guys. So just like we talked about, there are two SME platforms in India. SME means small and medium exchange. There are two SME platform in India, one of BSc and one of NSC. We have studied about NSC ka SME. Okay, so we have studied about NSC ka SME. Now we have to do about BSc ka SME. Are we clear with this? So there are two SME platform in India, one of BSc and one of NSC. So the one NSC SME we have already done. Now we are yet to do with BSc SME. Now if you'll come to BSc SME, everybody. Are we ready? Are we ready to do BSc SME? Are we ready to do, everyone? Yes, I can see a lot of yes ma'am in the chat box. Keshav, Anand, Pranjal, yes, Sumit, Rakshita, Pradyumna, Priya, Sumit, Amulya. Yes, okay. Yes, great. Okay. Now, coming to the requirement of getting listed in BSc SME. If you are a chickadoo company, if you are a small and medium company and you want to get listed in BSc SME platform, then you need to comply with these requirements. First requirement, you have to get incorporated under Companies Act. Means you have to form a company under Companies Act. Secondly, your paid up capital should be less than equal to 25 crore. What does it mean? It means that you should be Chikkadu company. Chikkadu company means your ceiling limit is 25 crore. Your paid up capital should be less than 25 crore. Then only you will be eligible to get listed in SME platform. Okay, you have to prove that you are a Chikkadu. Next, your net worth should be at least 1 crore in the last 2 year. Last 2 year, that in the past 2 year, you should have at least 1 crore net worth. Let's say currently we are in 25-26. Okay, so we are in the year 25-26. Let's say current year is 25-26. So in the last 2 year means 24-25 and 23-24. In these 2 years, you should have a minimum net worth of 1 crore. Are we clear with this? Next is you should have a minimum net tangible asset of 1.5 crore. You should have a minimum asset, net tangible asset. Your asset should be at least 1.5 crore. Ma'am, why this requirement? To make sure that you are a sound company. You have a good track record. You have positive assets. You have good net worth, to make sure that you are not a fraudster. You will not cheat with public. That's why this minimum requirement are there. So if you want to get listed in BSE SME, you should have a minimum net worth of 1 crore and minimum net tangible asset of 1.5 crore. And you should have a good track record in the last 3 years. In the last 3 years means, let's say this is your last one, last two, and these are last 3 years. In the last 3 years, you should have a good track record. Good track record means no non-compliances, good profit, no cases, nothing. Are we clear with this? So you should have a good track record in the last 3 years, plus you should have 1 year of audited result. What do you mean by 1 year of audited result? In the last 1 year, your account should be audited. Your account should be audited. So you should have a good track record for minimum 3 years, plus you should have 1 year of audited result. Then only you will be eligible to get listed in BSE SME. Next, ma'am, what if we don't have 3 year ka track record? Let's say we got incorporated 2 years back. In that case, we don't have minimum 3 years ka track record. In that particular case, your IPO or this particular project should be funded by any of this. It should be funded by either NABARD or SEBI or bank or FI, plus you should have at least 1 year of audited result. This is the track record that you need. Then only you will be eligible to get listed in BSE SME. Once again, everybody, so what track record do you need to get listed in BSE SME? You should have a minimum 3 years track record and at least 1 year of audited result. But ma'am, if we don't have 3 years ka track record, let's say we got incorporated only last year. In that case, your project should be funded by NABARD or SEBI or bank or FI, plus you should have at least 1 year of audited result. Are we clear with this? The next requirement is your you should have operating profit, guys. EBITDA matlab you should not be in loss, you should be in profit. If you are a loss making company, we will not allow you to get listed. You should be a profit making company. You should have a profit EBITDA. You should have a EBITDA means earning before interest, depreciation and tax. Earning before interest, depreciation and tax. You should have positive EBITDA means you should have profits. You should not be in losses in at least 2 out of last 3 years. Meaning, let's say last 3 years are 24-25, 23-24 and 22-23. These are last 3 years. Out of these 3 years, in at least 2 years, you should have profit, positive profit, and last year mein to hona hi chahiye. Matlab, this is your last year. In this, you should have profit, and 1 out of these 2 you should have profit. Okay, so total 2 out of last 3 years mein you should have profit, and in the last full year, last year, immediate last year. But if you are a company who is funded by NABARD or SEBI, then you should have profit EBITDA in the last year. Are we clear with this? Acha. Now what are we saying? That if you are in existence for 3 years, in that case the requirement is you should have profit in 2 out of last 3 years and last full year. But if you are funded by NABARD or SIDBI or bank or FI, in that case, this 3 years wala requirement is not there. There is only one requirement, that you should have profit in the last year. That's it. If you are funded by NABARD or SIDBI, then this 2 out of 3 year wala requirement is not there. There is only one requirement, that you should have profit in the last year. Next is leverage ratio should be maximum 3:1. 3:1 means out of your equity, your debt should not be more than 3 times the equity. Your debt should not be more than 3 times the equity. So the leverage ratio should be maximum 3:1. Now you need to learn this particular point, leverage ratio maximum 3:1. Are we clear with this? Achha, now rest of the points are very easy points. Next, you should not be a defaulter company. Basically, you should be a clean company. Imagine, can we allow a defaulter company, defaulter directors, defaulter promoters to get listed in stock exchange? Of course not. So here there is a requirement that your company should be clean, your promoter should be clean, your director should be clean. They should be clean. Clean means they should not be defaulter. They should be good. So no disciplinary action should be there. What does this mean? This means that no suspension should be there against promoter or promoter company. Your promoter or promoter company should not be suspended. Otherwise, you cannot list in SME exchange. Your promoter or director should not be disqualified or debarred, and they should not be linked with any compulsory delisted company. If any company is compulsory delisted, means it's a fraudster company. Only those companies who do fraud and all, they are, who do something wrong, some non-compliance, they are compulsory delisted by stock exchange. And if your promoter and director are linked with that defaulter company, in that case, we will not allow you to get listed. So make sure your promoters, your promoter company, your promoter and directors are clean. They are not disqualified, they are not debarred, they are not suspended. Last point, no pending default is there. If your company has defaulted in what? If your company has defaulted in payment of interest or principal of debenture, bonds or FD, what are these? These are debts. These are debts taken by company. Debentures, bonds, FD. If you have defaulted in the repayment of debenture, bonds, FD, can we allow you to get listed in stock exchange? No. Imagine there is a company, Falana Limited. There is a company, Falana Limited. This company defaulted in the payment of debenture, bonds, deposit. Still, we allowed it to get listed in stock exchange, and this company raised money from thousands of people and then ran away. Imagine. So, to protect people, it should be a clean company. It should not be a defaulter company. You should not have defaulted in the payment of debenture, bonds, and FD. So, these are some very easy points of eligibility to get listed in the stock exchange. Are we clear with this? Now, some last few remaining points. Number one, if your name is changed in the last 1 year, in the past year, if the name of the company is changed, then 50% of the revenue should be from the new business activity. So let's say your name is changed from Ishika's Education Limited to Ishika's Finance Limited. Name is changed. So in that case, in the last year, at least 50% of my total revenue should be from my new business, should be from my finance business. If the name is changed from Ishika's Education to Ishika's Finance, okay, name is changing. So in that case, at least 50% of the revenue should be from the new business activity. Few small points. You should have a compulsory website. Your shares should be in demat form. So make sure that you enter into agreement with NSDL or CDSL depository to issue shares in demat form. You should have a compulsory website, and there should be no promoter change in the last year. Your promoter should not change in the last year. You have to comply with Companies Act and SEBI ICDR regulations, because you are getting listed, and you don't have to file petition to NCLT under IBC or winding up. Guys, IBC means your company is going into insolvency. Winding up means you want to close the company. If any petition is filed with NCLT, under insolvency or for winding up, we will not get it listed because your company is closing, bro. Your company is closing, so we will not get it listed. And these are the eligibility requirement for getting listed in BSE SME. Are we clear with this? Are we clear with this? Eligibility requirement for getting listed in BSE SME. Yes, these are the eligibility requirements. Just go through it once again. Eligibility requirement for getting listed in BSE SME. Yes, everybody. Eligibility requirement for getting listed in BSE SME. Everybody. Yes. Type understood in the chat box if this is clear to you. Eligibility requirement to get listed in BSE SME. These are the eligibility requirement to get listed in BSE SME. Yes. Yes, Pranjal. Falana Dikana supremacy. Yes. Is relaxation given is yes, relaxation is given to finance companies for from leverage ratio. If you're a finance company, then this you don't, this leverage ratio ka limit will not apply. Yes, everybody. Okay, type understood in the chat box if this requirements to get listed in BSESM is clear to you. Yes. Type understood in the chat box if this is clear to you. Everybody. Everybody type understood in the chat box if this is clear to you. Yes, everybody understood. Okay. So once again, quickly, let's try to learn all the points. If you want to get listed in BSE SME requirements, number one, you should be a company under Companies Act. Shout along with me, everybody. You should be a company under Companies Act. Your post-issue paid-up capital should be minimum 25 crore. Your net worth should be minimum 1 crore for the last 2 years. Your net tangible asset should be minimum 1.5 crore. You should have a track record in last 3 years plus 1 full year of audited trails. I hope you are shouting along with me. Next, acha, if you don't have 3-year track record, then you should be funded by NABARD or SEBI. And you should have a profit in at least 2 out of last 3 years and last full years. But if you are funded by NABARD or SEBI, then you should have a profit in the last year. Next, your maximum leverage ratio should be 3:1. There should be no disciplinary action against your promoter, director, or promoter company. They should not be disqualified, they should not be debarred, and they should not belong to a compulsory delisted company. Okay. Next, there should be no default in the payment of debentures, bonds, and fixed deposit. Lastly, if the name is changed in the last 1 year, at least 50% revenue should be from new business activity. You should have a mandatory website. You should have a mandatory DMAT form, and there should be no promoter change. Oh my God. Okay, wait. There should be no promoter change in the last 1 year. You should comply with Companies Act and ICDR regulation, and there should be no application to NCLT for insolvency or winding up. For insolvency and winding up. I hope all these requirements for getting listed in BSE SME is clear to you. Yes, everybody understood. Keshav, Priya, Prajwal, Rakshita, Mulya. Okay, great, great, great. Now, moving towards the next topic, that is margin. Margin. Okay, guys. Do you remember margin? We have done this topic like very interesting way, my classmate. Do you remember margin? I told you about my experience during the class, when we were studying this topic of margin. Do you remember? Okay. So, are we all ready to start the next topic, that is margin? Margin. Type yes, ma'am, in the chat box if you're ready to start the next topic, margin. Everybody. Okay. Now, everybody, what do you mean by margin? Meaning of margin. So, margin is when you make advance payment as a part of the value of transaction to buy shares. I should write here to buy shares or securities. So in order to buy shares or securities, when you make advance payment for the part of the value of transaction, that is known as margin. And here you only make the part payment matlab adha, some part, and remaining part is given as a loan to you by your broker. The remaining part is given in the credit form means loan form, by your broker to buy shares. For example, let's say I want to buy shares worth rupees 1 lakh, but I don't have 1 lakh right now. I want to buy shares worth rupees 1 lakh, but I don't have 1 lakh right now. I have only 40,000. So my broker will say, okay, you pay only 40,000, 60,000 I will give you as a loan. So in this case, if I pay only 40,000 and remaining 60,000 my broker gives me as a loan, in that particular case, my margin is 40%. Margin means I am not paying whole amount to buy the shares. I want to buy 1 lakh shares, but I am paying only 40%. I am paying only 40,000 as an advance payment, but only a part of the value. Part matlab not full, only part. That is known as margin, and the remaining part is given as a loan, given as a credit by your broker. By your broker, this is known as margin. Are we clear with margin? What do you mean by margin, everybody? Are we clear with margin, everyone? Now, are we clear with margin, everyone? Margin, yes. Okay, so now next there will be initial margin and maintenance margin. Initial margin, what we just studied in this particular example. In this particular example, initially for the first time to buy the shares, how much I am paying, guys? How much I am paying? You tell me in the chat box. 40,000. So this 40,000 is my initial margin. This is my initial margin. What do you mean by initial margin? For the first time, for purchasing this, how much amount I am paying to purchase these shares? To purchase this shares worth rupees 1 lakh, I am paying 40,000. This 40,000 is my initial margin. What do you mean by initial margin? Minimum amount that client has to deposit before buying. So before buying this 1 lakh shares, I have to deposit 40%. I have to deposit at least 40,000 to my broker as an advance payment, and this is known as initial margin. Now, don't you think, let's say with this 1 lakh, we purchased Indigo Paints shares. Let's take an example. With this 1 lakh rupees, we purchase Indigo Paints shares. Now, don't you think share price keeps on fluctuating, goes up and down, up and down? So let's say share price falls. So my 1 lakh ka value, I suffered a loss of 10,000 and it became 90,000. Oh my God, hi Allah. This, I invested 1 lakh in shares, share price came down, the share price has fallen, so I suffered a loss of 10,000. Now my 1 lakh has become 90,000. Now in order to maintain this, I suffered a loss of 10,000 already, so guys, my margin has fallen. Out of total 40,000 that I paid, 10,000 ka loss already I have to bear. So now my how much amount is remaining with the broker? Only 30,000. So now to cope up, to maintain minimum 40%, I have to give 10,000 more to the breaker. I have to give 10,000 more to the broker. That is known as maintenance margin. Maintenance margin means if share price goes down and your value of investment goes down, then the difference amount you have to pay again to the broker to maintain that 40%. To maintain that 40%. Are you understanding? And that is known as maintenance margin. That is known as maintenance margin. Once again, guys, what do you mean by maintenance margin? Maintenance margin means if there is a share price go down, if share price go down, there is a fall in value of your investment, then you have to the minimum amount that must be maintained at all the time, minimum 40% you have to maintain at all the time on the basis of current market price. On the basis of current market price, your 1 lakh became 90,000. So value of your investment reduced by 10,000. Now that 10,000 you have to pay again as a maintenance margin. So from time to time, the money that you keep on paying to maintain that 40% is known as maintenance margin. In simple words, the first time the amount that you pay is initial margin, and the amount that you pay to maintain 40% again and again if the stock price go down, that is known as your maintenance margin. Now, don't you think in this particular case, the example that I gave you, if share price, my share value is fallen by 10,000, then my broker will ask me to pay 10,000 more as a maintenance margin. So in this case, my broker will call me and ask me, Ishika madam, pay 10,000 more. That is known as margin call. Margin call means in order to maintain this maintenance margin, broker will ask you to pay the additional money. Broker will ask me to pay this additional 10,000. That is known as margin call. So what do you mean by margin call? What do you mean by margin call? Margin call means if client's margin balance falls below how much I invested earlier, 40,000, but 10,000 ka loss ho gaya, so now it reduced to 30,000. Okay, so that 10,000 ka fall, broker will ask me to pay again. So if the client's margin falls below the maintenance margin, then broker asks you to bring more money. Broker asks you to pay more money. That is known as margin call. What do you mean by margin call? If your balance falls below the maintenance margin, then broker asks you to pay more money, and that is known as margin call. Are we clear with this? Yes, everybody? Okay. Now, there are some points given. Ma'am, what if I'm not giving money? My broker is calling me, Ishika ma'am, there is a loss of 10,000. You need to pay 10,000 again. You need to pay 10,000 again. If I'm not paying, then by the next day, if I don't pay, broker will sell my shares. Broker will sell my shares. So broker liquidation rights. Broker liquidation rights means if client fails to pay within the next day, अगले दिन, next day तक, if I don't make the payment, broker can sell all my securities. So if I don't pay the margin call within next day, broker will sell all my security. Now guys, whenever there is any margin trading done, all the broker have to disclose to stock exchange before 12 noon on the next day. Whenever margin trading is done, on the next day before 12 p.m., we have to disclose these things to the stock exchange. So who has to disclose? Who allows margin trading? Broker. So broker has to disclose to stock exchange how much exposure he has given to you. How much exposure matlab how much loan he has given to you. Next, client name Ishika Agrawal, unique ID, you get unique ID for demat account. Name of the share Indigo Paints. Kiss share may we are doing margin trading? Indigo Paints. Name of the script means share. And if broker took loan, then name of the borrower and amount borrowed. Let's say even broker did not have money, so to give me loan, to give me margin, broker also took loan from somebody else. In that case, name of the broker, sorry, name of lender hoga yahan, make the correction. Name of lender means from whom we are taking the loan and how much amount broker borrowed. These four things broker has to disclose to stock exchange before 12 p.m. on the next day, before 12 noon on the next day. And last points, stock exchange have to make some disclosures in its website. In the website, stock exchange have to make some disclosures. What are that disclosures? We have to give the total outstanding margin account with all broker. With all broker, what is the total margin, total balance in the margin account? मतलब total कितना margin है with all the broker. So we have to give script wise मतलब share wise. तो Indigo Paints के shares में total कितना margin है? Total how much margin is there in Indigo Paints? Total how much margin is there in Reliance? Total how much margin is there in HDFC Bank? All shares में total how much margin is there? Who has to disclose? Stock exchange have to disclose in its website after trading hours on the next day. Whenever margin trading is done, Next day, after trading hours, after 3:30, after trading hours, we have to disclose this in the website of the stock exchange. That's all about margin trading. Are we clear with margin? Are we clear with margin? Everybody. Are we clear with margin? Everyone? Margin. Are we clear with margin? Everybody. Are we clear with margin? Yes or no? Everybody. Type yes in the chat box. Yes, Keshav. There is a limit in even brokers have a are guided by stock exchange that how much margin they can give. It's like broker don't have open hand; they can give any margin they want. So broker also are given limit. You only maximum this much margin you can give to this client. This much margin you can give to this client. So that depends on case to case. Okay. मेंटेनेंस केशव मेंटेनेंस मार्जिन इज कैलकुलेटेड एज पर द फॉल इन वैल्यू जितना गिरेगा उतना आपको मेंटेन करने के लिए देना पड़ेगा लाइक वॉट एवर fall in value is there that amount you have to give so that you maintain that 40%. Okay. Yes, if we are clear with margin, then type yes, ma'am in the chat box. Once again, simply margin means the advance payment that you give to buy the shares. So it is also, you can say, loan given by the broker to you. For example, I want to buy 1 lakh shares, 40,000 I pay, 60,000 broker gives me loan. So this 40,000, 40% that I pay is my initial margin. Now, initial margin means before buying, the advance amount that I give is initial margin. Now, if there is fall in the value, then the minimum amount that I maintain is your known as maintenance margin. So, minimum amount that you have to maintain on the basis of current market price. If price falls below, then the fall in the value I have to give it again so that I maintain this maintenance margin. Now, to call that money, your broker asks you to pay that money, that is known as margin call. If you don't pay by next day, broker can sell your shares. Every broker have to disclose to stock exchange total exposure, total loan that broker is giving to you, client name, unique ID, name of the share, and if broker borrowed money, name of the lender and amount borrowed. And lastly, stock exchange have to disclose share wise total balance in the margin account with all the brokers. कि total Reliance के share में total कितना margin है? Total in Reliance share how much margin is there? Are you understanding? Share wise total outstanding account. With this, we are done with the margin topic, and the next topic that we have to do is your block deal and bulk deal. I'm sorry for the handwriting here. ठीक है, block deal and bulk deal. Block deal and bulk deal. I think it's one of the favorite examiner ka question. Block deal and bulk deal. It has been asked like multiple times in the past exam question, and I've already given you past exam question. I hope you have gone through all the past exam question once. If you're preparing for the December attempt, yes, I have already given you past 9 to 10 attempts past exam question in your study material, and yes, with the suggested answers by ICSI, I hope you have gone through it. So the next topic is your block deal and bulk deal. Everybody with me, block deal and bulk deal. Everybody along with me. Yes. Are you with me? Block deal and bulk deal. Yes, everyone. Yeah. Are you with me? Are you with me? Are you all with me? Type with you in the chat box if you are with me. Type with you in the chat box if you are with me. Yes, type with you in the chat box if you're with me. Yes, everybody. So now the next topic is your block deal and bulk deal. Now what is block deal? Imagine this as a VIP deal. Two big players making a deal of buying and selling some stocks or some transaction. So block deal, imagine this as a big deal, as a big private transaction. Okay, so now coming towards block deal, what do you mean by block deal? It is a big private trade. It is a big private trade between two big players who want to buy and sell huge amount of shares without disturbing the normal market price. So let's say there are two people who want to make a big transaction of minimum 10 crore. Oh my God. Let's say there are two big players, and I have given you an example also. If you'll come here, let's say there is one big player, LIC, and there is another big player, HDFC Mutual Fund. They want to sell 100 crore rupees Reliance share. Don't you think if they do this in a normal market hours, it can shake the market? It can literally shake the Reliance ka share price. So it's like two big players doing a private transaction outside the normal hours. So if LIC wants to purchase Reliance ka share, not chotu motu 100 crore ka, worth rupees 100 crore, then we make a separate trading window for them and we allow them to do in a separate trading hours. So we make a separate window for them where they do this trading. So it's like a big private deal between two big parties, are we clear with this? So coming here, what do you mean by block deal? Block deal is like a, it's like a private trade between two players who want to buy and sell large amount, huge amount of shares, more than 10 crore, without disturbing normal market price. So what do we do for them? We create a separate block deal window. There are two timelines, morning hours and afternoon hours. Morning hour, it open for 15 minutes, 8:45 to 9 a.m. I too will miss it only if I have to do. Okay, 8:45 to 9 a.m. These are the morning hours, 15 minutes. And next is your in the afternoon, that is 2:05 to 2:20. 2:05 to 2:20. Only this two times for 15 minutes, this separate window opens for big players, where big players can execute their bada transactions, do transactions of 10 crore or more. Separate window is there, 8:45 to 9, 2:05 to 2:20, 8:45 to 9, 2:05 to 2:20, but these are done only during these two windows. Now guys, you know, they decide it in advance. Is it pre-arranged? Yes, it is. Pre-arranged means matlab pehle se they prepare and decide and then they do this. It is pre-arranged. And it is more of private transaction because they don't do it publicly in the normal trading hours. They do it separately in that 15 minutes trading window. So it's kind of more private. And when they have to disclose it, they have to disclose it same day but after market hours. After market will close, then whatever transaction happens, same day we will disclose in the website. Are we clear with this? Okay. And in this particular case now, the price at which you will purchase and sell should be within plus or minus 1% of the current market price. Are we clear with this? So should be within plus and minus 1%. Matlab, the if let's say current market price is 100, then you can trade only at 101 or 99. You cannot trade at 98. You cannot trade at 102. So the price at which you will do this the two transaction, the price should be current market price से maximum plus 1% or maximum minus 1%, not more than that. So the price should be within plus 1 or minus 1%. This is all about block deal. Once again, block deal, big private deal between two big parties where they do huge transaction of minimum 10 crore. Separate window is there, 8:45 to 9 and 2:05 to 2:20 p.m. It is more of private and same date is disclosed after market hours. Now coming to bulk deal. Bulk deal is like normal trading only. During normal trading hours, there is no separate window for this. See, if you will see here, it's like a trading is done in the normal trading window, normal market hours 9:15 to 3:30. But when someone is continuously buying and selling the shares of a particular share, and they buy at least 0.5% of total shares of that company, then it is known as bulk deal. Bulk means I am buying a particular share in bulk. I am buying a particular share in bulk. That is bulk deal. Example, if you see here, example, Rakesh Jhunjhunwala buys 1% shares of Tata Motors. So Rakesh Jhunjhunwala, he was a big investor. So let's say if he purchases shares of Tata Motors, that to chota mota nahi, 1%, guys. These big companies ka 1% is also huge. So if Rakesh Jhunjhunwala buys 1% of Tata Motors during normal market hours, like a normal trading, but the amount is more. but the amount is 1%. That now, what is the normal trading hours? 9:15 to 3:30. Acha. Can you trade any time when the market is open? Yes, you can trade any time between 9:15 to 3:30. Acha. Now, is it pre-decided? No, usually it's not pre-decided. Matlab it happens automatically. Is it public? Yes, it is fully visible to everyone. It's not private. It's all public. But this block deal transaction is more of private. And when do you have to disclose it? Acha. See, either you can purchase all 0.5% in a single trade. If you purchase all 0.5% in a single trade, then immediately you have to disclose to stock exchange. But if you do that through multiple trade, let's say first you purchase 0.3%, then you purchase 0.2%, then you purchase 0.1%. So if you do it in multiple trade, then you have to disclose it after working hours. Then you have to disclose it when? Then you have to disclose it after trading hours. Then you have to disclose it after trading hours, and that's all about bulk deal. I hope we are clear about block deal and bulk deal. So block deal is when two big parties do a transaction of more than 10 crore. That is known as block deal. It is done on a separate trading window. Bulk deal is like a normal trading during the normal trading hours, but you are buying more than 0.5% of a particular share of a particular company. That's all about block deal and bulk deal. And the next topic is your very basic. This is easy. After doing all this topic, yes, this is some easy topic. Yes. Are we all clear till now? Type clear in the chat box if you are clear till now. Type clear in the chat box. Type clear in the chat box if you are clear till now. Yes, everybody. The next topic is your basics of investing. This is a common sense point, so you don't need to worry about these points. This is a common, very common sense point, very easy to understand, and we'll just deal with it. Some basics of investing are given, which is your common sense, like literally common sense. If I want to invest, will I just close my eyes and invest in any share? No, now I will first check the company. I will check about my rights and responsibility. I will decide how much amount I want to invest, 1 lakh, in how much time, 1 month, 1 day, 1 week, 1 year. So I will decide all these things, and then I will read about the company, whether it is good, and then I will invest now. So this is some basic, no need to buy hard this. You can write this in your own words. What are some basics of investing? First, you decide your goals, your objective, your risk appetite. Are you a risk taker? No, no, I want to play safe. What are your objective? You want to invest for long term, short term, medium term. First you decide your goals, and then you decide amount means how much money I have to invest, 1 lakh rupees. And then you decide the time period means over how much time I will invest this 1 lakh. I will invest 1 lakh every 1 month, in a month, time period. And then I will know about my rights and responsibilities, and then I will take informed decision. Informed decision matlab don't hurry, do your research, and then decide whether to invest in which share, and read all the information about the company. You need to read the prospectus, you need to read the financials of the company, financial information, and you need to read all the document of the company before investing. This is basic point, guys, like a common sense. Imagine yourself what you would do before investing in any company. Some basic points. Next is your prerequisite of investing. You should have 3 accounts. You should have 3 accounts. Everyone along with me, you should have a bank account, you should have a trading account, and you should have a demat account. You should have 3 accounts. What are those 3 accounts? Bank account, trading account, and a demat account. Then only you can invest. So if you want to purchase any share, you want to invest in stock market, make sure you have a bank account, because you need to transfer money. Make sure you have a trading account, because through trading account you open it with your stockbroker, for example Zerodha or Grow, and through this you buy or sell securities. Are we clear with this? To open your trading account, you need to submit account opening form, and you need to submit your KYC documents. So with whom you can open trading account? Through your stockbroker. Now you need to have a demat account to keep digital shares, and demat account is opened with DP. Usually people are both broker and DP. Like if you talk about Zerodha or Grow, they are broker also, they are registered as broker also, and they are registered as DP also. So you need to open your demat account with your DP. Why demat account? Me, because demat account holds shares in electronic form. Are we clear with this? To hold your shares in electronic form, demat form, you need to open a demat account. So prerequisite of investing, I need to have 3 accounts before investing: bank account, trading account and demat account. मैम बहुत अच्छे से हो गया, very nicely, all topics done. And the next topic is key risk in investing. What are the risk in investing? What risk are there in investing? First one is your systematic risk. Second one is your unsystematic risk. Third one is your inflation risk, then your liquidity risk, then your volatility risk and your currency risk. If I am investing in stock market, what risk is there? Inflation ka risk is there. Ki what if I earned only, I made 10% profit, but inflation is 15%? Whether I'll be able to beat inflation? What risks are there when you invest in stock market? First risk is your rise. First risk is your rise in inflation. Inflation बढ़ जाएगा, महंगाई. Yes, first risk is your inflation risk. Second risk is your currency risk. Currency means what if you invest in foreign countries, let's say Apple का share में, dollars में you are investing. Are you understanding? And dollar की value is increasing day by day. So foreign exchange rate fluctuation, dollar की value also fluctuates. So that risk is there. Currency fluctuation risk is there. Liquidity risk is there. Liquidity means what if I will not be able to sell immediately when I need it. So let's say I have invested 1 crore in stock market, but now I need 1 crore for some emergency. What if I am not able to sell it immediately? There is that liquidity risk. Volatility risk, you already know, share price keep on fluctuating. So that is known as volatility risk. Means what if my share price go down? Share price is fluctuating, so that is your volatility risk. Next is your systematic and unsystematic risk. Systematic risk means those risks which affect whole market, like covid is a systematic risk. It affected everyone, every company, every share, everybody. Unsystematic means which affect only a particular company or particular industry. Let's say there is some changing in banking norms, so it will affect only banking companies, only banking industry, not all companies. It will affect only HDFC Bank, Axis Bank, Kotak Bank, but it will not affect Reliance. So unsystematic means those factors which affect only particular company or particular industry, like banking industry. Systematic means which affect whole country, whole market, all the industry, all the companies, all the shares. So these are the risk in investing: systematic, unsystematic, inflation, liquidity, volatility and currency risk. I hope this is clear. Please let me know whether this risk is clear or not. So type risk in the chat box if you are clear with key risk in investing. If you're clear with this topic, then type risk in the chat box. By mistake, I have typed here risk. So I have written this like it's in my handwriting. So it's risk basically. By mistake, I have made T instead of K. So I hope you can understand that much. Okay, the next point is your KYC process. Yes, everybody, Priya, Rakshita, Amulya, Keshav, Prajwal, Amulya 2, Payal, Sinchana, Rask, Pranjal has written. Okay, everybody is clear. The next topic is KYC. KYC, you know, KYC means know your customer. You have to get your KYC done so that to make sure that you are not a fraudster and everything is registered. So under which act KYC is required? Under PAMLA Act. What is PAMLA Act? You have studied in ECIPL, PAMLA, Prevention of Money Laundering. Under this act, you have to get the KYC done. Now to get your KYC, you need to submit your proof of ID and proof of address. Once you submit KYC documents, then a KYC identification number, a unique number will be generated and sent to you via email, and then that KYC ID will be valid across whole of stock market, across all the intermediary, across broker, everybody. Are we clear with this? Once again, KYC is required under PAMLA Act. In order to get your KYC done, you have to submit your proof of ID and proof of address. Once KYC is done, once you submit the KYC form, KYC identification number will be generated, which will be sent to you via SMS or email, which will be valid across all the transaction, all the intermediary. You don't need to get your KYC done. It's a one-time process. You don't need to get it done again and again. It's a one-time process. If you get it done once, then it's valid for lifetime, like done. You don't need to do it again. That's all about KYC process. Are we clear with this? Acha, since it's 5, today we started late, so that's it for today, guys. I'll tell you one thing before ending the session, and what I want to tell you is, oops, okay, I want to tell you is that no topic is skipped. Why? Because there is some topic of intermediaries, intermediaries like custodian, broker, CC, stock exchange, that will be covered in your lesson number 6, intermediary chapter. Okay, so there is one topic of dematerialization that will be covered in your lesson number 5 anyways. Okay, and basically the topics that are there, derivative is covered in practical. You can watch the practical video which is already uploaded in the app, and we can do it after our marathon also, revision also. It's kind of a revision, not marathon. And yes, last के जो topics are there, what are the last के topics? I'll let you know. The policy topic is there, policy, and that surveillance topic, policy and surveillance topic. For that I have uploaded a small video. I'll send the link of that video, you can watch it. So for the last two topics, policy and surveillance, I've uploaded a small video. You can watch that particular small video for these, particularly these two topics. And I think rest all topics are done. You can let me know if any topic is missed from this particular lesson. Yes, you can let me know. I think all the topics are done, apart from those topics which are already covered in other lessons. Okay. Are we okay? Are we good? How are we feeling? Yes, everybody. So basically, majorly, we are done with our lesson 2 revision. I tried my best to simplify. ETF is covered in mutual funds. ETF, these are repeated topics. Like they are covered in 2 chapters. So like ETF is covered in this chapter also, in mutual funds also, because it's a mutual fund. Na? ETF is a mutual fund. So we'll cover it with mutual fund. Okay. Yes, market index is included in the video. So I'll upload a small video. In that, I'll include the index topic also. Okay, index topic, policy topics, FED policy and all, and the last surveillance topics. For these 3 topics, you can refer to a video. I will send the link of that video in all the Telegram groups. If you can't find it, you can message me. I'll send you there. Yes, everybody okay? Risk management is also there in the video. So see, the last topics which are left, for that I'll give you a small video. You can refer to that small video. You can text me for the link. And these topics are repeated. Intermediaries, derivatives and all, these are already covered in some other lessons. ETF is covered in mutual fund. So basically we are done with our lesson number 2. That's all about lesson number 2. Yes, no, Vinay, mock test is not there on 6th. Basically, it will be around 10th or 11th. It will start on 10th or 11th. So it will be rescheduled. Okay. Market surveillance, yes, it's there in the video. Are we good? Are we good? Yes, I will try to attach the video link in the description, and you can join the Telegram group and I will share all the links there. Yes, we will try to cover most of the lessons. So that's it for today. Tomorrow we will be covering lesson 3 and lesson 4. Okay, which are like 2 very important lesson of your particular this thing. So tomorrow we'll try to cover both lesson 3 and lesson 4. We will try to cover both lesson 3 and lesson 4 tomorrow. So tomorrow's will be same time 2 p.m. and lesson 3, lesson 4 are very, 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 very important from your examination point of view, guys. So we are done with 2 lessons, lesson 1 and lesson 2, and tomorrow we'll be doing lesson 3 and lesson 4. So guys, Today, we are going to do lesson number 3, Securities Contract Regulation Act. Now, ma'am, this act came in 1956. Now, before SCRA Act, there was no law in India with respect to securities market. So, this was the first law that was brought to regulate the securities market. Acha, ma'am, what is the main purpose of bringing this law in 1956? When in 1956, this act was introduced, the main purpose was to prevent undesirable transactions and to regulate the business of stock market. Imagine before 1956, no law was there. People were treating stock market as a sabji mandi market, as a vegetable market. People were doing scams, fraud. No law was there, no government was there, nothing. So, to detect fraud, to prevent fraud, and to regulate this business of stock market so that it will be regulated by a proper law, this too was the main purpose of bringing SCRA Act. What is the main objective of SCRA? To prevent frauds and undesirable transactions and to regulate the business of dealing. Business of dealing means to regulate the stock market. It is applicable to whole of India. But ma'am, you know, whenever any we want to purchase and sell any shares, stocks, bonds, debenture or any security, then this law called SCRA Act will be applicable. SCRA stands for Securities Contract Regulation Act. But ma'am, there is some non-applicability given. In 3 cases, this law will not apply. The first one is to government, this law will not apply. Why ma'am? Because there is no need. Now, government is only regulating private bodies. The main intention of this law is government wants to keep a check on private bodies, private people, that they are not doing any fraud now. So, government will regulate themselves. Kya? No, no need. It's like I am checking, teacher is checking my own mark sheet. Let's say in an examination hall, only student is required to be, properly supervised. Teachers are not required. Same way, government is out of the purview. So, central government, state government, RBI, local authority or any government corporation. All these are part of government. So if they will issue any security, let's say government is issuing gold bonds, government is issuing treasury bills, then SCRA Act will not apply if any security is issued by government. Next, if you are issuing any convertible instrument example ma'am, convertible bonds. Convertible bonds means bonds which are convertible into equity shares or share warrant. Share warrant means they are convertible into equity shares. Options means again they are convertible into equity share. So all these are convertible instrument which are convertible into equity shares. So if the conversion price was decided at the time of issue, today 2025 May we are issuing convertible bonds saying that after 5 years in 2030 it will be converted into equity share. It will be converted into equity shares. Now in this particular case, if the conversion price is decided now in 2005, the conversion price is decided upfront in 2005, then this particular convertible bond can be issued without following SCRA Act. Then SCRA Act will not be applicable. Ma'am, SCRA Act will not be applicable for convertible instrument only if their conversion price was decided at the time of issuing such convertible instrument. And third, government can exempt any other contract if they want. If there is a need, government have power, government can exempt any other security or any other contract from the purview of SCRA Act. So these are the 3 non-applicability of SCRA Act. Once again, SCRA Act is not applicable to government. SCRA Act is not applicable to convertible instrument only if there is conversion price is decided before and government have power, government can exempt any other contract. That's it. Now, ma'am, the question is, there is one case law whether OFCD are exempt or they have to follow SCRA Act. So, optionally fully convertible debentures. OFCD means optionally fully convertible debentures. Although they are convertible instrument, but they will not be exempted. Why? Because they are hybrid instrument and they will be considered as security. So basically OFCDs को SCRA Act will apply. SCRA Act will apply. They will not be exempted. So if any company wants to list optionally fully convertible debentures, then SCRA Act will apply. There is a case law whether SCRA Act will apply or not. The question is yes, if you issue optionally fully convertible debentures, then SCRA Act will apply. Now, ma'am, we are going to do some definitions. What are the definitions of different words used in this particular chapter? The first definition is securities, which is very chindi pundi definition. We already know the meaning of security. So basically, security is a broad term which includes all the type of security. So security includes every kind of security. You can just mention anything that has value. Anything that has value will come and is purchased and sold in stock market, that is your security. Anything that has value and that is purchased and sale in stock market comes under the definition of security. For example, shares, stocks, bonds, debenture stock, marketable security, derivatives like options and futures. Acha, even mutual funds, units of mutual funds, collective investment scheme, or any pooled vehicle. We have a whole lesson on mutual fund and collective investment scheme, or any other security receipt, or any government security like government bonds, treasury bills, all these comes under government security. So this is a broad definition. Security includes everything that has value and that is purchased and sold in stock market. Example, shares, debentures, bonds, mutual funds, derivatives, government security, etc., etc., etc. The question is, there is one case law whether OFCDs are securities or not. Yes, OFCDs are considered as security even if they are hybrid security. Hybrid matlab partially debentures, partially shares. Why? Because they are optionally fully convertible debentures. They are convertible into equity shares. So they are partially debentures, partially equity shares. So they are known as hybrid security and they will come under marketable security. So thus, will they be considered as security? The answer is yes. OFCD will be considered as security. It was discussed in the Sahara case. There was one case of Sahara company. So in the case law of Sahara, it was decided that OFCDs are considered as security and thus OFCDs, in the case of OFCDs, this act will apply. SCRA Act will apply. That's all about the definition of security. Next is your definition of contract. Here, contract means contract of purchase and sale of securities. Securities means shares, debentures, bonds, etc. So whenever we purchase and sell any security, that is known as contract. Now guys, most important definition. Now coming towards an important definition, spot delivery contract. Spot matlab abhi, now. Okay, next is spot delivery contract. What do you mean by spot delivery contract? Where payment and settlement is done immediately. It is not a future contract. Acha, spot means I will make you payment today, you give me shares today. Let's say I purchase 100 shares of a particular company HUL from Prajwal. Prajwal say I purchase 100 shares of HUL. Today we purchase, today only I will give 100 shares to Prajwal. Today only I will pay money to Prajwal and today only Prajwal will deliver me the security. Either today or by tomorrow. Are we clear? That is known as spot delivery contract. Acha, let's say if I enter into contract with Prajwal, after 1 month, I will purchase 100 shares of HUL from Prajwal. That is a future contract. That is not spot delivery. Spot matlab immediate payment and settlement. So what is spot delivery contract? It is a contract where delivery and payment is done either same day or next day. If today transaction is done, payment and settlement will be done either today or tomorrow, 4th December or 5th December. But if parties are located in different town, I am in Chhattisgarh, Prajwal is in Bangalore. So if time is taken for postal dispatch, it will not be counted. 2 days extra we took to deliver the payment or to deliver the security from Chhattisgarh to Bangalore. That will be excluded. That will not be counted. That transport period will not be counted. But ma'am, if shares are in demat form, acha, this is applicable if shares are in physical form. But ma'am, if shares are in demat form, then don't you think automatically through your demat account, let's say I am the seller and I am the buyer and Prajwal is the seller. Prajwal is the seller. Now, automatically when I purchase the shares will be transferred from Prajwal's demat account to my demat account. Just like when I send you UPI payment, I will make UPI payment. So as soon as I make UPI payment will be transferred from my bank account to Prajwal's bank account and shares will be transferred from Prajwal's demat account to my demat account. That's how delivery is done in demat if the shares are in demat form. Acha, who does this? This is done through CC and depository. Who maintains your demat shares? Depository. Are we clear with this? Okay. Now coming back here, if shares are in demat form, then securities are immediately transferred from one beneficial owner demat account to another beneficial owner's demat account through depository. So this is also spot delivery. I purchase 100 shares from Prajwal of HUL. Immediately 100 shares of HUL are transferred from Prajwal's demat account to my demat account through depository. Okay, one beneficial owner's demat account to another beneficial owner's demat account. And this is your spot delivery contract. Guys, if definition of spot delivery contract comes in your examination, then you have to write both the definition. Write 2 pointers. Point number 1, this definition, and then point number 2, this definition. If shares are in physical form, then it is a spot delivery if payment and settlement is done on the same day or on the next day. However, if the shares are in demat form, then spot delivery contract means where shares are transferred from one demat account to another demat account through depository. With this, we are done with the definition of definition of spot delivery contract. Perfectly, ma'am, understood. Now next definition is your stock exchange. You already know what is stock exchange. Guys, remember I told you earlier there were no stock exchange before SCRA Act 1956 came. Before SCRA Act 1956, randomly any person were acting as a broker and they were starting their own stock exchange. Literally, there was stock exchange like chana murra, like selling vegetables in the market. Anybody was doing stock exchange business and they were not incorporated in the form of company. They just made a group of people and they started their stock exchange business before 1956. But then when SCRA Act 1956 came, it said that now onwards, everybody, those who want to start a stock exchange, you have to first make a company under Companies Act 2013 and you have to go through corporatization and demutualization. What do you mean by corporatization and demutualization? One thing again, those like Bombay Stock Exchange is the best example. Bombay Stock Exchange was there even before 1956. But before 1956, Bombay Stock Exchange was acting as a body of individual. It was not a company. It was just group of people doing stock exchange business. That's it. So later we said that after 1956, if you wish to continue as a stock exchange, then you have to corporatize and demutualize. Corporatize and demutualize means you have to register a company, and thereafter, Bombay Stock Exchange was registered as a company called BSE Limited, and the name of the Bombay Stock Exchange was changed from Bombay Stock Exchange to BSE Limited. Are we clear with this? Now guys, what are we saying? That what is stock exchange? Stock exchange means those body of individual who were acting as a stock exchange before 1956, but now they are corporatized and demutualized. Meaning those body of individual, if you want to continue if you want to continue after 1956, now you have to corporatize and demutualize, means you have to convert into a company. You have to make a company and you have to divide ownership and membership, meaning brokers cannot be the owner of the stock exchange. Earlier, brokers were the one who were the owner of stock exchange. Now, broker rights are separated, owner rights are separated. So basically, but this is about old, you can say, like a old stock exchange who were there before 1956, who have now converted into a company under corporatization, demutualization. Now, after 1956, if anybody want to start a new stock exchange, then you have to register a company under Companies Act. That's it. Are we clear with this? So, for those people who are doing stock exchange business before 1956, we are talking about old stock exchange. They are body of individual and they have gone through corporatization and demutualization. But those stock exchange who are formed after 1956, they are body corporate registered under Companies Act 2013. Are we clear with this? Now, what are they doing? They are doing the business of buying, selling or dealing in security. Acha, what do you mean by buying, selling or dealing in security? Means in stock exchange there is only one business done, that is buying, selling of security. Stock exchange means it is a marketplace for buying and selling of security. I want to purchase any share, I can do through stock exchange. I want to sell any shares, I can do through stock exchange. So stock exchange means a body of individual which is corporatized or demutualized, or it is a body corporate company registered under Companies Act, which is engaged in the business of buying, selling or dealing in security. Are we clear with the definition of stock exchange? Once again, everyone, stock exchange means a body of individual which is constituted before corporatization, demutualization, now which is corporatized and demutualized, and a body corporate company which is incorporated under Companies Act to assist, regulate and control business of buying, selling or dealing in security. Okay, very simple. Old ones are body of individual, but now they are corporatized and demutualized, and new ones are companies registered under Companies Act. What are they doing? Which business they are doing? So stock exchange is doing the business of buying, selling or dealing in security. Stock exchange is doing the business of buying, selling or dealing in security. Are we clear with this, everyone? Quickly drop me a message in the chat box if are we clear with the all the definitions till now. Guys, we have done 4 definitions. We have done the definition of securities, we have done the definition of contract, we have done the definition of spot delivery contract and the definition of stock exchange. Please let me know, are we clear till now, everybody? Everybody, are we clear till now? I want all the people who are watching to drop clear in the chat box if we are clear till now. Everybody, those who are watching right now, I want everybody to drop clear in the chat box. I want everybody to drop clear in the chat box. Yes. Okay, Priya, great Priya, Vinay, Sinchana, Rakshita, Prajwal, Amulya, Amulya 1, Amulya 2, Anand Singh, everyone is clear. Great, great, great. Okay. So moving towards next topic. Now the next definition is recognized stock exchange. See, simple, those stock exchange who have been recognized by central government or SEBI. Original power is with central government, but central government has given its power to SEBI. So I can say those stock exchange who are recognized by SEBI, they are known as recognized stock exchange. 2 recognized stock exchange are there in India, Bombay Stock Exchange and National Stock Exchange. What do you mean by government security? Name itself suggests government security means those securities which are, acha, securities ko short mein I have written SECS. Please understand that this means securities. Okay. So those securities which are issued by government, that is government security. You know, usually government securities are in the form of debt security. Debt matlab they take loan from public. Acha, by issuing any kind of instrument given under Public Debt Act. Guys, there is a law called Public Debt Act. Under this act, government can issue bonds or securities to public. Let's say, you know, sovereign gold bonds, you know, government securities, GSECs, sorry, SEC SEC, government securities and treasury bills, all these are government securities. So what is government securities? They are issued by central government or state government for raising public loan. Whenever government want to raise money from public, so they raise money from public by issuing this security and which are specified under Public Debt Act, that is government security. Acha. Now, you know, there is a separate code for our securities law. Just like for company law, there is a separate code called NCLT. Same way, under securities law, there is a code called SAT. Now, under SCRA Act, who is SAT? SAT means SAT as established under SEBI Act. So, there is another act called SEBI Act and SAT is established under SEBI Act. The same body will act as a SAT under SCRA Act also. Last definition, member. Whenever the word member is used here, members means members of stock exchange. Who are the members of stock exchange? Yes, you are correct. Tell me you are correct. Tell me in the chat box. Who are the member of stock exchange? You know it. We have discussed it in our classes. We have discussed it in our regular classes. Who are the members of stock exchange? Everybody. Tell me, tell me everyone in the chat box. Who are the members of stock exchange? Yes, you are correct. Yes, you are correct. And the members, who are the members of stock exchange? Stock brokers. Stock brokers. Yes, correct, Harish. Stock brokers are the members of stock exchange. So basically, what can I say? That let's say this is Bombay Stock Exchange. Bombay Stock Exchange mein who can do trade? Who have trading rights? Who have trading rights? Who have trading rights? Meaning who have right to purchase and sell shares or securities in Bombay Stock Exchange? Only its members. Only its members. Members means stock brokers. You know, there are only one people who have trading rights in stock exchange. Only and only stock brokers. Only and only stock brokers. All these Zerodha, Grow and all. Okay? So they are known as the member of the stock exchange. Why? Because they have trading rights. Only they can trade in stock exchange. I cannot directly purchase any share from stock exchange without broker. I will give order to my broker. A broker, A Zerodha, purchase 100 shares of Reliance for me, and then Zerodha will purchase 100 shares of Reliance for me. Only brokers have trading rights in stock exchange. With this, we are done with all the definitions. Type perfect in the chat box if we are clear with all the definition and we are ready to move towards our next topic, that is recognition of stock exchange. Type perfect in the chat box. Type perfect in the chat box if we are clear till now and we are ready to move towards our next topic, that is recognition of stock exchange. Okay, so the next topic is recognition of stock exchange, section 3 and section 4 of SCRA Act. Guys, what are we studying? We are studying SCRA Act. Now, first of all, not anybody can muh utha ke do stock exchange ka business. If you want to do stock exchange business, you have to get recognized by central government oblique SEBI. You have to get recognized by SEBI. So, let's say we want to start a stock market. As a halwa, it's not halwa puri. You have to file an application. If you want your stock exchange to be recognized, then you have to file an application to central government or SEBI, and in that application you have to give all the details about stock exchange and two most important documents. Along with your application, you have to submit copy of bylaws and copy of rules. Remember, ring a bell, guys. We did it in the class. Yes, if you want to get recognition from SEBI, then you have to submit your bylaws and you have to submit your rules to the SEBI. Now, what is bylaw? Bylaw is relating to purchase and sale of securities. Bylaws is relating to how we will do our business. Bylaws is relating to regulation of contracts of purchase and sale of security. And rules are relating to our constitution of stock exchange. Now, what do you mean by constitution of stock exchange? Rules are relating to who will be the directors, who will be the governing body, what are their powers, how many directors will be there, how many office members will be there, how many promoters will be there, who will become the member, who can be registered as a broker. Are you understanding whether partnership firm can become a broker or not? So all these rules regarding governing body, regarding constitution of stock exchange are mentioned in the rules. So 4 details are mentioned in the rules. What are the 4 details which are mentioned in the rules? First, what is our governing body and what are their powers? Governing body means who all are there, what is the structure of stock exchange, what is the hierarchy, who are the top people, who have the most authority, to overall governing body and their powers. Next, who are the office bearer? Office bearer means who are directors, promoters, etc. and what are their powers and duties. Third, who can become member? Member of stock exchange means stock broker. Are we clear with this? So who can become member? What qualification do we need? How will we do admission of a member, suspension of a member, expulsion, exclusion or readmission of a member? So you can see limited stock brokers are there. Thousands of stock brokers are not there. Very limited stock brokers are there. Are you understanding? So how we will admit our member, that is given in our rules. And lastly, can we register a partnership firm as a member? If there is a partnership firm, can partnership firm become a member? Yes. So how we will register a partnership firm as a member and how we will appoint their clerks and their representative. So these 4 things are mentioned in the rules. Are we clear with this? So what are we doing? Recognition of stock exchange. If stock exchange want to get recognized by SEBI, we have to file application along with details, bylaws and rules. Now rules may we have to give this 4 details about governing body, about office bearer, about members and about partnership firm as a member. That's it. Our task is done once we submit the application. Now we have submitted the application to the SEBI or stock exchange. Now what SEBI will do? SEBI will check our application whether it is all correct or not and SEBI will do the inquiry. So once we submit the application to the SEBI, now SEBI will do the inquiry. And after inquiry, SEBI will check 3 things. SEBI will check 3 things. First, SEBI will check whether bylaws and rules are proper as per conditions or not. SEBI will read our bylaws and our rules. What? SEBI will read our these 2 things, bylaws and rules, whether they are proper as per conditions or not. Number 2, SEBI will check whether you are willing to comply with all other conditions which central government may impose. SEBI will check that in future if we impose any condition on you, will you comply with all the condition? If yes, then only we will give you recognition. And third, SEBI will check whether it is in the interest of trade and public. Always remember 2 things are mentioned. Number 1 is your interest of trade and number 2 is your interest of public. Only if it is in the interest of public overall and if it is in the interest of trade, trade means purchase and sale, then only SEBI will grant recognition. Once again, SEBI will grant recognition only if 3 things are satisfied. Your bylaws are are proper as per condition. Stock exchange is willing to comply with all the conditions and it is in the interest of trade and public. This is your step 2. Now, SEBI will grant recognition, but while granting recognition, SEBI can impose 4 conditions. Okay. While granting recognition, SEBI can impose 4 conditions. What are those 4 conditions? Now, what conditions SEBI can put? Number 1, SEBI can say, okay, what qualification do you need for membership? Qualification do you need for membership means SEBI can order stock exchange that this should be the qualification for admitting anyone as member, for admitting a member. SEBI can prescribe what qualification should be there. Qualification means eligibility requirement for admitting anyone as member. So SEBI can put only these people you will admit as a member, not anyone else. So first condition, SEBI can put on stock exchanges qualification for membership. Secondly, how contracts will be entered, how they will enter into contract, SEBI can prescribe the manner and SEBI can order stock exchange member to maintain their accounts and get it audited by a chartered accountant, CA. SEBI can put the condition all your member must maintain all their accounts and get it audited by a CA. And if SEBI feels your stock exchange might do something wrong, SEBI can put its own nominee in your governing body. SEBI can say, I feel now your people are, let's say in a stock exchange, there are 3 people who are directors on, in the governing body, Mr. A, Mr. B and Mr. C. SEBI feels, no, these people are not competent enough. I will put my nominee. 3 SEBI ke officers will go and become the governing body of stock exchange and will become the director or a part of governing body of stock exchange. So SEBI has power. SEBI can appoint maximum 3 nominees on the stock exchange governing body, maximum 3 nominees of central government on the stock exchange governing body. Once again, everyone, what are we saying? SEBI, while granting the recognition, can impose 4 conditions. What are the 4 conditions? Number 1, SEBI can impose condition with respect to qualification of members. Second, how contracts will be executed. Third, members have to maintain accounts and get it audited. And fourth, SEBI can appoint 3 nominees of central government. Central government के 3 officers will go and be appointed in the stock exchange की governing body. These are the 4 conditions that SEBI can impose while granting the recognition. Now, once the recognition is granted, we publish it in the official newspaper of our government of India. What is the official newspaper of our government of India? It is known as Official Gazette of India. Official Gazette. In short, I call it OGI. In short, I call it OGI. Oops. Wait. Yeah. So, what are we saying that? Yes. When we grant recognition, after that we will publish in the newspaper of India, central government, that is Official Gazette of India, and Official Gazette of State, where principal office is situated. Let's say Bombay Stock Exchange, its principal office is in Mumbai. So, it will be published in India's Official Gazette and Maharashtra's Official Gazette. But ma'am, don't you think if something is wrong, SEBI can reject your application also, and SEBI can say, no, you are a bad person, I won't give you, go away, tata bye bye, I will not give you recognition. But before rejecting any application, we have to give 2 things. Always remember, we have discussed it in the classes. 1, opportunity of being heard, means we always give chance to speak. Do you want to say something in your defense? So SEBI, before refusing or rejecting any application, SEBI will give opportunity of being heard. And secondly, reasons for refusal in writing. Why they are rejecting, they will give the reason. That's all about section. This is your section 3, step 1, and step 2, 3, 4, 5 are your section 4. This is your section 3 and section 4. So basically, if I have to further summarize this, I can say stock exchange, if they want recognition, they can file application to SEBI along with bylaws and rules relating to government governing body, office bearer and member. Then SEBI will check 3 things: whether your bylaws are proper or not, whether you are willing to comply with condition, and whether it is in public interest and trade interest. Then SEBI can grant recognition subject to 4 conditions. If recognition is granted, SEBI will publish it in the Official Gazette of India and Official Gazette of State. However, if SEBI rejects the application, then SEBI will give you opportunity of being heard and reasons for rejecting before rejecting your application. That's all. That's all about section 3 and section 4. Please let me know in the chat box if these 2 sections are clear to you, section 3 and section 4. Please let me know in the chat box if these 2 sections are clear to you. Yes, everybody, please let me know in the chat box if these 2 sections, section 3 and section 4, are clear to you. Yes, everybody. Okay, Sinchana clear, Rakshita clear, Amulya clear, Prajwal, Amulya 2, Pradyumna, Rakshita. Okay, great. Priya, everyone is clear. I want rest other people also to drop a message in the chat box. Next section is your withdrawal of recognition. SEBI is like, मुझे हल्के में मत लेना. If I can give you recognition, I can take that recognition also. So SEBI is like, can SEBI withdraw the recognition which is just granted? Yes, SEBI can withdraw the recognition, but ऐसे ही मन कर रहा था इसीलिए कर लिया? No. SEBI can withdraw the recognition only in two cases, only if it is in the public interest and the interest of trade. Only if it is in the interest of public and it is in the interest of trade. It can come in case law question. Always remember, SEBI can withdraw the recognition. SEBI can withdraw the recognition only if it is in interest of public and interest of trade. But before rejecting any recognition of stock exchange, SEBI will give you a written notice. A written notice. Just a second, I will make a little chotu sa changes in this. Send written notice. ठीक है. Okay. छोटू सा change. SEBI will do what? SEBI will send a written notice. Written notice before withdrawing your application, and in that notice we will state the reasons why we are rejecting or why we are cancelling or withdrawing your recognition, and before cancelling your registration we will give you opportunity of being heard. After that we will withdraw your recognition by publishing in the official gazette, same official gazette of India and official gazette of state where principal office is situated. Once again, very easy process of withdrawal of recognition. Can SEBI, central government or SEBI, both? Acha, whenever here I say SEBI, it means central government also. Central government can also do this. SEBI can also do this. Okay. So central government or SEBI can withdraw recognition of stock exchange only in two cases. Yes, you have to speak along with me, only in two cases, guys. Public interest of public and interest of trade. What is the process? First, we will send written notice to the stock exchange giving reasons, and we will give them opportunity of being heard. Then we can withdraw the recognition by publishing in the official gazette. That's it. Now, ma'am, what about pending contract? Ma'am, let's say any stock exchange is working since 2010. Let's say today is 2025. Let's say today on 4th December. On 4th December today, SEBI withdraws the recognition. What about pending contracts which happened before 4th December? What about those contracts which happened before 4th December? They will be valid. They will not be affected. So we are talking about old contracts. The old contracts which were entered before such withdrawal. Old contracts, they will still be valid. Their validity will not be affected. Means they will still be valid. Ma'am, what if there are any pending contracts? Pending means which has started but yet to complete. Then we will let them complete. We will not stop it in between. If there are any pending contracts, then even after withdrawal, we will complete that pending contract. So SEBI along with stock exchange will ensure the completion of the pending contract. So if question comes, ma'am, if the recognition is withdrawn, what about the pending contracts? What about the old contracts? Old contracts will still be valid, and if there is any pending contract, we will complete it. We will not leave it in between. We will complete it. Are we clear with this? Now, one last point. In some cases, automatically your recognition will be withdrawn in 3 cases. In 3 cases, your recognition will be withdrawn automatically. First one, if you have not corporatized or demutualized. Imagine Bombay Stock Exchange. BSE was there before 1956. Before SCRA Act came, before 1956, Bombay Stock Exchange was there. Remember? So, if Bombay Stock Exchange after 1956, it has not converted into a company, meaning it is not corporatized or demutualized. How to corporatize and demutualize? You have to submit a scheme to SEBI, and then SEBI will approve that scheme. Scheme of what? Scheme of corporatization and demutualization. So if you are only if you are a old stock exchange, old matlab before 1956 wala, you have to submit a scheme of corporatization and demutualization to SEBI. Then SEBI approves your scheme of corporatization and demutualization. But if you fail to submit the scheme of corporatization demutualization, then your recognition will automatically be withdrawn, or you submitted the scheme but SEBI rejected your scheme. ऐसी नहीं होगा, it will be SEBI actually, by mistake there is, it will be SEBI. Okay. SEBI rejected the scheme of corporatization demutualization. In this case, also your recognition will be automatically withdrawn, and or SEBI has not corporatized, stock exchange has not been corporatized or demutualized. 3 cases, your recognition will be mandatorily or automatically withdrawn. First, you failed to submit the scheme of corporatization demutualization. Second, you submitted the scheme but it is rejected by SEBI. And third, you failed to corporatize demutualize, means you have not yet corporatized and demutualized. In these 3 cases, your recognition will be automatically withdrawn by SEBI. I hope this topic of section 5 is clear to you. These 3 sections are very important from this chapter: section 3, section 4 and section 5. Are we clear with this, everybody? Section 3, section 4 and section 5. Type amazing in the chat box if we are clear till now. Type amazing in the chat box if we are clear with all the topics till now. Yes, everyone? Great, everyone. Amazing. Amazing. Okay, Payal, Hari, Priya, Sinchana, Rakshita, Prajwal, Amulya, Amulya 1, Amulya 2, everyone clear. Great, great. So good to see you all. Pradyumna, amazing. Now moving towards the next topic, and that next topic is, what is the next topic? Okay. That next topic is powers. The next topic is powers. Everyone, it's a very important topic again. Powers, if you'll see your study material, power to 3 people is given in this particular chapter, that is SCRA Act. So in this chapter, powers are given, certain powers are given to central government, certain powers are given to stock exchange, and certain powers are given to SEBI. So we are going to do this topic of power of central government, power of stock exchange and power of SEBI. First, we will start with power of central government. And you know what? All these topics that we are doing of power of central government, these are also the topics of, these are also the powers of SEBI. Are we clear with this? So, all the powers of central government are also the power of SEBI. Meaning, I mean to say that those powers which are available to central government, they are also available to SEBI. So, I can say these are powers of both central government and SEBI. First power, section 6, power to call information and records. First power, SEBI can ask you to submit any periodical return. SEBI can ask any stock exchange to submit any periodical returns. Number 2, SEBI can ask you to preserve your books for maximum 5 years. Third point, SEBI can demand any information and explanation in writing. Fourth point, SEBI can appoint any inspector for inquiry. Fifth point, everyone, okay, do four points, very easy. We are doing section number 6, power to call information and records. What are the powers of SEBI or central government? We are doing powers of central government and SEBI. The first power of central government oblique SEBI is, they can ask stock exchange to submit periodical returns. They can ask stock exchange to preserve books of accounts for 5 years. They can ask stock exchange to submit any information or any explanation in writing, and then they have to submit, and they can appoint inspector for inquiry. If SEBI feels something is wrong, this National Stock Exchange is doing some fraud, this NSE is doing some fraud, then we can appoint inspector for, we will become CID for inquiry. Everyone clear this 4 points? If question comes on this power, if you write simply this 5 points, they are enough. We are clear. Once again, what are the powers of central government oblique SEBI? Power to call for periodical returns, ठीक है, power to ask stock exchange to maintain books for 5 years, power to demand any information or explanation in writing, power to appoint inspectors for inquiry, Now, fifth one is Very important, specifically there has been a past exam question from this particular topic. Okay, so if central government will ask any information from you, if central government will ask any documents from you, who will be responsible to provide that information? Following people. You have to remember this following people. Number one, directors of stock exchange. Number two, manager, secretary, officers of stock exchange, members of stock exchange. Who are members of stock exchange? Brokers. Acha, if broker is a partnership firm, then all partners. Ma'am, what if the broker is a partnership firm? Then all the partners of that partnership firm will also be liable. And lastly, anybody. But we are keeping it open. Anybody will come. Anybody who had dealings with them. Matlab, all the people who are interacting with this four people. Anybody who are dealing with these four people. For example, their clients, their sub-brokers, their vendors, etc. These people will be liable to what? These people will be liable to produce documents, give explanation, answer their questions of what? Produce documents to central government or SEBI. Are we clear with this, everyone? So what are we saying? Once again, whenever SEBI demands any document or information, who will be responsible to provide that document or information? So all the directors of stock exchange, directors, managers, secretaries, officers, brokers, and if brokers are partnership firm, then all the partners and anybody who deal with them will be responsible to provide all document and information to central government or SEBI. Are we clear with this, everyone? Are we clear with this? With this we are done with first power of central government oblique SEBI. Central government oblique SEBI. First power of central government oblique SEBI. Once again, let's try to remember. First power of central government or SEBI. Power. They can ask stock exchange to submit, power to call periodical returns, power to ask them to maintain documents for 5 years, books of accounts for 5 years. Next, demand any information or explanation in writing. Next, power to appoint inspectors for inquiry. And last point, whenever SEBI demands any books or documents or explanation, following people will be liable to cooperate. Following people will be liable: directors, managers, DMSO, directors, managers, secretaries, officers, members. If members are partnership firm, then all the partners and anybody who's dealing with them will be liable to produce all the documents to SEBI, to give all the information and explanation to SEBI. With this, we are done with the first power of central government oblique stock exchange. Second power is power to make rules for stock exchange. Guys, central government and SEBI has power. Yes, central government and SEBI has power to make rules for stock exchange. Remember, every stock exchange should have their own bylaws and should have their own rules. We studied when we were doing the topic of recognition of stock exchange. There we studied that every stock exchange should have their own bylaws and should have their own rules. So who can make rules for them? Firstly, stock exchange themselves has to make rules for them. But if their rules are not appropriate, even central government and SEBI have power to make rules of stock exchange. So coming here, government or SEBI, central government or SEBI can direct any stock exchange to make or amend any rules. They can order stock exchange, hey, make this rule, make that rule, and then stock exchange have to comply within 2 months. Meaning, if today central government orders stock exchange, hey, make this rule, then stock exchange have to make that rule within 2 months. But the order of central government should be in writing with reason why they have to make these rules. And third, if stock exchange fails to make such rules, central government itself will make the rule. It's like either you yourself get out or I will throw you out. So it's like central government is saying to stock exchange, I am ordering you, either you make these rules, or if you don't make rules, I will make your rules. So with this, we are done with this. Ki central government can order stock exchange to make certain rules. That order will be in writing with reasons, and then central government have to make that rule within 2 months. If within 2 months, stock exchange have to make that rules within 2 months. If within 2 months stock exchange fails to make that particular rules, then central government will itself make that rules. Once rules are made, they will be published in the official Gazette of India and the Gazette of respective state. Anytime any rules, bylaws are made, every time they are published in two Gazette, one India ka, one state ka, one official Gazette of India, another state ka Gazette. And these rules override Companies Act. These rules are even above Companies Act or any other law. Matlab, these rules are more powerful than Companies Act. So with this, we are done with power of central government or SEBI to make rules. Once again, they will order stock exchange to make rules in writing with reason. Then stock exchange have to make that rule within 2 months. If stock exchange fails, then SEBI itself will make the central government or SEBI will itself will make the rules, and then we will publish it in the official Gazette of India and Gazette of State. That's it. Next is your power to supersede governing body. It's like, हटो आज तेरा भाई स्टॉक एक्सचेंज चलाएगा. Supersede governing body means central government or SEBI is saying to Bombay Stock Exchange कि your directors are not capable, your governing body is not capable, हटो, side, we will manage, we will run your stock exchange. So if central government feels that governing body are not capable, they are not good enough, so central government can order, you are out, we are in. Central government or SEBI will say all your directors officer out, suspended, gone. Now we will appoint our central government officers, SEBI officers in your governing body, and now we will run your stock exchange until and unless your new governing body is appointed. Is that the power? Yes, that is the power of central government as well as SEBI. Both have that power. So central government and SEBI can supersede your governing body. Why? Only if it is in public interest and interest of trade. These two words you will find everywhere. Central government will supersede your body only if it is in interest of public and interest of trade. Are we clear with this? Second, before superseding, we will give you notice in writing along with opportunity of being heard. I call it OBH, along with reason. See, these are everywhere, these things. We will give you before superseding your, before passing order to supersede your governing body, we will give you written notice. In that we will give you reason and we will give you opportunity of being heard. Are we clear with this? There will be three effects of such supersession. First, your existing governing body vacate, tata bye bye. Old people, let's say earlier in a Bombay Stock Exchange, there is Mr. A, Mr. B and Mr. C. Now they will vacate the office, means we will say bye bye, miss you. No, sorry, I'll not miss you. So existing governing body will vacate the office and the new government officers will be appointed and they will take over all the powers and duties. And all the property of stock exchange will vest. Vest means transferred in the new appointed person. Acha, new appointed person means those government people who are appointed, they will get all the assets of the stock exchange which are needed to run the day-to-day business. Now, these appointed officers will hold office for the period specified. Acha, central government will specify the period that these government officers, this new governing body, they will hold office only till 2 years or 3 years or 5 years, and then government will order reconstitution of governing body. Then government will order stock exchange. Now you make a new governing body, means you appoint new people, and then when stock exchange appoint a new governing body, then again all the properties and powers will retransfer back to the new governing body of the stock exchange. All the properties and power will be revested. Revested means retransferred to the reconstituted body. So what are we saying? Let's say in Bombay Stock Exchange, earlier it was managed by A, but A was not capable enough. So there is one central government officer, that central government of A is removed, and that central government officer became the governing body of Bombay Stock Exchange. Now central government ordered Bombay Stock Exchange to make a new governing body, so they appointed a new person, Mr. M. Now again all the powers will be transferred from central government officer to Mr. M, who is the new governing body of the stock exchange. Are we clear with this? So this is all about power to supersede governing body. Are we clear with this? Once again, I'll summarize power to supersede governing body. If only in two cases, if it is in the public interest or it is in the interest of trade, central government or SEBI can order change in the governing body of stock exchange. Meaning, we will ask you to remove your existing governing body. We will appoint our own officers in your governing body. Are we clear with this? For that, we will give you written notice with reasons plus opportunity of being heard. What are the effect? When such order is passed, your existing governing body will be tata bye-bye. New government officers will take over all the powers and they will take over all the assets. Now, government will order stock exchange to make a new governing body, and then all the powers and assets will be retransferred from government officers to the new governing body of the stock exchange. I hope we are done with this. And the next power of central government or SEBI is suspension of business of stock exchange. Suspension means if we feel any emergency is needed. Acha, this is a very important past exam question. Suspension. In which case suspension of stock exchange can be done? Only if there is any emergency. Only if there is any emergency. Let's say there is some fraudulent dealing is done in any share. Let's say there is a price jump, too much extreme volatility in any share. Let's say some terrorist attack is there. This is also an emergency situation. Whenever there is any emergency situation, some fraud is happening, something uncontrollable thing is happening, terrorist attack is there. If any emergency arises, then only central government or SEBI can suspend the business of stock exchange for maximum 7 days. Yes, you got it right, for maximum 7 days via official gazette. We can suspend it for maximum 7 days by publishing it in the official gazette. That's it. That's it. So, ma'am, who have power to suspend the business of stock exchange? Two people, central government or SEBI. For what reason, ma'am? Only for emergency. For how many days, ma'am? Maximum for 7 days by publishing in the official gazette. Ma'am, can we extend it? We can extend it only after giving opportunity of being heard to SEBI. Only after doing the hearing. Acha, first 7 days ke liye, you don't need to give opportunity of being heard, and this is the catch. You need to remember, for the first 7 days, you don't need to give opportunity of being heard to the stock exchange. But if you want to extend the suspension, then you need to give opportunity of being heard to the stock exchange. And lastly, suspension can be partial or full. Partial matlab whole stock exchange is not suspended, only a particular segment or only certain part is suspended. Full matlab entire Bombay Stock Exchange is suspended. Are we clear with this? Yes. Ma'am, is it consecutive 7 days or it can be splitted? See, if one emergency is there, ठीक है, तो one emergency के लिए maximum 7 days. उसके बाद if you want to suspend for more than 7 days, then you need opportunity of being heard. If another emergency is there, and if for another emergency you are suspending, then you can suspend it for 7 days without OBH. But if for the same emergency you want to suspend more than 7 days, whether it is consecutive or not, then you need to give opportunity of being heard for beyond 7 days. That is for extension. Swaminathan. Is this clear? What's your name? I cannot pronounce it right, I think. Is this clear to you? Is this clear to you? Yes? Yes. Last power of central government or SEBI is prohibition of contract in certain area. In certain area. Let's say there is a particular area in Kolkata where people are doing illegal trading, and it's like a speculation, like a satta, and they are doing some illegal transactions and all, through which they are affecting the share prices. In that particular cases, central government and SEBI has power. What power? This is a very important power. They can prohibit any purchase and sale in any share in any state or area. They can say, let's say PVR ke shares mein, in this location, in the Kolkata location, nobody can purchase and sell PVR ka share. this much power central government has. Central government or SEBI can prohibit any purchase and sale on any share in any specific state or area. But when we do that, we have to publish in the official gazette. And if central government prohibits matlab complete no. Prohibition means complete no, you cannot trade. If even after that you will enter into contract, it will be known as illegal contract. When central government says no, you can't trade in PVR ka shares, still if you trade in PVR ka shares, that will be known as illegal contract. Okay, now it's up to central government. Central government can restrict fully or under certain conditions. That is all about powers of central government. Please let me know in the chat box if we are clear with the powers of central government. What is the last power of central government? I'll summarize this once again. Central government has power. They can prohibit contract, means purchase and sale of any share in any area, okay, by publishing in official gazette. Even after that, if anyone will purchase and sell that share, it will be known as illegal contract. That's all about section 16, power of central government or SEBI to for prohibition of contracts. So these are the powers of central government or SEBI. Are we clear with this, everyone? Give me a thumbs up in the chat box, or give me some fireworks in the chat box if we are clear till now. These are very important powers, and I hope you are able to understand all the powers of central government oblique SEBI. Original powers are with central government, but central government has given these powers to SEBI also. Everybody, all those who are watching online, please drop me a message in the chat box. Yes, everyone, drop me a message in the chat box. Everybody, all those who are watching, and if you're clear with the powers of central government, drop me some fireworks in. Oh, 2 powers are left. 3 powers are left. Okay, now we will do it. Next is power to grant immunity. Immunity means protection from prosecution and penalty. So let's say I did some non-compliance of SCRA Act and I'm scared of penalties and prosecution. I can tell to SEBI, this thing happened. I will give all the details to SEBI, and then I can request SEBI, please don't prosecute me. Please maaf kar do. It's like a forgiving. You are asking for forgiveness. You are asking. Immunity means forgiveness. Acha, in which case SEBI will give you immunity, means forgiveness, only if you violated some law, SCRA Act, and then you applied to SEBI by giving full details about the non-compliance, that this thing happened, and then SEBI can grant you immunity from 2 things, prosecution and penalty. So here one point is given, SEBI can grant you immunity from prosecution and penalty. Prosecution means we will not start a criminal case against you. Penalty means you don't have to pay any penalty money. Okay, no penalty will be imposed on you. So SEBI can grant you forgiveness or protection or immunity from prosecution and penalty only if you make full and true disclosure. Full matlab complete, true matlab correct. Full and true disclosure regarding violation. But central government can grant immunity only on the recommendation of SEBI. Only if SEBI recommends, then only central government can grant immunity. Acha, who can grant immunity? Central government, but only on the recommendation of SEBI. So first, SEBI will recommend to central government, and then central government can grant you immunity. But SEBI's recommendation is not binding, meaning even after SEBI gives recommendation to central government, still central government can either give you immunity or reject it. Central government have what? Power. That central SEBI's recommendation is not binding. Power is with the ultimate power is with the central government, whether to give immunity or not to give immunity. But no immunity can be given if prosecution have already started. If prosecution, your criminal case against you is already started, now you are too late. You are too late. Let's say movie already started. Now you are too late to buy movie tickets. We will not give you movie tickets now. Movie already started. So if prosecution already started, then no immunity can be given. Immunity given can be withdrawn in 2 cases: if you break condition or you have given false evidence. If later central government comes to know that you have given wrong disclosure, false disclosure, or you did not comply with the condition, then central government can withdraw the immunity. Withdraw the immunity means I will not forgive you now. Now you again I will impose prosecution and penalty against you. So if central government finds out that you break the condition or you have given false evidence, then central government can withdraw the immunity. On withdrawal, now you will be liable for penalty and offense. So if your immunity is withdrawn, then now you will be liable for prosecution and penalty. With this, we are done with power to grant immunity. Are we clear with the power to grant immunity? I'll just sum up this once again. Central government has power. They can give immunity from prosecution and penalty to those people who make full disclosure about the violation to the central government. But central government can grant immunity only on the recommendation of SEBI, but SEBI's recommendation is not binding. Final decision is of the central government. Now, immunity cannot be granted if prosecution has already started, and if later SEBI or central government finds out that the person has not complied with the conditions or has given false evidence, then immunity can be withdrawn. If immunity is withdrawn, then now you will be liable for the offenses and penalties. The next power is power of delegation, which we already know. Central government can delegate its power to SEBI, and most of the powers of central government in this chapter are delegated to SEBI. Central government has power, they can delegate their powers to SEBI or RBI, which we already know. All the powers of central government in this chapter, they have delegated it to SEBI. Lastly, power to make rules. Power to make rules. Acha guys, what do you mean by this? As we all know, just like Companies Act mein there is act, there is rules. Same way, there is acts. Acts are there in securities law. There is SCRA Act, there is SEBI Act, etc. There are rules, different rules are there, and there are different regulations. Okay, who pass act? Who make act? Parliament. Who make rules? Central government. And who make regulations? SEBI. Regulations, you already know your whole of Part B, like ICDR regulations, LODR regulations, mutual fund regulations, all the regulations. Who make regulations? SEBI. Who make rules? Central government. And who make act? Parliament. So who have power to make rules under securities law? In securities law, central government have power to make rules. Now, coming here, power to make rules. Only central government have power to make rules. On which matter they can make rules? They can make rules regarding returns, documents to be preserved, how inquiry has to be done, any matter. No need to by heart. This is just 2-3 points you can see on which matter central government can make rules. Central government can make rules on the topic of returns, how periodic returns we have to submit, how documents we have to preserve, how inquiry will be done, any other matter. Okay. And lastly, whenever central government makes any rule, they have to be placed before Parliament for within 30 days, and Parliament can change the rules if needed. That's all. Once again, power to make rules. Only central government have power to make rules, and when they make rule, they have to place it before Parliament for 30 days, and not within 30 days, sorry, for 30 days, and then Parliament can modify or change the rule. With this, we are now done with power of central government. We are done with, I think there are like 7 powers of central government. We are done with powers of central government. Yes, drop fire in the chat box already. Amulya have already sent fireworks. Okay, so drop fire in the chat box if you are clear. Yes, drop fire in the chat box. Drop fire in the chat box if you are clear with all the powers of central government. Yes, if you're clear with all the powers of central government, drop fire in the chat box. Lot of fire I can see. Yes, is there cold in Bangalore? Sinchana, Amulya, Prajwal, Rakshita, Priya, Amulya, Vinay. Great, everyone. Are we clear? Yes, everyone. Yes, it is very cold. It's really cold. Oh. Yes. So the next topic that we'll be doing is power of what? We'll be doing power of SEBI. So the next topic we'll be doing is your power of SEBI. So everybody, next topic that we'll be doing, पढ़ने का अच्छा सीजन नहीं है ये. It's reaching 16 degree. Oh, okay. Okay, got it. ठीक है. Just get yourself in 3 to 4 layers and then study, okay? Cover yourself in three layers at least. Okay, I just need, give me a few minutes. I just need to check the charging of my device because the battery is 10%. And then we'll sleep there only. Acha, theek hai. Prajwal, no. Make sure you keep on drinking water so that you don't sleep. Okay. Guys, let's try to complete the last few topics that are left. Next topic is your powers of SEBI. There are 4 powers of SEBI that we have to study. Now, the first power of SEBI. We are starting a new topic. Yes, everybody, I want your full focus along with me. Everyone, full focus along with me. The first power of SEBI is make or amend bylaws. Remember this same power we studied in central government also. So, central government also have power to make bylaws for stock exchange, bylaws of stock exchange, and SEBI also have power to make bylaws of stock exchange. So the first power is power to make or amend bylaws, but SEBI can make or amend bylaws either on the request of stock exchange or on its own motion. So here two things are given. We are doing powers of SEBI. The first power of SEBI is section 10. SEBI's power to make or amend bylaws. We are saying SEBI can make or amend bylaws if it is requested by the stock exchange or on its own motion. Next is SEBI must record reasons in writing. Whenever SEBI wants to change the bylaws of the stock exchange, we have to give the reason in writing why we are changing your bylaws. And the third, whenever bylaws are made, they are published in the India official gazette and the state gazette. We already know we have to publish it in the Gazette of India and the Gazette of State. Every time bylaws and rules of stock exchange is made or changed, they have to be published in the Gazette of India and the Gazette of State. Next is, if stock exchange is not okay with the bylaws, they can object within 2 months. They can raise objection within 2 months, and if they raise objection within 2 months, SEBI can revise the bylaws. And lastly, as soon as they are published in the official gazette, they will be immediately effective. Are we clear with this? And that's all about SEBI's power to make or amend bylaws. I'll just quickly once again, SEBI has power to make bylaws of stock exchange either on its own or on the request of stock exchange. Now, when we make their bylaw, we have to give them notice and we have to record the reason in writing. And the new bylaws have to be published in Gazette of India and Gazette of State, and then immediately it will be effective. If stock exchange is not okay with the new laws, they can raise objection within 2 months, and if there is objection, then SEBI will make the changes. That's all about SEBI's power to make bylaws. Next is SEBI's power to issue direction. Direction means order. As you know, SEBI is the karta dharta of the stock exchange. SEBI has power to give order to literally anybody if SEBI feels it necessary in the interest of public, in the interest of investors. So for that reason, SEBI has power to give directions. Direction means giving order. So in 3 cases, SEBI can give order. Number 1, if it is in the interest of investors. Number 2, for the development of stock market. Number 3, to prevent any fraud, to prevent any affairs from being detrimental to public interest. Detrimental matlab to prevent any unwanted affairs. And lastly, to secure proper management. For these 3 reasons, SEBI can give order to whom? SEBI can give order to 3 people. Number 1, SEBI can give any order to stock exchange, to CC clearing corporation, to trading agencies. Who are trading agencies? Brokers. To brokers, intermediary like merchant banker, RTA, investment advisors, or any person associated with security market, even to companies that are listed in the stock exchange. So all the companies that are listed in the stock exchange. Yes, are we clear with this? All the companies that are listed in the stock exchange, let's say Adani Power, HUL, Axis Bank, ठीक है, all the companies that are listed in the stock exchange, they can be given orders by the SEBI. Very easy, very simple points. Power of SEBI to give orders. SEBI can give order. SEBI can give any order or any direction to stock exchange, CC, brokers, intermediary, any person or companies, if it is in the interest of investor, for the development of stock market, for preventing any unwanted affairs, or for securing proper management. For these 3 reasons, SEBI can pass direction to these 3 people. That's it. Are we clear with this? Acha. Next power of SEBI is power to make regulations. We already know, guys, your whole part B is full of regulations. ICDR regulation, LODR regulation. Who made those regulations? SEBI. So SEBI has power to make regulations. And with respect to which matters they can make regulations. Acha, one thing, whenever they make regulations, they have to lay before Parliament for 30 days. Parliament can make any changes. Same point we studied for power of central government to make rules. Whenever central government makes rules or whenever SEBI makes regulations, they have to be placed before Parliament for 30 days, and then Parliament can modify the changes in that. Acha, last point, for which matters regulations can be made by SEBI. Some examples are given. SEBI can make regulations with respect to 51% holding of stock, 51% public holding. Public holding matlab ki at least 51% shares of BSE Limited, NSE Limited will not be with the brokers, Arodha or Grow, will be with the public like you and me. Just like for normal companies, the requirement is minimum 75% public holding. Same way for stock exchanges, the requirement is minimum 51% public holding. At least 51% shares of BSE Limited, NSE Limited or any stock exchange should be held by public and not brokers. Number 2, SEBI can make regulations with respect to eligibility of clearing corporation. Who are eligible to become clearing corporation? Settlement proceedings, how we will do settlement proceeding or any other matter. So basically only 4 points are there. With respect to settlement proceeding, any other matter with respect to eligibility of CC, or with respect to minimum 51% public holding of stock exchange. With respect to these matters, SEBI can make regulation. You know, these are just limited 4 points are given, but actually SEBI can make regulations on any matter relating to stock exchange. Like broad power is there. Next is power to adjudicate. Guys, power to adjudicate we will do along with our lesson number 5, that is your depository, because this power to adjudicate is same there. Basically na, adjudicate means power to appoint adjudicating officer and impose penalty. So whenever we feel any company has done any non-compliance, or any stock exchange or anybody has done any non-compliance, then SEBI appoints adjudicating officer. Then those adjudicating officer, they do the inquiry. they give opportunity of being heard, and then they impose penalty. What do? They impose penalty. That is known as power of adjudication. Are we clear with this? So that's all about power of adjudication. But this total power of adjudication we will do along with lesson number 5, depository, because this is copy paste in lesson 3, lesson 4 and lesson number 5. So basically I told you power to adjudicate means we appoint an adjudicating officer to impose penalty on companies. That is power to adjudicate. With this we are done with all the powers of SEBI, and the next power is power of stock exchange. The next power is power of recognized stock exchange. Okay, so what are the powers of stock exchange? There are only 2 powers given. Number 1, power to make rules, and number 2, power to make bylaws. Remember we studied when we were doing like what? Remember when we were doing this recognition of stock exchange, when here we were doing that if you want to get recognized, then you need to submit 2 documents to SEBI or central government. And what are those 2 documents? Every stock exchange have to make their own bylaws and their own rules. So what are the 2 powers of stock exchange? They have to make their own bylaws and they have to make their own rules. They have to make their own bylaws and they have to make their own rules. We already know this. So what are the 2 powers of stock exchange? To make their rules and to make their bylaws. First point, what are the powers of stock exchange for making rules? The first power of stock exchange is, once again, stock exchange have power to make rules regarding following matters. So regarding these 4 matters, stock exchange can make rules. So coming here, stock exchange can make rules relating to restricting voting rights to members only. Stock exchange can make rules. Only members will vote. Members matlab broker. No other person, even if you are a shareholder, you can't vote. Yes, stock exchange have that power that only members can vote, restricting voting right only to member. Number 2, stock exchange can make a rule, 1 member, 1 vote. Even if I have 100 shares, Prajwal have 10 shares, Amulya has 50 shares. It's not like Amulya will get 50 votes, Prajwal will get 1 vote, I will get 10 votes. No, everybody, 1 person, 1 vote. So stock exchange can make this rule, 1 member, 1 vote. Next, stock exchange can restrict appointment of proxy. Proxy means when I am not able to attend the meeting, I send someone else on behalf of me, my brother on behalf of me, that is known as proxy. But central government can restrict proxy. Central government can, not central government, I'm really sorry, stock exchange. Stock exchange can make rule, no one will appoint proxy. No one can appoint proxy. Central government can make rule for restricting the appointment of proxy. And lastly, any other incidental or supplementary matter. Matlab, any other matter ko leke stock exchange can make rules. So 4 points we are doing. Stock exchange can make rules with respect to 4 things. Number 1, restricting voting rights to members only. Number 2, providing rule 1 member, 1 vote. Number 3, restricting appointment of proxy. And number 4, any other supplementary matter. That's it. Okay, but whenever we want to make these rules will be valid only after prior approval of central government and SEBI and publishing in the official. What is wrong? Oops, I'll just do this. Okay, prior approval of central government SEBI and publishing in the official gazette. Guys, just remember one thing in your mind, that all the bylaws and all the rules of stock exchange is published in the official gazette and it is approved by central government or SEBI. So even if we want to make these rules, if stock exchange want to make this rule, can we make these rules? Yes, but only with the approval of central government and stock exchange and only by publishing it in the official gazette of India. That's it. Next is power to make your own bylaws. Can stock exchange make their own bylaws? Yes, they can make their own bylaws, but only with SEBI's approval and publishing it in the official gazette. This we already know. Stock exchange can make their own rules, they can make their own bylaws, but only with the approval of central government and SEBI plus publishing in official gazette. Acha, with respect to which matters we can make bylaws? Anything. These are general points. Market timing 9:15 to 3:30. How we will do settlement, T plus 1 day, T plus 0 day, T plus 2 day. How much margin we will give, how we will list any share, how we will settle dispute, how much fees and fine we will charge. ठीक है, how much brokerage rates will be there, 0.1%, 0.5%, 1%, how much brokerage rate, any other matter. These are some general points with respect to these matters. Stock exchange can make their own bylaws. Are we clear with this? That's it. And bylaws must be approved by SEBI and published in the official Gazette of India. ठीक है, that's all. अच्छा, are bylaws framed by Bombay Stock Exchange subordinate legislation? Subordinate मतलब कि when we, let's say there is a stock exchange called Bombay Stock Exchange. Bombay Stock Exchange made their own bylaws. This is a law, yes. But is it supreme to Companies Act and SCRA Act, or is it subordinate to other law? The answer is yes, it is subordinate to other law, meaning it has to be within the purview of Companies Act, SCRA Act. So these are subordinate legislation. Companies Act, SCRA Act, these are supreme legislation. So bylaws made by BSE is a subordinate legislation. This was discussed in a case law. With this, we are done with all the topics of powers. Let me know in the chat box if till now all the powers are clear to you. Are we confident? Are you feeling better? And are you feeling better? Like, is it helping? Are you feeling better with respect to all the powers of central government, powers of SEBI, and powers of stock exchange? Yes, are we feeling better with respect to all the powers? Everyone? Yes, it's clear. Okay, so we are done with the powers of central government and powers of SEBI and powers of stock exchange. Okay, now moving towards another topic, which is basically penalties. Now, penalties are same or very similar in lesson 3, lesson 4 and lesson 5. So all the penalties of lesson 3, lesson 4 and lesson 5 we will do together. साथ में, बाद में, later we will do lesson 3, lesson 4, lesson 5 की penalties together. We'll consolidate it, make a chart, and then we will do it later. So apart from penalty, only basically one topic is left, which is your basically rules. SCR rules are left, and one section powers we have done, right? We are done with all the powers, and after powers we are left with one topic, that is listing, public issue and listing of securities. And apart from public issue and listing and appeal and rules, that's it. These 3 topics are left. Hello everyone, how are you all? I hope your preparation is going amazing. And today we are going to start our revision of lesson number 4, that is SEBI Act 1992. So if you all can hear me, then quickly give me an audio and video check in the chat box so that we can start our today's revision series of lesson 4 SEBI Act. Again, it's a good lesson, not very lengthy, medium length you can say, and important from examination point of view. 1 or 2 question you can expect from your lesson number 4 SEBI Act in your examination. So topics are very easy. I would say this lesson number 4 is easier as compared to the previous lesson that we did as compared to the lesson 3 that we did. Everyone, quickly drop me a message in the chat box if I am properly audible and visible to you all, so that we can start with our today's session of lesson number 4 revision, that is SEBI Act 1992. Everybody. So guys, SEBI Act 1992 we are going to study. Now, SEBI Act, why this act came to establish a body called SEBI? Again, we are revising lesson number 4 SEBI Act. As we all know that before SEBI Act came, there was no body in India to regulate securities market. It was regulated by central government. But after 1992, or I should say in 1992, a proper act came known as SEBI Act. And why this act came? This act came to establish a body called SEBI, who is basically the god of securities market, to regulate the securities market. So we made a separate regulatory body called SEBI in order to regulate the securities market. Are we clear with this? Okay, so first thing that you have to do from the examination point of view is objectives of SEBI. Ma'am, central government was regulating stock market. Why there was a need of a separate regulator? Why there was a need of a separate regulator when central government was already regulating the stock market? Because central government was not able to give that much attention to these particular matters. So we needed a separate regulator for securities market, and that's why we brought SEBI. So what are the three main objectives of SEBI? Very important from examination point of view. Three main objective of SEBI: to protect investors. As we all see, there is lot of history of frauds. So to protect investor from such fraud, we made SEBI. Second, to regulate the whole securities market. Who will decide how to manage the stock market process? Who will regulate stock exchange? Who will regulate all the intermediaries, brokers, DPs, etc.? SEBI. So SEBI regulate the securities market. And lastly, we want our Indian stock market to grow and grow and grow, to develop. So who's responsible for development of securities market? SEBI. Three most important functions or duties or functions of SEBI: protect the interest of investors, regulate securities market, and promote the development of securities market. Once again, everyone, you have to speak along with me. Three most important duties and functions of SEBI. The first one is to protect the interest of investors, second is to regulate the securities market, and third is to promote the development of securities market. Protect, regulate, and promote. Protect, regulate, and promote. Now, most important thing is, what are the functions of SEBI? Functions of SEBI, or what measures are taken by SEBI? Now we know it is ultimately SEBI who is responsible for the protection of interest of investor. We know that SEBI is responsible to protect the interest of investor. Now, in order to protect the interest of investors, what actions are taken by SEBI? What does SEBI do? What are their functions? What activities they do? What actions they take? What measures they take? First point, they regulate and register chickadoo intermediaries. Acha, this is just for remember. Do you remember, guys? We made a memory technique during our class to remember this particular topic. I remember this very clearly. Yes, lot of intermediaries, you know, in the stock market, like stockbroker, sub-broker, share transfer agent, merchant bankers, underwriters, portfolio manager, investment advisor. These are, you know, small intermediaries. However, there are some big intermediaries also. The intermediaries: depositories, DPs, custodians, FII, foreign institution investors, and CRA, credit rating agencies. These are big intermediaries. Apart from that, there are some other funds known as venture capital fund, CIS fund, and mutual funds. So all these people, chickadoo intermediaries, Doddadu intermediaries, and these funds, all they are registered by SEBI and they are regulated by SEBI. So the first function of SEBI is registration and regulating chickadoo intermediaries, Doddadu intermediaries, and funds like venture capital fund, CIS fund, mutual funds. Acha, who will come in chickadoo intermediaries? Stockbroker, sub-broker, merchant bankers, underwriters, portfolio managers. Doddadu mein depositories, DPs, custodian, FII, CRA. Now, SEBI, what do the SEBI provide registration to these people, and SEBI regulates these people. Not only these people, one of the main function of SEBI is to regulate business of stock exchange. How does stock exchange work? What is the business of stock exchange? Purchase and selling of security. Who regulate that business? SEBI. So SEBI is the ultimate body who is ultimately regulating the whole business of stock exchange. SEBI is also regulating all the acquisition and takeover transaction. Whenever one company take over another company, whenever one company take over another company, all that transactions are regulated by SEBI. So we are done with 2 points. SEBI register and regulate this chickadoo intermediaries, Doddadu intermediaries, and some funds, VCF, mutual funds, etc. SEBI regulates business of stock exchange and acquisition and takeover transaction. Secondly, ma'am, what if someone will try to do fraud, insider trading? SEBI will prohibit it. Prohibit means no, no, no. SEBI will prohibit fraudulent transactions and UTP transaction. UTP means unfair trade practices. Unfair trade practices, and will prohibit insider trading. So what SEBI will prohibit? SEBI will prohibit two things, three things rather, I should say: fraudulent transactions, unfair trade practices, and insider trading. Apart from that, SEBI will promote investors' education. SEBI will try that more and more investors will be educated. So SEBI will promote we are what? Investors education and SROs. SROs means self-regulatory organization. This is not government. It's a non-government body basically who help more compliances. They influence people to follow law. So they are non-government body who help SEBI in encouraging compliances. Okay, so we are done with how many points? Most of the points done. Lastly, SEBI levy fees, matlab they collect fees from different people. They perform all the functions which are given in SCRA Act. We have already done SCRA Act. Under SCRA Act, lot of functions and powers of SEBI are given. They perform those functions and they call information whenever needed. They can call information from stock exchange, mutual fund or any intermediary. If SEBI needs any information, SEBI can call any information from stock exchange, from mutual funds, from intermediaries. And even SEBI can do inquiry inspection of stock exchange, mutual fund and intermediary, or SEBI can ask any information from any person. Lastly, perform such other function as may be prescribed. We will try to remember along with the revision class, everyone, what actions are taken by SEBI or what are the functions performed by SEBI. First function is to register and regulate these chickadoo intermediaries like stockbroker, sub-broker, investment advisor, underwriter, investment manager. The order intermediaries like depositories, DPs, custodian, FII, CRA, and some funds like VCF, venture capital fund, CIS fund, and mutual fund. You have to speak along with me, okay? You have to speak along with me. Second is SEBI regulates the business of stock exchange and regulate acquisition and takeover. Next is SEBI prohibit fraudulent and UTPs and insider trading. Next is SEBI promote SROs and investor education. Next is SEBI ask for information, call for information from stock exchange, mutual fund or any intermediary or any other person. SEBI can also do inquiry and inspection of these people, stock exchange or intermediary. SEBI can levy fees. SEBI has to can perform any function given under SCRA Act. SEBI can perform any other function as may be prescribed. With this, we are done with functions of SEBI very properly. Like properly, we are done. Achha, some basic points. When was SEBI established? How was SEBI established? SEBI was established under SEBI Act, which we already know. Now, is SEBI a body corporate? Yes. Body corporate means any body which has separate legal entity, perpetual succession, capacity to enter into contract, capacity to sue and being sued, capacity to hold property. So is SEBI a body corporate? Yes. SEBI is a proper body corporate. SEBI has its own perpetual succession. SEBI can enter into contract. SEBI can sue and being sued. SEBI can acquire, hold or dispose of property, means SEBI can purchase and sell properties. SEBI ka main office is in Mumbai, head office is in Mumbai. Yes, common seal, SEBI has a common seal, and SEBI has some other branch offices in other cities also. Main office, head office is in Mumbai. This is very basic point. Now, management, again 4 marks question. Management of SEBI. Who all are there in SEBI? Because SEBI is an artificial body, right? So who all work with SEBI? In SEBI, there is one chairperson. Who in SEBI there is one head. There are a lot of people working in SEBI. Out of that, one person is designated as a chairperson. Chairperson means head of the board. Apart from that, there is one RBI officer. One RBI officer is there. Apart from this, 2 members of Ministry of Central Government is there, one from Ministry of Finance and one from Ministry of Corporate Affairs. Okay, once again, how many people are there in the management of SEBI? One chairman is there, ma'am. One chairman. Okay. One member of RBI is there. One RBI official. So next, 2 members from central government, out of which one is from Ministry of Finance and one is from Ministry of Corporate Affairs. ठीक है ma'am, one chairman, one RBI officer, one MCA officer and one Ministry of Finance officer. One chairman, one RBI officer, one Ministry of Finance officer and one MCA officer. Okay. Now 5 more member. Apart from this, 5 more member. Out of that, at least 3 should be full-time member. Matlab, at least 5 more people should be there apart from this chairman, apart from RBI and MOF and MCA. Apart from this, 5 other members should be there. Out of that, 3 should be minimum full-time, which means 2 can be part-time member. 3 should be minimum full-time, 2 can be part-time member. Done, ma'am, done. How many people are there in SEBI? 1 chairman, close your eyes and tell. 1 chairman, 1 RBI officer, 1 from Ministry of Finance, 1 from Ministry of Corporate Affairs. Apart from that, 5 other member. Out of that, 3 should be full-time member, 2 can be part-time member. Done, ma'am, done. Okay. Now, the board of member, who are this? They are known as board of members of SEBI. They can exercise all the powers of SEBI. Whatever power SEBI has, these people have all the power. Okay, next, the chairman and all other members should be a person of IAS. IAS means integrity, ability, and standing. Integrity, ability, standing means they should be honest, they should be true. Are you understanding? And next is they should have special knowledge and experience in law finance. मतलब ऐसे ही ऐरा गैरा नथु गैरा को we cannot appoint in SEBI. If we are appointing someone in SEBI, that person should have special knowledge and expertise in any of this field like law, finance, economics, accounts, etc. With this, we are done with the management of SEBI. Now, there is one power of SEBI given to inspect books of accounts. But acha, SEBI don't have this much time that SEBI will keep on inspecting books of accounts. But if SEBI detect any insider trading, if SEBI detect, any company or anyone is doing insider trading or fraudulent or UTP, if SEBI feels any company is doing fraud, is doing unfair trade practices or insider trading, then SEBI can do what? SEBI can do inspection. SEBI may undertake inspection of books, document, register of that company or of that listed company or company which is proposed to be listed. So if any company is already listed in stock exchange or any public company is about to get listed in stock exchange and they are doing any insider trading, fraudulent transaction or UTPs, unfair trade practices, then SEBI has power that SEBI can inspect their books of accounts. SEBI can inspect their books accounts. That's all. That's about this power of SEBI. Once again, if any listed company or company proposed to be listed is doing insider trading or fraudulent transaction or UTPs, then SEBI can do inspection of their books, register or any document. That's all about SEBI power. SEBI power to inspect books of account. Next is SEBI power. SEBI has power of civil court. Guys, you have studied in JIGL, if you have done module 1, that every civil court have some powers and SEBI have all the powers of civil court. Means whatever powers are there with the civil court, same powers are given to SEBI also. Now, what are the powers of civil court that are given to SEBI also? Summoning and enforcing attendance of any person. Summoning means calling and forcing any person to come and appear before the SEBI and examine him on oath, means ask any information from him. Discovery of any document. SEBI can ask you to produce any document before the court. Okay. Next is issuing commission for examination of any witness or document. Let's say our witness or document is in some other state. Then SEBI can give order. Commission here means he can give order to any other officer to examine any witness or document. Next is SEBI can inspect any books, any document, any register of any intermediary or any company. All these are the power of civil court which are also given to the, which are also vested to the SEBI. Number 1, enforcing and summoning and enforcing attendance of any person and examining him on oath. Calling someone to the court and asking him, examining him on oath, matlab asking him questions. Next, discovery and production of any document. We can ask them to produce any document. Next, issuing commission for examination of witness or document, giving orders to examine any witness and document. And lastly, inspect any document of any intermediary or any company. Once again, SEBI's power which are given from the power of civil court. And summoning and enforcing attendance of any person and examining him on oath, discovery and production of any document, issuing commission for examination of witness or document, and lastly, inspection of books, registered document of intermediary and listed companies. That's it. Next topic is your orders by SEBI. Orders by SEBI means what orders can be given by SEBI. So basically, SEBI has power to give all these orders. Orders by SEBI means SEBI has power to pass these orders, to give this order. First one, to suspend trading of any share. SEBI detect PVR का share में something is wrong. SEBI can suspend. Nobody will trade in PVR का share. PVR का share is suspended from trading. SEBI has power to suspend trading of any security, to suspend any office bearer of stock exchange. If SEBI feels NSE में fraud is doing, SEBI can suspend NSE का chairman, vice chairman, any office bearer of stock exchange or SROs. SEBI can restrict any person from accessing stock market or buying and selling stock market. Let's say SEBI feels Harshad Mehta is doing scam, Harshad Mehta is doing something wrong. SEBI can order Harshad Mehta is restricted from buying and selling securities. So Harshad Mehta cannot do any transaction, cannot purchase and sell any security. Next is impound and retain any proceeds or security with respect to transaction under investigation. If any transaction is something wrong, if any transaction is under investigation, then SEBI can ask you to return. Impound means SEBI can collect and keep with itself all the money and all the securities relating to that transactions. If any transaction is under investigation, SEBI has power to collect any money or any security relating to that transaction. Next is attach. Attach meaning if you have violated any provision of this act, if somebody has violated any provision of this act, their bank account, their any property can be attached by SEBI. Attached means you will not be allowed to use your property. SEBI will freeze those property. You will not be allowed to use your own property. If you have done any non-compliance, if you have done any violation of the act, then SEBI can attach your bank account, all your property, all your share security. But that can be done for maximum 90 days. If SEBI wants to continue the attachment beyond 90 days, then we need the permission of, yes, you got it right, special court. We need the confirmation of special court to continue the attachment beyond 90 days. Once again, if you have violated this act, SEBI can attach your bank account or your property for maximum 90 days. If you want to continue beyond 90 days, SEBI needs permission of special court. Lastly, SEBI can give order to any intermediary or any person to not to dispose of any asset which is a part of transaction under investigation. If you have violated this act and any investigation is going on, with respect to that investigation, you cannot dispose of. Dispose of means you cannot sell any asset with respect to that particular transaction under investigation. Basically, if against you any investigation is going on, then SEBI can order you to not to sell any asset. You cannot sell any asset relating to investigation, relating to transaction under investigation. Once again, everyone along with me, you have to repeat along with me, orders by SEBI. What orders can be passed by SEBI? SEBI can suspend any security. SEBI can suspend trading in any security. SEBI can suspend of any office bearer of stock exchange or SROs. SEBI can restrict any person from accessing stock market. SEBI can collect and retain any money or security relating to transaction under investigation. SEBI can attach your bank account or your property if you have violated this act for maximum 90 days. Beyond 90 days, we need permission of special court, and SEBI can order any intermediary or any person that they cannot sell any asset relating to transaction under investigation. With this, we are done with this topic of orders that can be passed by SEBI. Orders that can be passed by SEBI. Are we clear with all the topics till now? Yes, everyone. Now we have done like a sufficient chunk of topics in a very short span of time. So we have done orders by SEBI. What orders can be given by SEBI? SEBI have the same power of civil code, power of SEBI to inspect books of accounts. We have done management composition of SEBI. We have done establishment of SEBI. We have done functions of SEBI. We have done main objectives of SEBI. If we are clear till here, I want everybody to drop clear in the chat box till now. Yes, everybody drop clear in the chat box if we are good to start with our next topic. And you know, our next topic is very important from examination point of view, which is powers of SEBI to order investigation. Power of SEBI to order investigation. Again, investigation. This topic has come for a lot of time in the past exam. So it is important from the examination point of view. We are going to start our next topic of investigation. We are going to start our next topic of investigation. If you're clear till here, then I want everybody to drop a message in the chat box. Ma'am, clear in the chat box. If you are clear till here, I'm telling you, investigation, very easy, interesting topic. Is it buffering or is it clear? Because for me, it's buffering, I think. Please let me know once. Okay, everyone is clear. Rakshita, Priya, Vinay, Sinchana, great. Please let me know once, is it buffering in between or is it like perfectly fine? Because I feel sometimes it's buffering. Is it buffering for you or is it not buffering? No, it's perfect. Okay, great. Now, everybody ready for investigation? We will try to cover this topic of investigation. Now, everyone along with me. Everyone along with me. I think for me only it's buffering. Okay. Now, investigation. Now, our normal common sense says that if SEBI will order investigation, then something serious is going on. What serious? Okay. So, if SEBI believe that you are doing any transaction which is detrimental to the interest of investor or detrimental to the interest of securities market, or SEBI feels any intermediary or any person have violated any act, rules or regulations, then only SEBI will order investigation. So, SEBI will order investigation in only in two cases. SEBI will order investigation only if SEBI feels that any intermediary or any person have violated this law or any transaction is detrimental to the interest of investor or security market. Only in these two cases, SEBI will order investigation in writing. Now, who will carry out investigation? So, to carry out investigation, SEBI will appoint a separate officer, and the name of that officer is Investigating Authority. In short, I call him IA. IA means Investigating Authority. So, basically, if something is wrong, if anybody have violated any law, then SEBI will order in writing to appoint investigating officer, and then he will carry out the investigation. Now, SEBI has appointed investigating authority. Now, don't you think investigating authority will carry out investigation? Now, to carry out investigation, investigating authority have to ask certain information from the intermediary. What are those information? Now, investigating authority has to ask three information from any intermediary or any person against whom investigation is going on. So, before doing the investigation, we will ask the person whose investigation we have to do. We will ask them to furnish information, any information if required. We will ask them to produce any document or register if required, and we will examine any person on oath. So basically, in order to carry out investigation, investigating authority have three powers. Let's say I did some fraud. Okay, let's say there is Mr. Raju. Raju did some fraud. Now, SEBI appointed investigating authority to do the investigation of Raju. In that particular case, investigating authority have three powers. First, they can ask for any information from Raju. Second, they can ask for any document from Raju. And third, they can examine Raju on oath. Examine Raju on oath. Are we clear with this? So, investigating authority, in order to carry out the investigation, they will ask for information from the person who is examined. They will ask him to give documents and they will examine any person on oath. Now, when we will get the documents, we can keep with that document with us for 6 months maximum. After that, we have to return it. Ma'am, can investigating authority ask for documents? Yes, they can take documents in order to do the investigation. But those documents, they can keep it with themselves only for maximum 6 months. After that, we have to return it, and if we need it again, then we can call the document again. Are we clear with this? Now, whenever any person or any intermediary who is investigated, against whom investigation is going on, whenever any information is asked from them or any document is asked from them, every person of that company, every manager, every MD means managing director, every officer, and every employee of that company or of that intermediary or person will be responsible to provide that information or document to the investigating authority. So when investigating authority asks from any document to the intermediary, if intermediary is a company, then who will be responsible to provide all the document and information? Every manager, every MD, every officer, every employee of that intermediary or any other person connected will be liable to give the information and the document. But if they fail to produce any document or furnish any information to IA, or they fail to sign the notes, then there is a penalty. They can be put in imprisonment. They can be punishable with the imprisonment up to maximum 1 year, or fine. They can be imposed fine up to maximum 1 crore, or both, plus 5 lakh penalty per day. Let's say if today you have to give information and you delayed it by 5 days, then 5 days ka per day ka 5 lakh penalty means 5 days ka 25 lakh additional penalty you have to give. Matlab fine up to 1 crore plus this 1 crore plus 5 lakh per day. Okay, 1 crore plus 5 lakh per day. Are we clear with this? So once again, if investigating authority asks for any information, every manager, MD, officer, employee, or intermediary or any person will be liable to give that information and document. If they fail to give that information document, they will be punishable with imprisonment up to 1 year or fine up to 1 crores plus 5 lakh per day, plus 5 lakh per day. Acha, what will be their duty? They will what will be their duty? They will be having duty to produce all the document and books to the investigating authority. After that, step number 6, whenever investigating authority will do the investigation, they have to take note in writing. Take note, basically running notes. While doing the investigation, everything they have to write down, take a note in writing, which should be signed by the person who is examined. Means these people who are being examined, they have to sign the notes. Once again, still now, everyone, basically, if SEBI feels that any fraudulent transaction is going on or any violation is there, SEBI will appoint investigating authority to carry out the investigation. Investigating authority can ask for any information, ask for any document, examine any person. Which person? Any intermediary or any person. If they ask for document, they can keep those documents for maximum 6 months. After that, we have to return the documents. Whenever any intermediary or any person is asked for any information and document, if it is a company, then every manager, MD, officer, and employee of that company, of that intermediary, will be liable to produce the document and information. If they fail to do so, then imprisonment up to 1 year, fine up to 1 crore plus 5 lakh per day. Okay, and lastly, investigating authority will take note of everything in writing, which has to be signed by the person who is examined. With this, we are done. Now, there is one more point of search and seizure. Search and seizure means, oh my god, basically normally search and seizure is done in case of in criminal cases. So if investigating authority want to do search and seizure means enter any place, search any place, or seize any document. It's like raid. Raid may, they enter any place without permission. They just search whatever they want. They search any place and they seize any document. So if IA believes that, the person who is being examined, they can destroy the evidence, they can mutilate, alter, or secret the document. Secret matlab they can hide the evidence. So if investigating authority feels that the person who is being examined, if he can destroy the evidence or he can secret or falsify that evidence evidence, in that particular case, investigating authority can apply to magistrate. Magistrate means a criminal judge, and he can get a seizure order from magistrate. And only investigating authority can do search and seizure only if it is allowed by magistrate. Are we clear with this? So investigating authority will make application to magistrate, and then if magistrate may allow, so if magistrate allow, then magistrate will give three permission to investigating authority. The first one is to enter any place, second one is to search any place, third is to seize any document, books and register. That's all about search and seizure. So what about search and seizure? If IA believes that the information or document can be hidden, secreted, falsified, destroyed, mutilated or altered, then they can make application to magistrate, and magistrate can give three permission to IA to enter any place, to search any place and to seize any documents. Acha, the documents which we have seized, we can keep in our custody for until the conclusion of investigation. Whatever document investigating authority have seized, they can keep with it, they can keep those documents with it for how much time? Until the conclusion of investigation. After that we have to return it. But wait, magistrate will allow search and seizure only in case of insider trading and UTP. See, every case mein magistrate will not allow search and seizure. Magistrate will allow search and seizure only if there is insider trading or unfair trade practices. Only in case of insider trading and unfair trade practices. So once again, search and seizure very quickly. So if investigating authority believes that the person who is examined may destroy the evidence, destroy, secret, falsify, mutilate, alter, then investigating authority will apply to magistrate to ask for permission. Magistrate, if magistrate feels that it is the case of insider trading UTP, then magistrate can allow three things: search, enter any place, search any place, seize any document. The document which are seized, they can be kept only till the conclusion of investigation. After investigation is completed, we have to return the document. And that's all about the whole process of investigation, which is very important. Quickly let me know in the chat box if this process of investigation is crystal clear to you. Yes, CC. Type CC ma'am in the chat box. CC ma'am if this process of investigation is crystal clear to you. Let me know in the chat box if this process of investigation is all clear ma'am, all clear. Quickly let me know in the chat box. Yes, everybody. Yes ma'am, clear. Jeevan, Payal, Sinchana, Rakshita, Priya, Rakshita, everyone. Okay, clear. Great. Now, next topic. This is not very important. Bakwas. Okay, one thing I'll tell you. SEBI has power. SEBI has power to give any order, okay, to prohibit any company from listing or issuing prospectus. Basically, there is one power of SEBI given to prohibit public issue. Does SEBI, ekdam simple question, just remember in your mind, can SEBI restrict any company from making IPO? Yes. Simple, very simple point. Listen to me in a very simple language. Does SEBI has power to prohibit any company from doing IPO? Yes. Let's say there's a company XYZ Limited. That company is, something wrong is with that company. Can SEBI prohibit that company? Hey, you cannot do IPO. You cannot list in stock exchange. You cannot issue prospectus. Yes. Simple in a very simple language. See, once again, SEBI has power. SEBI has power. See this second wala point now. SEBI has power. SEBI can pass order to prohibit any company from issuing prospectus and soliciting money from public. Basically, SEBI can prohibit any company from making IPO. It can come in the form of case law also. Just remember one line. SEBI has right to prohibit any company from making IPO. That's it. CIS will be covered in CIS chapter. Next is power to issue direction. This is also very general point. I'll tell you, listen to me. I'll simplify this and I'll tell you. SEBI has power to give order to any person. That's it. That's it. SEBI has power. SEBI can give any order, any direction to any person, any company, any intermediary. Why? To protect investors, to make sure proper management is there, to prevent insider trading, to prevent unfair trade practices. That's it. Okay, very generic point this is. What is the generic point? That SEBI can issue any order, any direction to any company, any intermediary or any person. Why? To protect investor, to protect the interest of investor, to secure proper management of intermediary, and to prevent any affairs detrimental to the interest of investor. These 2 points means one and the same. In simple language, SEBI has power to give any direction or order to any person, any company, any intermediary to protect the interest of investor and to secure proper management. That's it. Okay. Achha, now important point, cease and desist. Cease and desist. Cease and desist. Very easy. If SEBI gets to know in advance that somebody is about to violate any law, then SEBI can say them statute. Remember class mein, we did it. I remember very clearly in our regular classes, we did statute wala provision. Remember, if SEBI feels that, oh, this person is about to do murder, then SEBI will say them statute. SEBI will stop them from doing that activity. Are you clear with this? That's all about cease and desist. Cease and desist means it's like a precautionary method. If you feel ki I am about to have fever, if you feel I might have fever, advance me you are taking one dolo or paracetamol because you feel fever might come. So that is cease and desist. If SEBI finds out that any person has violated any law or any person is likely to violate any law, likely to violate means is about to violate any law, then SEBI may pass order to cease and desist. Cease and desist means stop, now you won't do this transaction, now you won't commit this act. Are we clear with this? Once again, very easy, cease and desist. If SEBI feels any person have committed any violation or they are about to do any violation, then SEBI will pass cease and desist order. Cease and desist order means SEBI will stop that person from doing that violation. That's all about cease and desist order. With this, we are done with the topic of cease and desist. Everyone, if you are clear till now, quickly drop me a message in the chat box. Give me a thumbs up in the chat box if you are clear till now. What we have done? We have done cease and desist, some chikkadu small points, and we have done this investigation ke baad, mainly we have done this topic only, cease and desist. Now, everyone, if you are clear till now, give me a quick thumbs up, quick fat thumbs up in the chat box. Give me a quick fat thumbs up in the chat box if you are clear till now. Okay. Okay. Now, the next topic is your prohibition of manipulative or deceptive devices or insider trading. This is nothing but a power of SEBI. That SEBI has to make sure that nobody does anything wrong. You know, if I have to say this topic in one line, SEBI will make sure that nobody does nothing wrong. That's it. Okay, so this topic is SEBI will prohibit the use of manipulative devices and SEBI will prohibit the use of insider trading. SEBI will prohibit, no one will do insider trading. So this is the power of SEBI. Sorry. This is the power of SEBI. Okay. Now, what is 1, 2, 3, 4, 5, 6? 6 points are given here. What are the 6 points? SEBI has said no person shall do this 6 things. 1, 2, 3, 4, 5, 6. Okay. SEBI said no person will do 1, 2, 3, 4, 5, 6. This 6 thing. First, no person will do insider trading. We know it's a crime, it's a fraud, punishable offense. So SEBI is saying, prohibiting insider trading, that no person will do insider trading. Next, no person will deal in security while in possession of UPSI. UPSI in prohibition of insider trading regulation. Guys, basically this and this point is the same. What do you mean by insider trading? Insider trading means trading on the basis of UPSI, unpublished price sensitive information. So first we are saying no person will do insider trading. Secondly, we are saying no person will do trading in possession of UPSI in violation of insider trading regulation. This and this ultimately means the same. Now, we are saying no person will use any device to manipulative device to purchase and sell security. Remember NSE dark fiber case we did in our regular classes. So basically we are doing, if you are using some manipulative devices to manipulate with the share prices, or this stock market dealing to purchase and sale, then you are not allowed to do that. So no person can use any manipulative devices to purchase and sell any security. Next, no person should use any manipulative devices to defraud the public. Simple, both are the same points. In the first point, we are saying that no person can use, no one can use any manipulative devices for purchase and sale of security. And then we are saying that no person can use any device or any scheme to defraud in the dealing of security, means basically to do fraud. And lastly, no person should engage in any fraudulent activity. मतलब किसी भी तरह का fraud you can't do any kind of fraud. So no person should use any manipulative devices to purchase and sell security. No person should use any device or scheme to defraud the public. And lastly, no person should engage in any fraudulent activity. One more point, no person should acquire control over the company in violation of takeover regulations. So whenever one company acquire control over another company, it is known as takeover, and they have to follow takeover regulation. So we are saying that no one should do takeover without following takeover regulations. Simple, no one should acquire control over a company, means no one should do takeover in violation of takeover regulation. All these are the 1, 2, 3, 4, 5, 6 points. In this, 3 points are relating to fraud, 2 points are relating to insider trading, and 1 point is relating to takeover. 1 point is relating to takeover, 2 points are relating to insider trading, and 3 points are relating to fraud. Basically, we cannot use any kind of manipulative or deceptive device for purchase and sale of security, or for defrauding public, or engaging into fraudulent activity. With this, we are done with prohibition of manipulative and deceptive devices. Now the next topic is very important, that is adjudication. Adjudication means to impose penalty. If someone is doing any non-compliance and something wrong, then we can impose penalty on them. That is known as adjudication. Now guys, this topic of adjudication is same for SCRA Act, for SEBI Act, and for Depository Act. So this particular topic is same for SCRA Act also, for SEBI Act also, and for Depository Act also. Remember, SCRA Act में adjudication का topic came, so I told you it will come again in SEBI Act, and it will come again in Depositories Act. Okay, so first one is adjudication. We are saying that what if some company has done any non-compliance? Then we need to check the non-compliance, and we need to impose penalty. This process is known as adjudication. Now, just like, remember, in order to do investigation, SEBI appointed one investigating authority. Remember, in order to do investigation, SEBI appointed one investigating authority. Same way, in order to do adjudication, SEBI appoints one adjudication authority. Okay, so in order to do adjudication, SEBI will appoint one government officer who is known as adjudicating officer or adjudicating authority. In short, I call him AA. AA means adjudicating authority, or you can call him adjudicating officer. Are we clear with this? Now, this adjudicating officer should be not below the rank of division chief. Who can be appointed as adjudicating officer? Any officer who is not below the rank of division chief can be appointed as adjudicating officer. Why, ma'am? Why? What is adjudication? Adjudication means doing inquiry and imposing penalty. So basically, in order to do inquiry on any matter and to impose penalty, we appoint an officer who is known as adjudicating officer or adjudicating authority. And this process of holding inquiry and imposing penalty is known as adjudication. Are we clear with this? Now, SEBI will appoint this officer who will do the inquiry and impose the penalty. But ma'am, the amount of penalty depends on 3 factors. How much amount of penalty will be imposed? It depends on case to case. Now, majorly 3 factors will be considered for deciding the quantum of penalty. Important question from examination point of view. 3 factors to be considered for deciding the quantity of penalty. So, adjudicating officer before imposing penalty will check 3 things. Amount of loss of investors. How much investors suffered the loss. Second thing is amount of unfair gain and advantage to the defaulter. Okay, so let's say if this is a defaulter company, Sahara, and these are investors with whom fraud is done. So we will check two things. Oh, how much undue gain this defaulter company made. That amount we will check. How much loss this investor suffered. That amount we will check. And thirdly, we will check repeated nature of default. Are they doing this default again and again, or this is first time? If it's a first time, we might impose a less penalty. But if it's a repeated default again and again, then SEBI might impose heavy penalty. So SEBI or adjudicating officer will decide the amount of penalty on the basis of three factors: amount of loss of investors, amount of unfair gain of unfair gain of defaulter, and repetitiveness of the nature of transaction. Very important. Everyone speak along with me. Three factors to be considered by SEBI or adjudicating officer before deciding the quantum of penalty. First one, amount of loss of investors. Second one, amount of unfair advantage made by the defaulter, and third one is repeated nature of the default of the transaction. Are we clear with this? Okay. Yes. Now one more thing. Before imposing the penalty, adjudicating officer will do the inquiry. So here what power is given to you, that adjudicating authority has power to summon and enforce attendance of any person for doing the inquiry and imposing penalty. In order to impose penalty, SEBI can call any person to come and attend. SEBI nahi, AA. Adjudicating authority can call any person to come and attend before adjudicating authority before imposing the penalty. So adjudicating authority can summon means call any person and enforce attendance of that person in order to do the inquiry. And lastly, if SEBI feels that order of AA is erroneous means SEBI is not satisfied with the order of adjudicating authority, then SEBI can pass another order changing the penalty within 3 months or before disposal of appeal, whichever is earlier. Once again, SEBI will appoint adjudicating authority to do the inquiry and impose penalty. Now, adjudicating authority have power to summon any person to do the inquiry and imposing penalty. Then adjudicating authority will pass the order. If SEBI is not satisfied with the order of AA, SEBI can revise that order or pass another order. Within what time limit? Within 3 months or before disposal of appeal to SAT, whichever is earlier. If appeal is filed to SAT, then SEBI can amend the order only before that appeal is disposed of by the SAT. Once appeal is disposed of by the SAT, after that SEBI cannot modify the order. So if SEBI wants to modify the order, SEBI can do that only within 3 months or before disposal of appeal by SAT, whichever is earlier. And last point, adjudicating authority will consider 3 factors to decide the quantum of penalty, that is amount of loss of investors, amount of unfair gain of defaulter, and repetitiveness nature of default. That's all about adjudication. Adjudication. Very easy. SEBI will appoint adjudicating officer to do the inquiry and impose penalty. Adjudicating officer can summon and enforce attendance of any person. Next, if SEBI feels order of AA is not correct, SEBI can revise the order and SEBI can pass another order within 3 months or before disposal of appeal by SAT, whichever is earlier. That's it. And 3 factors to be considered for deciding quantum of penalty: amount of loss of investor, amount of gain of defaulter, and repetitiveness nature of transaction. I hope we are clear with proper adjudication proceedings. And the next topic is your settlement and administration. Settlement means, what do you mean by settlement, guys? Settlement means settlement of administrative and civil proceeding. What do you mean by settlement of civil proceeding? कि if SEBI is like, ठीक है, पैसा दो और रफा दफा करो. What SEBI is saying? SEBI is saying, give money and we will close your case. Literally, if let's say Reliance is under some SEBI case, so SEBI will say, okay, you give me 1 crore rupees and I'll dispose of your case. I'll close your case. It's like settlement. Paisa bolta hai, money speaks. Money literally speaks. So this is settlement proceeding, settlement of civil proceedings. Now, any person against whom civil proceeding has been initiated, matlab any person against whom case is going on, they can make an application to SEBI in writing. SEBI, let's do the settlement now. We are sorry. We accept our fault. We will pay you this much settlement amount, whatever, how much money you want. Please close the case. This is settlement. SEBI is saying, you give me money, I will close your case. That's all about settlement. So what settlement? Any person against whom any case is going on, they can make a written request to SEBI for settlement. For what? For settlement. Now, SEBI may agree, SEBI may not agree. If before allowing settlement, SEBI will consider nature and gravity of offense. SEBI will see how serious that offense is. SEBI will see the nature and gravity of offense, and then SEBI will allow the settlement only on the payment of settlement amount. Payment of settlement amount means SEBI will say, okay, I will close your case. You give me 1 crore rupees. You give me 2 crore rupees. You give me this much settlement amount. That's it. Okay. Now, settlement amount you have to pay to SEBI, and in which account that will be transferred? That settlement amount will be transferred to Consolidated Fund of India. It is our government fund. Okay. That settlement amount you have to transfer to the bank account of basically Consolidated Fund of India. Okay. Now, once any transaction is settled, no appeal can be filed against that transaction. Once settlement is, with the both party approval, both party agrees to it. Now, once settlement is done, now further you cannot file any appeal against the settlement order. That's all about settlement. Very nicely, very clearly, very beautifully we have done this topic of settlement. I'll just repeat once again. If any person against whom any proceeding is going on, they may make a written request to SEBI for settlement. SEBI will check nature and gravity of transaction, and SEBI may allow settlement, but only after paying settlement amount. Now, you have to pay the settlement amount by crediting it to Consolidated Fund of India. Once settlement is done, no appeal can be filed. Khatam, khalas, tata, bye bye. No tata, bye bye. We are done with this topic of settlement. Next topic is your recovery of amount. Recovery of amount, it's like लातों के भूत बातों से नहीं मानते. What do you mean by recovery of amount? Recovery means if any person is not paying money, fees, penalty to government, to SEBI, then SEBI will appoint recovery officer to recover that money. So what is the topic of recovery of amount? We are doing another topic of recovery of amount. What is this topic? We are saying that if any person fails to pay the penalty, let's say SEBI imposed penalty on me, I am not paying penalty. If any person fails to pay fees, I am not paying fees. If any person fails to pay any disgorgement order means SEBI ordered you to refund any money, reimburse any money to SEBI, and you did not pay that money, or you fails to refund any money. Basically, you are not paying SEBI's money. In any of this case, SEBI will appoint another officer known as recovery officer to recover that amount from you. So then recovery officer will recover that amount from you, recover that fees, penalty, or whatever money from you. Just like in order to do investigation, SEBI appoints investigating authority. Just to do adjudication, SEBI appoints adjudicating authority. Same way, in order to do recovery, SEBI appoints another officer who is known as recovery officer. Are we clear with this? So in this chapter, we have studied about investigation, adjudication, and now we are studying about recovery. Okay, so what is the recovery proceeding? We are saying basically if any person fails to pay penalty, fees, any refund money to SEBI, then SEBI will appoint recovery officer to recover that money. Now, how that recovery officer will recover that money? Now that recovery officer will first prepare a certificate. First thing, recovery officer will prepare a recovery certificate. In that recovery certificate, we will mention how much amount have to be recovered. Total how much amount we have to recover. So, recovery officer will prepare a recovery certificate. In that recovery certificate, we will specify the amount due from that person. Amount due means how much amount we have to recover. Now, we can recover that money by 5 ways. Number 1, we can attach their bank account. Basically, उनके bank account से attach करके we can recover from his bank account. Whatever money is there in his bank account, we can recover it from there. or we can attach and sell his movable property, or we can attach and sell his immovable property. So let's say I have a movable property, my mobile phone, which is, let's say, worth rupees 1 lakh. So recovery officer will take my mobile phone, that is attach my mobile phone and sell my mobile phone to recover money. Will attach and sell my mobile phone, it's a movable property. Immovable property, let's say my land. So recovery officer will attach my land and will sell my land to recover that money. And recovery officer can arrest that person. Recovery officer can arrest me, or lastly, recovery officer can appoint a receiver to manage the property. Let's say recovery officer attached all my movable and immovable property. So to manage those property, we need a separate person. For managing my property which is attached, recovery officer can appoint another person who is known as receiver. That's all about recovery. Once again, recovery of amount. Once again, everybody, recovery of amount. What do you mean by recovery of amount? What are we saying here? If you will see, recovery of amount where we are saying, if any person fails to pay any penalty or any fees, then SEBI can appoint a recovery officer to recover that money. Before recovering that money, recovery officer will prepare a recovery certificate. In that certificate, we will mention total amount to be recovered. After that, we will proceed to recover that money by 5 ways. We will attach their bank account. Recovery officer will attach and sell your movable property, attach and sell immovable property, arrest that person and appoint receiver to manage his property. That's all about recovery. That's all about recovery topic. That's all about recovery topic. Are we clear with this? Now. Acha, here one basic point is given about recovery. One more point, that let's say I got to know that recovery officer is about to take all my movable and immovable property. So what I did, I transferred all my phone, land, all my movable, immovable property in the name of my husband, in the name of my son, my daughter, or my spouse or minor child, or son's wife, means bahu, or son's minor sons, like grandson. So in that particular case, just to escape from this provision, I got to know recovery officer is about to attach my property, so I transferred it to my family member. In that case, government says that, oh, if you are clever, we are super clever. In that particular case, that property which I transferred to my family members will not be treated as transfer will not be valid, and it will be included in my property only. It will be included in my property only, and recovery officer can attach that. See, one point is given, if any person transfers his movable or immovable property, M or IMM means movable or immovable. If any person transfers his movable or immovable property to his spouse, means husband, wife, minor child means son or daughter, son's wife means bahu, or son's minor sons means grandson. Okay, so if I transfer my movable or immovable property to my family members, like these 4 people, without adequate consideration means without taking anything in return, basically I transferred it for free or some nominal amount, then such transfer will be invalid, and those properties will be included in person's property, meaning those property will be included in my property only, and then recovery officer can attach that property. With this, we are done with topic of recovery. A 5-mark question, in your from your examination. Recovery of amount. We are done with this topic. The next topic is continuation of proceedings. Guys, the next topic is continuation of proceeding. Now, what is the topic of continuation of proceeding? Very simple. If some case is going on against Mr. A and Mr. A dies, will it continue? Yes, the case will continue in the name of his legal representative. Okay, that's all about continuation of proceeding. Means if during any case is going on, during that time, if any person dies, then what? Then case will continue. It's not like case will end. No, case will continue in the name of his legal representative. So we are saying if any proceedings have been initiated before the death of deceased person, if before a person dies, before that any proceeding have already been initiated, then it will continue in the name of his legal representative. Next, if any proceeding is about to initiate and the person dies, then it will be initiated against his legal representative. In the first point, we are saying proceedings have already started. Now person dies, so proceeding will continue in the name of legal representative. Second way, we are saying that proceeding has not been started, but it is about to start but the person dies, then it will start in the name of legal representative, that's all. Okay, and legal representative will be liable to pay all the amount of penalty which the deceased would be liable to pay. If Mr. X have to pay 1 crore penalty and Mr. X dies, then his legal representative, let's say his son, will be liable to pay that penalty amount. It's not like you will be escaped. No, it will be transferred to your legal representative. So legal representative will be liable to pay the penalty amount of the deceased person. Deceased person means the one who died, but his liability will be limited up to the estate of deceased. Estate means property of deceased. So the liability of legal representative will be limited only up to the amount of property that he inherited from his whatever guardian or the person who is deceased, the person who is dead. Okay, that's all about continuation of proceedings. And with this, we are done with all these topics, and the next topic that we have to do is SAT. Are we clear till now? Are we clear till now, everybody? Drop me a thumbs up in the chat box if you are clear till now, and if you're good to start with the next topic, that is SAT, Securities Appellate Tribunal. The next topic that we are going to do is SAT. Yes, everybody, drop me a quick message in the chat box. Drop me a quick thumbs up in the chat box if we are clear till now and we are good to move towards our next topic, that is SAT. We have revised more than half of your lesson number 4 SEBI Act in 1 hour. So basically, like, today's revision was a very fast revision, and yeah, because in 1 hour we started around 3, and in 1 hour we have completed 80% topics of your lesson number 4, that is SEBI Act, most of the topics. So now onwards we will be this fast only. I guess lesson number 1 and 2 was a bit slow because we just started, right? So now onwards we'll go on speed only, because many of you requested ki ma'am go on a little bit fast. So as per the request, I hope that today's revision was a bit faster as compared to the previous 2-3 days, and let me know if this is okay to you, if this is fine, because this is what I got the review from the students, that you want it a little faster. So today's revision was like Chennai Express revision. Yes, it was faster, like, because your examinations are very near. So from that perspective, yes. Yes, Priya. Okay. Yes, Kavya. Okay. Okay. Great. Now, the next topic that we are going to start is Securities Appellate Tribunal, SAT. Now, what is SAT? Who made SAT? Central government made SAT. Who made SAT? Central government. Central government made this body, made this court called SAT. What is SAT? It is a separate court to deal with the cases of securities law. So whole securities law may, if there is any dispute, then that dispute or any appeal, that will be filed to SAT. Okay, SAT, Securities Appellate Tribunal. Now the first question that you have to study about SAT is composition of SAT. Sorry. Composition means how many people will be there in SAT. So as you all know, usually now in government bodies there is one chairperson and other members, but in court the head is known as presiding officer. Instead of chairperson, we use the term presiding officer here. So how many people will be there in the SAT? In SAT there is one presiding officer. In SAT there is one presiding officer. Secondly, there are other technical and judicial members. So technical and judicial means basically relating to law. Technical means those who know technicalities of the securities law. Are we clear with this? So exact number is not given, just mention there will be one presiding officer and there will be such other number of technical and judicial member. Now, SAT exercise their jurisdiction by its benches, meaning SAT will make lot of benches for different places. Different benches will be there, and one bench will deal with one case. It's not like whole SAT will deal with one case. We will make different benches, and by that we exercise our jurisdiction. Acha, who will make bench? Presiding officer. Presiding officer means the head of SAT. Presiding officer will make the bench. In one bench, there will be minimum 2 member. Out of that minimum 2, at least one should be judicial member and at least one should be technical member. Okay. And lastly, presiding officer have right that they can transfer any technical member and judicial member from one bench to another. With this, we are done with composition of SAT. Once again. How many people are there in SAT? Ma'am, one presiding officer and such other number of technical and judicial member. Okay. Now, how do we solve cases? By making benches. Okay. Who make benches? Presiding officer make benches. Okay. How many people are there in one bench? In one bench, there will be minimum 2 people, at least one technical member and at least one judicial member. Okay. And presiding officer have right, they can transfer any technical or judicial member from one bench to another. Arth aita madam, ekdam perfect. Composition of SAT. Now, procedure of appeal to SAT. Very important. How we can file appeal to SAT, within how many days, extension is there or not, how SAT will dispose of the case. Whole procedure of appeal to SAT is given here. Now, against whom you can file appeal to SAT? So you can file who? Any person. Any person can file appeal to SAT? Yes. Any person can file appeal to SAT against the order of SEBI, stock exchange, adjudicating officer. Remember, adjudicating officer, he imposed penalty. IRDA or PFRDA. IRDA means Insurance Regulatory and Development Authority. PFRDA means Pension Fund Regulatory and Development Authority of India. Okay. So if these people have passed any order, SEBI, Stock Exchange, AO, IRDAI, PFRDI, and if you are aggrieved by the order of these 4 people, then you can file an appeal to SAT. Very important. Within how many days? 4, 5, 45 days. Acha guys, this process of appeal to SAT is applicable to SCRA Act also, SEBI Act also, Depository Act also. Buy one, get 2 free. This process of appeal of SAT is same in SCRA Act, SEBI Act and Depository Act. Means lesson 3, lesson 4 and lesson number 5. This time limit is very important. 45 days. Keep 45 days in your brain. 45 days, 45 days, 45 days. Appeal to SAT 45 days. Appeal to SAT 45 days. Okay. So if any person is aggrieved by order of SEBI, AO or stock exchange, within 45 days we can file appeal to SAT. Can we get extension? Yes, we can get extension. No time limit is given for extension, but we can get extension. Now, SAT will hear both the parties, will give opportunity of being heard to both the parties. SAT will hear both the parties and then will pass the order. What orders can be passed by SAT? Either SAT can confirm the order, confirm matlab theek hi to hai, not make any changes. Or SAT can modify the order, make changes, or SAT can set aside the order, means cancel the order. If SAT feels order is okay, SAT will confirm. If SAT will feel some changes are needed, then SAT will modify the order. Or if SAT feels no, this order is not appropriate, then SAT will set aside the order. Okay. Very important. What 3 orders can be passed by SAT? SAT can either confirm the earlier order, or he can modify the order, or he can set aside the order. And whenever SAT passes any decision, he will send a copy of his order to all the people like SEBI, AO, PFRDI, IRDI and parties. That's all about appeal to SAT. Khattam madam, khattam, tata, bye bye. Appeal to SAT. If any person is aggrieved by these people, we can file appeal to SAT within 4, 5, 45 days. Okay. Now SAT will give opportunity of being heard to both the parties and can pass 3 orders. Either confirm or modify or set aside the order. Now, whenever SAT give any order, they will send the copy of that order to all the parties. That's all. Acha, few more things about SAT. SAT को Limitation Act apply. Limitation Act मतलब usually limitation period is 3 years. Matlab, if you don't file application to SAT within 3 years or within the timeline, then you will lose your right to file an application or take any action. That is Limitation Act. Next is SAT is not bound by the procedure of CPC. CPC means Civil Procedure Code. SAT is not compulsory required to follow the Civil Procedure Code. They may have their own procedure. They may follow their own procedure. And lastly, SAT follows principle of natural justice. Principle of natural justice means matlab we should not do wrong with good people. That's all about principle of natural justice, and that's all about appeal to SAT. Remember, 45 days. And against whom appeal can be filed? SEBI, Stock Exchange, AO, IRDI, PFRDI. Within how many days? 45 days plus extension. What 3 orders SAT can pass? Confirm, modify, or set aside. That's all about appeal to SAT. Ma'am, what if you are aggrieved by the order of SAT? You are not even satisfied with the order of SAT. Can we file further appeal? Yes, you can file further appeal to Supreme Court. Within how many days? Within 60 days, guys. Always Supreme Court को appeal के लिए हमेशा in every law time limit is 60 days plus 60 days extension. First, original 60 days. If you are not able to file within original 60 days, you may get another 60 days of extension. Further 60 days of extension. Total 120 days. That's all about appeal to Supreme Court. Once again, if any person is aggrieved or not satisfied with the judgment of SAT, you may file an appeal to Supreme Court within 60 days of the order. If you are not able to file within 60 days, you may file within another 60 days. And Supreme Court ko you can file appeal only on the question of law. Only on the question of law means if that matter is relating to question of law, interpretation of law, then only you can file an appeal to Supreme Court. Otherwise, other matters ke liye you cannot file appeal to Supreme Court. That's all about appeal to Supreme Court. Appeal to Supreme Court. Acha, one small point, right to legal representation. Right to legal representation means if you have filed a case, or if against you case is filed, how will you appear before the court? Either you can appear in person. In person, matlab if against me case is filed, either I can go and appear in person, or I can hire a lawyer, advocate. Lawyer means advocate, or CA or CS or CMA or any other officer to represent my case. Meaning, either we can appear in court in person in front of SAT, we can go and fight our case ourselves, or we can appoint an advocate for that, or CACS for that. Are we clear with this? So, how we can appear before SAT? Either in person, or we may appoint any other lawyer, advocate, CACS, CMA for this particular purpose. Acha, bar on jurisdiction on civil court means if any matter is referred to SAT or SAT, in that case, civil court will have no jurisdiction. The normal civil court will have no jurisdiction on those matters which are referred to SAT or SEBI. Are we clear with this? So, civil court will not entertain any appeal against the order of SEBI or AO. If you have to file appeal against the order of SEBI or AO, that appeal can be filed only with the SAT, Securities Appellate Tribunal. You cannot go to a normal civil court. If you will go to civil court now, civil court will say, why you are coming to me? Go to SAT now. Okay. So, civil court will not entertain these cases. Civil court does not have jurisdiction on any matter of securities law. Basically, any matter of security ke liye, you should not go to civil court. You should go to SAT. And civil court cannot pass injunction order against order of SEBI or AO. Against the order of SEBI, injunction means stay order. So, civil court cannot pass stay order on the order of SEBI or AO. Basically, whole securities law ke matter ke liye only SAT have power, and that's why civil court does not have jurisdiction on these matters. So, civil court cannot entertain any appeal against the order of SEBI. Civil court cannot pass injunction order on SEBI and AO, and civil court does not have jurisdiction on any matter on which SAT have power, on which SEBI and AO have power. That is bar on civil jurisdiction. Acha, one penalty is given that if any person contravene any provision of this act, rules or regulation, matlab pura SEBI act, rules, regulation, if there is any contravention, one general penalty is given that if any person contravene any provision of SEBI act, then he will be liable with the imprisonment up to 10 years. Oh my god, not 1 year, not 2 years, oh my god, 10 years or 25 crores or both. If you remember, the same point was there in SCRA also. And if any person fails to pay the penalty or comply with the SEBI order. If any person does not comply with SEBI orders or does not pay penalty to SEBI, then you will be liable with imprisonment of 1 month to 10 years or fine of 25 crores or both. Okay, we are almost done with this topic. Only last two topics are left, scores and informal guidance. Otherwise, we are done with like all the topics of lesson number 4. Acha, one thing, those offenses, this is something out of your syllabus, not from your side. I'll not discuss this, let it be. You can leave it. What I mean to say is, okay. Next is one last term, power of civil court vested with SAT. As we all know, all the powers of civil court are also given to SEBI and they are also given to SAT. So what are the powers of civil court that are also vested to SAT? Means all those power which are given to civil court, they are also given to SAT. The same points we have done in SEBI topic also. SEBI ka topic also we have done all the points. First one is, SAT has power to summon and enforce attendance of any person and examine him on oath. SAT can summon means ask any person to appear and enforce attendance of his person. SAT can force any person to come and appear before the SAT. Next, require production of any document. SAT can order, bring this document to the court. SAT can order production or discovery of any document. SAT can issue commission for examine of witness or document. If any witness or document is in another place, another city, another town, SAT can give order to any officer to examine any witness or any document. SAT can receive evidence on affidavit, receiving evidence. SAT can review its own decision. After passing decision, if SAT feels my decision is not correct, SAT can review its own decision. SAT can pass order to dismiss an application or decide it ex parte. Dismiss an application means if SAT feels your application is not worth it, SAT can dismiss your application, means reject your application, or ex parte order means if only one party is present before the court, the other party is not present before the court, we can pass the order only by hearing one party. This is known as this is known as passing ex parte order. Ex parte matlab A filed a case against B. A is present before the court, B is not present before the court. What we will do? We will pass the order only by hearing one party, that is A, that is known as pass the order ex parte. Lastly, set aside the order passed to dismiss the application or ex parte. Remember this order which SAT passed to dismiss the application or ex parte. SAT has power to even set aside this order. Matlab, if SEBI pass any order to dismiss an application or ex parte, then SAT can later cancel this order, previous order. Okay. Lastly, that's all about powers of civil court vested with SAT. These are the powers of civil court which are given to SAT. Now, some basic points. All the proceedings of SAT will be considered as judicial proceeding. Matlab, they are evidence. They will be treated as evidence. All the court proceedings which are going on in SAT, yes, they will be known as judicial proceedings. Okay. And how we will make decision? If there are two members in the bench, usually majority voting ke basis pe done. Let's say bench mein 3 members are there. 2 people are saying guilty. 1 person is saying not guilty. Then you will be declared guilty. Majority votes. But ma'am, if in a bench only 2 members are there in SAT, then how we will take decision? Let's say one member of SAT is saying you are guilty. Another member of SAT is saying you are not guilty. Then what we will do? We will refer that case to presiding officer, and presiding officer either himself may hear the case and give the decision, or presiding officer may refer the case to any other member and then they will decide the case on the basis of majority. He may refer it to any other member of SAT and then that other member will decide the case on the basis of majority. And with this, we are done with like almost all the points. Okay, one last point, guys. Offenses by companies. Offenses by companies, once again I'll repeat. See, if any offense is done by the company, because company is an artificial person, so who will be liable for the offense done by the company? So read the first point. First point says that any person who was responsible or who was in charge for that violation will be liable. Okay. Secondly, we are saying that all the director, manager, secretary and officer will be liable if they had given their consent to such violation. That's all. Read the first and third point. I am repeating this topic: offense by company. If offense is done by the company, then company is artificial person. Who will be liable? All the person who was in charge or who was responsible will be liable. Secondly, all the director, manager, secretary, officer. Once again, director, manager, secretary, officer, director, manager, secretary, officer, director, manager, secretary, officer who had given their consent, they will be liable. But if you prove your innocence, then you will be saved. So you will not be liable if you prove that such violation happened without your knowledge and you exercised all your due diligence to prevent such violation. So you will be saved in this case if you prove that it happened without your knowledge, you had no idea about this and you exercised all your due diligence to prevent such violation. In that case, you will not be liable. That's all about offense by the companies. I'll repeat special court. What is special court? Special court means central government have power. They can make special court for speedy trial of offense. So if there are a lot of pending cases with SAT, for the speedy disposal of cases, if central government wants, central government can make special court for securities law. Now, how many judge will be there in the special court? Only one single judge will be there in special court. That single judge will be appointed by central government in consultation with the Chief Justice of High Court. In consultation with the Chief Justice of High Court, and that single judge of special court should be either session judge or additional session judge, meaning only a session judge or additional session judge can be appointed as the judge of the special court. And lastly, every special court have to follow CRPC, means Criminal Procedure Code, that is BNSS, Bharatiya Nagrik Suraksha Sanhita, CRPC, which is now replaced with BNSS. Once again, I'll repeat. Central government may make special court. Why? For speedy disposal of offense. For speedy disposal of offense. Third, how many judge will be there? Only one single judge will be there. Who will appoint? Central government will appoint in consultation with Chief Justice of High Court. Acha, who can become judge of special court? Only session judge or additional session judge can become the judge of special court. And lastly, special court have to follow Criminal Procedure Code, which is now known as BNSS, Bharatiya Nagrik Suraksha Sanhita. With this, we are done with all topics of lesson 4 except for 2 topics: scores and informal guidance. Informal guidance. Yes. How are you feeling, guys? We are done. Literally today we completed this huge lesson in 1.5 hours. In 1.5 hours, we have completed all the topics of lesson 4, which was a very effective study, I guess. And today it was very effective and good. How do you feel about it? Acha, we are left with these 2 are important topics. By the way, these 2 are important topics. We are left with last 2 topics of your lesson number 4, SEBI Act, scores and informal guidance. Apart from that, we are done with all the topics of lesson 4. Acha, I want to ask you one question. What is the time limit to file appeal to SAT? I want you to answer this question in the chat box. What is the time limit to file appeal to SAT? I want you to answer this question in the chat box. What is the time limit to file appeal to SAT? What is the time limit to file appeal to SAT? 45 days. Very good. Correct. 45. Remember 45 days. Priya, Arakshita, 45 days. Okay. So now I want to ask you one more question. What is the time limit to file appeal to Supreme Court? What is the time limit to file appeal to Supreme Court? 60 days. Great. Okay. Others, I want everybody to answer because we just revised this. So I want everybody to answer this. Okay, guys. Okay. So now, scores and informal guidance. First, we will do informal guidance because it is a shorter topic. So, SEBI. Acha, before we do What? Before we do scores and informal guidance, I want to tell you one thing, and that thing is from tomorrow, that is 6th, 7th, 8th, and 9th. So we have done our 4 days of revision and we are left with our 4 days of revision. Okay. So now till now we were having like shorter sessions, like 2 hour sessions. So usually in 1.5 to 2 hours we complete one lesson. Okay. So maximum if it's a smaller lesson, we can complete it within 1.5 hours. Okay. So just like lesson 4, it's a big lesson, but still we are done with almost lesson 4 in 1.5 hours. Okay. So we'll take around 1.5 to 2 hours to complete one lesson. And from tomorrow for next 4 days, till now we were revising like one lesson per day, and from tomorrow for next 4 days, first we will be doing part B. First, we will be doing part B because we are done like major chapters of part A. So I feel first we will do part B, and depending on your requirement, if you need further topics of part A, we can do after part B if needed. Because I feel rest of the topics of part A are very easy, like and small. IFSC is a very easy and small lesson. Intermediary is a very easy and small lesson, and Depositories Act. These three are shorter lessons as compared to the first 4 lessons that we did. Lesson 1 very lengthy, lesson 2 supremely lengthy, lesson 3 SCRA, it was also lengthy, and lesson 4 SEBI Act. These 4 were lengthy and difficult topics. Rest 3 topics of part A are easy and short. So you can try going through those topics on your own. So from tomorrow we can start part B revision, because in part B now there are 4 major lessons from which most of the weightage will be there in your examination. So in part B now, there are 4 major chapters, which is your LODR, oh my god, very important. ICDR, oh my god, very important. Trust me, it's very important. And share-based employee benefit and mutual funds. These 4 topics are very, very important. So I want to do this first. Okay. So tomorrow, 6th, right? Yes, your mock test will be postponed to 10th. Your mock test, we will postpone it to 10th. Okay. And for the next 4 days, we will have a longer hours of revision. Like, let's say we will have 2 hours revision of tomorrow, LODR, then we'll have a small break, and then we will have a 2 hours revision of ICDR, and then we will have a small break, and then we will have a 1.5 to 2 hours revision of one more lesson. Okay, one more lesson. I'll inform you today that which lesson we will revise tomorrow. Okay, so from tomorrow onwards, you will have around like 6 hours marathon kind of. Abhi tak we were like revising it one lesson for like maximum 2 hours. Now we will be extending it, and it will be like a proper marathon, like a 1 day long marathon. Marathon means multiple chapters in a single day. Okay, so from tomorrow we'll be revising three lessons each day. Okay, 6, 7, 8, and 9, and we'll be completing our marathon revision by 9th. Till now it was kind of revision, but for the next 4 days it will be like a marathon, and trust me, we will cover each and every topic of all your part B. All your part B. And part A, you can let me know which other lesson you want revision. We are done with 4 lessons of part A. Are we clear with this? Let me know in the chat box if this sounds good to you. Should we start part B tomorrow? If this sounds good to you, I was thinking this, but I want your input in this. What do you feel? You let me know. If you say, ma'am, complete part A first and then do part B, we can do that also. This is my opinion that tomorrow we should start part B first. So let me know what's your opinion to this. What do you want? Part A remaining first or part B first? Let me know in the chat box, everybody. Let me know in the chat box if we can start LODR, ICDR tomorrow. Let's start part B. You can just let me know what's your opinion. What do you feel? And accordingly, we will decide. Ma'am, take 12 plus R and complete it quickly. We can do that also, but I feel it will be too much for you to grab on one single day. What we can do, see, we have completed our lesson 1, 2, 3, and 4. Yes, I remember one small last topics of this, and this is left. Yes, so we have just a second. Okay, so we will complete part B first, 3 lessons per day. So there are 11 chapters in your part B. Okay, so like 3, if we'll make a group of 3, then in the next 4 days we will complete our revision of part B. Okay, so there are 11 lessons in your part B. There are 11 lessons in your part B. From tomorrow we'll have a longer session for part B revision. Acha, you know, in this chapter is very small. It will take like a maximum 30 minutes to revise this lesson. So you don't consider this even as a lesson. Okay, in this few lessons are very small. So part B may we will revise 3 lessons per day. So you can take around 1.5 to 2 hours per lesson. So from tomorrow we'll have a longer hour of session, like around a 6-hour session, 2 hours, 2 hours and 2 hours for each lesson. Are we clear with this? Is that fine to you? Yes, is that fine to you? Let me know in the chat box. Is that fine to you? Next 4 days with me and your whole of part B will complete. Yes, next 4 days with me and let me know your whole of part B will complete. Whole of part B of, and yes, we'll be referring to the short notes. We'll be revising all part B from the short notes. Okay. Yes. So today I'll drop message in the Telegram group that tomorrow we are starting part B, and which topics of part B we'll be doing. I want to start with like ICDR, LODR, because these are like supreme important topics. Okay. Okay, ma'am, understood. One more question. You want those 6 hours to be in the morning or in the evening, like 2 to 9 p.m., 2 p.m. to 9 p.m., or like we should start early, like morning 11 a.m., 10 a.m. to 4 p.m., 10 a.m. to 4 p.m. You want it morning or evening? Yes, you want it in the morning or in the evening? One more question to you. Quickly let me know so that I can decide the timing. The 6 hours you want like morning 10 a.m. to 2 p.m. 10 a.m. to 4 p.m. or 2 p.m. to 9 p.m. Let me know, guys. Let me know you want it in the morning or this evening timing. You want it in the morning or in the evening timing? Quickly let me know. Yes. Quickly let me know. Do you want the morning timing or the evening, afternoon? Tony is saying afternoon. Priya is saying morning. Let me know. Let me know what timing. 10 to 4 or like afternoon 2 to 2 to. Hari is saying morning. Rakshita is saying morning. Most of the people are saying morning. Okay, then let's keep it in the morning. Okay, so from tomorrow, I'll announce it in the Telegram group as well. I wanted to first decide it with you guys. What time do you prefer? Since you all are saying morning, so we can do it. We can start it at around 10 a.m. and then we can do like 2 lessons. We can do around like 3 lessons by 4 p.m. Okay, so morning 10 a.m. to 4 p.m. we'll do along with like chodu chikkadu breaks, and we can complete 3 lessons tomorrow morning 10 a.m. to 4 p.m. of part B. of part B. So tomorrow we'll be starting part B. Okay, everybody. Since we have decided this, so I'll announce this now in the Telegram group and everywhere. So now let's resume with our lecture, and we are left with the last two topics of your lesson number 4, SEBI Act. I'll just quickly try to complete this topic. In maximum 5 to 10 minutes, I will complete this topic of informal guidance. Now, what do you mean by informal guidance? Whenever any company or any person has any confusion regarding law, they can't interpret the law, they can't interpret any act or any regulation, then we can ask for informal guidance from SEBI. Informal guidance is like just opinion or perspective given by SEBI. It's not an order, it's not a law, it's not an order, it's not a law, it's just some opinions given by SEBI. That's it. So you can ask for informal guidance from SEBI. First question from your examination point of view, who can ask for informal guidance from SEBI? These 5 people, only these 5 people can request for informal guidance. First is intermediaries, second is listed company, third is any company which is proposed to get listed. First, the company which is already listed, or the company which is proposed to get listed, meaning they have either filed listing obligation or they have filed prospectus already. When do we say that any company is proposed to get listed? Meaning it is in the process of getting listed. When do we say that any company is in the process of getting listed? When the company has already filed listing application to stock exchange, or the company has already filed draft prospectus with SEBI. Okay. Third is mutual funds का trustee company and asset management company. We already know in mutual fund there is trustee company and there is asset management company. And lastly, acquirer or prospective acquirer under takeover regulation. SAST regulation means takeover regulation. Acquirer means who is acquiring another company or who is taking over another company. Only these 5 people can request to SEBI for informal guidance. Which 5 people? First, intermediary, listed company, company which is proposed to get listed, and mutual fund ka trustee company and asset management company, and acquirer under takeover regulation. That's it. Now, there are 2 type of informal guidance, interpretive letter and no action letter. If I can further simplify this, interpretive letter means simply, SEBI, I can't understand this line, please interpret this for me. That's all. That's about interpretive letter. Means if we can't understand any law, let's say this is a law, we can't understand any law, we will ask SEBI, we can't understand this law, please interpret this for us. That is interpretive letter. Means SEBI provides you interpretation. SEBI provides you interpretation of any act, rules or regulation. Okay, that's all about interpretive letter. Next is your no action letter. No action letter means if we are about to do any transaction and I'm scared that whether this is a violation or not, if we do this transaction, would SEBI take any action against us? So if you're scared about that, we can apply to SEBI. We can ask to SEBI, we want to do this transaction. We are not sure whether you will take action against this or not. So please give us no action letter. No action letter means please tell us that you will not take any action against us if we do this transaction. That means we are in compliance with law or not. That is no action letter. It's like you are saying, mom, I'm going to Goa. You will not scold me now. So mom is saying, no, I'll not scold you. You can go to Goa, but make sure you don't do anything wrong. That is no action letter given by your mom. So this way, same is no action letter given by SEBI. You can say, SEBI, I'm about to acquire this company. Is this within the law? Now I'm not sure. Will you take no action against us? And if SEBI gives you letter, you can go ahead, I will not take any action against you. That is known as no action letter. Are we clear with this? Okay. So there are 2 types of informal guidance. One is interpretive letter, where we simply ask for interpretation of any law, and second is no action letter. In no action letter, the department of SEBI says that we would not recommend any action to SEBI. We would not recommend any action to SEBI means if you do this proposed transaction, if that proposed transaction is consummated means simple language mein done. If that proposed transaction is done, we will not take any action against you. We will not take any action under securities law. That's all about no action letter. Now, most important thing is, in following cases, SEBI will not give you any informal guidance. Why? For example, if your question is very general, you have to be very specific, your question has to be good, your question has to be very specifically, then only SEBI will entertain your question. Otherwise, SEBI will ignore your application. SEBI will not respond to your application if your question is very much general, if you give a hypothetical situation, or if you have no interest, you have no direct interest in the matter which you are asking, or if legal provision are not mentioned. Whenever you ask for us informal guidance from SEBI, you have to mention which section you are referring to. You have to mention the section number, the act number, the regulation number. So if legal provision is not mentioned, SEBI will not give you informal guidance. If no action letter or interpretive letter have already been issued on similar situation and similar facts, all the informal guidance given by SEBI is published in the website. You can go to SEBI website and read the informal guidance. So if SEBI has already issued informal guidance on that same matter, then SEBI will not give you informal guidance again on that same matter. If inquiry investigation is going on against the company, if you are already under inquiry and inspection, SEBI will not give you any informal guidance. If where similar or connected cases are pending before the court or tribunal, the similar case what you are doing is pending before the court or tribunal, already that case is going on in the court or tribunal, SEBI will not give you any informal guidance. Or where policy requires department not to respond, if for secrecy policy or under government policy, department don't want to respond, then they will not give you any informal guidance. So in following cases, SEBI will not give any informal guidance. For example, if your application is very general, if you are asking about a hypothetical situation, if you have no direct interest in that matter, if you have not mentioned legal provision, if already informal guidance is given on the similar matter, if already investigation is going on against you, if already court case is going on the similar matter, and lastly, if policy requires department to be silent. In following cases, SEBI will not give any informal guidance. The next one is, whenever you request for informal guidance, you have to mention three things. First, that you are making request under this scheme. What is the name of the scheme? SEBI Informal Guidance Scheme 2003. You have to mention that you are making request under SEBI Informal Guidance Scheme 2003. Second, whether it is for NA letter or interpretive letter, you have to mention whether you are asking for no action letter or you are asking for interpretive letter. And third, all material, fact and situation. Secondly, you have to pay the fees. How much fees? 25,000. Yes. If you want informal guidance from SEBI, you have to pay a non-refundable fees of 25,000. Non-refundable fees of 25,000. Are we clear with this? And whenever you file an application, SEBI has to dispose of your application within maximum 60 days. Meaning, if today I make an application to SEBI, within 60 days, SEBI has to give me informal guidance. And lastly, SEBI is not under obligation to respond, which means if SEBI don't want to give you informal guidance, SEBI can reject your application and your fees paid will be refunded after deducting 5,000 processing fees. Sorry, this 25,000 may say only 5,000 is kept and rest all 20,000 is refunded. Once again, everybody, can we request for informal guidance from SEBI? Yes. Who can request? Only these 5 people: intermediary, intermediary, listed company, proposed listed company, mutual funds and acquirer. Acha. Now, when we make a request for informal guidance, we have to mention the scheme name. We have to mention whether it is no action letter or interpretive letter. We have to mention all the facts. And we have to pay 25,000 ki fees. Now, if SEBI accepts the application, then SEBI will dispose of the application within 60 days and give us the informal guidance. But if SEBI rejects the application, then SEBI will refund your money after deducting 5,000 processing fees. 25,000 we say 5,000 we will deduct as a processing fee and rest 20,000 we will return. Next topic is your informal guidance ka hi confidentiality request. Usually, all the informal guidance issued by SEBI is published in SEBI's website. But if you want to keep it confidential, you can make a request to SEBI. SEBI, please, ye wala matter na, don't publish in website. Please keep it confidential. So, if you are an applicant and you give informal guidance ka request, you can also give confidentiality request to the department of SEBI. You can say, hey, please keep it confidential for maximum 90 days now. So you can request, you can make confidential request for maximum 90 days. You can say to SEBI, please 90 days tak don't publish it anywhere. Please keep it confidential. Please keep it secret. And you also have to give reason why you want it confidential. Now, SEBI has two options. If SEBI accepts confidentiality request, then SEBI will not publish it anywhere. Okay. And until the expiry of 90 days. Okay. But if SEBI rejects your confidential request, then SEBI will inform you. Okay. SEBI rejects. SEBI says that no, I will publish it immediately. I reject your confidentiality request. Now, applicant has two options. You can withdraw your application within 30 days. You can say, acha, theek hai, in that case, we don't want your informal guidance. You can withdraw your application within 30 days. In that case, SEBI will refund your money. And SEBI will not give any informal guidance. Okay. Response number 2, you do not withdraw your application within 30 days. You are like, chalo, theek hai, give us informal guidance and publish it if you are not agreeing to it. So you can wish to continue. So if you don't withdraw your application within 30 days, then SEBI will give informal guidance and will make available to public, means publish it in the website. Once again, last point about confidentiality request. If you want, you can make a confidentiality request to SEBI. But you can make that request for maximum 90 days. Keep it confidential for maximum 90 days. If department accepts your request, then department will keep it confidential for 90 days, will not publish it in the website. But if department of SEBI rejects your confidential request, department will inform you. Now you have two options. Either you can withdraw your application within 30 days or you do not withdraw your application within 30 days. If you withdraw your application, well and good, SEBI will refund your money and will not give you informal guidance. But if you wish to continue and if you don't withdraw your application within 30 days, SEBI will give you informal guidance and will publish it in the website, means make it available to the public. Are we clear with this? And the last point about informal guidance, some basic point about informal guidance is, informal guidance is not an order. It's not an order of SEBI. That's why it's not appealable. SEBI is saying, I'm not giving you order. I'm just giving you informal guidance. So informal guidance is not an order of SEBI. So it's not appealable. Next is, informal guidance is not a conclusive evidence of law. See, this is not a law. I'm telling you, it's not binding on SEBI. SEBI can later disagree to it. It's not binding on SEBI. It's not a law. It's not a conclusive evidence. It's not an order by SEBI. It's just, name is informal. It's just in the nature of some guidance. That's all. So SEBI is not liable for any loss to the company due to informal guidance. If you suffer any loss, SEBI is not liable for it. SEBI generally acts on informal guidance. See, although it is not binding on SEBI, but generally SEBI agrees to informal guidance and follow it. And SEBI posts it in the website. We already know whenever SEBI gives any informal guidance, it is posted in the SEBI's website. And lastly, if you obtain informal guidance by fraud or misrepresentation, then informal guidance will not be valid. If you gave false information to SEBI and then you obtain the informal guidance, then that informal guidance will not be valid. With this, we are done with the topic of informal guidance. Are we clear with this? Are we clear with the topic of informal guidance, everybody? Are we clear with the topic of informal guidance? Yes, everyone? Are we clear with the topic of informal guidance? Everyone? Yes. Yes, Sanvi, I will send. Today I will send. Yes. Okay. Great, everybody. Now we are left with one very important topic, that is your scores. Like one very important topic, last topic of this lesson, scores. This is your last topic. we are done with each and every topic. Even if you check your study material, your ICSI material, each and every topic is covered. We have not skipped even a single topic from this lesson. We have discussed all the topics and all the points in shortest time possible. Okay, so last topic, and it's a repeated past exam question. It's we will not get I'll not be shocked if ICSI gives this question again. It's a repeated past exam question and very important from your examination point of view. A 5 marks question, and sometimes even ICSI asks more than one question from scores. Now, what is scores? It is an online platform for customer or investor complaint solving. So if you have any complaint, you can file a complaint in the scores platform. So what is scores? Scores is a SEBI ka online complaint redressal system. It was launched in 2011. No need to do 2011 from examination point of view. So scores is what? It is an online customer complaint redressal system. And acha, why scores platform is necessary? Scores platform is necessary to give fast, transparent and centralized online platform for grievance redressal. Grievance means your complaint, redressal means solving. So basically, as an investor, if I have any complaint, any problem, then I can file a complaint in the scores platform. This is online, so it provides me faster, transparent and centralized online solution for my grievance redressal. Okay, now against whom I can file application in the scores platform? In scores platform, I can file a complaint against 3 people. Point number 1, listed companies. Point number 2, intermediaries. And point number 3, MIIs. MIIs, market infrastructure intermediaries. MII means market infrastructure intermediaries, like depositories, DPs and stock exchanges, like this. Okay, so what are we saying? Against 3 people we can file complaint in scores platform. So it's just imagine, scores is an online website. It's a website of SEBI. Acha, who oversees the whole scores process? SEBI. So the whole scores process is administered by SEBI. Now, in scores platform, as an investor, I have any complaint, I can file a complaint against whom? Against 3 people: listed company, against intermediary, and against MII, market infrastructure intermediary. This question can come in exam. Against 3 people we can file complaint in scores: listed company, intermediaries and MII. Okay, and now what are the features of score? This you can write it in your own words, common sense ke basis pe. Since it's online platform, you have 24/7 access. You can file complaint anytime, anywhere. You can file complaint from anywhere. You can see the status anytime. It's online website. You can see the status of your complaint anytime online. Okay, and it is a centralized based system. Centralized based means overall the whole complaints, all complaints are managed centralized by SEBI. They are managed centralized by SEBI. Acha, it is automatic online routing to the concerned entities. Automatic online routing means, let's say I have complaint against Reliance. So I will file a complaint in the scores platform. Scores will automatically send that complaint to Reliance, automatic route that complaint to Reliance. And online uploading of ATR. Online uploading of ATR means, imagine this is a website. If I have complaint against Reliance, I will upload my complaint in the website. They will send my complaint to Reliance. Then Reliance have to solve my complaint, and they will, after solving my complaint, they have to prepare a report which is known as action taken report. Action taken report means what action they have taken to solve my problem, and they have to upload that action taken report in the scores website, and then scores website will give that action taken report to me. So what is the feature? There is a feature of online uploading of action taken report. Next, I can file my complaint online. Whenever I file complaint online, I get email and I get a unique complaint number through which I can track my complaint. Okay, and that's all about the features of scores. If question comes on features of scores, you can write any of this particular points. Okay, now very important thing about scores is, yes, स्कोर्स का रिव्यू सिस्टम, स्कोर्स का 2 important points you have to do. स्कोर्स का process of filing a complaint you have to do, and process of first review, process of second review, and process of final order. This is very important. Okay, now everybody, last topic of scores. First process, how you can file a complaint in the scores. So what I can do, I can either download scores ka app in my mobile phone, or I can go to the website of scores. I can either use website or app. Okay, now I can file a complaint online against 3 people: listed company, or market infrastructure institution like stock exchange or depository, and intermediaries. Okay, and these people are known as regulated entities. These 3 people are known as what? They are known as regulated entities. Okay, now the scores platform will forward the complaint to 2 people. The scores platform will forward the complaint to 2 people. One is DBs and another is REs. DBs means designated bodies. Basically, they are appointed by SEBI to basically administer and overall oversee the process of scores. So, scores platform will forward the application to designated bodies and to regulated entities. Regulated entities means the person against whom complaint is filed. Now, this regulated entity have to solve our problem and upload ATR within 21 calendar days. This 21 days is very important. They have to solve our problem and they have to prepare action taken report, what action they have taken, and they have to upload it in the scores website within 21 calendar days. Within 21 calendar days. What this DB will do? They will keep on checking whether RE is uploading action taken report or not. Basically, they will stand on the head of RE. They will stand on the head of regulated entities whether these regulated entities are uploading action taken report within 21 days or not. So what this DB do? They ensure that the entities submit ATR within 21 days. Are we clear with this? Okay, now once we submit the ATR, once the company submit the ATR in the scores platform forward the ATR to the investor. This is how complaint is filed and solved through scores platform. So this is process of filing complaint through scores platform and getting solution. Now, ma'am, what if I'm not satisfied with the solution? Then can I file for first review? Application for first review means I am not satisfied with the solution. Review it again. Yes. So if as an investor I am not satisfied with the solution, I can request for review. But that request I can make only within 15 days. Okay, only within 15 days of receiving ATR, I can file for first review. I can ask, I am not satisfied, review it again. Acha, if I am satisfied with the solution, then in that case, complaint will be disposed of. If I am satisfied, complaint will be disposed of. But if I am not satisfied, I can ask for first review within 15 days. Now, who will oversee the first review? DBs, means designated bodies. What they will do? They will take the cognizance of request. Cognizance means they will acknowledge ki, okay, we received your application. Then they will do the first review with regulated entities. Means now they will sit with regulated entities and they will review the decision again. They will do the first review. If needed, they can ask for any clarification. Okay, and lastly, now after doing the first review, we have to submit the revised ATR within 10 calendar days. Now we have to take action again and we have to upload revised ATR within 10 calendar days. Okay, now if still you are not satisfied, I am still not satisfied with the solution, can I ask for second review? Yes, if I am still not satisfied with the solution, I can ask for second review. Acha, if I am satisfied, then complaint will be disposed of. But if I am not satisfied even with the first review, then I can submit request for second review within 15 days of receiving the revised ATR. So when I receive the revised ATR, if I am not satisfied with the solution, I can request for second review within 15 days. Now, who will oversee second review? Not DBs, SEBI himself. Are you understanding? SEBI himself will oversee the second review. So he will take the cognizance of request. Taking the cognizance means he will accept. Okay, we received your application. Now SEBI will do the second review along with regulated entities and designated bodies. Now SEBI will do the second review, and then regulated entities and DB have to immediately take action and submit revised ATR. The time limit is not given here. Within how many days we have to submit the revised ATR. Just understand that SEBI will do the second review with RE and DBs, and then REs and DBs have to submit revised ATR again. They have to take action again and they have to submit revised ATR again. That's it. Acha, if SEBI wants, they can ask for any clarification if needed. Now, complaint will not be disposed of by mere submission of ATR. In this case, you know, if second review is filed now, it will be overseen by SEBI himself. If second review is filed, it will be overseen by SEBI himself, and this case will not be disposed of until SEBI disposes of the complaint. So basically now this complaint will be treated as disposed of only after SEBI disposes the complaint. SEBI says, okay, now close the complaint. Then only that complaint will be closed, and we are done with this process of whole big process. In book, na, it is given in like 3-4 pages, big 3-4 pages. We are done with the whole process of filing complaint on the SCORS platform. First review, second review, who will do the first review, who will do the second review. Now one more point. Action by stock exchange against company for failure to redress the grievance. So this is another point only. Here we have seen the process of SCORS, how we can file complaint in the SCORS, and SCORS will automatically forward the complaint to the regulated entities and designated bodies, and then they will submit the ATR action taken report. We are done with this. There is one more power of stock exchange. Even stock exchange, you know, can regulate the companies and check whether they are solving the grievances or not. So if there is any company who is not solving the grievance, or if they fail to pay the fine, or if they fail to submit the ATR within 15 days. So if there is any listed company, let's say I have a complaint with Reliance and I submitted the application, I submitted the grievance. Now Reliance, if it fails to submit ATR within 15 days, or if it fails to pay the fine, then stock exchange can give a notice to the company about levy of fine 1,000 rupees per day per complaint. If you don't redress my grievance on time, per day ka 1,000 rupees fine you have to pay. Per day delay ka 1,000 rupees fine you have to pay, and you have to sorry, one correction, I'm really sorry. If let's say there is a company who's not solving my grievance, okay, who is not solving my problem, so stock exchange will give a notice to the company that now, since you are not solving grievance on time, you have to pay fine of 1,000 rupees per day of delay, and now I'm ordering you within here within next 15 days you have to submit the ATR. ATR means you have to solve the grievance and you have to submit the ATR within next 15 days, and you have to pay the fine 1,000 rupees per day of delay. But if you don't pay the fine of 1,000 rupees per day of delay, and if you don't submit ATR within 15 days, then stock exchange will ask your promoters. Stock exchange will give a notice to promoters of your company. Hey, your company is not paying fine, your company is not submitting ATR. Now we will ask promoters of the company to submit ATR within next 10 days and to pay fine. And even if promoters fails to pay the fine or submit ATR, then stock exchange will order NSDL CDSL to freeze all the promoters' shareholding. Oh my God, this is a big step, like a big step. What are we saying? Ma'am, action taken against company who fails to redress the grievance under SCORS platform. Under SCORS platform, if any company fails to redress the grievance, or they are not redressing the grievance, in that particular case, stock exchange will give a notice to them. Hey, pay 1,000 rupees per day, delay ka fine, and now you solve the grievance and upload action taken report within 15 days. If you don't, then we will stock exchange will give notice to your promoters. Hey, promoter, pay fine and now upload ATR within next 10 days. And if even promoters don't pay the fine and don't upload the ATR, then stock exchange will order NSDL CDSL To freeze all the promoters holding. Freeze matlab their shares will get freeze. They can't do anything. They can't purchase. They can't sell. They can't access it. Nothing. Their shareholding will be freezed. This as a penal measure. Why? Because you are not solving grievance. That's all majorly about scores. We are done with like major. I would request you to go through scores from material also once, because it's very important topic. वैसे तो almost all important points are covered in the notes, but I would request you to go through scores once from your material. Other topics के लिए you can do it completely from the notes. No need to refer the material again for other topics, but for scores I would request you to go through the material once, because it's like very important topic. Scores is a very important topic, so I would request you to go through the material also only for this topic, scores. Rest of the topic you can do from the notes, only from the notes. For rest of the topic it's okay if you don't revise again and again from the material, but scores you do. Acha, scores mein na one more point is there. In scores na, in scores topic there is one more topic of responsibility of DBs. Remember, what are DBs responsible? Basically, SEBI appoints DBs to oversee the whole process of this grievance solving, to monitor all process of this grievance solving. Okay, so what are the responsibilities of DB under scores? First responsibility is to monitor grievance. Monitor grievance means to monitor all the complaints filed, to track the complaints, to ensure that ATRs are submitted on time, to ensure the quality of response. Next, to do the first level review. Remember, we did first level review is done by DBs, second level review is done by SEBI. So DBs are responsible to handle the first level review and to seek clarification as needed. Lastly, no enforcement actions. No enforcement action means no enforcement action means DBs are responsible to give advisory if needed, to issue caution letters for poor handling. If any company will not redress your grievance, then DB will give you caution letter ki, hey, handle this grievance properly. Are we clear with this? So these are the responsibilities of DB. So like 3 or 4 mark question in your examination. Responsibility of DB: monitor grievances, first level review, and do the first level review, and to issue advisories and caution letter. That's all. Acha, one more thing. Redressal process we have already done, and after that, what is the website of scores? Some general provisions are given. Some last topic, general provisions regarding scores. Firstly, you can go to what is the website of scores, www.scores.gov.in. You will have to generate your user ID password, and after for generating user ID password, you have to submit your name, PAN, email, mobile address, etc. And whenever any wrong thing happens with me, I can file a complaint in scores only within 1 year. Meaning, if today something wrong happened, only within 1 year I can file a complaint in scores. After 1 year, I cannot file a complaint in the scores. Okay, and can file a complaint on scores if entity rejected complaint or no reply from entity and investor is not satisfied. See, one thing, let's say I have a complaint with Reliance. So I can directly file a complaint to Reliance also. And if Reliance either rejected my complaint or not replied to my complaint, or I am not satisfied with the Reliance ka solution, then also I can file a then only I can file a complaint in the scores. So what we are saying, before going to scores, you directly contact the company, and only if company rejected your complaint or did not reply to your complaint, or you're not satisfied, then only you file a complaint on the scores. Your complaint will not be entertained in following cases. Acha, if already it's a matter of IBC, means your company is into insolvency. If your company is a stuck off company or a vanishing company. Stuck off means your company is closed. Vanishing means your company is farar. You cannot trace the company. Liquidated means company which is dissolved, closed. Acha. if already some court case is going on, if already your company is unlisted or delisted, if your company is already unlisted, delisted, some court case is going on, IBC case is going on, your company is struck off or your company is liquidated, or if order is passed by RBI, IRDAI, PFRDI or CCI, in the following cases, your scores complaint will not be entertained. Your scores complaint will not be entertained. Acha, who will handle the first review? Who will handle the first review? We know first review will be done by DBs. Who will handle the second review? Who will handle the second review? Second review will be handled by SEBI. But ma'am, if there is no DB, then even first review will also be handled by SEBI. If there is no DB, then even first review will be handled by SEBI. And see, first thing, scores is not a court, it's just a facilitation platform. Means you can solve your grievance through scores. It's not a court which will give you judgment. If you need judgment, if you need legal adjudication, you should go to online dispute resolution. What is online dispute resolution? Example, arbitration and conciliation, or you should go to court. Scores is not a course, it's just grievance redressal platform. And if you choose to go to court, then your scores complaint will automatically be closed. Okay, nowadays government have launched scores 2.0. Scores 2.0 is basically a new version of scores which gives you faster solution. That's it. And last topic is scores mobile app. Scores mobile app means government have launched a mobile app of scores which you can download and you can log in, so to lodge a complaint anytime, anywhere. So it's a mobile app which helps you to lodge complaint online very easily. It was launched in March 2020. Through this, you can file a complaint anytime, anywhere, just using your mobile phone. Okay, so it encourages more and more people to file online complaint instead of physical letters. Acha, what is the features? The features of this app all the features which are there in the website, all those features are there in the mobile app also. What features? You can file complaint, you can upload document, and you can track status of your complaint. Whenever you file any complaint, you will get SMS and email. Okay, and you can track your status from the app only, etc. There is a toll-free number also which you can call for any doubt, and there is FAQ also, frequently asked question, which you can refer. This app is available in both iOS and Android. With this, we are done with all the topic of scores. All the topic of scores, and with this, we are done with lesson 4 completely. Lesson 4 completely, and I'm so happy, I'm feeling so satisfied right now that finally today, no disturbance, nothing, and like properly and very effectively we completed all topics of lesson 4. Guys, in lesson 4, investigation topic is important, recovery is important, scores is important, informal guidance is important, investigation, settlement, yes, all these topics are like important in this particular lesson. So I would request you to go through it. Hello everyone, how are you all? Quickly let me know in the chat box if I am properly visible and audible to all of you, so that we can start our today's revision of lesson number 8, that is ICDR. And this is a very important lesson from your examination point of view. So LODR, ICDR, these are among those lessons from which you can expect like 2 to 3 questions. So you can expect around 10 to 15 marks weightage of this particular lesson in your examination. So that's why from particularly examination point of view, this lesson is like super important and very important. And I have tried my best to concise this particular lesson and to make it summarized and short for you, so that you can revise it in the least time possible. So if you all give me a green flag, then we can start with our today's revision. So now lesson number 8, ICDR. Particularly in this lesson, what we have to study in this lesson, basically with respect to ICDR, SEBI has made regulations which are known as SEBI ICDR regulations 2018. So in this lesson, we are going to study SEBI ICDR regulations 2018. Now in this regulations, SEBI has talked about few things: how to make IPO, how to make FPO, How to make fast track IPO. Okay. How to make right issue. How to make preferential issue. How to make bonus issue. How to make issue IPO in SME exchange, small and medium exchange. How to make QIB, QIP, qualified institutional placement. How to issue IDRs, and how to list make IPO in your IGP, that is Innovators Growth Platform, and how to make IPO in SSE, that is Social Stock Exchange, that is Social Stock Exchange. Okay. So everybody, all these topics we have to do in this particular lesson, and the first we will start with your IPO, that is initial public offer, and FPO, that is further public offer. First we are going to start with IPO and FPO. So all these topics are there. So approx 11 topics are there in your this particular lesson, lesson number 8, ICDR. Okay. We are back now, fully focused on ICDR regulations. Now, first ICDR regulations talks about IPO and FPO. IPO means initial public offer. Initial public offer means when an unlisted company for the first time make public offer, that is known as initial public offer. Now, when you make IPO, you already get listed. Now, if a listed company further wants to make public offer, then those subsequent offer made by a listed company is known as FPO. So we are done with the basic meaning of IPO and FPO. IPO means first offer made by unlisted company. FPO means subsequent offer made by the listed company. So IPO is made by unlisted company and FPO is made by listed company. Now, there are some eligibility conditions that we have to study. Not every company can make IPO and FPO. There are some eligibility conditions which you have to follow. Only if you are eligible company, then only you can make IPO and FPO. So only if you are an eligible company, you fulfill the eligibility requirement, then only you can make IPO and FPO. And this following eligibility condition that we are going to study must be fulfilled both at the time of filing DRHP and at the time of filing final prospectus. DRHP means draft red herring prospectus. So whenever we make public offer, first we have to issue a draft prospectus, then we make changes in the draft prospectus, and then we make the final prospectus. So both at the time of filing draft prospectus also we should be eligible, and at the time of issuing final prospectus also we should be eligible. Both at the time of filing draft hearing prospectus and final prospectus we should fulfill the eligibility condition. Now, very important, we are going to start with first pillar of your ICDR chapter, and that is known as IPO. Everyone ready? Everyone, I want you to be full attentive. All those who are watching right now, I want you to be 100% attentive, because this is very, very, very important, and it's going to come again and again. This particular topic is repeated in the whole ICDR chapter at least 4 to 5 times. This topic is repeated. I want you to be 100% attentive. First, following entities are not eligible to make IPO, which means if you are a defaulter company, if you have done some default, if your promoter or director are defaulter, you will not be eligible to make IPO. First one is if your company means issuer or promoter or director or selling shareholder, 4 people, IPDS, issuer, promoter, director, selling shareholder. Once again, issuer, promoter, director, selling shareholder are debarred. Debarred means SEBI has prohibited them, that you can't make a public offer. SEBI has debarred them from accessing stock market. Number 2, if your promoter or director of any other SEBI debarred company, your company's promoter and director are also the promoter or director of another company which is debarred by SEBI. Our company is not debarred by SEBI. Another company is debarred by SEBI, and our promoter and director are also the promoter and director of that other company. Means our company and that other defaulter company share the common promoter and directors. In that case also we will not be eligible to make IPO. Third, if our promoter and directors are willful defaulter or fraudulent borrowers. RBI maintains a list of these people who do financial fraud. Willful defaulter, fraudulent borrowers. If our company or our promoter director are willful defaulter or fraudulent borrowers, then we will not be eligible to make IPO. Second, third, fourth, if our promoter or director are fugitive economic offenders. You have already studied in ECIPL. Fugitive economic offender means those who have done financial fraud in India and then they have left the India. Vijay Mallya was the first fugitive economic offender, so he will not be allowed to make IPO. And the last one, if you have any outstanding convertible security or any outstanding convertible rights which are to be converted into equity shares. If there are any convertible bonds, convertible debentures, warrants, or any convertible security which are to be convertible into equity shares, if they are pending, outstanding means pending, then we will not be allowed to make IPO because the calculation will be wrong. First, we have to complete all our convertible security. We have to convert it into equity shares. Thereafter only we can make IPO. Very important 5 conditions. Everyone, super very important 5 conditions. First, our company, our promoters, our directors, our selling shareholders should not be debarred from accessing capital market. Next, our promoter director should not also be the promoter director of other debarred company. Third, our promoter director should not be willful defaulter of fraudulent borrowers. Then they should not be fugitive economic offender. And lastly, there should not be any outstanding convertible security which are to be converted into equity shares. Guys, but there is 2 exceptions given. First exemption, if in the first 2 cases, if SEBI has debarred, but the debarment period is already over. Let's say SEBI debarred you for 5 years and that 5 years is already over. Now you are eligible again. Now this restriction does not apply, means let's say 2020 May, SEBI debarred you for 2 years. So 2 years completed, your debarment period is over. After that, now you will be eligible to make IPO. Next, guys, if there are outstanding ESOP or ESOs. What are ESOP or ESOs? They are options given to employees which gives them right to purchase equity shares of the company. They are basically convertible into equity shares. So if we have given employee stock option to employees which are outstanding, then we can make IPO. The restriction will not apply. Matlab, this is allowed. So even if there are outstanding ESOPs, then also we can make IPO. And if there are outstanding security, but we pinky promise that we will convert them into equity shares before filing RHP, then also we will be eligible to make IPO. Very important eligibility conditions. Guys, our company should not be debarred, and our promoter directors, if they are promoter director in any other company, then that other company should also not be debarred. They should not be willful defaulter or fraudulent borrower. They should not be fugitive economic offender, and there should not be any outstanding security. But ma'am, if there are only outstanding ESOPs, then it's fine. We can make IPO. And if there are only outstanding convertible security which are fully paid up and which we promise that don't worry, we will convert them into equity share before filing prospectus, which means we are making promise that before IPO we will convert this outstanding security into equity shares. In that particular case, we can make IPO. Guys, beautifully we have done. Our entity is not eligible to make IPO. It is given in regulation 5 sub-regulation 1 and regulation 5 sub-regulation 2. Next is very important eligibility criteria. Guys, this is of supreme important, like very important, very important. So basically these are non-eligibility. Non-eligibility means if you are defaulter, all these points are kind of defaulter points. So if you are defaulter, then you will not be allowed to make IPO. Now there is some eligibility requirement that you should fulfill these profit, asset and net worth requirement, minimum profit, minimum net worth and minimum asset requirement before you will be eligible to make IPO. So now guys, there are 2 options. First option is you should fulfill this 4 criteria. First, very important, you should have net tangible asset of 3 crores or more in each of the last 3 years. In all of the last 3 years, you should have net tangible asset of 3 crore or more. Now, out of total net tangible asset, maximum 50% should be monetary asset. What do you mean by monetary asset? Like cash, bank or liquid assets. Liquid asset like stock, current assets will come in monetary asset, cash balance, bank balance, liquid assets. So, we say ki total asset mein se maximum 50% should be monetary asset. Matlab at least 50% should be your fixed asset. SEBI focus more ki this liquid assets, this monetary asset should be less than 50%. We want more of a fixed asset because that represent a good financial strength of the company. But if you are doing offer for sale, acha, what do you mean by offer for sale? What do you mean by offer for sale? Yes. So whenever we make public offer, then either we can issue new shares or we can issue existing shares of promoters or existing shares of promoter or existing shareholder. So if we are not issuing new shares, we are just selling our promoters shareholding or existing shareholders ka shareholding to the public, then in that case it is known as offer for sale. In short, I call it OFS, offer for sale. So guys, if we are doing IPO entirely by offer for sale, which means we are not raising new money, in that case this 50% maximum 50% monetary asset will not be applicable. This limit will not be applicable, which means in simple language, ma'am, if we are making complete offer for sale, then we can have even more than 50% monetary asset. It's fine. In that case, we can have even more than 50% monetary asset. Next requirement is we should have last 3 years ka average operating profit at least 15 crore. How do you calculate average? Last 3 year ka profit plus divided by 3. So last 3 year ka you have to calculate average operating profit, and that average operating profit should be at least 15 crore, matlab 15 crores or more. And there should be profit in each of 3 years. Matlab 3 years average should be 15 crore and there should be profit in each of the 3 years. There should not be loss. Okay, so what are we saying? There should be profit in each of the 3 years and all 3 years ka average should be 15 crores or more. Next is your net worth should be 1 crore or more in each of last 3 years. Basically, you will check last 3 year ka details. Net worth should be 1 crore or more. And lastly, there should be no name change of the company in last 1 year. Last 1 year mein you should not have changed your name. But if you have changed your name in the last 1 year, then at least 50% revenue should be from income coming from new name. Remember yesterday I gave you one example. Earlier my name was ABC Finance Limited. Now the name of the company is ABC Asset Management. Okay, ABC Asset Management Limited. So now name changed. So if name is changed in the last 1 year, then more than 50% of your income should come from the new business. What is the new business? Asset management business. So more than 50% income of last year should come from the new business suggested by the new name. With this, we are done with our option 1. Very important, guys, very important. I just you just stare at this particular 4 requirements. These 4 requirements are very, very, very important. Once again, everyone, your net tangible asset should be 3 crore or more in all the last 3 years, plus maximum 50% should be monetary asset. Maximum 50% should be your monetary asset, matlab liquid assets, cash, bank, etc. And if you are doing entirely offer for sale, then 50% rule is not applicable. Next, your average profit of last 3 years should be 15 crore and there should be profit in all the 3 years. Next, your net profit should be 1 crore or more in all the last 3 years. And lastly, if there is name change in the last 1 year, then at least 50% of your total income should come from the activity suggested by the new name. Are we clear with this? With this, we are done with eligibility requirement of IPO, and this will come again. So I'm telling you, no, this will not come again, but this is very important. Okay, now guys, this is option 1. But ma'am, what if we don't have net tangible asset of 3 crore, operating profit of 15 crore, net worth of 1 crore? Then you have option number 2. There is option number 2. If you are not eligible in option 1, don't be disheartened. You have another option. What is another option? Option number 2 is you can still make IPO if you make it by book building issue. Book building issue means price is not fixed. book building means price is not fixed. Price will be fixed by bidding process, and we undertake to at least allot 75% of offer to QIBs. Remember, in lesson 1 revision, we have already done who are QIBs. QIBs are Dodadu investors. They are experts in stock market. They do their research before investing. For example, mutual funds, VCFs, CIS, all these big funds, banks, insurance companies, public financial institutions, all these funds, pension funds, they are basically your QIBs, Dodadu investors, big investors. So guys, if we don't follow this particular eligibility requirement, we can still make IPO if we promise two things. Number one, we will do book building issue. Number two, we will allot total offer का 75% to QIB, which means if we are making a public offer of 1000 crore, then at least 750 crore के shares we have to allot to QIB, and 250 crore के shares we can allot to general public. General public. Why is it happening today? Sorry, guys. Yes. Okay. So this is your requirement, but you have to pinky promise that if QIBs don't subscribe 75%, which means if the company is unsuccessful in allotting 75% of the public offer to QIB, then we cannot go ahead with IPO. Our IPO will fail, and we have to refund all the money to all the investors. This is very important eligibility criteria of IPO. Achha, first requirement is net asset wali, operating profit, net worth, and name change. These 4 points are there. 3 crore, 15 crore, 1 crore. 3 crore, 15 crore, 1 crore. 3 crore, 15 crore, 1 crore. Net asset, average operating profit, and your net worth. You have to remember these points, guys. You have to remember this point. Net tangible asset 3 crore, net average operating profit 15 crores, and your net worth 1 crore. You have to revise it again and again. Speak it up along with me. Yes, speak up. Yes, okay, done. If either you comply with this or you comply with this, what is option 2? Book building issue, allot 75% to QIB, otherwise refund all money. Okay, once again, book building issue, allot 75% to QIB, or else refund full money. Done, ma'am, done. With this, we are done with IPO. IPO. With this, we are done with IPO. Now, guys, before doing the general conditions, I want you all to come to FPO. The another topic that we have to do is FPO. Now, in FPO, the first topic we will be doing entities not eligible to make FPO. FPO means further public offer. So, if you're already listed company, now you want to make public offer, that is known as FPO. And you would be so happy to see that all the points are same to same. Shame to shame. Okay. So, issuer, promoter group, director, or selling shareholder should not be debarred by SEBI. First point, who are not eligible to make FPO. Secondly, our promoter director should not be the promoter director of another SEBI debarred company. Third point, our promoter director should not be willful defaulter or fraudulent borrower. Promoter director should not be fugitive economic offender. So all 4 points are same. Only convertible security wala point is not there, which means even if there is outstanding convertible security, then also we can go ahead with FPO, but we cannot do IPO. So that last condition, if there is outstanding convertible security, we cannot make IPO, but we still can make FPO, because FPO mein that last condition is not there. Are we clear with this? And now, ma'am, last point, if the debarment period is over, then restriction does not apply, which means if in the first and second point, the debarment period is already over, which means now you are eligible again. Now you can make FPO. With this, we are done with entities not eligible to make FPO. So if you'll come back to IPO, guys, we have done entities not eligible to make IPO. We have done 5 points. Out of this 5 points, this first 4 points are also there in further public offer. Only this last point is not there in the further public offer. Okay. Now, eligibility requirement. We have done eligibility requirement for IPO. What eligibility requirement we did for IPO? Net tangible asset 3 crore, average operating profit 15 crore, yes, net worth 1 crore, and name change wala point. Remember these 4 points we did. Either option 1 or option 2 was allot 75% to QIB and do through book building issue. Remember, two method we did, either option 1 or option 2 for IPO. We are done with IPO. Now talking about eligibility requirement for FPO. Eligibility requirement for FPO. The first eligibility requirement for FPO is you should not have changed your name in the last 1 year, and if you have changed your name, then at least 50% of revenue come from the new business. Same point we did for IPO also. Yes. So first condition for making a FPO is if a company wants to make further public offer, then in the last 1 year we should not have changed our name. But if we have changed our name, at least 50% of revenue, total income should come from the new business suggested by the new name. Okay. But if this 50% condition is not met, let's say you have changed your name in the last 1 year and your 50% revenue is not coming from the new business, then what? Then also you have option 2. This is your option 1 and this is your option 2. You have option 2. So even if you have changed your name in the last 1 year and your 50% revenue is not from the new business, which means you are not fulfilling this requirement, you have another option. Option 2. What is your option 2? You can still make further public offer if you make through book building process and you allot 75% to QIB. Otherwise, you refund all the money, 100%. Entire money should be refunded. Do you think this option 2 is same for IPO and FPO? With this, we are done with non-eligibility and eligibility requirement of IPO and FPO in a very crisp, shortest possible manners, in the most summarized manner. Okay. ठीक है. Once again, FPO में who will be eligible? You should not have changed your name. If you do change your name in the last 1 year, then 50% revenue should come from the new business. But if you are not fulfilling this requirement, you still can make FPO. You have second route, QIB wala route, by if you make public offer through book building process and you allot 75% to QIB. But if you fail to allot 75% to QIB, then you will refund all the money. With this, we are not done with eligibility requirement. Now guys, we are going to do some general conditions. General conditions. We are going to do some general conditions for IPO and FPO. General conditions for IPO and FPO. Now these conditions are applicable for both IPO and FPO, which means even if you want to do IPO or if you want to do FPO, in both the cases you have to comply with all these conditions. Okay. What is the first condition? Before making IPO or FPO, you have to apply to stock exchange for getting listing approval. One or more. You can apply to one or more than one stock exchange, like Bombay Stock Exchange, National Stock Exchange. And if you are applying in more than one stock exchange, then you have to choose one of them as the head, like a designated stock exchange. For example, if we are applying to BSE and NSE both, Bombay Stock Exchange and National Stock Exchange both for listing, then out of these two, we have to choose one as the designated stock exchange. Secondly, we have to enter into agreement with depository NSDL CDSL for dematerialization of all the new shares and existing shares. So all the existing shares, matlab what is there already, and all the proposed matlab all the existing shares and the new shares which we are about to issue, all of them must be in demat form. Demat matlab electronic form. We cannot make IPO and FPO by issuing physical shares. No, before making IPO and FPO, you have to do agreement with NSDL CDSL for dematerialization. Okay, so you have to do agreement with NSDL CDSL and all the existing and new securities should be in demat form. You have to make sure that all the promoters holding should be in demat form before filing offer document. So before making IPO and FPO, you have to make sure all the shares held by promoters are in demat form. You have to make sure all the partly paid up shares are converted into fully paid up shares or forfeited. Matlab, if there are partly paid up shares, you cannot make IPO or FPO. If you want to make IPO or FPO, you have to make sure that there are no partly paid up shares. So all the partly paid up shares should be either made fully paid up or they should be forfeited. Next, very important, star mark, star mark, star mark, star mark. Very important, guys. Now, everyone, careful. Firm arrangement of finance. What are we saying? That if you are doing IPO or FPO for some project, let's say your project is you want to start a new branch, or let's say you want to purchase a new machinery, or let's say you want to manufacture new plant, or let's say you want to acquire a company. Then if for any of this project you are making IPO and FPO, then you should not 100% rely on the money of IPO and FPO. Let's say we want to acquire another company, and for this project we are doing IPO FPO, and this project requires 1000 crore. How much this project requires? 1000 crore rupees money. So in order to let's say our new project is, we want to start new plant and machinery, we want to purchase new plant and machinery. Okay, we want to purchase new plant and machinery, and that plant and machinery costs 1000 crore, which means I want to start a project, I want to purchase new plant and machinery, and the cost of that plant and machinery is 1000 crore. So if I need 1000 crore for this, you should not 100% rely on IPO and FPO. It's not like I am making IPO of 1000 crore and the whole 1000 crore rupees I'm using in the project. No, if you are doing IPO and FPO for some project, then at least 75%, matlab 750 crore you should arrange from somewhere else. You should already arrange this money. You have to bring this money from somewhere else, and maximum 250 crore you can use from IPO or FPO proceeds. Very important. If you are using IPO FPO money for some project, you cannot use all IPO money for the project. Total project cost ka whole 100% cannot be funded by IPO FPO. Maximum 75% you have to make firm arrangements. Firm arrangement means you have to pre-arrange that money. Bring 750 crore from somewhere else. Maximum 250 crore of IPO money you can use for this project of 1000 crore. So if project is 1000 crore, at least 75% money you have to pre-arrange. You have to make firm arrangement, excluding IPO proceeds and internal accrual. IPO you cannot use, and internal accrual means profits, internal profits, and this you can use maximum for 25% of the project cost. Meaning you can use IPO proceeds and internal accruals for funding maximum 250 crore, and rest 750 crore you have to make arrangements from somewhere else. This is very, very, very important, guys. Please remember once again, maximum to 25% of IPO proceeds and internal accrual can be used to fund a project. And if you are starting a project, then at least 75% of that project, for that 75%, issuer should make firm arrangement, means issuer should make pre-arrangements, firm arrangements for funding 75% of the project cost. Next is very important, limit on general corporate purpose. Guys, if you are doing IPO FPO, let's say I am doing IPO of 500 crores. I am doing IPO of 500 crores. Then this whole of IPO money I cannot use for GCP. GCP means general corporate purpose, matlab day-to-day business. ऐसे ही general purpose for giving salary, for running our day-to-day business, for stationery expense, for office expense, for electricity expense, like day-to-day general expenses. General expenses of the company. So whole IPO money I cannot use for like general purpose. Maximum 25% of IPO money I can use for general purpose. Are we clear with this? Maximum 20% of IPO money I can use for GCP, general corporate purpose, and maximum 25% of IPO FPO money I can use for unidentified investment. Unidentified investments means I have just said ki, oh, I will invest it, but I have not decided where I will invest. Oh, I will invest in this company, I will invest in this share, or I will invest in this place. That is known as general investment. General investment. So maximum 25% of total IPO money or FPO money can be used for general corporate purpose, and maximum 25% of IPO or FPO money can be used for unidentified investment, and total maximum 35% of IPO FPO money can be used for general corporate purpose plus unidentified investment. So remaining for which purpose we will use? If maximum total IPO let's say 500 करोड़ है, ठीक है, टोटल आईपीओ 500 करोड़ है, तो उसमें कितना हो जाएगा 15 point something to 5 crore, उसका 35%, sorry I have calculated it wrong, हाँ अच्छा I think I have calculated it correct. What is the 35% of whatever, 35% of 500 crore, maximum that much money can be used for GCP plus unidentified investment, and rest of the money you can use for any specific project or identified investment. Identified investment means you have pre-decided कि I will invest in this project or I will invest in this company. So if you are investing in identified investment, identified matlab it is already pre-identified where you will invest, then this limit does not apply. In that you can invest any amount, but there is limit only for GCP and unidentified investment. So only for GCP you can use maximum 25% of IPO money. Only for unidentified investment you can use maximum 25% of IPO money. But combined both, if we combine both GCP plus unidentified investment, for both you can use maximum 35% of IPO money. I hope this is crystal clear to you. Once again, only for GCP we can use maximum 25% of IPO money. Only for unidentified investment we can use maximum 25% of IPO money. And for GCP plus unidentified investment we can use maximum 35% of IPO money. But ma'am, if your investments are identified, then there is no limit. No limit matlab you can use all your IPO money. You can use all your IPO money for identified investments. Are we clear with this? With this we are done with a very important, this particular percentage limit is very important. Case law question can come from this particular topic. Firm arrangement of finance for a project and limit on usage for GCP and unidentified investment. The next topic is if issuer was LLP or partnership earlier. Ma'am, what if our company which is planning to make IPO or FPO was earlier a partnership firm or LLP? Now this partnership firm or LLP is converted into a company and this company wants to make IPO and FPO. In that case, ma'am, how will we take past 3 years ka asset? How will we check past 3 years ka profit? How will we check past 3 years ka net worth? Remember, in order to make IPO or FPO, we will check your eligibility, we will check your past 3 years ka asset, we will check your past 3 years profit, we will check your past 3 years net worth. So we will take your past 3 years ka profit track record only if your accounts are made as per Companies Act format. So as we all know, Companies Act में balance sheet and P&L final accounts का format is given. So your balance sheet and profit and loss account, financials means balance sheet and profit and loss account should be as per the format given in the Companies Act. Secondly, you should have made all the complete disclosure. Thirdly, you have to get a certificate from CA where CA will certify 3 things. Number 1, that your financial statement means balance sheet and statement of profit and loss account. Balance sheet and P&L are according to Schedule 3. Schedule 3 mein format is given, Schedule 3 of Companies Act. Secondly, you should follow accounting standards given by ICSI accounting standard. And thirdly, your financials means again balance sheet and P&L account should show true and fair view. That's all about if issuer was LLP or partnership. What are we saying? If your company was before earlier LLP or partnership firm, which is now converted into a company, then how do we check the past profit record? We will take the past profit record of LLP or partnership firm only if the balance sheet of that LLP or partnership firm was made as per the Companies Act format. Secondly, all the disclosures were there. Thirdly, CA has given a certificate regarding CA has given a certificate that our balance sheet P&L is according to Schedule 3. We have followed accounting standards and our balance sheet P&L shows true and fair view. So if CA gives this 3 statement that yes, our balance sheet P&L is proper as per format and they give true and fair view, and we have done all the adequate disclosure, then only profits of LLP or partnership firm will be taken into account to determine the eligibility. That's all about this particular point. The next topic is spinning of a division. Acha, before going forward, I just want to cross check from you. Are you understanding everything? Basically, this is a revision. So are you able to recall all the topics? Are you able, and I hope you have gone through this particular topic once on your own. So are you getting these topics? Yes, everyone. Let me know in the chat box. 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 Like, we are doing very technical and important topics of ICDR. Yes, it's very cold here too. More than Bangalore. Yes. Yes, everyone drop me a quick message in the chat box if you are clear till here. Everyone drop me a message in the chat box. Clear. Drop me clear in the chat box if you have understood till now. If you have understood till now, drop me clear in the chat box. Drop me clear in the chat box if you have understood till now. Yes? Okay, great. Now, yes, clear everyone. Payal, Gayatri, Rakshita, Tony. Tony, what's your real name? Okay. Now, next topic, spinning of a division. What do you mean by spinning of a division? Spinning of a division means when you had a division in your company and that division you convert into a new company. Let's take an example. Our particular company, let's say our company ITC, it's a single company, and in this company ITC, there are a lot of divisions. Let's say FMCG division is there, fast moving consumer goods. Let's say tobacco is there, and let's say hotel. Three divisions are there. Division matlab we are doing different kind of businesses under a one company. Acha, Vinay, you are Vinay. Okay, got it now. Okay. So let's say there is a company ITC. Now ITC has three divisions: FMCG, fast moving consumer goods, tobacco division, and hotel division. So from this hotel division, they are doing hotel business. From this, they are doing tobacco and all this business, and don't consume that. And they have FMCG division through which they are doing like FMCG business. Now, let's take an example that they decide to convert this division into a separate company. Company. Imagine one of the son moving out and starting to live in a new house. Just like that. Let's say they divided this division, hotel division, and made a different company, ITC Hotels Limited. So this is known as spinning of a division. Spinning of a division means you convert one of your division, you separate it and make it a separate company. So basically you are separating it. It's like, let's say two brothers are living with a father, one of the brother is moving out and starting his own new house, just like that. So when you separate one of the division of the company and make it a new company, that is known as spinning of a division. Now in that particular case, ma'am, if one of the division is made into a new issuer, in that particular case, past profit track record, you need to check past profit track record. Now remember, to make IPO FPO, you should have a profit in all the last 3 years, and average profit should be 15 crore. But now this is a new company. Earlier, this company was a division. How will we check profit track record of this company which is now a company, but it is converted from a division. Earlier it was a division and now it is converted into a company. So for checking the profit track record of that division will be considered only if the financial statement of that division is in according to Companies Act format, ICSI accounting standards are followed, all the disclosure are made, and CA has certified that they show true and fair view. All these points are same which are there for LLP. Remember, simple we are saying, if your company was earlier partnership firm or LLP, then profit track of a partnership LLP will be taken only if accounts are proper. Simple. Same way, if your company was earlier a division, then profit track record of that division will be considered only if all the accounts are proper. Accounts are proper means accounts are as per format. We have followed accounting standards, all the disclosures are made, and it shows true and fair view. With this, we are done with spinning of a division. Next is additional conditions for offer for sale, very important. Offer for sale. Acha, now these conditions are applicable only in case of offer for sale, both in case of IPO and FPO, both. So even if you are making IPO or you are making FPO, okay? But if in IPO and FPO you are not issuing new shares, you are issuing existing shares, that is known as offer for sale. So if you are doing offer for sale, then 5 extra conditions are there which you have to comply. Then only you can do IPO and FPO by making offer for sale. Okay. So if you want to make IPO FPO through offer for sale, then following 5 conditions should be satisfied. Now what are those following 5 conditions? The first one is khulja sim sim. Khulja sim 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 khulja sim sim. Yes, khul gaya. Okay. Now there are some additional conditions which are applicable only for offer for sale. First one is your existing all the shares must be fully paid up. If any shares are partly paid up, you have to make it fully paid up. Secondly, the sellers means those who are selling their shares in the offer for sale, they should have held those shares for at least 1 year before making IPO or FPO or before filing draft offer document. So what are we saying? That before filing draft offer document, sellers who are selling the shares in the offer for sale, they should hold the shares for at least 1 year. Matlab ki let's say there are promoters, they are offering their shareholdings in the IPO or FPO to public. In that particular case, they should have held those shares for at least 1 year. If they are holding those shares for less than 1 year, they cannot offer those shares to the public in offer for sale. So the sellers should have held those shares for at least last 1 year. Next, if there are convertible security, then 1 year holding includes period before or after conversion. What does this mean? That let's say there are some promoters. He was holding convertible debentures for 6 months, and then those debentures got converted into shares, and those shares he was holding for 6 months. Will we say that he is holding those shares for 1 year? Yes. Why? Because for calculating this 1 year period, the period for which he is holding shares, that too will be counted. But if it is converted by a convertible instrument, then the period for which he has held those convertible instrument will also be included. Matlab, if he was holding this convertible debentures for 6 months and this convertible debentures got converted into equity shares. Now equity shares we are holding for 6 months, so we will add it and we will consider both the periods. So we will say that we are holding this shares for 1 year. Now can we offer these shares in offer for sale to public? Yes, we can offer these shares in offer for sale to public. So for conversion, the 1 year, for calculating the 1 year holding, it includes period before or after conversion. Even before conversion or after conversion, both period will be added in calculating 1 year in case of convertible securities. Next, 1 year holding period must be completed at the time of filing draft offer document. So, most of the eligibility condition you have to comply before you file draft offer document, means draft prospectus to SEBI. So make sure that the date on which you are filing draft offer document to SEBI, before that date, the 1 year holding period should complete. The 1 year holding period should complete. And lastly, if the shares are arises after conversion, in that case, conversion must be completed before filing RHP, red herring prospectus or prospectus, and conversion terms must be disclosed in the offer document. Simply, what we are saying that the shares which we are offering in offer for sale, if they are arrived by conversion, matlab earlier, let's say it was convertible debenture, now it got converted into shares. In that case, we have to make sure that it is completed, conversion is completed before filing draft offer document. So before filing prospectus to SEBI, we have to make sure that convertible instrument are already converted into equity shares. We have to make sure that conversion is completed before filing prospectus, and conversion should be according, all the conversion terms should be disclosed in the prospectus. Whatever are the terms and conditions of the conversion, that should be disclosed in the draft red herring prospectus or draft prospectus. So these are some additional conditions for offer for sale. With respect to the shares, simple, shares should be fully paid up. The seller should have held those for at least 1 year, and 1 year includes before conversion, after conversion. 1 year should be completed before the date of filing draft prospectus. And lastly, if there are convertible instrument, then they should be converted before filing prospectus, and conversion term should be mentioned in the prospectus. That's all about additional condition for offer for sale. Now, there are some more conditions for, there are some cases where offer for sale holding period rules does not apply. Holding period rule does not apply. Acha, what is holding period rule? 1 year wala holding period rule, which we studied here. So what are we saying? We studied that if you're doing offer for sale, then you should have held those shares for at least last 1 year. But this holding period of 1 year will not apply in these cases. Matlab, in these cases, it is exempt. What is the exemption? First, if the offer for sale is made by government company or statutory company or SPV in infrastructure company, 3 companies are exempted. Government company, see government company. So in case of government company, even if they are holding shares for less than 1 year, then also they can sell it in the offer for sale. Then also they can offer it in the IPO through offer for sale. So government company ke case mein this 1 year ka holding period will not apply. Statutory corporations, statutory authorities like LIC, SBI, in any statutory authority or government authorities, this 1 year ka holding period will not apply. Or any special company which is in infrastructure. So any SPV means special purpose vehicle, means special companies which is there in infrastructure sector, means who are doing infrastructure business. For these 3 companies, 1 year holding period will not apply. Secondly, if those shares are received under court approved scheme under section 230 234. What is section 230 234? It talks about merger and amalgamation, which means if those shares are received under merger and amalgamation, in that particular case, you don't need to comply with 1 year holding period. Even if you are holding it for less than 1 year, then also you can do offer for sale. You can offer it in offer for sale. Okay. And lastly, bonus share mein this 1 year ka holding period will not apply, provided 2 conditions are satisfied. Number 1, those bonus shares are issued out of only free reserves or securities premium. As we know that bonus shares can be issued only out of free reserve or security premium, and it is not issued out of revaluation reserve. Don't you think we already know this thing about bonus issue? With this, we are done with exemption where 1 year holding period not apply. Once again, everyone, look here. I'm really sorry for today. Okay. Yeah. So what are we saying that? What are the additional conditions for offer for sale? Once again, all the shares should be fully paid up, and the sellers must have hold those shares for at least 1 year. 1 year includes before or after conversion, and if there are any convertible security, it should be converted before filing prospectus, and conversion terms must be mentioned in the prospectus. But this 1 year holding period rule does not apply in case of government company, in case of statutory company, or in case of infrastructure company. This 1 year holding period rule does not apply if the shares are received under merger amalgamation, which is the scheme approved by court. Merger amalgamation is approved by court or NCLT. Okay, so if shares are received under merger amalgamation, then this 1 year ka holding period rule will not apply. And lastly, this 1 year ka holding period will not apply in case of bonus shares if you have received those shares under bonus issue, provided bonus issue is made out of free reserve or securities premium, and it is not issued out of revaluation reserve. It is issued out of free reserve and it is not issued out of revaluation reserve. With this, we are done with conditions of offer for sale. Now, there are some more additional conditions. The last topic of this, some more additional conditions for offer for sale in IPO through QIB route, only in case of through QIB route. What are we saying? This is applicable only if offer for sale is made in IPO, matlab these conditions are not applicable in case of FPO, and only through QIB route. QIB route matlab option number 2. Remember, there was 2 route. Option 1, you have to comply with net tangible asset, operating profit and net worth requirement, or option number 2, QIB route. You can make IPO through book building issue by offering 75% to QIB. So only if you are doing offer for sale in IPO through QIB, then this additional condition will be applicable. What additional conditions? For big shareholders, for small shareholders, for big shareholders. Imagine big shareholder, small shareholder and big shareholder. Acha, for big shareholder means those people who are holding more than 20% of shares. Oh my God, 20% is huge. For those who are holding more than 20% of the company, then they can offer maximum 50% of their holding. They can offer not more than means maximum 50% of their holding to the public in offer for sale. Next, if you are a small shareholder, which means you are holding less than 20% of the total shares of the company, then you can offer maximum 10% of your holding in the offer for sale. How much you can offer? You can sell maximum 10% of your holding. And lastly, if you are holding more than 20% of the total share, you must comply with the lock-in requirement. There is some lock-in requirement that minimum for this much period you have to hold the shares, then you should comply with those lock-in requirement. Once again, only if I'm telling you, it can come as a direct question also, or it can come as a part of case law question also. Just remember, if you are making offer for sale in IPO through QIB route, then only this condition will apply. We will categorize 2 types of shareholders. Those shareholders who are holding more than 20% shares, they can offer only half of their shareholding. Half means maximum 50% of their shareholding. And those people who are small shareholders, meaning they are holding less than 20% of the total shares of the company, then they can offer maximum 10% of their shareholding in the offer for sale. That's all about this particular condition. Last topic of this general condition is issue of warrants in IPO and FPO. This topic is same in IPO and FPO. Issue of warrants. Can we issue warrants? The answer is yes. Now, first question, what do you mean by warrant? Warrant, imagine like a coupon. Let's say I am buying 1 share. Along with 1 share, company is giving me 2 warrant. What does it mean? 1 share company is giving me, and along with that company is giving me 2 warrant. What is warrant? Warrant is the right to purchase share. Right to purchase share. Imagine I am buying 1 movie ticket और उसके साथ book my show is giving me 2 coupons, free coupons. Okay, I am buying 1 movie ticket. Along with that, I am getting 2 coupon for buying next 2 tickets, for buying 2 movie tickets. Are you understanding? So coupon is not movie ticket, but through coupon you can buy movie tickets. Same is warrant. What is warrant? Warrant is not share, but warrant can be converted into shares. They are convertible instrument. So warrant give you right to purchase shares. Now, what about warrant? Guys, in IPO along with share, can we issue warrant? Yes. In IPO, along with shares, you can issue warrant also. In FPO, along with shares, you can issue warrant also. Now, some conditions are given regarding issue of warrants. So, if you are issuing warrants in IPO or FPO, the maximum tenure should be 18 months from allotment. What should be the maximum tenure of IPO? 18 months from allotment. The maximum tenure, matlab warrant should be converted into equity shares within 18 months, 1.5 years. Secondly, at least 25% of the exercise price must be paid upfront. Upfront matlab when you are getting the warrant, that time only total exercise price ka at least 25% you have to pay in advance. Pay in advance. 25% of the total exercise price ka at least 25% you have to pay in advance. And that exercise price or formula to calculate exercise price must be disclosed in the offer document, must be fixed in advance and disclosed in offer document. Now, what do you mean by offer document? Sorry, what do you mean by exercise price? Exercise price means price at which we can purchase equity shares. So, let's say I have two coupons of movie ticket where I can buy two movie tickets for only 200 rupees each. 100 rupees each. Are we clear with this? I have a coupon to buy two movie tickets only at the discounted price of 100 rupees each movie ticket. So this 100 rupees is known as exercise price. So let's say I got two warrants. Now that gives me right to purchase two equity shares of the company at the price of 150 rupees each. So this 150 rupees is known as exercise price. We have to decide exercise price or formula for calculation of exercise price in advance, and we have to disclose it in the prospectus. Secondly, exercise price ka 25% we have to pay in advance while getting the warrant. When you are getting the warrant, that time only 25% advance you have to pay. Remaining 75% you can pay while conversion, when you are converting warrant into shares. Are we clear with this? One equity shares can have more than one warrant. So let's say I'm issuing one share. हर one share के साथ I am issuing two warrants. So one equity shares can have one or more than one warrant. And lastly, if you do not convert within 3 months of making payment, so when you make this advance payment of 25%, वहां से you have to convert it into equity shares within 3 months. You have to convert it into equity shares within 3 months. If you don't convert it into equity shares within 3 months, then the upfront consideration will be forfeited, meaning this 25% money which you have paid in advance, this money will be forfeited by the company, which means you have only 3 months to convert your warrant into equity share after making the payment. After making the payment, you have only 3 months to convert your warrant into shares. Otherwise, your advance payment will be forfeited by the company. This is the law regarding issue of warrant in IPO and FPO. IPO and FPO. Maximum tenure 18 months, 25% advance payment we have to make. And then exercise price should be decided in advance and mentioned in document. One equity share can have more than one or more than one warrant. And lastly, holder should convert it into equity shares within 3 months of making the payment. Otherwise, all the advance payment will be forfeited. That's all about issue of warrant in IPO and FPO. With this, we are done with a very good and detailed and technical topic of some additional conditions for IPO and FPO. We are done with all the topics of, we have done non-eligibility of IPO, non-eligibility of FPO. Then we have done eligibility of IPO, then we have done eligibility of FPO, and then we have done some general conditions which are applicable for both IPO and FPO. So if you'll come here now, if you'll see FPO guys, FPO topic may be this general conditions of FPO is same as IPO, same, copy paste, same as IPO. This general conditions same as IPO. We have already done this particular topic. Are we clear with this? This we have already done. Now the next topic that you have to do is promoters contribution. Now the next topic that we have to do is your promoters contribution. We have done huge topic of IPO, FPO and all the conditions regarding IPO and FPO. If we are clear till now, before starting promoters contribution, quickly drop me a message in the chat box whether you are understanding all the topics till now. If it is clear till now, let me know in the chat box. Ma'am, please take a class for practical questions. Surely I will take. I will try to take. Let's complete our part B first and then we will discuss about that. Are we clear with this? Yes, everybody, all those who are watching online, please drop me a message in the chat box. Are we clear with all the topics till now? Yes, okay, Rakshita, Payal, Gayatri, everyone is clear. Now we are moving towards our next topic, that is promoters' contribution in IPO. Now we are moving towards our next topic, which is your promoters' contribution in IPO. Okay. Okay, so promoters contribution is a very easy and small topic, and promoters contribution means whenever a company makes IPO or whenever a company makes FPO, then out of the total capital, at least 20% should be held by promoters. This gives confidence to public that, oh, if promoter are holding shares of their own company, that means company is a good company, compliant company, they are not a fraudulent company. So for example, if you want to let's say Mukesh Ambani want people to trust Reliance, then Mukesh Ambani himself should also hold the shares of Reliance, and he himself is holding the shares of Reliance. It gives public confidence कि Mukesh Ambani himself is holding shares of Reliance, which means it's a good company, it will not do fraud. That is promoters contribution means out of the total capital, at least 20% should be held by the promoters, and always promoters contribution is 20%. Just keep 20% in your head. 20%, 20%, 20%. Promoters contribution is how much? 20%. So what are we saying? That out of the total post issue capital, out of the total post issue capital, at least 20% should be held by promoters. Are we clear with this? Out of total post issue capital, at least 20% should be held by promoters. At least 20% should be held by promoters. And if there is a shortfall, let's say promoters are not holding 20%, then someone can meet their downfall. Their shortfall can be met by big investors. So even if promoters are not holding 20%, let's say they are holding only 10%, the remaining 10% can be held by these big investors. They are also trustable and big investors like AIF, FPCI, foreign venture capital investors, banks, PFIs, insurance companies, big public shareholder who are holding more than 5% shares, or other promoter group shareholders who are not promoter but they are a part of promoter group, and these people will not be classified as promoters. So what are we saying? That generally what is the requirement? The general requirement is promoter should hold 20%. But ma'am, what if promoter are holding less than 20%? They are not holding 20%. Then also it can work if the shortfall, whatever is the shortfall, that is held by big investors. Acha, who are big investors? Like AIF, FPCI, banks, PFI, insurance companies, big public shareholder. Who are big public shareholder? Those public shareholder who are holding more than 5% shares, or any promoter group. But even if these people are holding shares to meet this minimum 20% requirement, but still they will not be classified as promoter. They will not be considered as promoter. Secondly, these people they can meet this shortfall of minimum 20% by only 10%. Matlab ki at least promoter, even if once again sorry, even if promoters are not holding 20%, even if promoters are not holding minimum 20%, at least they should hold minimum 10%, because only maximum 10% of the shortfall can be met by these people. Are we clear with this? They can meet the shortfall in 20%, but they can meet maximum 10% of the shortfall. Okay, and they will not be classified as promoters. Okay, but ma'am, if in a company there are no identifiable promoter, no identifiable promoter means there is a company which is not a promoter company, matlab not a babu company. ITC means no promoter is there. No promoter is there in ITC. If there is no promoter, then this requirement of promoter contribution will not apply. Of course, now, if there is no promoter, how there will be promoter contribution? Are we clear with this? This is regarding promoters contribution in case of IPO. Once again, IPO के case में, what is promoters contribution? Promoters contribution is post issue capital का minimum 20%. Post issue capital का minimum 20%. Next, if there is shortfall in 20%, maximum 10% of the shortfall can be met by big investors. Big investors like AIF, banks, PFI, insurance companies, big public shareholders holding more than 5%, or promoter group. But these people will not be classified as promoter. Lastly, if in a company there are no promoters, there are no identifiable promoters, then minimum promoters contribution will not apply. Okay, that is minimum promoters contribution in case of IPO. Next is minimum promoters contribution in case of FPO. What is FPO? Further public offer. So what are we saying? That in case of FPO, how much should be minimum promoter contribution? Minimum promoter contribution should be 20% of proposed issue size or 20% of post issue capital. Yes, matlab same only. अरे यार, हे भगवान, please don't do this. Yes. Okay. So what are we saying that? I'm really sorry. I hope it does not go. God, please don't do this today at least, or for next 3 days. Okay. Now coming back to promoters contribution in FPO, in case of further public offer, what is the minimum promoter contribution? Promoter contribution is same, 20% of post issue capital. But here one additional point is given, 20% of proposed issue size or 20% of post issue capital. But in case of IPO, there is only one promoter's contribution given. In case of IPO, it is only given minimum 20% of post issue capital. ठीक है? IPO के case में it is given minimum 20% of post issue capital. But FPO के case में it says that 20% of proposed issue size or 20% of post issue capital. ठीक है? So what do we say? 20% of issue size or 20% of post issue capital. Issue size means only new shares that we are issuing in the public offer. Post issue capital means total capital old plus new after issue. After issue, what is your total capital? Post issue capital means old plus new. Issue size means only new shares that you are offering in the IPO. Okay, so in case of further public offer, your promoter contribution will be 20% of proposed issue or 20% of post issue capital. But in case of IPO, your promoter contribution will be 20% of post issue capital. Now, ma'am, if you are making a composite issue means you are doing FPO plus right issue together. It's like a mix. Mix matlab you are mixing two things. Are you understanding? You are mixing Coke plus, don't think wrong, I want to talk about soda. So you are mixing Coke and soda together and then drinking it. So here if you are mixing FPO and right issue, that is known as composite issue. Composite matlab more than one. You are doing FPO and right issue together. In that case, what is promoter contribution? Everything is same except for one thing, excluding right component. Matlab in that case now, for calculating promoter contribution, you will not take right offer wala part, you will take only FPO wala part. You will not take those shares which you are offering in right offer, you will take only those shares which you are offering in FPO. Now uska 20%. Are we clear with this? Everything is same. Just make sure that in case of composite issue, right components, matlab right offer wala component will be excluded. That's it. So what is the promoter's contribution in case of composite issue? In case of composite issue, promoter's contribution is 20% of issue size or 20% of post issue capital. Now promoter's contribution is not required if there are no identifiable promoters in case of IPO. This तो we have already done. IPO के केस में minimum promoter contribution will not be applicable if there are no promoters. And FPO के केस में, in case of FPO, minimum promoter contribution will not be applicable if there are no promoters then, or your shares are frequently traded in the last 3 years, plus you have solved 95% of the investors' complaint, plus you have complied with LODR for the last 3 years, which means you are a Sati Savitri company. You are a compliant company, extreme compliant company, the Sati Savitri, extreme compliant company. In that case, your minimum promoter's contribution is not required. So, but this is applicable only for FPO. Once again, minimum promoter's contribution is not required in case of IPO only if there are no promoters. Okay. But in FPO, if there are no promoters, then also minimum promoter contribution of 20% not required. And if your company is a Sati Savitri company, then also minimum promoter contribution not required. Acha, when do we say you are Sati Savitri company? If your shares are frequently traded in the last 3 years, you have done LODR compliance in the last 3 years, and you have solved 90%, 95% of the total complaints. Total, out of total investors complaint, you have solved at least 95% of the total investors complaint. Now, ma'am, we did all the LODR compliance, but there was one violation in the board composition. Board composition matlab minimum number of directors. In board composition, there was violation in the last 3 years, but now it was rectified. So now it is corrected, and about that non-violation we have already disclosed in the offer document. In that case, you will be deemed to be compliant, and still you will be come in exemption. You will be deemed to be compliant, and we will say that, oh, you are LODR compliant in the last 3 years, and you will be exempted from the minimum 20% promoters contribution requirement. Once again, in case of FPO, if you are frequently traded in last year, plus you have done LODR compliance in last 3 years, plus you have solved 95% of investors' complaint, then you will not be required to maintain minimum 25% promoters contribution. But ma'am, there is a case where last 3 years में we did one violation. What violation? Board composition में, and later we rectified it, which is now rectified. Plus we also disclosed about it. Then it will not be treated as violation. We will say that you are still LODR compliant, and you will be exempted from minimum 20% promoters contribution requirement. That's all about promoters contribution. We are done with promoters contribution. Are we clear with this? We are done with promoters contribution. We are done with promoter contribution. Are we clear till here? Are we all clear till here? We are done with promoter contribution. Everyone clear kya? Everyone clear? Yes. Hello all, everyone, are you clear with the promoter's contribution requirement? The next topic is lock-in period. The next topic that we have to do is lock-in period. Everyone those who are watching the lecture, quickly drop me a message in the chat box. Yes, exemption mein we are saying that in 2 cases you will be exempted from promoter's contribution. First case, if there are no promoters, then you will be exempted. Second case, if you comply with these 3 conditions. What 3 conditions? You are frequently traded in last 3 years, plus you have solved 95% of the complaint, plus you are LODR compliant for last 3 years, then even if promoter contribution is not 20%, then also it's fine. In this case, promoter's contribution will not apply. Minimum promoter's contribution will not apply. Okay? Are we clear with this? Yes, okay. Now the next topic that we have to do is lock-in period. Now what do you mean by lock-in period? Lock-in period means for this period your shares will be locked and you will not be able to sell those shares. which means lock-in period means there is a period given for which you cannot sell those shares, it will be locked. So what is the lock-in period? So we say that for promoters contribution, lock-in period is 18 months for minimum promoters contribution. For minimum, what is the minimum promoters contribution? 20%. For minimum promoters contribution, the lock-in period is 18 months. 18 months. Acha, if you have excess promoter shares, excess matlab more than minimum contribution, for that lock-in will be 6 months. For that lock-in will be 6 months. Acha, what do we say? We are saying that if there is a promoter, let's say Mukesh Ambani is a promoter of Reliance. So for Mukesh Ambani, if he is holding minimum, let's say he is holding 50% shares. He is holding 50% shares of Reliance. So for 20% lock-in period will be 18 months, and for remaining 30% lock-in period will be 6 months. So what do we say? That for minimum promoter contribution, 20% shares, lock-in period will be 18 months. And if you're holding more than minimum contribution, if you're holding more than 20%, then for that excess, whatever is more than 20%, for that lock-in period will be 6 months. For that lock-in period will be 6 months. Are we clear with this? And lastly, if majority of issue proceeds are for capital expenditure, guys, if company is making public offer for capital expenditure, if company is making public offer for capital expenditure means for purchasing some fixed assets or for long-term investment, in that case lock-in period will be, for minimum promoters contribution, lock-in will be 3 years, and for excess of, for more than promoter contribution, lock-in period will be 1.5 years. Sorry, 1 year. 1 year. Are we clear with this? So what is the minimum promoter contribution? What is the lock-in period? Normal case mein, for minimum promoter contribution, lock-in period will be 18 months, and for whatever you have more than minimum contribution, for that lock-in period will be 6 months. But if company is doing IPO for capital expenditure, in that case 18 months will be replaced by 3 years and 6 months will be replaced by 1 year. Okay, so once again, what is the minimum promoters contribution? What is lock-in period? Lock-in period for the minimum promoter contribution will be 18 months, and for excess over minimum promoter contribution will be 6 months. But if company wants to do is doing IPO for capital expenditure, then lock-in period for minimum promoter contribution will be 3 years, and lock-in period for over and above the minimum promoter contribution will be 1 year. I hope we are done with 18 months, 6 months, 3 years and 1 year. Next is for SR equity shares. If promoters are holding superior right equity shares, guys, these equity shares have more voting powers. They are known as SR equity shares, means they have more voting power. So in case of SR equity shares, the lock-in period will be until they are converted into normal shares, or the normal lock-in period, whichever is later, only for IPO. But in case of FPO, the lock-in period for SR equity shares will be only till they are converted into ordinary equity shares. Once again, for SR equity shares, what is the lock-in period? If you are doing IPO, then lock-in period will be until they are converted into normal shares or until normal lock-in period. What is normal lock-in period? This 18 months, 6 months, 3 year, 1 year, depending on the case. Okay, so your SR equity shares will be locked in until they are converted into ordinary shares or until the normal lock-in period, whichever is later. Till that period it will be locked in, means you cannot sell these SR equity shares, and after the lock-in period you can sell it. But in case of FPO, there is only one condition, that SR equity shares will be locked in until they are converted into the ordinary equity shares. So that's all about lock-in for SR equity shares. Last point is lock-in for non-promoter shares. Non-promoter shares means those people who are holding shares of the company before IPO, but they are not promoters. So entire pre-issue shares, pre-issue share capital means those people who are holding the shares of the company before IPO. Those who are holding the shares of the company before IPO, but they are not promoters. They are other than promoters. Those who are holding the shares of the company before IPO, but they are not promoters. They are other than promoter. For them, simple sa lock-in period will be 6 months, 6 months, 6 months. Remember, 6 months. So imagine, let's say I am holding shares of a particular company XYZ before IPO, and I am not promoter of that company. For me also lock-in period will apply, yes, but only for 6 months, which means I cannot sell those shares up to 6 months of IPO, and after 6 months I can sell those shares. For me, lock-in period will be 6 months from IPO. Now there are some exemptions given, very important actually. Exemption means in this following cases 6 months ka lock-in period will not apply. Okay, in the following cases 6 months ka lock-in period will not apply in the following case. What is the first case? In case of ESOP and ESPS, 6 months ka lock-in period will not apply. Meaning, if you are holding, if you are holding shares under ESOP, you got the equity shares under ESOP. You are an employee of the company and you got ESOPs, and shares are allotted to you under ESOP. Then 6 months ka lock-in period will not apply. Immediately after IPO also, you can sell those shares. Okay, so if you got the shares of the company by conversion of ESOP, employee stock option scheme, then immediately after IPO also you can sell those shares. Lock-in period will not apply. Secondly, if the shares are held by ESOP trust, same. If when company issues ESOPs, those shares of ESOP are given with the ESOP trust. So if the shares are held by ESOP trust and they are transferred to employee, can we transfer it to employer? Can we sell it? The answer is yes. In that particular case, lock-in period of 6 months will not apply. Lock-in period will not apply. Immediately after IPO also, you can sell those shares. Lastly, if shares are held by big investors like VCS, AIF or FPCI, about all these three people we have done in lesson number 1, venture capital funds, AIF, alternate investment fund, and FPCI. If they are holding the shares, for them 6 months ka lock-in period will not apply. For them, they have to hold this shares for 6 months only from the date of purchase, not from the date of IPO. Matlab normally what is the lock-in period? Normal lock-in period is IPO ke baad for 6 months you cannot sell. So normal lock-in period is 6 months from IPO. But for these investors, for them the lock-in period will be 6 months from the date they have purchased, not from the date of IPO. And with this we are done with exemption in 6 months holding period. Exemption in 6 months holding period. One last point, guys. If there is a convertible security, then for calculating the lock-in period, the time when you are holding the convertible security and time when you are holding the equity share, both will be calculated. So let's say you are holding convertible debenture for 6 months, and after 6 months, let's say you are holding let's say you are holding the convertible debentures for 6 months, and after that you got converted into equity shares that you are holding for 6 months. So both time will be calculated. In calculating 6 months ka holding period, time when you are holding it before conversion and time when you are holding it after conversion, both will be included. Okay, that's all. And in case of bonus issue, see, for calculating the holding period, time when you're holding the original share plus time when you're holding the bonus share, both will be included. For example, I am holding original shares for last 3 months, and then I got bonus shares on those, and bonus shares I'm holding for 3 months. Are we clear with this? So both will be included. So it will be said that holding period is 6 months. Holding period is 6 months means time period for which you are holding the original shares and time period for which you are holding the bonus shares, both will be added, both will be included in deciding the holding period in case of bonus shares, provided one condition: bonus shares should be issued out of free reserve or SPA, and it should not be issued out of revaluation reserve, which is always the common condition for the issue of bonus shares. With this, we are done with the requirement of lock-in period. Lock-in period. If you are clear with all the lock-in period requirements, quickly drop me a message in the chat box. Everyone, drop me a message in the chat box. All clear if we are clear till here. If we are clear till here. Yes, if we all are clear, quickly drop me a message in the chat box. Quickly drop me a message in the chat box if we are clear till the lock-in requirements and we are good to move towards our next topic. Yes, yes. Okay. Rakshita, Gayatri, everyone. Now, we are almost done with IPO and FPO. There are some other requirements given for IPO and FPO. Other requirements means you also have to fulfill these requirements for doing IPO and FPO. So there are some other conditions which you have to comply for making IPO and FPO, and these requirements are common for both IPO and FPO. The first requirement is you have to appoint one or more merchant bankers. Guys, you cannot make IPO without merchant bankers. You have to appoint one or more merchant bankers. And if you appoint more than one merchant banker, you have to appoint one of them as the lead manager. Okay, when you appoint more than one merchant banker, one of them has to be designated as the lead merchant banker or the lead manager. Acha, what do? They do due diligence, they make offer document, they interact with SEBI, they manage the overall public offer. So merchant bankers are the one who manage the overall public offer. Next, we have to appoint other intermediaries like brokers, underwriter, legal advisor, RTI, registrar to issue, share transfer agent, etc., etc. Not share transfer agent, RTI, etc. So we have to appoint all the other intermediaries in consultation with the merchant bankers. Next is, see, IPO and FPO will be either by book building issue or by fixed issue. Book building means when the price is not fixed, price will be decided by bidding process, and fixed issue means when the price is fixed. Okay, so when the book building issue is done, then the price is fixed by the bidding process. In that case, we appoint syndicate members. Who are syndicate members? Banks. We appoint banks as our syndicate member. What do? They facilitate the bidding process. They accept the bids, calculate the price. That's the thing. And lastly, if we are doing the fixed price issue, in that case, we appoint banker to issue. Achha, banker to issue, who are they? They are also banks. The designation is different. That's it. In case of book building issue, they are known as, we appoint them as a syndicate member. In case of fixed issue, we appoint them as a banker to issue. Achha, banker to issue, what do? Basically, they collect application forms, they collect application money, they issue allotment, and they do the refund of the money for if the shares are not allotted. All this thing is done by the banker to issue. Next is registrar to issue. So we have to appoint a proper SEBI registered registrar to issue who is connected with NSDL and CDSL. Achha, what do? They handles allotment, refund, demat mein shares are credited or not, all these things. So they check whether shares are allotted to you or not. They check whether shares are credited to your demat account or not. All these things is done by registrar to issue. And lastly, we have to appoint a compliance officer. And who is the compliance officer? Yes, you are right, guys. CS. CS is the compliance officer. So we have to appoint a company secretary as a compliance officer. It is compulsory, guys. You cannot do IPO without a company secretary. And you have to appoint a company secretary as a compliance officer before making the IPO. And that compliance officer is responsible for maintaining compliance. So he will monitor compliance with all the law, handle investor grievances. Compliance officer is the one who is responsible for handling the grievances and making all the disclosures. Three responsibilities: maintaining compliance, solving investors grievance, and making all the disclosure. These three are the requirement of compliance officer. So basically, before doing IPO and FPO, we have to appoint merchant bankers, we have to appoint underwriter, broker, legal advisors, we have to appoint syndicate members in case of book building issue, and we have to appoint banker to issue in case of fixed price issue. Then we have to appoint RTI, then we have to appoint compliance officer who is a CS. Okay. So with this, we are done. Like other requirements in case of IPO and FPO. Now there is a point of disclosures and filing of offer document. So what is this point, guys? This points tell you what things you have to disclose in the offer document. disclosure and filing of offer document. So here is the process given. How do you make draft prospectus? When do you submit draft prospectus to whom, and then how you prepare the final prospectus. What is offer document? Offer document basically means prospectus. So offer document basically means prospectus. So here you have to what are we studying? We are studying within how much timeline you have to file the prospectus and to whom. Okay, so the first topic that we have to study here is you have to make sure all the draft prospectus and the offer document, DRHP means draft prospectus, draft red herring prospectus, all the draft prospectus and all the offer document must contain all the true, fair, adequate disclosure. Basically, all the details should be there in the prospectus. Secondly, 3 copies should be filed to SEBI. Not 1, not 2, 3 copies of prospectus we have to submit to SEBI. SEBI will give observation within 30 days. SEBI will take a month. So imagine, make a story. First, we have to prepare a draft prospectus. We will make sure draft prospectus have all the correct details. Then we will submit the draft prospectus to SEBI in 3 copies, and then SEBI will get 30 days time. SEBI will give observation within 30 days. SEBI can ask you to make any changes. And then after that, after SEBI give the observation, then this draft prospectus we also file to stock exchange also, like Bombay Stock Exchange, National Stock Exchange. Okay, acha. Along with filing the draft prospectus, we also have to give promoter key details. Now, promoters can be either individual like human being, or promoters can be company also. If promoter is an individual, then we have to give his PAN card, his bank account and his passport. Matlab any of this, bank account or PAN card or bank statement or passport or PAN card to the SEBI. But if our promoter is a company, then company ka we can give either PAN card, bank account, registration number and ROC address. These 4 details we have to submit to whom? We have to submit these details to SEBI and stock exchange. So SEBI and stock exchange ko we have to submit promoter ka details. What details? Their identity details basically. If it's an individual, then PAN, passport. If it's a company, then PAN, registration number, ROC details, because company ka passport nahi hota hai. Passport only individuals have. Next is, now remember we submitted our draft prospectus to SEBI, and SEBI can give observation within 30 days, meaning SEBI can ask you to make changes within 30 days. Now, we have to prepare updated draft prospectus. Updated draft prospectus means we have to make all the changes suggested by SEBI. Whatever changes SEBI has suggested, we have to make all the changes, and then we will update our draft prospectus. We will update it before filing final offer document with ROC. First, we will update our draft prospectus, and then we will prepare the final prospectus. And then final prospectus is filed with ROC. Guys, remember, final prospectus is not filed with SEBI. Final prospectus is filed directly with ROC. Okay. And most important, we have to publish this prospectus in the website, all the website, guys. Website of company, website of SEBI, website of stock exchange, website of lead manager. And it will be open for public comments for minimum 21 days. It will be open for public comments for minimum 21 days, meaning it will be uploaded in the website. If any public have any comment, they can give their comments within 21 days. And also we have to publish our prospectus in newspaper. Remember government Hindora, guys. We have to publish our prospectus in the newspaper, in 3 newspaper, 1 English, 1 Hindi and 1 regional. 1 English newspaper, 1 Hindi newspaper and 1 regional newspaper within 2 days. Within 2 days of uploading it in the website. Okay. And lastly, then we have to file the final offer document with ROC. And along with filing it to ROC, then we file a copy of this to SEBI and stock exchange. First, we file it to ROC and then copy is filed to SEBI and stock exchange. Once again, first we prepare draft prospectus. Draft prospectus is filed to SEBI in 3 copies. SEBI can give changes within 30 days. When SEBI gives changes, we have to make all the changes. We have to update draft prospectus, and we have to then upload the updated draft prospectus in all the website, so that it will be open for public comments. Then public can give comments within 21 days. Also, along with uploading in website, we have to upload in 3 newspaper, also publish in 3 newspaper within 2 days. Now, after all the public has given comments and we make all the changes in the draft prospectus, then we have to prepare the final prospectus, and final prospectus we will file to ROC, and then after filing it to ROC, copy of final prospectus will also be filed to SEBI and stock exchange. That's all about filing draft prospectus and final prospectus. That's all about filing draft prospectus and final prospectus. And now the next topic is again of IPO and FPO, which talks about ASBA process. Guys, ASBA process. ASBA process. Now, what is ASBA process? ASBA means application supported by blocked amount. Application supported by blocked amount. This is known as ASBA. So basically, when you apply in an IPO through ASBA process, it provides you UPI facility. UPI is mandatory, which means through UPI I can make the payment. Secondly, that payment is not deducted from my bank account. It is just blocked in my bank account. Now, if my IPO is successful, if my application is successful, I get the allotment, then only money will be transferred from my bank account to company's bank account. But if my application is rejected, then company will unblock my amount. So basically, there is no hustle of refund, there is no hustle of giving checks and all. So this is done through ASBA process. So you can do IPO and FPO only through ASBA. ASBA is compulsory. IPO and FPO must be done only through ASBA process. In ASBA process, now you can apply without making the actual payment. Only the bank will block the money in your account. When I apply for IPO, money will not be deducted from my bank account. It will just be blocked from my account. And how I can block this money? Simply by UPI. So UPI is mandatory for all the retail investors. Before doing IPO, FPO, it is compulsory to get rating by credit rating agencies. Grading means rating. Every IPO, before IPO, you have to get a grading from credit rating agencies. Next is, if you are doing fixed price issue, then you have to appoint, you may appoint underwriter. Matlab, it is not compulsory. Remember, I told you main board mein it is underwriting is not compulsory. It's optional to you. If you want, you can appoint underwriter. In book building issue, who will do the underwriting? Here also it's not compulsory. But if in book building issue you are appointing underwriter, who will be your underwriter? Your lead manager or syndicate member. Not any other underwriter, but you can appoint your lead manager, that means your merchant banker, or your syndicate member as a underwriter also. They only can provide you underwriting facility. And underwriting agreement. In order to appoint underwriter, you enter into agreement, which is known as underwriting agreement. It should disclose maximum commitment and issue price. Matlab maximum how much underwriters are giving commitment to purchase and at what is the issue price. Are we clear with this? So underwriting agreement mein basically we have to give all the details about how much they have underwritten, how much commitment they are giving. Next is very important. Whenever we are making a huge public offer means your fresh issue of shares is more than 100 crore excluding offer for sale. So here you will not include offer for sale. Excluding offer for sale, if the new shares that you are issuing is more than 100 crore, in that case you have to appoint a monitoring agency. Appointing a monitoring agency is mandatory. And who will be monitoring agency? Only CRAs can be appointed as a monitoring agency. Only SEBI registered CRA, credit rating agency, can be appointed as a monitoring agency. Basically, they will monitor the whole public offer, how funds are raised, how funds are utilized. Only if the new issue that are issued is more than 100 crore rupees. Okay. Now, this we have already done. Pre-issue advertisement we have already done. That before filing the final prospectus to ROC, we have to publish our prospectus in English, Hindi and regional newspaper. We already know this. Whenever you are filing prospectus with ROC, Before filing prospectus with ROC, you have to publish it in 3 newspapers. Next is issue must open within 12 months of SEBI observation date. Remember, here in the draft prospectus, we studied a topic that SEBI can give observation on draft prospectus when we file the draft prospectus to SEBI. Yes, and this observation will be valid only for 1 year, 12 months, which means your IPO should open within 12 months when SEBI give observation. Otherwise, after that, you cannot make IPO. So, your IPO should open. What is the deadline? 12 months. Your IPO should open within 12 months from the SEBI observation date. Minimum subscription, you all know, in IPO and FPO, minimum subscription should be 90%, which means minimum 90% of the public offer should be subscribed. Otherwise, your offer will fail. Acha, if minimum subscription is not achieved, then you have to refund all the money within 4 days of the closure. Okay, so if minimum subscription has not reached, if 90% is not subscribed, then your offer will fail and you have to refund all the money within 4 days. 4 days. IPO can remain open for minimum 3 days and maximum 10 days. Your IPO can remain open for minimum 3 days and maximum 10 working days, not more than that. Acha. In IPO, application money should be minimum 25% of the issue price. Let's say issue price is 100 rupees. In that, application price should be at least 25 rupees. At least 25 rupees, meaning application price should be, application value should be at least 25% of the total issue price. Okay, remember we say like 100 rupees is the issue price. Now, in that some amount we will call in application, some in allotment, some in first call, some in second call. So in that, application value should be at least 25% of the total issue price. Lastly, there is a post-issue advertisement after your issue will close. When you are done with everything, after you have completed your public offer. Okay, so when you complete your allotment, refund, everything is completed, then within 10 days you have to do post-issue advertisement. Post-issue means after issue advertisement. After you have completed with the public offer, within 10 days you have to advertise it in the website and the newspaper, English, Hindi and local newspaper. Okay, acha ma'am, what if I don't get the allotment? Then in that case, bank will release my fund. Bank will release my fund means, remember, ASBA mein my amount was blocked. That blocked amount will be released and I can use my money basically. So there is no refund ka hustle. So when I apply for IPO, the amount is not deducted from my bank account. It is just blocked in my bank account. And if I don't get the allotment, then bank will release that amount, means unblock that amount. Only after lead manager confirms completion of all the formalities. So only after all the formalities are completed, then thereafter only bank will release all the money from my bank account. Are we clear with this? With this, we are done with all these, bulky topics of IPO, FPO, general conditions, promoters contributions, lock-in period, ASBA facility, disclosure requirements, prospectus. Lots of topics we have done, like lots and lots of topics of your ICDR chapter we have completed. Please let me know in the chat box if everything is clear till now and if you are able to recall all the topics till now. Yes. Who all is there, who is watching? Quickly drop me a message in the chat box if we are clear till here. Yes, everybody. Everybody, just quickly drop me a message in the chat box if you're clear till now. Yes, Payal, Gayatri, Rakshita. Okay, so guys, as we all know, we have done IPO FPO revision, and whenever you make IPO or FPO, then first, whenever basically you issue shares or securities, First, you have to prepare draft offer document, and then you make changes in the draft offer document, and after that, you prepare the final offer document. So we will just study few points about draft offer document and offer document, which you already know. So the first thing that we have to study is what is draft offer document. Draft offer document is the first document that you prepare and you file with SEBI. Initial version means first, before preparing the final offer document, we prepare the draft offer document, and then SEBI gets 30 days must be submitted at least 30 days before filing it to ROC, which means before you file the final offer document to ROC, at least 30 days before that, you have to file the draft offer document to SEBI, so that within 30 days, SEBI can give you the changes. And SEBI can give you comments and changes which you have to correct. So if SEBI gives you any observation or changes, then you have to make the changes accordingly. Now, that will be uploaded in SEBI's website, which will be open for public comments for 21 days. Don't you think all these points we have just done? So these points we have already done about draft offer document. Now, what is offer document? Offer document is the final document that is submitted to ROC. So whom do we file the final offer document to? ROC and stock exchange. Now, in case of IPO, FPO, offer for sale, what is that offer document known as? It is known as prospectus. And in case of right issue, it is known as letter of offer. In case of right issue, it is known as letter of offer. Are we clear with this? And that's it about offer document. Now there is one topic of red herring prospectus. Now what is red herring prospectus? We have already studied, remember very carefully. Red herring prospectus is prepared only in case of book building issue. What is book building issue? Where price is not decided in advance. Price is decided by the bidding process. So only if you are doing a book building issue, then you have to prepare a red herring prospectus before preparing the final prospectus. Basically, it's an incomplete prospectus. It does not contain details of price of shares, quantity of shares, and total issue size. These three details, any of these three details are not there in the prospectus. So it is also known as incomplete prospectus. So what is RHP? RHP is a prospectus without final price or number of shares or issue size. It is used in book building process, and so basically in RHP, if we disclose the quantity and the price band, what is price band? The minimum and the maximum price. Let's say the price band is 100 to 120. Matlab price band matlab minimum and maximum price. That price will be minimum 100 and maximum 120. So we will fix the final price somewhere between 100 to 120. So we give a range, price range. So we give a price range 100 to 120. Although we have not yet decided the final price, but we are giving you a price range. So if we disclose like only quantity and price band, then it's okay if we don't disclose the price and the issue size. If we do not disclose the price, final price and the issue size. So it's an incomplete prospectus. Or if we disclose the issue size, then we may not disclose the quantity or the price. So we have just said that total public offer is of 1000 crore rupees. We are not saying how many number of shares at what price. Quantity and price is missing. So something is missing. Either quantity or price is missing, or price or issue size is missing. Something is missing. That's why it is known as incomplete prospectus. Okay. So in this case, red herring prospectus, it is an incomplete prospectus which does not contain either the details of price and issue size or the details of price or quantity. Okay. Now in this case, when offer opens, bidding is done. Through that, final price is decided. And after final price is decided, then final prospectus is made, which is filed to ROC. So here, after bidding ends, after the book building process is done, bidding completed, then final price is decided, and then final prospectus is made. The final prospectus is made with all the price details, which is filed to ROC. Are we clear with this? And for further public offer, in case of FPO, it can be filed even without price band. If you are doing a further public offer, if you are doing an FPO, in that particular case, you can make RHP even without giving the price band. Otherwise, you have to give the price band. Price band means a range of minimum and maximum. The price should be minimum this, maximum this. Should not be less than this, should not be more than this. But in case of FPO, it's okay if you don't mention the price band. But what are we saying? We are saying in case of FPO, it's okay if you don't mention the price band in the RHP, in the prospectus. It's okay. But you have to give the price band one day before the issue opens. So what are we saying? That we are giving a relaxation that in case of FPO, in case of further public offer, it's okay if you don't mention the price band in the prospectus, but you have to mention the price band at least one day before the issue opens. You have to tell the price band at least one day before the issue opens. That's all about red herring prospectus. Please let me know in the chat box if we are clear with these three topics called draft offer document, and red herring prospectus. Draft offer document, and red herring prospectus. Please let me know in the chat box if we are clear with these three topics of draft offer document, and red herring prospectus. Are we clear with this? Are we clear with this? Quickly drop me a message in the chat box, everyone. Quickly drop me a message in the chat box if we are clear till here. Yes. Are we clear? Quickly drop me a message in the chat box. Yes. Yes. Who all are watching? Who all are watching? Quickly drop me a message in the chat box. Who all are watching? Just drop me a thumbs up in the chat box. Who all are watching? Drop me a thumbs up in the chat box if we are clear. And we have done like a huge chunk because it's a big lesson. ICDR, it's one of the biggest lesson, and plus very important from the examination point of view. So who all are watching, and if the topics that we have studied is clear to you, then quickly drop me a thumbs up in the chat box. Yes, drop me a thumbs up in the chat box. Yes, Payal. Okay, drop me a thumbs up in the chat box, everybody, if this is clear to you. So we will start LODR revision. Now this particular lesson talks about SEBI listing obligation and disclosure requirements. So the first thing about the revision is why LODR was introduced. So basically these are the regulations that every listed company have to follow. So basically earlier every listed company used to enter into listing agreement with the stock exchanges. So to align that, and to make all the rules and regulations that every listed company have to follow, we made these regulations known as SEBI LODR regulations. Okay, so now it applies to which companies? LODR regulations apply to all listed companies who have listed their securities in the recognized stock exchange. Any recognized stock exchange, be it BSE, NSE, or be it any other regional stock exchange like Metropolitan Stock Exchange, Calcutta Stock Exchange, etc., etc. So these regulations does not apply to unlisted companies. As we all know, these are made by SEBI, so this applies only to listed companies. Now guys, which listed company? Doesn't matter you have listed your equity shares or you have listed your non-convertible securities like non-convertible debentures, bonds, preference share, or you have listed your IDR or security debt instrument SDIs, or you have listed your security receipts, or you have listed your mutual fund K units or any other security. Doesn't matter which security you have listed, still LODR will be applicable on you. So LODR will be applicable to all those companies who have listed any of these security in the stock exchange. So LODR is applicable to all the companies, all the listed companies who have listed either their equity shares or preference shares, debentures, bonds, mutual funds, SRs, SDIs, IDR, etc., etc. Basically all the instruments that you know. Now, we will do this later on. First, come to regulation number 28. This topic I'll be doing, but just skip that for a minute and come to in principle approval. We are saying that whenever any company wants to get listed in stock exchange, we have to apply to stock exchange to take the in principle approval. In principle means before getting listed, first we have to take a prior approval from all the stock exchange where we are getting listed. Now there are three things. If you want to get listed only on stock exchange having nationwide terminal, there are only two stock exchange in India which have nationwide terminal, that is BSE and NSE. There are only two stock exchange in India which have nationwide terminal, BSE and NSE. And there are other stock exchange also in India which does not have nationwide terminal, like Calcutta Stock Exchange, Metropolitan Stock Exchange, etc. So there are a lot of stock exchanges in India, but out of that, only two stock exchange in India have nationwide trading terminal. Okay, so if you want to get listed only on BSE and NSE, that is only on stock exchange having nationwide trading terminal, then you have to take approval from all such nationwide stock exchange like BSE and NSE. You have to take permission from both BSE and NSE. Now, if you want to get listed only on stock exchange without having nationwide terminal, example, you want to get listed only on Calcutta Stock Exchange, Metropolitan Stock Exchange, not on BSE and NSE, then you need to take approval from all such stock exchange, which means all such stock exchange not having nationwide terminal like Calcutta Stock Exchange, Metropolitan Stock Exchange. And if you want to get listed on both means you want to get listed on stock exchange having nationwide trading terminal also, and you want to get listed in stock exchange not having nationwide trading terminal also, then you need to take approval only from stock exchange having nationwide trading terminal, which means you need to take approval only from BSE and NSE. In that case, you don't need to take approval from Calcutta Stock Exchange and Metropolitan Stock Exchange. Are we clear with this? So this is about the in principle approval. But if you are getting listed under any scheme of arrangement means merger or amalgamation. If you are getting listed under any merger amalgamation and you have obtained NOC from stock exchange, in that case you don't need to take any in principle approval from stock exchange if stock exchange have already given its approval. Once again, if you are getting listed under any merger amalgamation, under any scheme of arrangement for which NOC stock exchange have already given NOC, then no separate permission from stock exchange is required. With this, we are done with in principle approval. Now we have to start with certain definitions that are given for LODR. First definition is definition of listed entity. Listed entity means those companies which have listed any of their designated securities. Now, ma'am, what do you mean by designated security? Designated means understand any security, like any security, shares, debentures, bonds, preference share, perpetual debt instrument, perpetual preference share, SDIs, mutual fund, any kind of instrument. Every kind of security will come under designated security. So designated securities include everything. Include specified security, NCDs, non-convertible debentures, NCRPS, non-convertible redeemable preference shares, perpetual debt instrument, perpetual preference shares, IDRs, SDIs, SRs, mutual funds, ZC, ZPI. ZC, ZPI we will study in ICDR chapter. Okay. So any kind of instrument will come under designated security. Next is specified security. Specified security mein only two securities will come, equity shares and convertible securities. Convertible securities means convertible debentures or convertible preference shares which are convertible into equity shares. So basically SS mein only equity share will come and those convertible securities will come which are convertible into equity shares. So with this we are clear with the definition of specified securities and designated securities. Specified securities means equity shares and those convertible securities which are convertible into equity shares, and designated securities means everything, every single thing. Specified securities plus NCD plus NCPRS plus IDR plus SDI plus SR, mutual fund, bonds, debentures, all securities. Acha, listed company means? Listed companies means those companies who have listed any of their designated security in the recognized stock exchange, in any of the recognized stock exchange. There are a lot of recognized stock exchange in India like BSE, NSE, Calcutta Stock Exchange, BSE, NSE, Calcutta Stock Exchange or Metropolitan Stock Exchange, etc. Now listing agreement. What is listing agreement? Whenever any company wants to get listed in stock exchange, we have to enter into agreement with stock exchange. That agreement is known as listing agreement. So listing agreement means agreement between the company and the stock exchange. Entity means company. Agreement between company and stock exchange is known as listing agreement. What is net worth? Net worth means something is wrong. Okay. Yeah. Just a second. Just give me a minute. Just a minute, okay? Okay, so I was using the old PDF, so I made some changes in this, so I updated the PDF now. Okay, this notes I have sent in the Telegram group as well to everybody of you. Now, next we are done with listing agreement. Now the next thing is net worth. What do you mean by net worth? Net worth means basically asset minus liability. So either you can calculate net worth by doing asset minus liability, or you can do paid up share capital plus reserves minus losses. If there is any loss or if there is any loss or any deferred revenue expenditure, miscellaneous expenditure means basically accumulated losses. So what is net worth? Net worth means paid up share capital plus reserves minus losses. If there is any losses, we will do minus. So basically net worth means your paid up share capital plus reserves. Okay. Acha, reserves will exclude revaluation reserve. While calculating the reserve, you will not include revaluation reserve, because revaluation reserve is not a real reserve. It's just imaginary reserve where we reevaluate asset and liabilities, and that we will that profit of that revaluation of asset and liability we put in reserve. That is known as revaluation reserve. So revaluation reserve is not included in the reserves. That's it. Once again, net worth is equals to paid up share capital plus reserves minus losses. Now the most important definition is definition of independent director. Many of the students feel confused and difficulty in revising the topic of independent director. So I tried to summarize it and I tried to make a table of it in shortest, easiest and simple language. In material, it is given in very difficult language. So I did some brainstorming and I tried to simplify this. Let's hope you understand this properly. You are able to revise. Definition of independent director. Try to remember along with me. First, who are IDs? They are non-executive directors, NEDs. They are not executive director. They are non-executive director. And they are not a nominee director. Basically, a nominee director cannot become independent director. Next, they are the person of integrity and expertise. Expertise means they are experts having expert knowledge, and integrity means they are honest and they are trustable. Next is they should not be the promoter, or they are not the part of promoter group of Kosha. Kosha is my way of writing shortcut, and here Kosha means company, subsidiary company, holding company, associate company. Our company, subsidiary, holding, associate. In examination, you write full company, subsidiary, holding and associate. Okay. So basically independent means you should not have any kind of relation with the company. You should be a complete stranger, complete outsider. You should not have any link with the company or any connection with the company. So we are saying you can become independent director only if you are not the promoter of the company and you are not the part of the promoter group of the company. Any time in the past, kabhi bhi aaj tak, any time till now in the lifetime, you should not be the promoter or promoter group. Next, you should not be promoter or director of you should not be related to the promoter and director of Kosha, meaning your relative should not also be the promoter or director. Your relative, now who will come in the relative? Here we will see the definition of relative of Companies Act, which means parents, siblings, child and spouse. That's it. Sorry, these people will come in the definition of relative. Mother, father, brother, sister, son, son's wife, daughter, daughter's husband. These people will come in the definition of relative. Okay, so your relative should not be the promoter and director of kosha in the current year. Now, you should not have any material pecuniary relationship. Pecuniary relation means any kind of financial transaction. You should not enter into any kind of financial transaction with kosha or their promoter and director, not in the current year, not in the last 3 financial year. Simple. If I have entered into any financial transaction with the company in the last 3 years, I will not be eligible to become ID. So I should have no pecuniary relationship, means any kind of financial transaction with the kosha or the promoter director in the last 3 years. Then only I'll be eligible to become ID. Achha, one thing, material pecuniary relationship. Material pecuniary relationship means we will exclude director's remuneration. If I am the independent director of the company, I am receiving salary of ID, then that's okay. That will not be considered as a pecuniary relationship. So if you receive director's salary remuneration, that is excluded. Next, these are 4 restrictions for your relatives. These are relatives restriction. If your relative are holding shares in the company, have taken loan from the company, have given guarantee or security to the company, or your relatives have pecuniary relation with the company, then you will not be eligible to become ID of the company. So it's like kaand kare relative, bhugte hum. It means your relatives are holding security, but I'll be disqualified. My relatives are taken loan. My relatives have taken loan, but I'll be disqualified. So no relative should hold shares in the company, should take loan from the company, should give guarantee or security to the company, and should not have pecuniary relationship with the kosha or promoter director in the last 3 years. But you know what? There is a limit given. Ki chalo theek hai, 50 lakh tak it's fine. So if my relatives hold shares, remember this limit: 50 lakh, 50 lakh, 50 lakh, 50 lakh 2%, 50 lakh 2%, 50 lakh 2%, ma'am, 50 lakh 2%. Okay, ma'am, remember 50 lakh 2%. Okay, your relatives should not hold shares of more than 50 lakh or 2%. Acha, they should not take loan of more than 50 lakh. They should not give guarantee or security of more than 50 lakh, and they should not have pecuniary relationship more than equal to 2% of total turnover. Okay, so if these four things are exceeded, then you will be disqualified to become ID in the last 3 years, in the current year and in the last 3 years. Next is, if me or my relative should not be the employee or KMP of kosha. What are we saying? I should not be the KMP. KMP means key managerial personnel, and I should not be the employee of kosha in the last 3 years. Okay, theek hai, ma'am. I'll be eligible to become ID only if neither me nor my relative are employee or KMP in kosha in the current year and in the last 3 financial year. But if relative are only employee, then just fine. If relatives are employee, that's it. Then I am eligible. That is allowed. So if relatives are employee in kosha, then I'll be eligible to become ID. So there is one exception. Next is, if me or my relative, we should not be the partner, promoter, employee of any CS firm, CA firm, CMA firm. So every company has an auditor firm. Auditor means CA firm, CS firm, and CMA firm, from whom we get our work done. So, okay. So, if I am the partner, proprietor, employee of CA firm, CS firm, CMA firm of kosha in the last 3 financial year, then I'll be disqualified to become ID. Okay. Or if my relatives are partner, proprietor, employee of CA firm, CS firm, CMA firm of kosha in the last 3 years, then also I'll be disqualified to become ID. Next, neither you nor your relative should not be a partner, proprietor or employee of legal firm. Legal firm means lawyers ka firm, advocate ka firm, which is transacting more than 10% of its turnover with kosha. Acha. So CA firm, CS firm and CMA firm ke liye there is no limit, but law firm ke liye there is a limit. If they are transacting less than 10%, then it's fine. You will not be disqualified. But if that legal firm is transacting more than 10%, more than equal to 10% of its turnover with kosha, in that case, I'll be disqualified. Okay, so legal firm ke case mein you will be disqualified only if that legal firm is transacting more than equal to 10% of its turnover with kosha in the current year or in the last 3 financial year. So if you'll see now guys, most of the transaction ke liye we will check the conditions for last 3 financial year. Current year, plus last 3 financial year. Okay, next is neither you nor your you together with your relative should hold less than 2% of shares in the company. Guys, for big listed companies now 2% is huge. 2% is literally like huge. So in that particular case, if I together with my relative holds more than 2%, more than equal to 2%, then I'll be disqualified to become ID. So if person plus relative holds less than 2% voting power in the company, then only I'll be eligible to become ID. Next, you should not be the CEO or director of a charitable company. Charitable organization means NPO. So I should not be the CEO or director of NPO. Which NPO? ऐसी charitable company which is receiving 25% or more of its donation. 25% donation कहाँ से आ रहा है? कोषा और promoter director. So if a charitable organization is receiving 25% or more of its fund from koषा or promoter director, and if I am the CEO and director of that charitable organization, then I'll be disqualified to become ID. Next is you should not be the CEO or director of such an NPO which is holding 2% voting power in the company. So what are we saying? If there is any charitable organization NPO, that NPO is holding 2% share in our company. Oh my God, so imagine charitable company NGO holding 2% shares of the company, which means that NPO is very important, significant. And if I am the CEO and director of that NPO, then I'll be disqualified to become ID. So I should not be the CEO or director of NPO which is holding 2% voting power in the company, and I should not be the CEO or director of NPO which is receiving 25% of its donations from koषा or promoter director. Last point, I should not be the supplier of the company, I should not be the customer of the company, I should not be the lessor or lessee of the company. So basically, if I am customer of the company, then I am related to the company, I am connected to the company. If I am supplier of the company, I am supplying raw material to the company, then I am also related to the company. So if you want to become independent director, you should not be supplier, customer, lessor, lessee of the company. Secondly, you should be minimum 21 years. So many of you watching the lecture, if you are less than 21 years of age, I say chikkadu magu. So if you are less than 21 years of age, then you will not be eligible to become independent director. You should be minimum 21. And last point, this point, you know, is very technical but very easy if you understand. There should not be cross-border independence rule. Cross-border independence rule means, agar if my brother is your husband, then your ignore what I said, ignore, just ignore. Okay, what I'm saying is you should not be a non-ID in another company whose ID is a you should not be a non-ID in another company whose ID is your non-ID. So imagine there is a company 1 and there is a company 2. So if I am executive director in company number 2, okay, if I am executive director in company number 2 and their independent director is executive director of company number A, so it's like a cross interdependence. Cross interdependence means हमारा ID आपका executive director, आपका ID हमारा executive director. This is not allowed. So if let's say company number 2 का independent director is already executive director in company number 1, then the executive director of company number 2 cannot become independent director in company number 1. So this cross is not allowed. Cross is not allowed. Na ki your ID, my executive, your ID. This is not allowed. So imagine there is company 1, company 2. Case law question can come from this in very simple language. Company number 2 ka ID is executive director in company number 1. In that case, company number 2 ka executive director cannot become our ID. ओके आपका आईडी हमारा एग्जीक्यूटिव है तो आपका एग्जीक्यूटिव हमारा आईडी नहीं बन सकता. I have explained in both the languages because it's technical. So with this we are done with the definition of ID, which is very important. Independent director, once again in very short, he should be NED. He should not be a nominee director. He should be expertise and integrity person. He should not be the promoter or a part of the promoter group of koषा. He is not related to the promoter director of the koषा. Next is he should not have pecuniary relationship with the koषा or promoter director in the last 3 years. इसके बाद all points के लिए ना 3 years, 3 years, 3 years is there. Current year plus last 3 year, current year plus last 3 year. Okay, now your relative should not hold shares, should not take loans, should not give guarantee, should not have pecuniary relationship. These 4 restrictions are for your relative. Acha, they should not hold shares more than 50 lakh or 2%. They should not take loan more than 50 lakh. They should not give guarantee security more than 50 lakh, and they should not have pecuniary relationship more than 2%, more than equal to 2% of turnover with Kosha or the promoter director in the last 3 years. Next, neither you nor your relative should be employee or KMP of Kosha in the last 3 years. But if relative are employed, that's allowed. Neither you nor your relative should be partner, proprietor, employee of a CA firm, CS firm, CMA firm, or a lawyer firm, legal firm, which is transacting more than equal to 10% of its turnover with Kosha in the last 3 years. You plus your relative should hold less than 2% voting power in the company. You should not be CEO or director of NPO, which is receiving 25% of its funds from Kosha or promoter director, and you should not be CEO and director of NPO, which is holding more than equal to 2% of voting power of the company. Next, you should not be supplier, customer, lessor, lessee. You should be minimum 21 years age, and there should not be cross directorship. Cross directorship matlab your ID, our executive director, our executive, your ID, not allowed. Your ID, our executive director, then our ID, your executive director, this is not allowed. This cross directorship is not allowed. With this, we are done with very properly and amazingly all the pointers of LODR regulations. Without wasting a time, let's move towards another topic. Key obligations applicable to all listed company. There are some general obligations for every listed company. Which company? Every listed company. Bakwas point. Listed company should make sure that their KMP, directors, promoters, and all people comply with the responsibility. Simply, it's like grandfather should make sure every person in the family comply with the rules. Same way, company should make sure all the people in the company comply with the rules, and they must, all the people, KMP, directors, every person should disclose all the information to the company. General compliance, company should make sure that everybody is in compliance. Company should make sure that all the KMP, promoter, director are in compliance with the rules, and everybody should disclose all the information whenever needed. Very important, compliance officer, and this provision should be there in your heart. Why? Because you will be the future compliance officer of the company. So every company must appoint a qualified company secretary as a compliance officer. CS should be appointed as a compliance officer compulsory. Every listed company may, there should be CS who is appointed as a compliance officer. Acha, what is the responsibility of a CS? Basically 4 responsibility. Ensuring compliance, reporting to the board, filing all the documents to stock exchange and SEBI, and monitoring grievance redressal. Majorly 4 responsibilities are there of a CS, compliance officer. Number 1, make sure there is a compliance, ensure compliance. Number 2, report to the board, reporting to the board. Number 3, correct filings, all the documents and return to government, SEBI, stock exchange. And lastly, monitoring grievance redressal. Whenever anyone has any complaint, that grievance redressal is monitored by CS. There are main 4 responsibilities of CS. Next, if there is a vacancy in CS, vacancy means Mr. A was the CS of Reliance, Mr. A died. So there is a vacancy, it should be filled within 3 months. Within 3 months, we have to appoint another CS. Let's say within 3 months, we have to appoint Priya as a CS then. Interim appointment not allowed. Interim मतलब temporary, ऐसे ही temporarily एक बार के लिए किसी को भी appoint कर लिया. Interim temporary appointment not allowed, but temporary appointment allowed only if it is made as per law. Only if you are following all the law, then only temporary appointment you can do. Otherwise, generally, temporary appointing anyone temporarily is not allowed. And lastly, a director who is also a CS can be appointed. Let's say Mukesh Ambani or let's say Anant Ambani is director in Reliance Industries, and he is also a CS. He has also done CS. So can he become director and CS both? Yes. So a director who has a qualified CS, then he also can be appointed as a compliance officer. Once again, every company must appoint a CS as a compliance officer. They have 4 duty: compliance, reporting, filing, and grievance redressal. Vacancy must be filled within 3 months, and interim appointment generally not allowed, but allowed if all the rules are followed. Director who is also a CS can be appointed as a compliance officer. Next point, we have to appoint a share transfer agent. Why share transfer agent? To facilitate the process of share transfer. Now, if there are total less than one security holder, then there is no requirement to appoint any share transfer agent. You can manage in-house. In-house matlab khud hi manage kar lo. Company will manage themselves. But if there are more than one lakh security holder, then it is compulsory for you to appoint a share transfer agent, RTA. The very famous RTA is Kafin Technology, if you have heard about it. Acha, either you should appoint an RTA or you yourself have to register with SEBI as an RTA. ठीक है? तो once again, everybody, law regarding share transfer agent. If there are less than 1 lakh security holder, not compulsory to appoint STA. You can manage in-house. But if there are more than 1 lakh security holder, it is compulsory for every listed company to appoint RTA, or either appoint someone else, or you yourself have to register with SEBI as a category 2 RTA. Next, once again, you should cooperate with all the intermediaries. So as a listed company, you should cooperate and you should provide all the information to all the intermediaries. For example, credit rating agencies, RTA, debenture trustees, etc. Fuddu point ki sabke sath cooperate karo. That's it. Cooperate with everybody. That's it. Very important. Preservation of document. Preservation of documents means, first of all, for preservation of documents means which document we have to preserve for how many years. Okay, so all the documents are classified into two categories. Those documents which have to be preserved permanently means till your death. Example, MOA, AOA, minutes book. And category number 2 is those documents which are to be preserved for 8 years. After 8 years, you can destroy them. You can throw them, kabad mein, you can sell it, or you can literally burn it. But all the documents are classified into two categories. Permanent documents means those have to be preserved till lifetime, and minimum 8 years document. That means you have to preserve them for at least 8 years. For example, vouchers, contract, other contracts, etc. Now, in order to maintain these documents, every listed company has to compulsory make a policy on preservation of document. Compulsorily, imagine listed company, theek hai, they have to make a policy on what? They have to make a policy on preservation of documents, theek hai, and in that policy we will classify two types of document. Number 1, permanent document, and number 2, minimum 8 years wale document we can keep electronically. It's our wish. Nowadays companies prefer electronic records, computer mein, word file mein, PDF file mein, computer mein. Okay, next is filing of information. Fuddu points, we should file all the reports electronically to the stock exchange and SEBI. How we can submit all the filings to stock exchange SEBI? Electronically. Practically, how do we do it? We submit in the website of the SEBI and stock exchange. That's it. Scheme of arrangement means merger amalgamation. So guys, if there is any scheme of merger amalgamation, it must not violate securities law. So what are we saying? That again, a very simple point, that if any company is doing merger amalgamation, they prepare a scheme of merger amalgamation. That scheme of merger amalgamation should also follow securities law. They should not violate securities law. So even if you are doing merger amalgamation, that scheme of merger amalgamation should comply with securities law. Next is dividend payment. Guys, whenever company has to make any payment of money, like dividend payment, interest payment, or redemption payment, can we pay it in cash? No, not allowed. Only electronic mode of payment allowed. Example, NEFT, RTGS, IMPS, electronic money transfer. But ma'am, if electronic mode not possible, then if electronic mode is not possible, then you have two other options. One is either you can dispatch share warrant, or you can dispatch payable at par checks. What do you mean by payable at par checks? Payable at par checks means normal check which can be encashed from any bank all over India. So let's say it's a payable at par check. Some Reliance is in Mumbai. Mumbai say they gave me a payable at par check. They put that check in an envelope and they posted speed post. They posted that check to me. I received the speed post. I received that check. Now, even in my Suratpur, I stay in Suratpur. So even it's a small town. Even if in Suratpur, I just go and at any bank and I deposit that check, it will be encashed. That is payable at par check, means you can deposit, you can encash it from any bank, any branch of the bank in India. That's it. So payable at par check and warrant, dividend warrant. Through that also company can pay dividend. Now, can the company post payable at par check and warrant through ordinary post or speed post or courier? Yes, anything is allowed. But if the payment amount is more than 1500 rupees, then it has to be sent compulsory through speed post only. With this, we are done with payment of dividend interest. Very simple. How company should make payment of dividend interest? Only electronic mode, NEFT, RTGS, IMPS. But if electronic mode not possible, then company can pay by checks, payable at par checks or warrant. And if the amount of payable at par checks and warrant is more than 1500 rupees, then it must be sent via speed post. That's it. Next is grievance redressal. If anybody has any complaint against the company, then it should be solved within maximum 21 days. Remember, grievance redressal ke liye how many days limit is there for the companies? 21 days. Keep this in your brain. Repeat. Grievance redressal 21 days. Grievance redressal 21 days. Okay. Grievance redressal 21 days. Okay, done. And they should be registered in scores. Guys, scores we have already done in lesson number 4, SEBI Act 9. We have to pay all the fees to stock exchange. That's all. With this, we are done with regulation 14. If I have to repeat once again, I'll just do very quick revision. Ekdam 100%, super fast. Every company should appoint CS as a compliance officer. They will maintain compliance reporting filing. Vacancy should be filled within 3 months. Share transfer agent. If more than 1 lakh security holder, compulsory appoint either share transfer agent or itself list as a share transfer agent. Cooperate with everybody. Make a policy on preservation of document. 2 type of document, permanent and minimum 8 years. You can keep electronically. You can file all the document electronically. Next is dividend payment must be done through electronic mode. If electronic mode not possible, you can pay through payable at par check or warrant. And if the amount is more than 1500 rupees, then send by speed post. Acha, grievance redressal solved within 21 days, must be registered on scores platform and pay all the fees to stock exchange. If you revise it again and again, trust me, in 5 minutes you can revise this all topics. Next topic is very important, regulation number 17, meeting of boards. Meeting of boards. In a year means here calendar year. In a calendar year, minimum 4 meetings we have to do. This provision is same like Companies Act, and maximum gap between 2 meetings should be 120 days. Guys, this provision we have been studying since module 1 Companies Act. Companies must meet at least 4 times a year. Year means calendar year. 1 year may we have to do minimum 4 board meetings, and maximum gap 120 days. Repeat, minimum 4 board meeting, maximum gap 120 days. Trust me, you have to speak. Minimum 4 board meeting and maximum gap 120 days. Okay, ma'am. Quorum only for top 2000 listed companies. What is the quorum for top 2000 listed company? 1/3 or 3, whichever is higher, plus 1 ID. What is the quorum for top 2000 listed companies? Only for top 2000 listed company, quorum is either 1/3 of total director or 3, whichever is higher. 1/3 or 3, whichever is higher, plus 1 ID should be present. If ID is not present, meeting is invalid. Case law question can come. ID is not present in the board meeting. Is it valid? No, never, not. If ID is not present in the meeting, then meeting is not valid. Never ever. If case law question will come, remember, if ID is not present in the board meeting can never be valid. Meeting cannot be valid without ID. At least 1 ID should be present in the board meeting. Next is your committees. There are 3 types of committees in the company, or 4 types of compulsory committee. One is your audit committee. Second is your nomination and remuneration committee. In short, I call it AC. In short, we call it NRC. Acha, in exam now, what you can do, if this words you have to write again and again now. What you can do, first you can write nomination and remuneration committee pura bada, and then bracket me you can write NRC, and thereafter you can use shortcut NRC. Matlab direct don't use shortcut NRC. First write full nomination and remuneration committee, bracket me you can mention NRC, now you can use NRC. Same way, next committee is your stakeholder relationship committee. there is a line here, SRC. So first you write pura bada stakeholder relationship committee, bracket me you can write SRC, thereafter you can use SRC. And last one is RMC, risk management committee. Regulation 18, regulation 19, regulation 20 and regulation 21. Very quickly I have tried to summarize this topic and simplify this topic as much as I can. That's why I took a little more time to make this notes a little more clear for you. Board committees under LODR. First one is audit committee. Now audit committee, some composition. Minimum 3 directors should be there in audit committee. Out of 3 director, out of total director, at least 2/3 should be independent director. 2 by 3, 2 by 3rd, 2/3 should be independent director. And if company have issued SR equity shares, SR means superior right equity share. If the company has issued superior right equity share, then all directors should be ID. Acha, theek hai. And all members should be financially literate. Financial literate means you should be able to read and understand balance sheet, P&L account. You should be able to read and understand financial statement, which means you should be a commerce graduate at least. Theek hai. Why? Because audit committee deals with financials, accounting, auditing, all this thing. That's why all members should be financially literate. Secondly, at least one should be expert. Everybody should be financially literate and at least one should be expert in accounting. Let's say you should be a CA, because CAs are expert in accounting, right? And lastly, CS of the company will become secretary of audit committee. CS of the company will become secretary of audit committee. But when we talk about NRC, what is the composition of NRC? Minimum 3 directors, same. All NEDs should be there. Acha. All non-executive director, okay, and minimum 2/3 IDs. See, minimum 2/3 ID is same in audit committee also, in NRC also. Next, if you talk about SRC, stakeholder relationship committee, in stakeholder relationship committee also minimum 3 directors should be there and at least 1 ID should be there. So see, others may there was 2/3 ID and 2/3 ID, but SRC may only 1 ID ki requirement is there. But if company has issued SR equity shares, then 2/3 ID should be there. I hope we are clear about the composition of AC, NRC and SRC. Next is who can become the chairperson of audit committee. Chairperson of audit committee should be independent director. Acha, chairperson of NRC should also be independent director, and chairperson of SRC, no condition given for that. No condition given for that. For chairperson of SRC, no condition is given. I'll just make a line here. ठीक है. Okay. So chairperson of audit committee should be an independent director. Chairperson of nomination remission committee should be an independent director. Okay. It is compulsory for chairperson of audit committee to attend AGM. Must attend AGM. Compulsory to attend AGM. Secondly, it is optional for chairman of NRC to attend AGM, may attend AGM, but it is optional for the chairman of SRC committee to attend AGM. So if you see, audit committee and SRC may it is compulsory to attend AGM, but NRC may it's not compulsory to attend AGM, they may attend AGM. Okay. Next is, there is one point given, chairperson of company may become member of NRC but cannot become chairperson of NRC. So if Mukesh Ambani is the chairman of the company Reliance Industries Limited, then Mukesh Ambani is chairman of Reliance Industries Limited, then Mukesh Ambani can become member of nomination and remuneration committee, but he cannot become chairman of nomination and remuneration committee. Chairman of company can become member of NRC but cannot become chairman of NRC. That's all about chairman of audit committee, NRC and SRC. Next, ma'am, next thing is your meetings. How many meetings we have to do? Audit committee mein we have to do minimum 4 board meetings per year. 4/year means 4 per year with maximum 120 days gap. This is same like board meeting. Same like board meeting. Okay. So what are we saying that? Audit committee mein we have to do minimum 4 board meetings per year, maximum 120 days gap. NRC may we have to do minimum 1 board meeting every year. SRC we have to do minimum 1 board meeting every year. So NRC and SRC में one board meeting, sorry, not board meeting, sorry, I'm really sorry, sorry, that was slip of tongue. NRC meeting, we have to do one NRC meeting per year. SRC meeting, we have to do one SRC meeting per year. Audit committee, we have to do minimum 4 audit committee meeting every year, and maximum gap 120 days, which is same like board meeting. Okay, next is quorum. Quorum means minimum this much number of directors should be present, minimum this much members should be present, then only meeting will be valid. What is the quorum of audit committee? 2 or 1/3, whichever is higher, plus minimum 2 ID. Minimum 2 ID. If you will see, this is same like quorum for top 2000 listed company, 1/3 or 3, whichever is higher. But board meeting के case में only 1 ID requirement was there, but in audit committee 2 ID का requirement is there. Okay, remember, normal top 2000 listed company के लिए board meeting का quorum is 1/3 or 3, whichever is higher, plus 1 ID. But audit committee के लिए 1/3 or 2, whichever is higher, plus 2 IDs. अच्छा, for nomination revision committee 1/3 or 2, whichever is higher, plus 1 ID, and SRC ka not specified. Okay, done. Now role of audit committee is given in schedule 2 part C, role of NRC is given in schedule 2 part D, and role of SRC is given in schedule 2 part D. With this we are done with all the points of audit committee, nomination remuneration committee, and stakeholder relationship committee. Next is your risk management committee. Next is your risk management committee. Now, ma'am, what about risk management committee? In risk management committee, there can be directors also, and there can be other members also who are not directors. For example, management people, let's say product manager or product head, finance head, any other person can also become member of RMC. So in RMC, there should be minimum 3 members, but majority should be director. More than half should be directors. Rest can be non-directors. Okay, there should be minimum 1 independent director, and if company have issued SR equity shares, then minimum 2/3 should be IDs. Once again, RMC may minimum 3 members should be there, majority should be director, at least 1 ID, and if company has issued SR equity shares, then 2/3 should be ID. Otherwise, 1 ID is sufficient, but if company have issued SR equity shares, then 2/3 ID. Okay, next is chairman. Chairman के लिए we are saying that chairman should be a director, which means in RMC there are director also, there are non-director also, normal people. Okay, so who can become chairman? Only director can become chairman. Next is meeting. We have to do 2 RMC meeting per year, 2 risk management committee meeting per year, and maximum gap should be 210 days. Guys, just remember, normal board meeting के case में what is maximum days? 120 ना. RMC में you just shuffle 2 and 1. You just shuffle 2 and 1. You put 2 here, 1 here. You know what I mean to say. You make it 210. Okay, memory technique to remember. Normal board meeting के लिए and audit committee के लिए maximum gap is 120 days. Maximum gap is 120 days. But for RMC, for risk management committee, maximum gap is 210 days, 210 days. Okay, got it? Yes, ma'am, got it. Okay, so what are we saying? That RMC risk management committee, they should do 2 meetings per year and maximum gap should be 210 per day. Next is your quorum. What is the quorum for risk management committee? 2 or 1/3, whichever is higher, plus at least 1 director should be there. So what are we saying? The quorum is 2 or 1/3, whichever is higher, plus 1 director. And lastly, risk management committee ka role. What is the role of risk management committee? The role of risk management committee is given in schedule 2 part D. Schedule 2 part D, it is line wise. Schedule 2 part C, schedule 2 part D, part D, part D. Okay, now what is the role of risk management committee? Basically, name itself suggests, if the question comes on role of risk management, they basically do risk management and they make risk management plan, and they do cyber security also. They make sure cyber security is there. They do risk management and they make risk management plan. That's all about audit committee, NRC, SRC, and risk management committee, RMC. Okay, अच्छा, meetings में audit committee 4 board meetings a year with maximum gap 120 days, NRC 1 meeting, SRC 1 meeting, RMC 2 meetings with maximum gap 210 days. Okay, अच्छा, quorum 1/3 or 2, whichever is higher, plus 2 ID, 1/3 or 2, whichever is higher, plus 1 ID, not specified, 1/3 or 2, whichever is higher, plus 1 director. Okay, done. Chairman must be ID, chairman must be ID, chairman must be NED and chairman must be a director. ठीक है, chairman must be ID, chairman must be ID, chairman must be NED, non-executive director, and chairman must be director. With this we are done with board committees. Two important points about RMC. RMC means Risk Management Committee. Every company, every listed company is not required to make risk management committee. Risk management committee is only applicable to top 1000 listed company. So what is top 1000 listed company? Every year on 31st December, stock exchange prepare a list. Stock exchange prepare a list of top 1000 listed company and top 2000 listed company on the basis of their market cap. जो सबसे बड़ी बड़ी कंपनीज होती हैं, स्टॉक एक्सचेंज हर साल उनकी लिस्ट बनाता है कि टॉप 1000 में कौन सी है और टॉप 2000 में कौन सी है. Once again in English, so all the companies on the basis of their market cap, stock exchange make a list of top 1000 listed companies and top 2000 listed companies. Okay, and risk management committee is also applicable to high value debt listed company. What do you mean by high value debt listed company? Those companies who have not listed their equity shares but they have listed their debt, matlab debentures or bonds, and their debt is 500 crore, मतलब बहुत heavy debt वाली company, high value debt company, if their debt is more than equal to 500 crore, then even they have to make risk management committee. So RMC is applicable to only two types of companies. Number one, top 1000 listed companies. Number two, high value debt company. What do you mean by high value debt company? मतलब ऐसी company whose total debt, total listed debt is more than equal to 500 crores, 500 CR, 500 crores. And lastly, what is the power of risk management committee? They can seek information from anyone, they can hire experts, they can call outsiders. So if RMC risk management committee needs, if they need to ask information from anyone, they have power, they can ask any information from anyone. If they are confused about anything, they can hire experts and they can call anybody outsiders to handle the risk management along with them. So this is two extra points about risk management committee. Now, role of audit committee, NRC, SRC, this is not there in your study material, but it has been asked in some of the past exam question. So very quickly, you can just study 2-3 points about role of audit committee, role of NRC, and role of SRC. This is something over and above, this is something extra from your study material, but it has been there in 1 or 2 past exam question paper. So we will just see what audit committee does, what NRC does, and what SRC does. Role of audit committee. So audit committee, basically they recommend auditor ki appointment, who will become auditor. They will monitor auditor's independence. They check whether auditor is independent or not. Very important, they do RPT approval. Acha, RPT is very important topic which we will do after this topic. After this now we will do RPT. In this chapter, RPT is very important and compliances are very important. One-time compliance, half-yearly compliance, yearly compliance, quarterly compliance. So this is your RPT. Just after this topic, we'll be doing RPT. After RPT, we will be doing this very important. What? This is very important. Compliances, one-time compliance, quarterly compliance, half-yearly compliance, and yearly compliance, and event-based compliance. These 4 tables are very important, which we'll be doing after this topic. Okay. So what are we doing right now? We are doing audit committee ke role. What is the role of audit committee? They do auditor appointment. They make sure that auditor is independent. They do RPT approval. They do whistleblower. Whistleblower mechanism is handled by audit committee. This much is enough. They do financial reporting. Oversight of financial reporting, matlab they check balance sheet, P&L. They make sure that financials are submitted to stock exchange on time. All this thing. Next is NRC. What is the purpose and role of NRC? Nomination Remuneration Committee. Basically, they deal with appointment of director and they deal with remuneration of director. So basically, NRC deals with appointment of director, who should become director, who are qualified to become director, and what should be the qualification of director, how much remuneration we should pay to directors. Okay, all this thing about appointment and remuneration of director. All this work is done by Nomination and Remuneration Committee, NRC. So what are their roles? They identify and recommend director. So basically they identify who is the right person? Oh, Vinay is the right person to be appointed as a director. So they identify and recommend the appointment of director. Number 2, they define qualification. Qualification matlab, okay, only those who are 12th pass out, they are only qualified to enter CSET exam. Qualification means who are qualified to become director. They evaluate their process. Board and director evaluation matlab NRC evaluate the performance of every director. Just like academy monitors the performance of every teacher. How is every teacher performing? Academy will evaluate that. Same way, NRC will evaluate the performance of every director. Performance evaluation. Next is remuneration. NRC will make a remuneration policy. Remuneration policy discuss how much remuneration should be paid to every director. How much salary we should pay to director. For that, we will prepare a remuneration policy. Who prepares that remuneration policy? Nomination and Remuneration Committee. Okay. And lastly, SRC, Stakeholder Relationship Committee. Name itself suggests they maintain relationship with everybody. How do you maintain relationship with everybody? By solving grievance. So their major work is solving investor grievance. Mainly major कि लोगों की complaint solve करना. What is Stakeholder Relationship Committee? SRC, Stakeholder Relationship, they solve shareholders' grievances. Next is they facilitate shareholder voting. They make sure that the voting process is done properly when we do voting in the general meeting. They try to reduce unclaimed dividend. They make sure that every shareholders receive the dividend and the unclaimed dividend is zero or negligible or less. And they monitor RTA की service quality. They make sure that registrar and share transfer agent RTA is providing good quality service to the shareholder. Just like academy will make sure that the teachers are providing good quality service to the students, same way SRC will make sure that RTAs are providing good quality service to the shareholders. That's it. So these are the 3 roles of audit committee, NRC committee and SRC committee. Acha, there are some mandatory responsibility also given, which is again something over and above your syllabus, but it is there in past exam question. That's why. So you can just read 1 or 2 points if you want. Role of audit committee, some mandatory responsibility that audit committee is mandatorily required to follow this responsibility, and one of the major point of that is approve related party transactions. Related party transactions cannot be done without the approval of audit committee. So first thing that we are saying is review significant RPT. Mandatory matlab audit committee has to do this. Review important RPTs, significant RPTs, review audit report, internal audit report. That's it. ठीक है. अच्छा, chief internal auditor का appointment, they will make sure that they will review the appointment of chief internal auditor. They will review the internal audit reports and they will review the significant RPTs. Next is NRC. They make sure that everyone's get a proper pay and upload policy on the website. Which policy, guys? Remuneration policy. So NRC is mandatorily required to prepare a remuneration policy and they are required to upload that policy on the website of the company. And lastly, SRC will make sure that there is a timely dispatch of dividend notice and annual report to shareholders. Whenever company has to dispatch any document to shareholder, SRC will make sure that all the documents are sent to shareholders on time. SRC will make sure that there is a timely dispatch of dividend notice and reports to shareholder. With this, we are done with the 3 types of committees: audit committee, nomination remuneration committee, SRC, and RMC, risk management committee. The next topic is maximum directorship. Maximum directorship means one person can become director in maximum how many companies. So it's like limit on your commitment. Let's say I as a teacher, I will be able to teach in maximum 2, 3, 4 academies, not more than that. That's not possible for me to teach in 10 academies. Same way, it's not possible for Mukesh Ambani to become director in more than 7 listed companies. So a person can become director in maximum 7 listed companies. So if we talk about one person, Mukesh Ambani, he can become director in maximum 7 listed company. In how many companies you can become independent director? Independent director also you can become in maximum 7 listed companies, not more than that. You can become independent director in maximum 7 listed company. But ma'am, if you are already MD or WTD in any listed company, MD or WTD means full-time director. Imagine if I am giving my full-time to Yeshas, Will I be able to give time to any other academy? No, right? Because my full time is occupied. So if any person is a whole-time director or managing director in any company, so basically you are a full-time director in any company, in that case you can become ID in 3 other companies maximum. Acha, full-time to you can be only in one company. ठीक है? Full-time executive director you can become in one company, and if you are full-time in one company, then you can become part-time in maximum 3 other companies. So what are we saying? That if you're already whole-time director or managing director in one company, in that case you can become ID in maximum 3 listed company, in maximum 3 other companies. So let's say this is company number 1, company number 2, company number 3, company number 4, and company number 5. If I am already whole-time director or managing director in company number 1, now I can become ID in maximum 3 other companies. I cannot become ID in more than 3 companies. That's it. Now, for calculating the 7 and 3 companies, we will take only those. Did you hear that? Okay, sorry. Somebody is blasting atom bomb here nearby my home. Coming back to the topic, those entities whose equity shares are listed. So basically, for calculating this companies, in maximum how many listed company you can become director, we will take only those companies whose equity shares are listed. Which means if there are companies whose only debt or preference share are listed, then you can become director in any number of listed company whose only debt and preference shares are listed, whose equity shares are not listed. Let's say there are 20 companies whose only debentures are listed. Only debenture are listed. Only debenture, equity shares not listed. Equity share not listed. I, Ishika ma'am, can I become director in all 20 companies? Yes. Matlab, those companies whose only debt is listed or only preference share is listed, they will not be included in counting this limit. We will take only those companies whose equity shares are listed. Are we clear with this? So to calculate this limit of 7 listed companies and 3 listed companies, only those companies will be taken into account whose equity shares are listed. So basically, if there is any company whose only debt or only preference share is listed, you can become director in any number of companies, 50, 60, 100, any number you want. This limit of 7 and 3 will not apply if you are a director in debt listed companies. Debt listed means those companies whose only debt, debenture, bonds or preference shares are listed. Secondly, private company. 100 private company mein I can become independent director or I can become director. Private company is not included. Next is foreign companies are not included. Next is Section 8 company. Section 8 company means NGOs, non-profit company. They are not included. And lastly, high value debt listed company. High value debt listed company means those companies who debentures, listed debentures are more than equal to 500 crores. Are we clear with this? So basically, if I am director, imagine I'm telling you, just quickly one example. Ishika ma'am, your Ishika ma'am is director in 10 private company. Is it allowed? Yes, private company is not included, so it is allowed. I am director in 10 foreign companies. Is it okay? Yes, any number. 100 foreign company, okay. 100 private company, okay. 100 debt listed company. Debt listed means whose equity shares are not listed, only debt is listed. 100 companies whose only preference shares are listed. 100 Section 8 company. Is it allowed? Yes, it's allowed. But when we talk about those listed company whose equity shares are listed, in that companies, I can become director in maximum 7 listed company, and I can become ID normally in maximum 7 listed company. But if I am already whole-time director or managing director, then I can become ID in maximum 3 listed companies. So what is your limit? Your limit is 773. 773. Okay, ma'am, 773. 773. 773. Yes, ma'am, remember. Once again, quickly, I can become director in maximum 7 listed company. I can become ID in maximum 7 company. But if I'm already MD or WTD in any company, then I can become ID in maximum 3 company. Achha, I can become ID in maximum how many company? Normally 7, but if I'm already WTD MD, then 3. Normally 7, but if I'm already WTD MD, then 3. And to calculate this limit, you will only take those listed company whose equity shares are listed. You will exclude debt listed company, private company, foreign company, Section 8 company, and those whose only debt or preference shares are listed. Done. Now, maximum limit on committee. Maximum limit on committee, which means I can become member of maximum how many committees, and I can become chairman of maximum how many committees. So there is a limit of 10 and 5. 10, 5. So I can become member of maximum 10 committee, and I can become chairman of maximum 5 committee. So what is your limit? 7, 7, 3, 10, 5. 7, 7, 3, 10, 5. If you know, you know what I mean to say. 7, 7, 3, 10, 5. Yes, 7, 7, 3, 10, 5. Do this. This is stupid way of memorizing things. Okay. Now, maximum how many committee? 10 committee mein I can become member. Maximum 5 committee mein I can become chairman. Next is, for calculating this limit 10 and 5, you will only take 2 committees into account, that is audit committee and SRC. Rest of the committee bhaad mein jaye. Literally BMJ. BMJ means bhaad mein jaye. Bhaad mein jaye means G2H, go to hell. So what are we saying? That you will see only audit committee and SRC, AC and SRC, which means, ma'am, can I become member of 100 NRC? Yes. Can I become chairman of 100 NRC? Yes. NRC mein limit does not apply. This limit applies only for audit committee and SRC of only public listed company who are only public company who are listed or unlisted. Now here you will take even unlisted public companies into account. Acha. So basically you will check audit committee and SRC, stakeholder relationship committee of listed public company and unlisted public company. That's it. And in this, you can become member of maximum 10 committee, and you can become chairman of maximum 5 committee. Okay. So what are we saying? You will take into account only audit committee and only SRC. And you will take into account only public company, whether listed or unlisted. You will take into account only listed public company and unlisted public company. But exclude means you will not take into account private company, Section 8 company, foreign company, and high value debt listed company. So if these 4 companies are there, private, Section 8, foreign, high value debt listed, then isme hundreds of companies may you can become a member of committee and chairman of committee. This limit does not apply. This limit does not apply in case of committees of private company, Section 8 company, foreign company, high value debt listed company. Excluded. Only listed and unlisted public company may you can become member of maximum 10 committee and chairman of maximum 5 committee, and that too this limit applies only to audit committee and SRC. Okay, so in one single line, I can become member of maximum 10 committee, including I can become member of maximum 10 AC and SRC. AC SRC मिला के 10 AC SRC मिला के AC and SRC across all the public companies and listed company and unlisted public company. That's it. Unlisted public company. Khatam. Same way, chairman of maximum 5 company. Now, chairman is counted within the overall limit of 10 membership, which means, you know, this 5 chairmanship ki limit is included in the 10 membership limit. What does it mean? Which means that if, let's say, there is company A limited, there is company B limited, there is company C limited, there is company D limited, and in this I am chairman of audit committee in this company. Ishika ma'am is chairman of audit committee in A limited. Ishika ma'am is also chairman of audit committee in B limited. Ishika ma'am is also chairman of audit committee of C limited and D limited and E limited. Am I done? Have I exhausted my limit? Yes. Now, can I become chairman of F limited? No, I cannot become chairman of F limited. Understood? Because I am already chairman of audit committee of 5 audit committees of 5 companies. Done. Now guys, when you are a chairman, now you are a member also. If I am a chairman, I am a member also. My question is, now in maximum how many committees I can become member? So my answer is maximum 5 more. 5 more. Why? Because I'm already member in 1, 2, 3, 4, 5 committees. Because when you are a chairman, you are automatically a member. So this 5 chairman ki limit comes within the 10 membership wali limit. Okay, so if I'm already a chairman in this 5 committee, then now in maximum how many committees I can become a member? Only 5 more, because 5 is already exhausted. I hope you have understood this particular point. Now with this, we are done with the maximum limit in membership and chairmanship of committee. In simple, I can become member of maximum 10 committee and chairman of maximum 5 committee. Which committees? Only 2 type of committee, audit and SRC committee, across all the listed and unlisted public company. Next is your RPT. Very important, guys. Very important, RPT. Very, 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 very important. If question comes from RPT in your exam, I will not be shocked, because RPT is RPT. So related party transaction. Very quickly, we are starting with one of the most important topic of LODR, that is RPT, related party transaction. First, in order to understand related party transaction, we should understand who are related party. Who are related party? Now come down to related party as per Companies Act. So guys, there is an act called Companies Act, and the definition of related party is given in Companies Act. Now, what is the definition of related party? In short, imagine your brain, close your eyes, imagine in your brain that all the people who are close to company, who have some authority in the company, who have some power in the company, they will come in related party. All those people who are connected with the company, who have some, dealings with the company, and who have power in the company, will come in related party. Who are related party? Point number 1, our directors. Point number 2, our KMPs plus उनके रिलेटिव, डायरेक्टर की बीवी, डायरेक्टर के वाइफ, डायरेक्टर के बच्चे, डायरेक्टर के माँ बाप, directors parents, spouse and child. Okay, so director and KMP plus the relative. Secondly, one point is relating to partnership firm, 1 point partnership firm, 1 point is relating to private company, 1 point is relating to public company, and 2 points are relating to accustomed to act. If you remember, accustomed to act. And then last 2 extra points. Guys, remember, if you remember in class, we have bifurcated all the points. First, individuals ka point is there, then partnership firm wala point is there, then private company wala point is there, then public company wala point is there, and then body corporate wala point is there. One by one. Who are our related party? Matlab close people. Our directors, our KMP plus unke relatives. Secondly, such a partnership firm where our director, manager or relative is a partner. So if हमारी company के director, manager or relative is a partner in a partnership firm, then that partnership firm is also our related party. Secondly, such a private company where our director, manager or the relative is either a member or a director. Members means shareholder. So if हमारी company, our director or manager or their relative are member of a private company, then that private company is our related party. And if they are director of a private company, matlab common directorship is there, then also that private company is our related party. Imagine Mukesh Ambani, also a director in Yeshas Academy Limited and also a director in Reliance. In that case, we will say that Yeshas Academy Private Limited is also a related party of Reliance. We will say Yeshas Academy and Reliance are related party. Why? Because they share common director. Mukesh Ambani is also director in Reliance. Mukesh Ambani is also director in Yeshas Academy. So these two are related party. We have a common director. Okay. So we are saying that such a private company where our director, manager or relative is a member or director. Next is public company. Such a public company where our director or manager is director plus holds 2% shares. Guys, please remember, private company ke case mein, it is a closely held company. So even if you are only shareholder or only director, I am only shareholder in private company, then also that private company is related party. I am only director in private company, then also that private company is a related party. But in case of public company, public company will be related party if our director manager is director plus shareholder. Here the limit is and. And means if Mukesh Ambani, there is one company called Reliance, and there is one company called Yeshas Academy Limited. It's a public company. So if Mukesh Ambani is the director of Reliance, Mukesh Ambani is the director of Reliance, and he is also director of Yeshas Academy, plus he is holding 2% shares of Yeshas Academy. Then we will say that Yeshas Academy and Reliance are related party to each other. So what do we say that Yeshas Academy and Reliance are related party? When if our director or manager is Hamara director or manager, that is Mukesh Ambani, is also a director plus hold 2% shares of the public company. ठीक है, तो हमारा रिलायंस का डायरेक्टर मुकेश अंबानी is also director of Yeshas Academy, plus he is also holding 2% shares of Yeshas Academy. Then Yeshas Academy Limited is related party. So who is related parties? Such a public company where our director or manager is director plus holds 2% shares, more than 2% shares. Done. We are done with the difficult part. Now, the next point is such a body corporate. Such a body corporate means any kind of company or any kind of body corporate whose board manager act on the instructions of our director and manager. So basically, if let's say there is a company, Reliance, and there is a company called Yeshas Academy Limited. Okay. So now Yeshas Academy ke director, let's say Nilesh sir. Okay. So Yeshas Academy's director, they are acting on the advice of Mukesh Ambani. Okay. So if Mukesh, so what are we saying? That Hamara director, our company is Reliance. Our company is Reliance. Now our director, Mukesh Ambani, is advising director of Yeshas Academy. So there is another company, Yeshas Academy. His director, Nilesh sir, is acting according to the advice of Mukesh Ambani. Then we will say that Yeshas Academy and Reliance are related party to each other. Yeshas Academy Limited and Reliance are related party to each other. So what are we saying? That any body corporate whose board or manager is acting according to the advice of our director manager. Next is any person on whose advice or instruction director or manager follows. Meaning there is a company called Tata Sons Limited. Now, late Shri Ratan Tata was not the director in Tata Sons, but he was advising the director of Tata Sons. He was advising. So the directors of Tata Sons were acting on the advice of late Shri Ratan Tata. In that case, we will say that Ratan Tata was will be considered as the related party of Tata Sons. Why? Because our director are acting on the advice of Ratan Tata. So Ratan Tata is advising our directors. Okay. So with this, we are done with this point. Any person, example, late Shri Ratan Tata, he is giving advice instructions to our director. In that case, that person will be considered as our related party. Guys, one thing, related party can be a company or it can be a person. For example, Reliance Industries ki related party can be Ishika ma'am also. It can be Yeshas Academy Limited also. Related party mein individuals will also come, and companies and partnership firms, private company, public company, every kind of body will come. Now in these 2 points, professional advice is excluded. Professional advice is excluded means if as a practicing lawyer or as a practicing CA, CS, you are giving some professional advice, then you will not be considered as related party. Let's say there is a practicing firm, CA firm, let's say Deloitte. You all know Deloitte. It's a big four. So let's say there is a practicing firm, Deloitte. Deloitte is giving some professional advice to Reliance. Will we say that Deloitte and Reliance are related party? No. Why? Because Deloitte is giving advice on professional advice, is giving professional advice as a professional CA, CS, CMA or lawyer. Okay. Last point, who are your related party? Your group companies. Group companies mein who will come? Holding, subsi, associate, fellow subsi, investing company. Remember, when one company purchases more than, I'll just clear this mess and once again, if one company purchases more than 50% shares of another company, then this is known as holding company and this is known as subsidiary company. When one company purchases more than 20% but less than 50% shares of another company, this is known as investing company, ting, not sting, investing, and this is known as associate company, and all these are your related party. So my holding company is my related party, my subsidiary company is also my related party, my investing company is also my related party, and my associate company is also my related party. And if my holding company has another subsidiary, sister, if my holding company has another subsidiary, this is known as fellow subsidiary. That fellow subsidiary is also my related party. So who are my related party? Holding, subsidiary, associate, fellow subsidiary, and investing company, and lastly directors of holding company. So directors and KMP matlab CEO, CFO, CS, MD, WTD manager. So director and KMP of my holding company are also my related party and their relatives. Matlab my holding company's director and KMP and relative of such director and KMP, excluding ID. Excluding ID means my holding company ke independent directors are not my related party. Who are excluded? Let's say this is Reliance Jio. Let's say it has a holding company Reliance Industry. Okay, so if in Reliance Industries Ishika ma'am is independent director, Ishika ma'am is independent director, then I am not the related party of Reliance Jio. Your holding company ke independent directors are excluded. Once again, your holding company's independent directors are excluded. That's it. With this, we are done with definition of related party as per Companies Act. According to Companies Act, who all will come in related party? Basically, your directors, KMPs, and those firms or private and public company with whom you share common directors or common shareholders. Okay, so basically these people will come in your related party. Related party. Now guys, what is the definition of related party as per LODR? What we just studied was the definition of related party as per Companies Act 2013. Now the definition of related party as per SEBI LODR. The first one is related party under Companies Act and related party under accounting standards. Guys, you know, all the people who are related party under Companies Act are also related party under LODR. All the people who are related party under accounting standards, they are also related party under LODR. So we are not defining it again. We are saying कि जो लोग Companies Act में है, जो लोग accounting standard में है, वो सब हमारे भी related party हैं. ठीक है? So what are we simply saying that related who are related party? All the people who are related party under Companies Act are also related party here, and all the people who are related party under accounting standards, they are also related party here. Secondly, two people are deemed related party. Deemed related party means they are also automatically considered as related party. Number one, promoter and promoter group. All your promoters and all the person who are a part of your promoter group, all the people who come under your promoter group and all your promoters are your related party. Secondly, big shareholders. Automatic. See, this is extra. These 2 points are extra. These 2 points are extra given in LODR. Given in LODR. Big shareholders. Big shareholder matlab if you are holding 10% equity shares, oh my god, we will say you can influence the company. You have 10% equity share, you are deemed related party. Deemed related party. If you are a big shareholder, big shareholders means you are holding 10% or more equity shares at any time. You know, this is very deadly. Oh my god. At any time in the preceding financial year. Preceding matlab I should simplify this and I should write last financial year. Pichle saal, last year. If last year, even on a single day, I was holding 10% equity shares of Yeshas Academy, then I will become related party of Yeshas Academy. Even on a single day. Let's say whole year now I had only 7% shares of Yeshas Academy Limited, which is, let's say, listed company. Only for one day I purchased 3% more and I touched the limit of 10%. Next day immediately I sold minus 3%. So average now overall in a year I had only 7% shares, but only on one day last year I touched 10%. You know what? I will come within the applicability of, oh my God, related party. This is literally very overwhelming provision. So what are we saying? That big shareholder who's holding 10% equity shares, 10% equity shares at any time in the last year, will be the related party. Understood, ma'am? Understood. Okay. Okay. What are we saying? Directly or indirectly. So directly in your name or indirectly in someone else's name, but you are the beneficial owner. Okay, directly matlab I purchase it in my name only. Indirectly matlab, let's say my father purchased in his name, but for my benefit. So I will say beneficial owner ultimately I am, even though my shares are registered in my father's name, but I am the beneficial owner. Okay, so if I am holding directly or indirectly beneficially 10% equity shares at any time, then I'll be considered as related party. This is your very important definition of related party as per LODR. So, 4 people are related party as per LODR. Number 1, related party as per Companies Act. Number 2, related party as per accounting standards. Number 3, promoter and promoter group. And number 4, big shareholders who are holding 10% or more equity shares. That's it. Acha, isme we will exclude mutual funds ke units. Why? Because mutual funds mein na ultimately, if mutual fund is holding 10% equity shares, now we will not consider them as a related party, because mutual fund they don't invest their own money. They collect money from public and then that money they invest now. So if mutual fund is holding 10% share, they will not be considered as related party. So mutual funds are excluded. Just remember, from the point of view of case law questions, mutual funds are not related party. Mutual funds. So let's say if Axis Mutual Fund purchased 10% share of Reliance, then Axis Mutual Fund is not the related party of Reliance, because it's not their own money, it's the public money that they invest. Just remember, from the case law point of view, mutual funds are not the related party. Mutual funds will not come in this particular. They are excluded. Okay, done. With this, we are done with the definition of related party. Now, what is RPT? Very easy to understand. Transaction between company with our related party is known as related party transaction. The best definition that you will love to write. What do you mean by, ma'am, related party transaction? Related party transaction means transaction with related party. Halwa puri, so easy. So what are we saying? Transaction between company and related party. Transaction between company and related party is known as related party transaction. Transaction between company and related party is related party transaction. Okay. Now let's say any other transaction which benefit a related party is also a related party transaction. Let's say this is our company, Yeshas Academy Limited. It's a listed company. Or let's say any other company, HUL. Okay. So HUL company enters into transaction with outsider. You tell me in the chat box, you tell me, I'm so into the provision that I'm sorry, I was not looking at the chat box because this is a very important provision right now going on. So you can mention in the chat box, if there is a company called HUL and this company entered into transaction with outsider who is not a related party, will this be a related party transaction? Of course not, right? But this transaction will benefit a related party. Benefit a related party, then in that case, will it be a related party transaction? This transaction is with an outsider, but somehow this transaction is giving benefit to a related party. Will this be considered as a RPT? Will this be, let me know in the chat box, will this be considered as a related party transaction? The answer is, you will tell me in the chat box, I will not tell. Let's take an example. Reliance Industries Limited. There is a company, Reliance Industries Limited, and there is Mukesh Ambani. Of course, if Reliance will enter into transaction with Mukesh Ambani, is this a related party transaction? No doubt, yes. But let's say there is a driver of Mukesh Ambani. Driver. Lamborghini chalai jani ho. So there is a driver of Mukesh Ambani. His name is Ramu, my favorite name. So my question is, Reliance enter into transaction with Ramu. Ramu is no way related to Reliance. He's an outsider. But you know, this Ramu entered into this transaction on behalf of Mukesh Ambani. So basically, company Reliance is entering into transaction with Ramu, but for the benefit of Mukesh Ambani. Is this a related party transaction? The answer is yes. So what are we saying? That any transaction even though not with a related party, but for the benefit of a related party, it is also an RPT. So we are done two definition of RPT. Everyone along with me. What is RPT? Two type of transaction are known as RPT. Number one, transaction of the company with the related party. ठीक है, ma'am, understood. Number two, any other transaction not with a related party but for the benefit of the related party done, ma'am, done. Ma'am, can this be a single transaction or group of transaction? Anything. You want to do a single transaction, you want to do multiple transaction, you can do. Ma'am, can this be with or without money, without price? Yes. You know, related party transaction can be even without money. Let's say Reliance appointed Neeta Mani as a finance manager when she has not done any finance course. Is this a related party transaction? Yes. But ma'am, here price of money is not involved. Then also it's a related party transaction. It can be with or without involvement of price. That's it. We are done with what is RPT. Four things are given regarding RPT. Number one, RPT means transaction with related party. Number two, transactions for the benefit of related party. Number three, it can be a single transaction or group of transaction. And number four, it can be with or without price. Most important, what is not an RPT? क्या RPT नहीं है? If the company is giving dividend to all shareholders, if the company is issuing bonus shares, right shares, company is doing buyback, understand these are done given to all the shareholders. In that case, it will not be an RPT. So let's say this is the company Reliance. In the Reliance, Mukesh Ambani is also a shareholder and Ishika ma'am public is also the shareholder. Okay. Now Reliance is giving dividend to all the shareholders. So all the shareholders mein Mukesh Ambani is also the shareholder of Reliance. So if Mukesh Ambani is giving dividend to if Reliance is giving dividend to Mukesh and to every shareholder, will this an RPT? No, this is not an RPT. Why? Because we are giving dividend to everybody. We are not favoring Mukesh Ambani. So Reliance is giving dividend to everybody. So if company is issuing dividend, bonus shares, right shares, buyback equally to all the shareholders, then it is not an RPT. Secondly, if we are doing preferential issue of shares as per ICDR, see, if we are doing preferential issue, what is preferential issue? It is a private placement. If you are doing private placement of shares, then RPT will not apply. Mutual fund mein RPT will not apply. We have already discussed. So if in any case law question in your examination, if RPT topic mein mutual fund will come, na, just apply your brain and say no RPT applicable, no RPT applicable. It is not an RPT. It will not come under this provision. That's it. RPT provision is not applicable to mutual funds. Khatam, tata, bye-bye, not bye-bye. So basically, in one line, RPT provisions not applicable to mutual fund. Mutual funds is out of this. And lastly, if bank or NBFC is taking fixed deposit on uniform term from everybody, what does bank or NBFC do? They take fixed deposit. So if bank and NBFC is taking fixed deposit from everybody on equal terms, then it will not be an RPT. Very important. What is RPT and what is not RPT? What is RPT? Transaction with related party or for the benefit of related party. What is not RPT? Four things, very, very, very important. Number one, bonus issue, right issue, buyback, dividend given to equally to all shareholders. Number two, preferential issue. Number four, fixed deposit accepted by bank or NBFC. And number four, mutual funds units. Mutual funds units. That's it. These are not the RPT. With this, we are done with what is RPT, what is not RPT. Now, there is one topic of material RPT. Material means important. These RPTs are considered as important. मतलब बड़ा, big RPT. Simple, big RPT is known as material RPT. Now, what is big RPT? Big RPT means those RPTs, if it is more than 1,000 crore or it is more than 10% of total turnover. Turnover means total sales, total revenue, whatever you can say. So, if total consolidated turnover ka, if it is more than 10% or more than 1,000 crore, 1,000 crore, then it is known as material RPT. So, for example, if our turnover is 1,200 crores, if our consolidated turnover, company ka, let's say Reliance ka, total turnover is 1,200 crore. What is 10%? Seedha remove 120 crore. Okay, the 10% is 120 crore. Now, if our company enters into related party transaction worth rupees 100 crore. Will it be considered as material RPT? The answer is no. Why? Because it is neither touching 1000 crore wali limit nor touching 10% wali limit. What is 10% wali limit? 120 crore. So only if now our RPT related party transaction is more than 120 crore, then only it will be known as material RPT. Are we clear with this? So what are we saying? What is material RPT? Big RPT. 1000 crore 10%, 1000 crore 10%. Material RPT 1000 crore 10%, 1000 crore 10%. Just repeat it, okay? And lastly, if you are doing brand usage or giving royalty, so you know what, in order to use the brand, you give royalty money. Let's say Reliance Jio is giving royalty to Reliance Industries for using the word Reliance, so that royalty will be considered as material if it is more than 5% of consolidated turnover. Acha, just understand, other RPTs के लिए materiality की limit is 10%, but only for royalty, brand and royalty, the limit of material RPT is 5%. Other cases में it's 10%, brand and royalty case में 5%. Okay, other case में material की limit is 10%. Brand and royalty case में 5%. Done ma'am, done. What is material RPT? Once again, if the RPT is more than 1000 crore or more than 10% of total consolidated turnover, then it's known as material RPT. But in case of brand and royalty, 10% will be replaced with 5%. In that case, limit is not 10%, it is 5%. Now the next point is approval. What approvals do you need for entering into related party transaction? The first approval that you need is audit committee approval, and the second approval that you need is shareholders approval. And there are some exceptions where no audit committee or no shareholders approval is needed. So first, audit committee approval is required for all RPT and modification. You cannot enter into related party transaction without audit committee approval. You need prior audit committee approval. That is, before doing board meeting, before entering into RPT, first go and take permission from audit committee. Okay, so all RPTs require prior audit committee approval, and only IDs can vote. Only IDs can vote. Let's say there is an audit committee. There is Mr. A, Mr. B and Mr. C. A and B's are ID and C is not an ID. In that case, when we will do voting for RPT, only A and B can do voting, C cannot do voting. Only IDs of audit committee can vote and approve related party transaction. Non-IDs cannot vote. Very important omnibus approval, star mark. Omnibus approval. Which approval? Which bus? Omnibus? Hanji. Omnibus. Now, what do you mean by omnibus approval? Omnibus approval means if you need multiple approvals in a single year. Let's say Priya wants to go early from the class every year. She wants to go early from the class every day. She's coming and asking and taking me she's coming and taking permission from me every day. Ma'am, can I go earlier? Ma'am, can I go earlier? I will be like, every day you need to go early, na? I'm giving you one time permission for whole year. Now don't come and ask me again tomorrow. That is known as omnibus approval. Means if, let's say, company number A and company number B has to enter into related party transaction repeatedly every month or multiple times in a year, then audit committee can give one time approval. One time matlab एक बार में approval for whole year. Whole year के लिए I can give permission, and you don't need to take audit committee approval again and again. So what is the omnibus approval? What are we saying? That can audit committee give omnibus approval? Yes, but omnibus approval can be given only if transaction is repetitive. If you enter into only one or two RPT, then audit committee will not give omnibus approval. Audit committee will give omnibus approval only if you enter into multiple transactions in a year. Next, audit committee will be satisfied about the necessity and interest, meaning only if it is necessary, then only audit committee will give omnibus approval. Otherwise, audit committee will not give omnibus approval. Third, before giving omnibus approval, audit committee will make a criteria on giving omnibus approval based on RPT policy. So every listed company should make a policy on related party transaction, and the name of that policy is RPT policy. Okay. Now, Audit committee will read the RPT policy, and on the basis of RPT policy, audit committee will make the criteria for giving omnibus approval. Criteria means how audit committee will be giving omnibus approval. Next, audit committee will give omnibus approval only for repeated RPTs. Next, audit committee will give omnibus approval only if it is necessary, Next, whenever audit committee gives omnibus approval, we have to mention 4 or 5 things in the omnibus approval. Whenever we give omnibus approval, we have to mention the name of related party, nature of transaction, period of transaction, maximum amount, base price, and formula for calculating the base price or making changes in the price. 1, 2, 3, 4, 5, 6. These 6 things we have to compulsorily mention in the omnibus approval कि कौन सी party को हम omnibus approval दे रहे हैं, name of party, for which transaction, let's say purchase and sale of goods, period 1 year, 6 months, 5 months, period, maximum amount कि maximum overall in a year, the maximum limit of RPT for you is 10 crore, let's say. So maximum amount we have to mention कि maximum how much amount के RPT you can enter, at what price, and what is the formula of calculating the price. These 6 things have to be mentioned in the omnibus approval. But ma'am, if these details are not available, if the above details are not available, let's say a company wants to enter into some general RPTs, which we can't identify at this moment. We can't identify the period, we can't identify the nature of transactions or parties. If these details are not available, then also audit committee can approve omnibus approval, then also audit committee can give omnibus approval, but for maximum 1 crore rupees per transaction. But in that case, audit committee can give omnibus approval of the maximum limit of 1 crore per transaction, which means audit committee can say to you, ठीक है, you can enter into RPTs multiple times, I am giving you omnibus approval, but make sure per transaction ki value is not more than 1 crore. Per transaction value is not more than 1 crore. Lastly, whenever audit committee will give omnibus approval, audit committee have to review it quarterly, once in 3 months. And lastly, audit committee omnibus approval is valid for maximum 1 year. After that, you have to give fresh omnibus approval. One omnibus approval is valid for maximum 1 year. After 1 year, again you have to give omnibus approval. That's all about audit committee. Once again, revision of ultra fast revision of audit committee approval. All RPTs require audit committee approval. Only IDs can vote, and audit committee can give omnibus approval by setting the criteria only if transactions are repetitive and it is necessary. Omnibus approval should specify name of parties, nature of transaction, amount, price, etc. But if these details are not available, then also omnibus approval can be given up to the limit of maximum 1 crore per transaction. And audit committee will do quarterly review, which is valid for maximum 1 year. That's all. Now, all RPTs require audit committee approval, but shareholders approval is required only for material RPTs. Material matlab big RPTs. Remember what is material RPT? Material RPT means big RPT of more than 1000 crore or more than 10%. So only for material RPT you need to pass ordinary resolution. Ordinary resolution is the shareholders approval. And in that, related parties abstain from voting. If I need to further simplify this, I can write related parties cannot vote. In further child language, related parties cannot vote. So when in the shareholders meeting, we will do the voting. We will say who all are related party, go outside the room. So we will remove them from the room and then we will do the voting. So basically related parties cannot vote. That's it. So once again, only for material RPT, we need to first take audit committee approval, then we need to take ordinary resolution, that is shareholders approval. When we will take shareholders approval, related parties cannot vote. One exception is there. If company is entering into RPT due to IBC, due to resolution plan under IBC. What is resolution plan under IBC? If company is in insolvency, IBC, if company is in insolvency and due to that they are entering into RPT, then OR not required. One exception of OR, ordinary resolution is not required if company is under insolvency. If company is under insolvency under IBC, but you have to make sure that you disclose it to stock exchange within 1 day. You tell everybody within 1 day. You disclose it to stock exchange within 1 day. Last point about RPT. And that last point is exception where no audit committee, no shareholder approval needed. कोई approval नहीं, no approval, खुला सांड की तरह you can enter into any RPT. No audit committee approval, no shareholders approval. And you know who is khula sand? Yes, khula sand is government company. You know, it's like government exempt itself everywhere. Government company, everybody have to comply, but not government company. So what are we saying? If there is a transaction between two government company, let's say LIC enters into transaction with ONGC, RPT, if it's an RPT, or let's say, let's take an example. ONGC enter into transaction with Hindustan Oil something. So in that case, they both are related party and both are government companies. You know what? They can enter into RPT without taking any audit committee approval, without taking any shareholders approval. Next, transaction between holding company and wholly owned subsidiary. Wholly owned subsidiary means where 100% shares are held by holding company. So it's like do the leg jan. So holding company and wholly owned subsidiary, they both are more or less, you know, controlled centrally. So in that case, no audit committee, no shareholders approval required, provided their accounts are consolidated. Lastly, transaction between two wholly owned subsidiary. For example, there is a company A Limited. A Limited is holding 100% shares of B Limited and A Limited is holding 100% shares of C Limited. In that case, we can say B Limited is the wholly owned subsidiary of A and C Limited is also wholly owned subsidiary of A. In that case, if there is a transaction between RPT between A and B, no approval is required. If there is a transaction RPT between A and C, no approval required. And if there is a transaction between B and C, then also no approval is required because they both are 100% owned by A Limited. So if there is a related party transaction between B Limited and C Limited, then no approval is required if their accounts are consolidated. Three exceptions where no approval is required. First, transaction between two government companies. Second, transaction between holding company and wholly owned subsidiary. And third, transaction between two wholly owned subsidiary. And with this beautifully, oh my God, we are done with related party transaction. So first we did definition of related party. Who will come in related party? Related party of Companies Act, related party of accounting standard, promoters and big shareholders who are holding 10% equity shares. Then we did RPT. What is RPT? Transaction with related party or transaction for the benefit of related party. Then we did what is not RPT? Dividend, bonus issue, right issue, preferential issue, mutual funds. These are not RPT. Then we did material RPT. Material matlab more than 1000 crore or more than 10%. But for brand or royalty, limit is 5%. Acha, all the RPTs need audit committee approval and only material RPTs need shareholders approval. Audit committee can also give omnibus approval if needed. And thereafter we did shareholders resolution will not be required if company is under insolvency. And lastly, no audit committee approval or no shareholders approval will be required if the transaction is between two government company, between holding company and wholly owned subsidiary, and between two wholly owned subsidiary company. So with this, we have I tried my best to summarize the whole related party transaction in the least words and simple words as much as possible and to revise it. Now when you will do self study and you will revise this topic, it will not take much time for you to revise because we have done like everything. Moving towards the next topic, there are some general compliances regarding your subsidiary company and regarding your material subsidiary company. We are done with related party transaction. Last few topics are left. ठीक है? पायल, what मैम एक्सेप्शन में सेकंड और थर्ड पॉइंट, दिस इज ऑलरेडी डन ना. अगर एक ट्रांजेक्शन हो रहा है होल्डिंग कंपनी और उसकी होली ओन सबसी के बीच में, तो नो अप्रूवल विल बी रिक्वायर्ड. एंड इफ ट्रांजेक्शन हो रहा है दो होली ओन सबसी के बीच में, देन ऑल्सो आरपीटी अप्रूवल्स नॉट रिक्वायर्ड. पायल, इज दैट क्लियर? Yes, everybody. Acha, quickly, I want to move towards the next topic, and before that, I would just really want to get a check from you. How's the Josh? I want to quickly get a check from you. How's the Josh? Yes. All the people who are watching the lecture right now, quickly let me know in the chat box. How's the Josh? LODR is very important chapter, guys. LODR has always been important. LODR was important, LODR is important, and LODR will be important in the future also. Okay, moving towards the next topic, we are done with major difficult parts of the chapter. Now, some few important topics are left. Provision regarding subsidiary company. So, a listed company can have many subsidiary company, but out of all the subsidiaries, if any subsidiary is big enough to have 20% to contribute to the 20% of the income or net worth, then that subsidiary is known as material subsidy. Material subsidy means important subsidy. So first, the definition of material subsidy is given. What do you mean by material subsidy? Material subsidy means ऐसी subsidy, such a subsidy whose income and net worth is more than 20% of consolidated income and net worth. Always remember, guys, what is the limit for material subsidy? 20%, 20%. 2020, 2020, 2020. Okay, material subsidy. So which subsidy is material subsidy? Simply understand, ऐसी subsidy जिसका income टोटल इनकम का 20% है, 20% या उससे ज्यादा, वो मटेरियल सब्सिडी है. इन इंग्लिश अगेन, व्हाट डू यू मीन बाय मटेरियल सब्सिडी? मटेरियल सब्सिडी मींस सच अ सब्सिडी whose income or net worth is more than 20% of consolidated income or net worth. Whenever the word consolidated is used, consolidated मतलब total income net worth of all the holding and subsidy and joint venture companies. मतलब सारी holding subsidy joint venture companies का हम ऐड कर देते हैं, उसको हम बोलते हैं consolidated. Okay, so such a subsidy whose income or net worth is more than 20%, that is material subsidy. Now, at least one ID of parent company must be director in subsidy company. So let's say there is a listed company, Reliance, and let's say it has an unlisted material subsidy, Yeshas Academy Limited. Just for hypothetical example, it is unlisted material subsidy. Unlisted material subsidy. In that particular case, at least one independent director of Reliance should also become director of Yeshas Academy Limited. At least one independent director of listed company should also become director of unlisted material subsidy. Second, audit committee of parent company means listed company, should review the financials of subsidy. So basically, audit committee of Reliance should review and go through the financials of Yeshas Academy Limited. Financials means our balance sheet, P&L account. Next is minutes of unlisted subsidy will be placed before parents board. Minutes means record of meetings. So minutes of Yeshas Academy Limited will be placed in the board meeting of Reliance. Okay, so when Reliance will do the board meeting, they will discuss the minutes of their unlisted subsidy company. Okay, so minutes of subsidy company will be placed before the parent board. And lastly, if there is any big transaction मतलब 10% ज्यादा transaction in the subsidy, big transaction in subsidy. अगर subsidy में कोई बड़ा transaction होगा तो immediately we have to report it to the parent board. For example, if there is a big transaction in Yeshas Academy Limited, immediately we have to inform it to Reliance ka board. Immediately we have to report it to Reliance ka board. So if subsidy में any big transaction happen, big means legal language mein you can say significant transaction. Significant means more than 10% of the total turnover. So if Yeshas Academy mein any big transaction will happen, immediately we have to report it to the Reliance ka board. That's all about subsidy and material subsidy. Once again, quick check. Material subsidy means whose income or net worth is more than 20% of total income or total net worth. At least one ID of parent listed company should become director of unlisted material subsidy. ठीक है? Audit committee should review the financials of unlisted subsidy. Minutes of unlisted subsidy will be placed in the meeting of parent listed board meeting. And lastly, if there is any significant transaction in subsidiary, which means more than 10%, then immediately we have to report it to the parent ka board. Okay, parent board. Parent matlab your holding company. Parent means your holding company. That's all about subsidiary and material subsidy. The next topic that we have to do is secretarial audit and secretarial compliance report, regulation 24A of SEBI LODR. This is very important, guys. Secretarial audit is again very important because this is done by you people. Yes, you people will do it in future because you are our future. You are future of our country, you people. Yes. So now SEC audit and SEC compliance. Who will do SEC audit? This and this is done by practicing company secretary. Practicing company secretary. So it is compulsory for every listed company to get SEC audit done by practicing company secretary, and it is compulsory for every listed company to get SEC compliance report from PCS. These two are separate requirement. They are not same. Many students ask me doubt, ma'am, ये दोनों same है क्या? SEC audit or SEC compliance? No, these two are separate requirements. First, we have to get SEC audit done. That is different. And then we have to take a SEC compliance report. That is different. These two are two separate requirements. First, SEC audit. So, SEC audit is mandatory for listed company and their unlisted Indian subsidiary. Indian matlab, if we have unlisted foreign subsidiary, they don't have to get SEC audit done. But if our company have unlisted material Indian subsidiary, matlab, if let's say there is a company Reliance and they have a material Yeshas Academy Limited, it is unlisted but material means it is more than its income and net worth is more than 20% and it is incorporated in India. Then in that case, Reliance also have to get SEC audit done by CS and Yeshas Academy also have to get SEC audit done by CS. Okay, so SEC audit is mandatory for every listed company and its material unlisted Indian subsidiary. So if let's say Reliance has one foreign subsidiary in USA may we have foreign subsidiary. So that foreign subsidiary also have to do SEC audit. Kya? No. Only Indian subsidiary. Okay. Next is who will do SEC audit? PCS. PCS means practicing company secretary. He will do the SEC audit and then he will give a SEC audit report. Exam may write full secretarial audit report. Okay, so he will give a SEC audit report and that SEC audit report will be attached to annual report. Every year company prepares a report which is known as annual report. So this SEC audit report is attached in the annual report. This is your SEC audit. Next is your secretarial compliance report. Which companies have to get secretarial compliance report? Every listed company. Which company is required? Every listed company. They have to prepare secretarial compliance report and we have to submit it to stock exchange within 60 days of financial year end. When does your financial year end? 31st March. Wahan se you can take 60 days. 30th April, 30th May. March, April, May. 60 days. 30 plus 30. So your deadline will be 30th May. ठीक है? So every year before 30th May, we have to submit SEC compliance report to stock exchange. So imagine Reliance have to submit every year before 30th May SEC compliance report made by a practicing CS and we have to submit it to Bombay Stock Exchange, National Stock Exchange and all the stock exchange where we are listed. That's all about SEC audit and SEC compliance report. Quick revision. Listed, which company have to get SEC audit done? Listed company plus their unlisted material Indian subsidiary. ठीक है. Which company have to get SEC compliance report? Only listed company. ठीक है, ma'am. Who will do SEC audit? PCS. Who will prepare SEC compliance report? PCS. Now, PCS will give a SEC audit report. That SEC audit report will be attached to annual report. But when it comes to SEC compliance report, that SEC compliance report is submitted to stock exchange. Just understand, audit report ko we don't submit it to stock exchange. Audit report we attach with annual report. But when it comes to compliance report, that is submitted to stock exchange. I hope we are clear with this. But now, we have done with all the corporate governance requirement which we did from starting till here. Now, there are some exceptions. Exception means all the corporate governance requirement that we studied from Regulation 17 to Regulation 27 or Regulation 17 to 27. All this topic that we studied na yahan se pura 17 kahan gaya? Ye raha. Regulation 17 board meeting. ठीक है, 18 audit committee, NRC, SRC, all this topic related party, all this we studied, all the compliances that we studied are not applicable to Chikkadu listed company. Chikkadu listed company, which we call small listed company, not small company, Chikkadu listed company. Now, when any listed company is known as Chikkadu company, if its paid up is less than 10 crore and means both the conditions should be satisfied and net worth is less than 25 crore. 10, 25, 10, 25 and all the limits are in crores only here, okay? 10 crore, 25 crore, 10 crore, 25 crore, okay? 10 crore, 25 crore, got it. So what are we saying that if there is a listed company whose paid up is also less than 10 crore and turnover is also, net worth, not turnover. Paid up is also less than 10 crore and net worth is also less than 25 crore, then we don't need to comply with all the provision that we studied from starting till here. From board meeting till here, whatever we studied is not applicable to Chikkadu listed company. So when you will see case law question in examination, if their paid up and net worth is given, now do check. If the paid up of the company is less than 10 crore and net worth of the company is less than 25 crore, then any of the corporate governance requirement, regulation to regulation 27 is not applicable. Secondly, SME listed company. SME listed companies means those companies which are listed in SME exchange, small and medium exchange, not on the main board. Okay. Lastly, if company is under CIRP, CIRP matlab insolvency. In short, I can write here insolvency. So if any company is under insolvency, then regulation 17 to regulation 21 will not apply. What is regulation 17 to 21? Regulation 17 है board meeting का, 18 audit committee, 19 nomination remuneration committee, 20 SRC and 21 is RMC. So basically rules regarding board meeting and committees will not be applied to company under insolvency. Those companies which are under insolvency, to them board meeting wale rules and committees wale rules will not apply. Regulation 17 to regulation 21, which is board meeting, audit committee, NRC, SRC, RMC will not apply. And lastly, but still Companies Act will apply. So what are we saying? Even in these three cases, LODR will not apply, but Companies Act would still apply. So in these three cases, they don't need to comply with LODR regulation, but they still need to comply with Companies Act. With this, we are done with all these requirements of SEC audit and SEC compliance. Now, some very basic topics, like some 2-3 easy topics are there. 2-3 like very easy topics are there, which are, first one, every listed company, whenever they are doing board meeting, to do these 6 things, we have to inform stock exchange in advance. This is known as prior intimation to stock exchange. Prior intimation means every listed company which is doing board meeting to discuss financial results. Financial results matlab quarterly result, Q1, Q2, Q3, Q4, whole year ka result. If we are going to do buyback, if we are going to do voluntary delisting, if we are going to do fundraising, how do we raise fund? By making public offer. For example, if we are going to do FPO, IPO, right issue, QIP, preferential issue, anything. Basically, we are raising funds. Or we are about to declare dividend, or we are about to issue convertible securities, example, convertible debentures, convertible preference shares, or we are about to issue bonus shares, or we are about to alter shares ke rights changing, or we are changing the interest payment dates or redemption dates. मतलब जो डिबेंचर बॉन्ड्स प्रेफरेंस शेयर्स का जो रिडम्पशन डेट है और इंटरेस्ट पेमेंट डेट है, we are changing the payment dates. So if in the board meeting we are about to discuss this 1, 2, 3, 4, 5, 6, 7, 8, this 8 things, then at least 2 days before the meeting we have to inform to the stock exchange. This date is very important. At least 2 working days prior intimation means 2 days before meeting. Now these 2 days will exclude date of intimation and date of board meeting. So I'll give you one question for you. If board meeting is on 8th of December, at least last by when we have to give intimation to stock exchange. Lastly, by when we have to give intimation to stock exchange? If board meeting is on 8th December, this question is for you. And all those who are watching this particular lecture, you can drop a message in the chat box. You can just calculate and tell me. Even if it's wrong, you can just give it a try, but I hope you will be right. Once again, revision. What are we saying? That if in the board meeting we are about to consider, you have to remember these things, and these are, most important decisions of the company. For example, we are discussing financial results, buyback, voluntary delisting, fundraising, declaration of dividend, bonus issue, alteration of rights, and alteration of payment dates. Change in payment dates. In that particular case, we have to give at least 2 days prior intimation to stock exchange. 2 दिन पहले हमें स्टॉक एक्सचेंज को बताना होगा. We have to inform stock exchange 2 days before the meeting, and in calculating those 2 days, you will not take into account date of intimation and date of board meeting. Excluding date of intimation and excluding date of board meeting, there should be 2 working days ka gap. Excluding the date on which you are informing and excluding the date of board meeting, there should be 2 working days ka gap. So basically, if your board meeting is on 8 December, you have to exclude 2 days, 7th and 6th. So lastly, by when you have to give intimation? You have to give intimation by 5th of December. So if you are someone who thought of 5th of December, then you are right. Okay. Now we are done with prior intimation. In that, we have to mention date of board meeting also. So these were prior intimation before board meeting. Now we are doing intimation after board meeting. So, you know, when you are done with the board meeting, now you made a decision in the board meeting. So if in the board meeting you made following decision, for example, dividend declaration, buyback, fundraising, bonus issue, etc., then immediately within 30 minutes, guys, 30 minutes, imagine this is, I call it Blinkit section. Blinkit or Domino's, delivery in 30 minutes. Domino's, this section is Domino's section. Domino's section, guys, 30 minutes. Pizza delivery 30 minutes mein they do na. Domino's pizza delivery in 30 minutes. So what are we saying, guys? We are saying, what are we saying? Yes. Once again, what are we saying? That whenever in a board meeting, these things are discussed. What things are discussed? If in a board meeting, following outcomes are there, following things are decided: dividend declaration, dividend cancellation, buyback, fundraising, bonus issue, reissue of forfeited shares, capital structure changes, financial results, voluntary delisting. In that particular case, immediately within 30 minutes of the conclusion of board meeting, immediately within 30 minutes of the closure of board meeting खत्म होने के बाद immediately within 30 minutes of the closure of board meeting, we have to inform to the stock exchange. Are we clear with this? And lastly, if meeting goes on for multiple days, then we don't need to wait for multiple days. Immediately on the same day when these decisions are taken, immediately 30 minutes after that, we can disclose the results to stock exchange. Basically, we have to send the results to the stock exchange. So this is about disclosure about the outcome of the board meeting within 30 minutes. Okay. The next one is your disclosure of events. Now, disclosure of events means if something material event will happen, kuch bada ho gaya, some material event has happened. In that case, you have to disclose it to the stock exchange. So what are we saying here? Company must disclose material events to stock exchange. Material matlab important events. So if some important event happens in the listed company, then every listed company has to inform material events to stock exchange. Okay. Every listed company has to inform material events to stock exchange. Understood? Now, what are we saying that? Which events are material? They are mentioned in para A of part A of schedule 3. Para A of part A of schedule 3 tells you which events are deemed material events. Matlab, let's say example, merger amalgamation. So merger amalgamation are deemed material. Matlab, if any listed company will do merger amalgamation, then immediately we have to disclose it to stock exchange. Within how much time? Within, in these 3 cases, either 30 minutes or 12 hours or 24 hours. Within how much time? We will see different cases may within 30 minutes or 12 hours or 24 hours. So what are we saying that if anything happens, if any material event happens which is mentioned in para A of part A of schedule 3, it will be deemed to be material, so you have to do the mandatory disclosure to stock exchange. You have to do mandatory disclose it to stock exchange within 30 minutes or 12 hours or 24 hours. ठीक है, आधा घंटा, 30 minutes or 12 hours half day or 24 hours 1 day, maximum 1 day. Now these are known as category A events. These are known as category A events. Another category is category B events. Category B means some events are given in para B of part A of schedule 3. Some events are given in para B of part A of schedule 3. They are not deemed to be material. They may be material, they may not be material, depending on the materiality policy. So every listed company have to make a policy on materiality, which is known as materiality policy. Now, these events which are specified in para B of part A of schedule 3, For that, we will apply materiality policy. On that basis, we will decide whether they are material or not. And if they are material, then only we have to disclose that event. So we will disclose it only if it is material by applying the materiality policy. This is known as disclosure of material event. Once again, every listed company has to disclose all the important material events to stock exchange. Now question is, what are material events? All the events given in para A of part A schedule 3 are deemed to be material, so we always have to disclose that to stock exchange. On the other hand, category B, all the material specified in para B of part A of schedule 3, they are not deemed to be material, so we will apply materiality policy. Now, that materiality policy have to be approved by board of director and uploaded in the website of the company. Every company will prepare materiality policy, listed company. It will be approved by board and uploaded on the website. And one or more KMP must be given authority for making such disclosure of events. So to make this disclosure, we will authorize any KMP. We will give responsibility to any KMP. Let's say CS. CS is also the KMP. So we will give responsibility to the KMP that we will give responsibility to one or more KMP that you are responsible for disclosing all the events. Now the question is, within how much time we have to disclose it? If that event happens in board meeting, if that event is decided in board meeting, then we have to disclose it within 30 minutes of the board meeting to stock exchange. Okay. Acha. If that event is not decided in the board meeting, but that happens within the company, matlab it's an internal event. Let's say some fraud happens within the company. Fraud happens within the company. Is it a material event? Yes. Now, event happened within the company. Within how much time we have to disclose it to stock exchange? We have to disclose it to stock exchange within 12 hours of the happening of the event. जैसे ही वो event हुआ within 12 hours. Immediately when that event happens, immediately within 12 hours, we have to inform the stock exchange. Next, if the event happens outside the company means something, let's say some law changed, some government policy changed, something external, some external event happened which is not in the control of company. In that case, we have to disclose it to stock exchange within 24 hours of the happening of event. Okay. So what are we saying? All the material events. What are we saying? All the material events we have to disclose. We have to do what? We have to disclose to stock exchange, but within how much time? If it is decided in board meeting, then within 30 minutes of the board meeting. If that event happens internal to the company, within the company, then within 12 hours of the happening of event, and if that event happens outside the company, then within 24 hours of the event. And if you do late disclosure, late matlab after this timeline, after 30 minutes or after 12 hours or after 24 hours, then you need to give explanation for the same. For that, explanation is required. That's all about disclosure of events. Simply, you have to disclose the material events to stock exchange. There are some deemed material and some not deemed material events, and you have to disclose it within 30 minutes or 12 hours or 24 hours as the case may be. If there is a delay, then you need to give reasons and explanation. And every company has to make a materiality policy for deciding which events are material. With this, we are done with this. Now, two small provisions. First small provision is your some documents to be sent to shareholder. So every company, there is a requirement that every company has to send annual report to all the shareholders at least 21 days before AGM. That's all. There is one small provision that 21 days before AGM, minimum 21 days before AGM, we have to send annual report to all the shareholders. Okay. Now, how? Mode of sending annual report, whether we will send physical, we will print physical annual report and that we will speed post, or we will send just a soft copy through email. So how we will send the annual report? So those shareholders whose email address is registered with the company, we will send PDF format soft copy to them, full annual report ka soft copy. But to others matlab who have not registered their email with the company, we cannot send them soft copy. So we will send them hard copy, but only of the abridged annual report. Abridged matlab summarized annual report. Pura annual report nahi bhejenge. Full annual report we will not send. We will send only summarized annual report. And if anyone requests for full annual report, only in that case we will send the hard copy of full annual report. That's all about document to shareholder. This point says that every company has to send annual report to all the shareholders at least 21 days before AGM. Okay. And what are we saying? That we have to send full annual report ki soft copy to those whose email is registered, and to others whose email is not there, we will send them only summarized annual report ki hard copy. And if any of them request for the full copy, then we will send them the full hard copy. Now, small point about meeting, about annual general meeting. Small point about annual general meeting. So guys, by when we have to do annual general meetings? Small point about annual general meeting. What are we saying, guys? Usually, if you have studied Companies Act, usually by when a company has to do AGM, within 6 months of the financial year end. Within 6 months of the financial year end. But for the top 100 listed company, just remember, it's not 1000, it's top 100, it's top 100. But so for the top 100 listed company, AGM has to be done within 5 months of financial year end. So when does financial year end? 31st March. So what is 5 months from March? April, May, June, July, August. So for you, the time limit will be 31st August. 31st August. So top 100 listed company must hold their AGM within 5 months of financial year end, and they must provide one-way live webcast. So usually now this top 100 listed company, when their AGM is going on, they provide live telecast over YouTube channel or their website. So it is compulsory for them to provide one-way live telecast. Next is they must provide remote e-voting facility, which means if any shareholder is not able to attend the physical board meeting, physical general meeting, then they can do voting from their home online. That is known as remote e-voting. And lastly, whenever general meeting is done, whatever is the voting result of the general meeting, we have to submit to stock exchange within 2 working days. Within means, let's say meeting held on 8th December, then by 9th and by 10th December, we have to disclose it to stock exchange. That's all about AGM. 3-4 points about AGM is there, that listed only top 100 listed company, they have to do their AGM within 5 months. They have to provide one-way live telecast. They have to provide remote e-voting facility, and they have to submit the voting result to stock exchange within 2 days of the meeting. With this, we are done with law regarding the AGM. Law regarding the AGM. We are left with only last few provisions of this particular lesson. So quickly let me know in the chat box if everybody is clear till here, and let me know how's the Josh in the chat box. Are we clear? We are done with literally 90% portion of your LODR, and the last 10% portion of your LODR is left. So yes. Okay, clear. Okay, moving towards the next topic, that is some mandatory policy. You know, these topics are repeated. Most of this we have already done. Every listed company is required to make these policies compulsory. Compulsory matlab mandatory. So just remember, these policies that we are studying, these policies are mandatory, compulsory for every company. For example, the first one, policy on preservation of document, we have already studied. So every listed company, just understand, every listed company, it is mandatory, compulsory to make these policies. The first one is policy on preservation of document. Second one is material subsidy policy. Third one is code of conduct. Then risk management policy. Then vigil mechanism or whistleblower policy. Then RPT policy. Then materiality policy. Materiality policy, remember we just studied. Then dividend distribution policy and board diversity policy. How many policies are there? 8 policies are there. 9 policies are there. Every listed company has to compulsorily make this 9 policies. These 9 policies are compulsory for every listed company. The first one is policy on preservation of documents, material subsidy policy, policy code of conduct, risk management policy, vigil mechanism policy, RPT policy, materiality policy, dividend distribution policy, and board diversity policy. These 9 policies are compulsory for every company. The first one, what is policy on documents, preservation of document? In this policy, we classified two type of document, one permanent and minimum 8-year wala. Remember, we have already done this. In this policy of preservation of document, we classify two type of documents, those documents which we have to preserve permanently and those documents which we have to preserve for minimum 8 years. Second is material subsidy policy. This policy defines the criteria for deciding material subsidy. So in this policy, we decide criteria how we will define the material subsidy. Now, usually we know what is material subsidy, whose income or net worth is more than 20%, more than equal to 20% of total income or net worth. Next is we have to make a code of conduct. Code of conduct means basically rules and regulations for our directors, senior management, etc. So code of conduct is made for our directors and senior management, and in that code of conduct we also write duties of ID. Ki independent directors, what duties they have, what are the duties of independent director. Next is risk management policy. Who framed this policy? Board of directors. So board of directors are responsible to frame means to make, to implement and to monitor risk management plan, and they do this, board of director, they do this through risk management committee. So the original responsibility to make, implement and monitor risk management plan, the original responsibility is with the board, and board delegates this responsibility to risk management committee. So through risk management committee, they make, implement and monitor risk management plan, and all this thing is given in risk management policy. Next is vigil mechanism or whistleblower policy. What is vigil mechanism or whistleblower? That if anybody is victimized means suffer something wrong, then they can directly access to the audit committee ka chairman. Oh my god, did you hear that? Okay, so coming back to the topic, what are we saying? That we are saying that if anybody is having some problem or some complaint, they can complain it directly to the chairman of audit committee. This is known as whistleblower or vigil mechanism. So why this policy is made? For the protection from victimization, so that if anybody is victimized, suffer something wrong, some complaint, then they can directly complain to audit committee ka chairperson. That is vigil mechanism. Next is RPT policy. We already know every company has to make RPT policy. What do we write in RPT policy? In RPT policy, we give threshold for material RPT. What is threshold for material RPT? Remember, more than 1,000 crore or more than 10%. But royalty wale case mein it will be more than 5%. Remember, we just studied material threshold for RPTs. Yes, yes. So in RPT policies, we have to write about the material threshold for RPT, how we will deal with RPT, how we will approve RPTs, and this policy will be reviewed every 3 years. Just remember, RPT policies have to be reviewed every 3 years. Okay. धमाकेदार performance. They are going to Mumbai for sure. हाँ, literally. ठीक है. Now come towards materiality policy. We already know materiality policy. It determines criteria for material events. In this policy we make criteria how we will determine material events, which events will be material and which events will not be material. This policies will be approved by board, and this policy will be uploaded on the website. So materiality policy we have to upload in the website of the company. It has to be approved by board of director. Next is dividend distribution policy. Now, very important, dividend distribution policy is mandatory only for top 1,000 companies, not all top 1,000. DDT, dividend distribution policy, is mandatory only for top 1,000 companies. Acha, what do we write in dividend distribution policy? In dividend distribution policy, we write how dividend will be decided, how company will fix dividend, ठीक है, and retained earning policy. Retained earning मतलब how much we will keep with ourselves and how much dividend we will declare, and this policies is uploaded in the website, and the link of this policy which is uploaded in the website, uska link we will copy paste in the annual report. So this DDP, dividend distribution policy, we will upload in our website. Now, when we have uploaded it in the website, uska link, the link of that we will upload in the annual report. And the last one is board diversity policy. Board diversity policy means we have to diversity matlab ki all the directors should not be from the one field or one age or one gender. When we have a mix of different ages, different gender, different area, then board diversity, it helps to gain more expertise in the board. For example, make sure that all the directors are not old. We need some young age directors also. For example, nowadays companies, they don't only want millennial employees, they want Gen Z employees also, because Gen Zs are, far more intelligent than millennials. You guys are far more intelligent actually than us people. So if you study, you can literally do miracles much above than what we are doing right now. You can, I mean to say is, if you work and if you apply your brain, you guys can be much more successful than your seniors, than us people. ठीक है. So board diversity policy means NRC must design a diversity of board policy. Now in this board diversity policy, we will design what gender directors we want. Directors should be from different age. What skills do we need? What experience do we need? So what are we looking for in the directors? So what gender, what age, what skills, what experience? So this all we write in the board diversity policy. Let's say some directors should be from this age, some directors should be from this age, some directors should be from finance field, some directors should be from law field, like this. And this, with this we are done with all the mandatory policy. So all these 9 policies are mandatory to be prepared by every listed company. And the second last topic, iske baad some very chikkadu topics will be there, matlab not very very chikkadu topics is there, one page only. And apart from that, just this table is there: event based compliance, yearly compliance, half yearly compliance, quarterly compliance, and one time compliance in your colorful chart. Are we ready? Will the questions regarding compliances come directly like explain quarterly come? नहीं, ऐसे नहीं आएगा मूल्य. It will be like let's say corporate governance report के ऊपर question आ गया. Let's say by when company have to submit a corporate governance report, and to whom, and what we will write in the corporate governance report. So these kind of question can come from one specific point. They will rarely ask you to write line by line quarterly compliance. So in CMSL, you expect case law questions. Very less direct question will come. You expect more and more of case law questions in your this subject. So we are doing our last major topic. Iske baad chikkadu topics will be there, and major topic only. This is last. This is last, compliances. Last major topic, compliances. ठीक है. Acha, I was wondering if if there is any small lesson, you can try revising on your own. Though I will provide the short notes, this short notes for all the lessons. Live revision, we will be able to cover important lessons and difficult lessons. So important lessons are part B से ICDR, LODR, SBEB and mutual funds. ठीक है. So today we are completing LODR. After this, we will also do the remaining provision of ICDR. ठीक है. Or I can upload a small video in this, or we can do live also if you want. And tomorrow we will be doing these 2 topics, because these 4 chapters are like very important on the basis of your past year paper pattern. So past year paper pattern ke according, these 4 lessons are very important. So we are done with 2 mountains of part B. We will be doing 2 mountains tomorrow, SBEB and mutual funds. These are 2 mountains. So these 2 mountains we will be doing tomorrow, SBEB and mutual fund. Apart from this, is there any lesson which you feel is, ma'am, it's very technical, please cover this also in the revision? Because let me try to cover, and very less number of people are attending the revision lectures also. So I'll be providing short notes for all the lessons, and revision we can do for the technical lessons and the important lessons. Okay. So apart from this, do you have any request for any specific lesson? Ki ma'am, cover this lesson also. This lesson also is like very difficult and very technical to understand on own. So I'll try to cover that. We can do one more revision on 10th also. Your mock test is on 11th, right? Your mock test is on 11th. So on 10th also we can cover some lessons, or tomorrow we can do a long revision and we can cover some more lessons in short. So is there any other lessons for which you want me to cover the revision? Is there any other lesson for which you want me to cover the revision and to cover in the revision lecture? Yes, let me know in the chat box. Yes, let me know. Let me know in the chat box. Practical question. Yes, practical questions are very important, like supreme important. So on 10th, can we do one session for practical questions? We can do one session on 10th for practical questions. Yes. Acha, apart from practical question, is there any other requirement for any other lesson? If you'll say, ma'am, this lesson is very technical, please cover this also in the revision, any 2-3 lessons or any more lessons of part A or part B, I can cover that also in the revision lesson, depending on your requirement. So one lesson which I feel is a little technical is takeover, I feel. So if time permits, then tomorrow or day after tomorrow, we can cover takeover also. Yes. SAST, Amulya. I just said takeover, you also said takeover. See, we can read each other's mind now. Yes. Okay. Takeover also will try to cover. So these important lessons are 5 to 6 important lessons of part B we will cover in the revision. Okay. Now let's just quickly complete our LODR session. And last big topic, after that small topics is there. Last big topic, everyone, some compliances. So basically there are some compliances which you have to do every quarter, half yearly, every year. So let's say there are some yearly compliance which every listed company have to do every year, har saal, every year. There are some half yearly compliance, means every listed company have to do in 6 months, every 6 months half yearly compliance. There are some quarterly compliance ki har quarter mein we have to do, every quarter, like Q1, Q2, Q3 and Q4. QT. And you are a cutie. Yes, Priya and Amulya. Okay. Q1, Q2, Q3, Q4 matlab quarter 1, quarter 2, quarter 3 and quarter 4. And lastly is your one-time compliance. One-time matlab ki just one time when this event happens, that's it. You don't have to comply this every year or every month or every quarter. No. So first one is your one-time compliance. One-time compliance is your appointment of compliance officer. When do you have to appoint compliance officer? One time only. Ek baar kar liya, done. You don't need to appoint every year. One time. First. Okay. So, whom do you appoint as a compliance officer? CS. If there is any vacancy in compliance officer, you fill it within 3 months. This is repeated. We have already studied this topic regarding compliance officer. Next is appointment of RTA. This also we have done. Remember, this page mein we have done this RTA wala point, where here, if you remember, we have already done share transfer agent wala, ki if there are less than 1 lakh shareholder, you don't need to appoint share transfer agent. But if there are more than 1 lakh shareholders, you need to appoint share transfer agent, or you need to register with SEBI as a category 2 STA. Okay, remember this we have already done. So coming back to this topic, so what are we saying that when do you need to appoint RTA? So only if there are more than 1 lakh security holder. Only if there are more than 1 lakh security holder, then only either you need to appoint RTA, or you yourself should register as a category 2 RTA, category 2 STA. This is one time. Next is your quarterly compliance. Quarterly means every quarter you have to do this compliance. First, every quarter you have to, really sorry, one small point. Yes, acha. Every quarter में whatever investor complaint you received, you have to submit a statement to the stock exchange. So you have to submit quarterly statement. Here you have to submit statement to stock exchange. So you have to make a statement on all the pending investors complaint, how much on the investors complaint received, complaint solved, complaint unsolved complaint. So you have to make a statement on complaint received, complaint solved, complaint unsolved, pending complaints, and that statement you have to submit to stock exchange within 21 days of quarter end. ठीक है, every quarter मतलब year में four times in a year. After every quarter end, within 21 days, we have to submit the complaint statement, investor complaint statement to stock exchange. ठीक है, next is corporate governance report. Corporate governance means whether we are complying with the law all the properly or not. ठीक है, तो every quarter we have to prepare compliance corporate governance report and we have to submit it to stock exchange within 21 days of quarter end. Next, we have to prepare a shareholding pattern. In short, we write it SHP. Shareholding pattern means which shareholder is holding how much shares, and that shareholding pattern we have to prepare quarterly and we have to submit it to stock exchange within 21 days of quarter end. ठीक है, we have to submit it to stock exchange within 21 days of quarter end. Next is your this is done. Guys, next is your deviation or variation. That is whenever we will make public offer in total paid up share capital. So basically here one point is given ki whenever we will make public offer, or rather I should say issue of shares. Guys, whenever I will issue any shares, then I will raise money. ठीक है, so that money I can use only for the purpose mentioned in the prospectus. But if there is a deviation or variation in the use of the funds, which means I am using that money for something else, ठीक है, then I have to prepare a quarterly report on the use of those proceeds, on the use of those money, how and where I use that money, and we have to update that to stock exchange quarterly until utilization. Time limit is not given here. Every quarter we have to update to stock exchange until we have fully utilized that money. So what are we saying? That whenever we make offer, public offer, or we make issue of shares and we raise money, then for which purpose we use that money, we have to make a statement on the use of that proceeds and we have to quarterly update it to stock exchange. Next is monitoring agency report. What is this monitoring agency report? So here one point is given. Remember we studied that some companies have to appoint a monitoring agency. Which companies? अच्छा, last year chapter में we public offer में we studied in the ICDR chapter, if you remember. अगर बहुत बड़ा IPO है, then we have to appoint a credit rating agency as a monitoring agency, if you remember. ICDR chapter में we studied. Some companies, while doing IPO or public offer, we have to appoint a monitoring agency, and that monitoring agency gives a report. That is known as monitoring agency report. Now, if there are any comments on that monitoring agency report, then that monitoring agency report every quarter we have to submit within 45 days of the end of the quarter to the stock exchange. And lastly, quarterly financial results every quarter, Q1, Q2, Q3, not Q4, except Q4. Why except Q4? Because Q4 में direct yearly का पूरे साल का पूरा yearly financial result will be submitted. So here only Q1, Q2, Q3 will come, first quarter, second quarter, third quarter. Quarterly financial results, standalone plus consolidated. Standalone means only our company's financials. Consolidated means our company plus our subsidiary plus our joint venture, all together financial statement of all the listed company plus subsidiary. So we have to submit our quarterly financial results, standalone and consolidated, within 45 days of the end of the quarter. And lastly, whatever is the results, quarterly results, we have to do newspaper publication also. Here we are saying that we have to file it to stock exchange. Second way, we are saying that we have to do newspaper publication also within 48 hours. 48 hours matlab basically 2 days, right? 12 to 24, 44, yeah, 12 4s are 48, 2 days. 2 days may we have to publish in the newspaper publication. That's all about quarterly compliance. Once again, every quarter we have to prepare a statement on complaints, corporate governance report, and shareholding pattern. And these 3 things we have to file to stock exchange within 21 days of quarter end. Next, we have to we have to get a report from monitoring agency, which is known as monitoring agency report, and we have to submit quarterly financial results within 45 days of the end of quarter, except for Q4. Next is we have to, if there is a deviation or variation in the use of issue proceeds, then we have to disclose it to stock exchange until utilization. And lastly, every quarter ka result we have to publish in newspaper within 2 days, that is 48 hours. In examination na write 48 hours. With this we are done with quarterly compliance. Next is half yearly compliance. Half yearly means 2 times in a year, every 6 months. Half yearly compliance is one RPT wala. RPT disclosures you have to make. Secondly, you have to disclose your half yearly result. Half yearly results. Guys, you know, results you have to disclose. You have to disclose quarterly results also. You have to disclose half yearly results also, and you have to disclose annual results also. Are you understanding? Jise मान के चलो, if the whole year is your 1st April till 31st March, ठीक है? Now first quarter is ending on April to June, then July to April, May, June, July, August, September, October, November, December, January, February, March. हाँ, ठीक है. So there are 4 quarter. ठीक है. Now here we will disclose quarter 1 result in June. Then again September में we will disclose quarter 2 results. ठीक है. Now December में we will disclose quarter 3 results. अच्छा wait, sorry. हाँ. First June में we will disclose quarter 1 result. Then September में we will disclose quarter 2 results, and then September में also we will disclose half yearly results. Understanding? ठीक है? Done. Now December में we will disclose quarter 3 का result, and then 31st December को directly we will disclose पूरे साल का yearly results. Are we clear with this? Whole year's yearly result. Now coming to half yearly compliance, there are 2 half yearly compliance given, one RPT ka and one results, half yearly result. Acha, RPT statement, you have to prepare a statement on RPT and you have to submit it to stock exchange plus upload it on the website within 15 days of publishing half yearly result. So whenever you will publish half yearly results, wahan se within 15 days you have to submit statement on RPT. And half yearly results means asset liability, that is balance sheet and cash flow. Balance sheet, cash flow statement. So you have to prepare half yearly statement on asset and liabilities and cash flow, matlab half yearly results, and that half yearly result you have to submit to stock exchange. Time limit is not given. Okay, and with this we are done with half yearly compliance. Next one is your yearly compliance. Yearly compliance mein what all will come? First one is you have to prepare a compliance certificate where you will write whether you are complying with the law or not. This compliance certificate is jointly made by compliance officer plus RTA. So CS, who's compliance officer plus RTA, will jointly make a certificate known as compliance certificate, and we have to file it to stock exchange within 30 days. Next, we have to pay annual fees within 30 days. Every year we have to pay annual listing fees. That annual listing fees we have to pay within 30 days of the end of the year after financial year end. After financial year 30 days, matlab your deadline will be 30th April. ठीक है. Next is you have to prepare SEC audit and SEC compliance report, and you have to submit that within 60 days after FY end. matlab deadline will be 30th May. Remember, we have already done SEC audit and SEC compliance report, and this is applicable to listed company and their material subsidy. Next is you have to prepare annual returns, annual results. Annual result you have to prepare standalone as well as consolidated. So you have to prepare your audited standalone results plus audit report, plus audit qualification. Qualification means adverse remark or negative remarks given in the audit report. All this thing you have to file to stock exchange within 60 days after FY end, that is by 30th May. Next is you have to submit annual report to stock exchange plus upload it in the website. You have to submit your annual report to stock exchange plus upload in the website on or before dispatching. So basically on or before dispatching your annual report to shareholders. Before that you have to upload it in the, whenever you send your annual report to shareholder, before that you have to upload in the stock exchange website, and you have to submit it to stock exchange. Lastly, if there is any changes in the annual report, if you make any revised annual report or you make any changes in the annual report, then you have to submit your revised annual report within 48 hours after AGM. So whenever, if in annual general meeting, if you will make changes in the annual report, then that revised annual report you have to submit to stock exchange within 48 hours after AGM. Next is, you have to send annual report to all the shareholders also 21 days before AGM. This is repeated. We have already done this. And lastly, you have to take a certificate from practicing company secretary who will certify the share transfer process. Basically, we have to take a certificate from practicing company secretary that our share transfer process is proper. And he will give this certificate 30 days after the financial year end. Compliance officer means any senior officer, right, ma'am, as per insider trading. See, Anand, compliance officer, the definition in insider trading is different. So there it means the person who is responsible to comply with insider trading. So there different definition of compliance officer is given. But for LODR, there is a different definition of compliance officer given. So for LODR, only a practicing company secretary can be appointed as a compliance officer, which is mandatory as per LODR regulations. Are we clear with this, Anand? I hope this is clear to you. So with this, we are done with yearly compliance. Okay. Next is your event-based compliance. You know, most of these points are already repeated, which we have already done from our chapter. Event-based compliance means if this event happens, then only you need to comply. Otherwise, you don't need to comply. Okay. So what are we saying? That event-based compliance. What is the first event-based compliance? You have to appoint RTA if needed, if RDA is needed. So basically, if your total number of security holders is more than 1 lakh, which we have already studied, you have to appoint RTA. And whenever you appoint RTA, you have to inform stock exchange within 7 days of appointing RTA. So these requirements are only if this event happens. If this event does not happen, then you don't need to disclose it to stock exchange. So these are event-based compliance. Matlab, whenever you appoint RTA, whenever this event happens, immediately you have to inform to stock exchange within 7 days. Next is pre-listing shareholding pattern. SHP means shareholding pattern. Before getting listed in stock exchange, whenever you get listed in stock exchange, what is your pre-listing SHP? What is your shareholding pattern before listing? That you have to inform to stock exchange 1 day before listing. So 1 day before listing, you have to give your shareholding pattern to stock exchange. Next is, if there is a change in shareholding pattern more than 2%. If your shareholding patterns change more than 2%, let's say more than 2%, there is increase in retail shareholders. Shareholding pattern changed, then we have to prepare updated shareholding pattern and we have to inform it to stock exchange within 10 days of such change. So let's say if today on 8th December, shareholding pattern changed, then we have to make updated shareholding pattern and within 10 days, that is by 18th December, we have to disclose it to stock exchange. Next is promoters reclassification. If promoters change, if let's say Mr. A was earlier promoter, now he is no more promoter. So if there is change in promoter, we have to disclose it to stock exchange. Plus we have to mention in the board minutes within 24 hours, matlab 1 day, within 24 hours. Next is, if there is any scheme of arrangement. Scheme of arrangement matlab merger, amalgamation, takeover. Merger, amalgamation, takeover. They are known as scheme of arrangement. Some other points are also included, mainly merger, amalgamation, takeover or any other arrangement. So if there is any merger, amalgamation, takeover, scheme of arrangement, your draft scheme of arrangement, you have to submit to stock exchange for getting NOC from stock exchange. Whenever there is a merger, amalgamation, takeover, you have to submit the scheme to stock exchange to get NOC from stock exchange before filing application to NCLT. So let's say there is a listed company, two listed company wants to merge. Let's say Vodafone Idea wants to merge. Before merging, before filing application to NCLT, they have to get NOC from stock exchange, and for that they have to submit the draft scheme to stock exchange. Next is, whenever there is a split, consolidation, duplicate certificate. Let's say some shareholder wants duplicate certificate, or we did consolidation or subdivision, or some shareholders want to split their share certificate. Basically, in these cases, we have to issue new share certificate to the shareholders. So if consolidation happens, subdivision happens, split happens, or some shareholders want duplicate share certificates, in these cases, we have to issue the new share certificate within 30 days of request. Let's say Anand is our shareholder. He is holding physical shares and he lost his share certificate. It's just a piece of paper. He lost it. He can make a request to the company for duplicate share certificate. Then within 30 days, company has to issue new share certificate. Next is, if there is a loss of share certificate, then we also have to inform to stock exchange within 2 days. So let's say Anand lost his share certificate, he asked the company for duplicate certificate, then company will first inform the stock exchange within 2 days, and then company will issue new certificate to Anand within 30 days. Okay? Next, registration of transfer and transmission. So whenever there is a transfer of security, we have to register that transfer within 15 days. And whenever there's a transmission, we have to register that transmission within 7 days. Acha, transfer matlab, I sold my shares to Priya. That is transfer. Company has to register that within 15 days. Transmission matlab, Mr. A was shareholder, Mr. A died. After his death, automatically his shares are transmitted to his legal representative. That is transmission. In that case, company has to process it within 7 days. Transmission के case में company has 7 days time limit, and transfer, in the case of transfer, company has 15 days time limit. Next is record date and book closure. Guys, whenever company wants to declare dividend to shares, or company wants to do voting, or company wants to issue bonus share, right share, we have to determine who are the shareholders and how many number shareholders are there. For that, we fix a date which is known as record date or book closure. So whenever we fix a record date or book closure, the date of that record date or book closure, we have to inform to stock exchange within 3 days in case of right offer, 7 days in case other, 7 case in other cases. For example, company wants to make right offer. For that purpose, if we are fixing record date or doing book closure, then at least 3 days before we have to inform to stock exchange, 3 days prior. Or let's say company is giving dividend. For that, we need to fix the record date or book closure. Then at least 7 days before that, we have to inform to stock exchange. Okay? Right issue ke case mein 3 days before, and in other cases 7 days before. Lastly, if there is any change in website content, if any details of the company is changed, then we have to update the website within 2 working days. So let's say company ka address changed. Example, address of company is changed. Then we need to update that new address in the website within 2 working days. We need to update our website within 2 working days whenever any changes is there. So this is all about event-based compliance. Event-based compliance. So all these number of days, we have to remember it by continuously revising it again and again. 7, 1, 10, 24 hours, 30 days, 2 days. Only these event-based compliance mein days are different. Otherwise, if you will see yearly compliance, mostly the time limit is 30 days, 60 days. 30 days, 60 days by the end of the year. ठीक है. Changes of annual report के case में 48 hours is there. Otherwise, mostly it is like 30 days or 60 days. If you will see half yearly compliance, there is 15 days time limit. If you will see quarterly compliance, mostly there is 21 days and 45 days. Mostly you will see how much time limit, 21 days and 45 days. So it's easy to remember. And one time के case में तो we already know one time. Quarterly में mostly there are 21 days time limit, 45 days time limit. Half yearly के case में 15 days. Yearly में mostly there are 30 days and 60 days time limit. ठीक है, तो this way you can compare and you can try to memorize the time limits. With this, we are done with all the compliances. Now, last few provisions, and we'll just quickly sum up with today's session of LODR. We are almost done with LODR. Just stick with me for last few minutes. What are we saying? Some law is applicable only for top 1000 and only for top 2000 listed company, and this is repeated. We already have studied. There are some compliances which are not applicable to all listed companies, but they are applicable only to top 1000 or top 2000 companies. So what LODR provision are applicable only to top 2000 listed companies? They must have at least 6 directors on the board. They must have at least how many? Minimum 6 directors. Acha, other companies may, normally public companies may minimum 3 directors ka time limit is there. But in top 2000 listed companies, there should be at least 6 director, minimum 6 director, and their quorum will be 2/3 or 1/3 or 3, whichever is higher, plus 1 ID. Do you remember we have already studied this quorum for top 2000 listed company, board meeting ka quorum, 1/3 or 3, whichever is higher, plus 1 ID. So this is repeated. Now there are some compliances which are applicable only for top 1000 listed companies. So what are they? Only top 1000 listed company have to make a RMC, risk management committee. We have already done this. Yes. Only top 1000 listed company have to make a DDP, dividend distribution policy. Already done this. These 2 points are repeated. These 2 points are repeated, already repeated in LODR. 3 other points are there. Only top 1000 listed company have to make one independent woman director. Independent bhi, woman bhi. Independent also, lady also. ठीक है? Only top 1000 listed company have to appoint one independent woman director. Secondly, top 1000 company have to compulsorily take insurance for their IDs. Insurance for their independent directors. ठीक है? This is applicable only to top 1000 listed company. They have to take directors and officers insurance. D&O insurance means directors and officers insurance for independent director. And lastly, top 1000 listed company must make a report which is known as BRSR. BRSR. What is BRSR? Board BRSR does not mean board resolution, special resolution. It means business responsibility and sustainability report. Basically, in this report, we will write about our responsibility towards society, our responsibility towards environment, social governance, etc. So basically, there is a requirement that every top 1000 listed companies have to make a BRSR. BRSR means business responsibility and sustainability report, which we have to attach along with annual report. These requirements are applicable not to all listed companies, but to only top 1000 listed company, which is repeated. Now, if you'll come here, ma'am, can stock exchange put penalty? Can stock exchange give these order to listed company? Yes. So here one point is given ki ma'am, what if any listed company will not comply with LODR regulation? Contravention is given here, liability for contravention, that if any listed company does not comply with LODR regulations, in that case, stock exchange have power, BSE and SE, stock exchange, they can impose fine. They can suspend their securities from trading. They can freeze promoters holding, promoter shares freeze or any other action. ठीक है? In addition to penalties prescribed in securities law, the penalties which are prescribed in securities law, that will be there. In addition to that, stock exchange can impose fine, stock exchange can suspend, stock exchange can freeze or any other action. ठीक है? So these 3 powers are there with stock exchange. Just remember, if any company does not comply with any provision of LODR, if any listed company does not comply with LODR, stock exchange have 4 powers. Stock exchange can impose fine, suspend their security from trading, and freeze promoters ke shares or any other action. And these are in addition to penalties. Penalty to lagegi. In addition to penalty, stock exchange have these 4 powers. That's it. What is role of CS in employment and what is role of CS in practice? Last topic. After that, your LODR is done. Iske alawa ek chotu sa topic will be there for non-convertible security. That's it. Okay. Last point, role of which is very easy. This is common sense. These 2 are common sense and repeated. Common sense and repeated. I want you to read this one. I have summarized all the points for you. Just give me 1 minute. Yes, just give me 1 minute. And role of CS in employment and role of CS in practice. You can take the screenshot of this. Yes, ma'am, regulation numbers need to be remembered. It's not possible. If you have not remembered regulation numbers in the regular classes or up till now don't try to remember. मतलब अभी कुछ नया try मत करना. Don't try anything new right now. Right now you have to revise what you have like almost done. ठीक है, तो it's okay if you don't remember the regulation numbers. It's fine. You can write in the examination like according to the applicable regulation. You can write what? According to the applicable regulations. ठीक है? Am I clear, Amulya? ठीक है? Am I clear? Is your doubt all clear? We are almost, I'm so happy. I'm feeling like so satisfied, literally, and so happy because we are done with almost all the provisions of LODR. Last topic of LODR is left, which is your ठीक है, last two topics is left of LODR. We'll just quickly एकदम complete with this. The role of CS in employment. Next topic, role of CS in employment means if there is a CS who is doing job in that company, in that listed company. So what is his role? First role is he is appointed as a compliance officer. We have already studied. He will make sure all the compliances are done. He will coordinate with SEBI, Stock Exchange, Depository, everybody. He will make sure all the filings and reports are submitted to Stock Exchange and SEBI on time. He will monitor the grievance redressal, and he will submit the half-yearly compliance certificate, and he will be a part of senior management. Don't you think all the points are repeated? We already know. See, CS is appointed as a compliance officer, which means he have to make sure that we are in compliance with all the law. He have to coordinate with all the government bodies, SEBI, Stock Exchange. He have to make sure all the filings and reports are sent to Stock Exchange. He will monitor the grievance redressal. Always grievance redressal is monitored and handled by CS. And he will give half-yearly compliance certificate, and he will be a part of senior management. Now, what is the role of CS in practice? Which means if there is a practicing company secretary who is not in job in the company, who is not doing job in the company, is a practicing CS. What is his role? Basically, we get certifications from practicing company secretary whenever we need signature of a practicing of any outsider. Then we take, for example, we appoint PCS majorly for SEC audit and SEC compliance report. Don't you think we have already done this? Yes, we have already done this. SEC audit is done by practicing CS. SEC compliance report is given by practicing CS. Secondly, CG report is also given by practicing CS. Corporate governance report. We have already studied about corporate governance report also here in this table. Here you can see नहीं ये तो compliance certificate. Corporate governance. Where is corporate governance? कहीं तो इस table में था. Somewhere in this table. Yes, you can see here corporate governance report, half quarterly compliance mein. Quarterly compliance mein we have seen we have to submit a quarterly corporate governance report. In this corporate governance report, there will be a corporate governance certificate also, and that corporate governance certificate will be given by a practicing company secretary. Next is if any director is disqualified or not disqualified, that we have to take a certificate from a practicing company secretary that whether director is that our directors are not disqualified. Okay, so we have to take a director disqualification certification. And lastly, whenever we do transfer of or issue of shares, we have to get certificate from practicing company secretary. So practicing company secretary gives 4 certificates. Number 1, certificate for transfer or issue of shares. Number 2, corporate governance certificate. Number 3, directors disqualification certificate. And lastly, SEC audit report and SEC compliance report. SEC audit report, you can add here report, SEC audit report and SEC compliance report. That's all about role of CS in employment and role of CS in practice. Ekdam last topic, final last topic of LODR, and I'm so happy. Let's just keep our happiness for 2 minutes more. Last topic of LODR for those companies which have only listed their non-convertible securities. Non-convertible securities, example, non-convertible debenture, non-convertible debentures, or let's say non-convertible preferentials, debentures or bonds or non-convertible preference shares. Non-convertible means they cannot be converted into equity shares. Okay, so for only those listed companies, this compliances will be there. Acha, this compliances, this which you can see here, this compliances are only for those companies who have not listed their equity shares, but they have listed their non-convertible security. First one is, if in the board meeting, we are going to do this 5 things. What 5 things? If in the board meeting, we are going to change the rights of NCDs, we are going to change the payment dates, on which date we will make the payment of interest, or the date of payment of interest, or the date of redemption. Or we are going to approve the financial results, or we are going to issue new debt securities, or any other matter affecting debenture holder. If in the board meeting, we are going to do these 5 things, then 2 days before the board meeting, we have to give prior intimation to stock exchange. Okay? If the company which has listed their non-convertible security is doing a board meeting to discuss these 5 things, then 2 working days prior, at least 2 days before, we have to give prior intimation to stock exchange. We have to inform to stock exchange. Are we clear with this? Everybody? Okay. Now, in this 2 working days, you will exclude, in calculating this 2 working days, you will exclude date of sending intimation and date of the meeting. So you will exclude date of sending intimation and date of board meeting. So date of meeting and date of sending intimation ko hata ke 2 days prior you have to give intimation to stock exchange. Similar provision we have studied for equity listed company, normal listed company also. So if the meeting is on 8th, board meeting is on 8th December, then 2 days before, matlab removing 2 days, you have to send it to stock exchange, you have to intimate to stock exchange lastly by 5th of December. Next is, okay, next point, what is the next point? See, if you are going to do annual general meeting or extraordinary general meeting, so basically if you are about to do general meeting either for discussion of results or for issuing fresh debt securities, okay, in these cases you have to give intimation to stock exchange on or before when you are sending notice of the general meeting. So basically whenever you will do general meeting, you will send notice of the general meeting to all the shareholders. On the same day when you will be sending notice of the general meeting to all the shareholders, you also have to send intimation to stock exchange. Okay. Next, whenever there is a debenture holders ki meeting happening, then when you will send notice for that meeting, on the same day you also have to inform to the stock exchange. So there are 2 intimation givens. If AGM or EGM is happening or meeting of debenture holder is happening, then on the same date, on or before, when you are sending notice to shareholders or debenture holders, on or before the same date, you have to inform to stock exchange also, you have to intimate to stock exchange also. Next, they also have to submit their quarterly and annual results to stock exchange. First one, quarterly results, Q1, Q2, Q3, we have to disclose to stock exchange within 45 days of the end of the quarter. And annual results should be audited. Annual audited result we have to submit to stock exchange within 60 days. Okay? And we have to submit copy of results to debenture trustee also. If our company have issued debentures, of course not. Why debenture trustee? Because it is a debt listed company now. We have listed our non-convertible security. What is non-convertible security? Mainly NCDs, non-convertible debentures or non-convertible preferential. So there must be a debenture trustee now. So we have to send a copy of our annual results and quarterly result to debenture trustee also on the same day. Matlab quarterly result we also have to send to debenture trustee within 45 days, and annual results we also have to send to debenture trustee within 60 days. Next is what security cover we have given. Security cover means if we have issued secured debentures, then how much security we have given to them. That security cover also we have to inform every quarterly, every half yearly and annually. Lastly, we have to get a credit rating from a credit rating agency, and we have to review that credit rating every year compulsorily if we have listed our non-convertible security. And lastly, we have to, whenever we pay interest or dividend, or we redeem debentures or security, in that case we have to give a payment confirmation within 1 working day of making the payment. This is the last point. Sorry, acha, one correction. Okay, yes, the date when your interest payment, dividend payment or redemption payment becomes due, within you have to pay it on the same day, and you have to give a confirmation, payment confirmation to stock exchange. See, all these disclosures are given to stock exchange. You have to give a confirmation to stock exchange within 1 day when it become due, that yes, we have done all the payment. So let's say today interest payment, dividend payment, redemption payment is due, then I have to make sure that I pay it, and by tomorrow, that is by 9th of December, I have to give the payment confirmation to stock exchange that all the payments are done. So these compliances are only for those companies who have listed their non-convertible securities, and with this we are done with literally 100% of LODR. 100%, though it took a little bit more time, but we are done with like 100% of LODR, full LODR, complete LODR. Please let me know in the chat box if this is clear or not. If you're able to understand LODR and you're able to recall all the topics, and now it will be easier for you to revise it. And see, trust me, if you will even cross-check it with your ICSI material and with your study material, all topics are included in your short notes. Literally every topic is there. So this particular PDF, 10 pages PDF, I think only 13 pages PDF, 12 and half. Only this 12 pages PDF you can refer one day before exam, or now onwards you don't need to refer the full material. Language, language you already know how to write in examination, because you have, I think you have referred the study material at least 2 times by now. You should have referred the study material at least 2 times by now. Now onwards, you don't need to refer the material again. If you have already referred it once or twice, now onwards, you can only go through the short notes. These are enough if you are clear with the lecture. Hello everyone, I am CS Ishika Agrawal. So in today's video, we are going to revise the remaining topics of SEBI ICDR regulations, which is your lesson number 8 of CMSL, CS Executive. So let's get started. We have done with IPO and FPO and all the requirements of promoter contribution and lock-in requirements and other requirements of IPO and FPO. All these topics we have already completed. So from today, so in this video, we will start with the topic of fast track FPO. Fast track FPO means where basically you don't need to go through the process of filing draft prospectus to SEBI. By skipping that, you can go with the fast track process of FPO, that is further public offer. So how many topics are remaining in this particular lesson? 9 topics are remaining: fast track FPO, right issue, preferential issue, QIP, IDR, SME, bonus issue, IGP and SME. We have summarized all the topics to make it simplest for you. So the first topic is fast track FPO. Fast track means where you don't need to file the draft prospectus to SEBI. Without going through that process of draft prospectus, you can directly go ahead with the listing, and you can go ahead with the FPO. So it takes less time to complete. But you should be eligible to make fast track FPO. There are some eligibility conditions given. In order to make fast track FPO, you should be eligible. First eligibility condition is you should already be listed for 3 years, which means it should already 3 years should already complete after your listing, which means let's say you listed 2 years back, or let's say it's been only 2 years 11 months since you have listed, then you're not eligible for fast track. You will be eligible for fast track only if you have completed 3 years of listing. Secondly, your promoters shares should be in demat form. All the shares which are held by promoters or promoters group should be in demat form, not in physical form. Thirdly, average market cap of public shareholding should be at least 1,000 crore. Now, what is market cap? Market cap means total market capital of the company. What is total market capital? Total number of shares into market price. Okay, but here we don't have to take total market cap. We have to take market cap of only public shareholding. Means market cap of only those shares which are held by public, not promoters. So basically, we'll take only those number of shares which are held by public into market price. If we will do this, we will come to average market cap of public shareholding. And only if your average market cap of public shareholding is at least 1,000 crore, then only you will be eligible for fast track. Next is your annual trading turnover. So the law says that your annual trading turnover should be minimum 2% of weighted average listed shares in the last 6 months. So first we will check the total number of listed shares in the last 6 months. We will calculate average of that. We will calculate basically weighted average for that. We will calculate weighted average listed number of shares, okay, in the last 6 months. Now, uska at least 2% should be traded by everyone, which means your shares should be frequently traded. For example, there is 2 restaurants. In one restaurant, people are, going and eating dosa. Another restaurant is empty. Nobody is going and eating dosa. Automatically, you will have an impression that the restaurant which is filled with people is good and the other restaurant which is empty is not good. Same way, the companies whose shares are frequently traded now, they are considered to be a good company. So we are saying that your shares should be frequently traded, at least 2% of weighted average shares. So what are we saying? Your trading turnover, your total annual trading turnover, पूरे year का trading turnover should be at least 2% of weighted average shares in the last 6 months. Okay. Now, this is total trading turnover. Out of that, this is total trading turnover. But here one point is given: if public shareholding is less than 15%, which means if there is any company where majority promoters holding is there, if there is any company where public shareholding is only less than 15%, in that case you have to use free float shares. Free float shares means those shares which are with public. Here we will exclude those shares which are with We will exclude those shares which are with promoters. ठीक है. Free float shares means those shares which are with public. ठीक है. So if there is any company in which public shareholding is less than 15%, in that case we will use only free float shares. Free float shares means only those shares which are with public. We will not take those shares which are with promoters. ठीक है. So if there is any company in which public shareholding is less than 15%, then what we will do, we will take annualized trading turnover should be at least 2% of weighted average free float shares. We will take only free float shares. Okay, next. Out of this total trading, let's say annualized total trading is whatever, let's say 10 CR. Out of that, delivery based trading should be 10% of total trading turnover. So isse above wale point mein we were calculating total trading turnover, and total trading turnover should be at least 2% of weighted average shares. Out of this total trading turnover, delivery based trading turnover should be at least 10% of the total trading turnover. Now what is delivery based turnover means? Where you do trading on delivery base. Delivery base matlab I am purchasing Reliance ka share on delivery. I am taking delivery of Reliance share. Basically it means we will not include intraday trading. Intraday trading means I purchase 100 shares of Reliance today, and today only I sold 100 shares of Reliance, which means I am doing intraday purchase and sale on the same day, which means I am not taking delivery of shares. So we will not take intraday. Only delivery based turnover should be minimum 10% of total trading turnover. Delivery based trading turnover should be at least 10% of total trading turnover, and we will check this data of last 6 months. Okay. Next is you should be compliant company. If you are a defaulter company, we will not allow you to go for fast track. So you should be in LODR compliance for last 3 years. But there is one exception, that if in the last 3 years you did violation in board composition, which now is rectified and you have made full disclosure of it, then it's fine. You will be allowed to make fast track. What are we saying? That if you want to go for fast track FPO, you have to comply with LODR in the last 3 years. If you have not complied with LODR in the last 3 years, you will not be eligible. But here we are saying that if there is only one violation, board composition ka, which is now corrected and fully disclosed, then it's okay. You are eligible to make FPO fast track. And if there is only monetary fines imposed by SEBI or stock exchange, then you will not be disqualified. You will still be eligible to go for fast track. If only monetary fines are there, they are not that serious. Basically, chota mota monetary fines is there. It's allowed. It's fine. You will still be eligible to make fast track FPO. Next condition is you have to solve minimum 95% of your investors' complaint till the last quarter before you file the application for fast track. So the date on which you file an application for fast track, till the quarter ending before it, you have to make sure that you have solved at least 90% of the total complaints, and there should be no pending show cause notice by SEBI or stock exchange against the company. If there is any pending show cause notice means you have done some crime or fraud and SEBI has issued you show cause notice. In that case, you will not be eligible to go for fast track, because you are a defaulter company now. We will allow only clean and good companies to go for fast track. But there is one exception, that if only penalty prosecution have started. Penalty prosecution have already started. So penalty is, it's not that serious matter. So if penalty prosecution is going on, you can disclose it and you can go ahead with the fast track FPO. But the intention of this show cause notice is crimes and frauds. If you have done any crime or serious fraud for which SEBI has issued you show cause notice, now you cannot go for fast track. But if only penalty prosecution is going on, it's fine. You can disclose it and you can go ahead with the fast track process. Next is there should be no if there is any settlement order in the last 3 years, then you have to disclose all the settlement order before going for fast track. So if there is settlement order, can you go for fast track? Yes, you can go for fast track, but only thing is you have to disclose to SEBI about all the settlement orders done with the company or promoter or directors. Next is your shares should not be suspended from trading in the last 3 years by stock exchange. If you see, most of the requirement is for last 3 years. Okay, so if in the last 3 years stock exchange has suspended your shares from trading, then you will not be eligible to go for fast track FPO. Next is there should be no conflict of interest between company and merchant banker, issuer and merchant banker. And lastly, if there is any audit qualification means negative remarks of the auditor, negative comments of the auditor, then we have to prepare our financials again, prepare our balance sheet and P&L again again by rectifying this negative remarks, matlab isko correct karke then we have to prepare it again. But if it is not possible to prepare it again, then just disclose it clearly. If you comply with this 12 conditions, then only you will be eligible for fast track FPO. Coming again with the condition of fast track FPO, you should be listed for 3 years, your promoter share should be in demat form, your public shareholding ka market cap should be minimum 1000 crore, your annual trading turnover should be minimum 2% of average shares. Now average shares ki jagah you will take free float shares if public shareholding is less than 15%, and your delivery based turnover should be minimum 10% of total trading turnover. You should be LODR compliant, but if only board composition violation is there which is corrected, then you are eligible to go for fast track. If there are only monetary fines, then you are eligible to go for fast track. You will be eligible to go for fast track only if you have solved minimum 95% of the total investor complaints, there is no pending show cause notice, and if there is penalty prosecution have started, then you can disclose it and you can go for fast track. If there is any settlement order in the last 3 years, you can disclose about it and then you can go for fast track. But you should not be suspended from trading in the last 3 years by stock exchange. And lastly, there should be no conflict of interest between issuer and merchant banker. And if there is any audit qualification, then we have to restate our financial. Restate means re-prepare our financials. But if it is not possible to re-prepare, then we have to disclose everything clearly and then we can go for fast track. With this, we are done with fast track FPO. Okay, so the next topic that we have to do is our right issue. So basically, what is right issue? When a company offers new shares to its existing shareholder, that is known as right offer. It's like companies giving offer to its existing shareholder. Do you want to purchase more share? And always right offer is given in proportion to their existing shares. For example, right offer is given in the ratio 1:2, which means we will offer one more share to you if you're already holding 2 shares of the company. So we will offer you to buy one more shares if you already have 2 shares in the company. For example, let's say you have already 100 shares of the company. So we will offer you 50 more shares. So you have right to buy 50 more shares of the company. This is known as right offer. Whenever company makes a right offer, company has to decide who are the existing shareholders. For that, we fix a date which is known as record date. Now, when a company makes right offer to shareholders, what options shareholders have? Shareholders have 4 options basically. Either they can subscribe fully. Let's say I am the shareholder of Reliance and I already have 100 shares. Now company is making right offer in the ratio 1:2. So which means I have right to buy 50 more shares. So either I can purchase all the 50 shares or I can subscribe partly. Let's say I say ki I want to purchase only 20 shares and rest 30 let it go. So I can subscribe partly or I can renounce rights. If I don't want to purchase, let's say whole 50 shares, I don't want to purchase, I can give this right to someone else. Let's say instead of me, Priya want to purchase. So I can give this right to Priya that instead of me, Priya, do you want to purchase this shares? So I can renounce the rights, which means transfer to anyone, or I can ignore the offer, do nothing, eat 5-star. Yes, you are right, do nothing. Okay, you have these 4 options. Acha, right issue is also known as preemptive right of existing shareholder, which means before company would offer shares to others, first company will give shares to existing shareholder. This is known as preemptive right. One point is given, if the right issue size is 50 crores or more, if the total amount of right issue is 50 crores or more, then we also have to comply with chapter 3. What is chapter 3, which we studied in the previous ICDR lesson? That is IPO and FPO rules. That is, if whatever IPO and FPO rules we studied regarding draft prospectus and prospectus, the same law of IPO rules will also apply to right issue if the right issue size is 50 crores or more. Regarding DLOF and LOF, what is draft? DLOF, draft letter of offer. LOF means letter of offer. Just like there is draft prospectus in IPO, same way there is draft letter of offer in right issue. And just like there is prospectus in IPO, same way there is letter of offer in right issue. Now, very important, which entities are eligible to make right offer? Everybody is not eligible to make right offer. So who are eligible to make right offer? First, you will not be allowed to make right offer if your promoter or promoter group or director are debarred by SEBI. Your promoter and director are also the promoter director of another company which is debarred by SEBI. Your promoter director are fugitive economic offender, which you have done in ECIPL. Can you remember? These points are same as IPO. The same non-eligibility we discussed in IPO also. Achha, if the debarment period is over, already over, then in that case we can now make right offer. These points are same as IPO. Now some general conditions to make right issue, and guys, I am so happy to tell you that all the general conditions are same as IPO. Only thing is 2-3 extra points are here. Same as IPO and FPO. All the general conditions that are going to come are same to same, which we have already discussed in IPO. First, whenever you make right offer of new shares, you have to apply to stock exchange for getting the listing approval, and you have to choose one of them as the designated stock exchange. Let's say I want to list my right shares in BSE and NSE both, then I have to apply in BSE and NSE both for getting listing approval, and I have to choose one out of those as a designated stock exchange. Next, if there are partly paid up shares, I have to either convert them into fully paid up or forfeit, which means if there are partly paid up shares, I cannot make right offer. I have to exhaust all the partly paid up shares by converting into fully paid up or forfeited. Now, if you are doing right issue to finance any capital expenditure or project, to finance any project, you cannot finance whole of the project by right issue. For in that case, you can finance maximum 25% of that project through a right issue, which means you have to make pre-arrangements for financing 75% of the project. So if project is of 100 crore, you already have to make arrangements for 75 crore. That should be arranged from some other means excluding the right issue. Next is GCP. Same as IPO, guys. All these points which I have made in box, are same to same in IPO and same to same in FPO. So it's like buy one get three free. You can use the right offer ka maximum 25% for general corporate purpose. General corporate purpose means day-to-day working business, working capital, paying salaries, admin, office salary, etc. So for general corporate purpose, you can use maximum 25% of right issue. Second, for unidentified investment means you want to invest but you don't know where. It's not identified as of now. For unidentified investment, you can use maximum 25% of right issue size, and for both GCP and unidentified investment, you can use maximum 35%. Okay, so this limit is not applicable if the target is identified. Means if you want to do identified investment, for that you can use even 100% of right offer. So for GCP you can use maximum 25%, for unidentified investment you can use maximum 25%, and for both you can use maximum 35%. This is same to same as IPO. So basically we have revised IPO and FPO condition. Lastly, if your company or your promoter director are willful defaulter or fraudulent borrower, can you make right offer? Yes, you can make right offer, because see here now वो वाला point was not there. यहाँ पर willful defaulter वाला point was not there. Non eligibility में only fugitive economic offender वाला point was there here. So guys, if our company or promoter director are willful defaulter or fraudulent borrower, can we make right offer? Yes, we can make right offer, but there is one condition, that promoters cannot renounce to their rights to outsider. So they can renounce only within the promoter group. So basically, there's one condition, that if the company or promoters are willful defaulter or fraudulent borrower, and in that case, if they get right offer, can they get right offer? Yes, but they can't renounce it to some outsider. They can renounce it only to someone within the promoter group. Okay, and lastly, if company have issued SR equity shares, then if we are giving right offer to SR equity shareholders, they cannot renounce it. Why? Because SR equity shares have superior right. You cannot give superior right wale share to anybody else. So generally, if you get right offer, you can renounce it to someone else. But if you get right offer in SR shares, then you cannot renounce it to any outsider, because there is more voting power in SR equity shares. And if you get SR shares under right offer, that will be locked in until they are converted into ordinary shares. Which means if I get superior voting right shares under right offer, I cannot sell it unless and until those superior right shares are converted into normal shares. And lastly, this right offer that I get nowadays, these are given in demat form, and this we have already studied in lesson number 2, right entitlement. So this right offer that we get, this is directly credited to our demat account, and even these are tradable, which means if I don't want to purchase right shares, I can sell my RE, right entitlement, to someone else through stock exchange or off market. Through stock exchange or off market means outside stock exchange. This topic of RE we have also done in lesson number 2, if you can recall. And lastly, guys, As we all know, whenever a company wants to make right offer, before announcing the right offer, we have to decide a record date. We have to decide a record date. In record date, we will, why do we decide record date? Because on that date, whosoever are shareholder, they will be entitled for right offer. So before making right offer, we have to decide a record date. And once record date is announced, after that right issue cannot be withdrawn. मतलब एक बार commitment कर दी, now you cannot go back. Once you announce the record date, after that you cannot back off, you cannot withdraw right offer. Now you have to make the right offer. And even if after announcing record date, if you withdraw the right offer, then you will be debarred from listing any new security for next 12 months. For next 12 months, you will be debarred from listing any new security. But even in this 12 months, you can list 3 types of security. If you get shares under ESOP, or if you get shares by conversion of convertible instrument, or if you get shares by conversion of warrant, then those shares can be listed even during this 12 months. What are we saying? If we are getting shares by conversion of ESOP, or by conversion of convertible security, or by conversion of warrant, then those shares can be listed even in this 12 months when we are debarred to list any new security. So basically what we are saying that if you withdraw your right issue, then you will not be able to list any security for next 12 months. But even in this 12 months, you can list those shares which are converted from ESOP, or they are converted from convertible instrument, or converted from warrant, provided one condition: these ESOP or convertible instrument or warrant should be existing before record date. They should be in existence before record date. That's all about right issue. With this, we are done with right offer. Okay, so the next topic that we are going to do is preferential issue. Now, what do you mean by preferential issue? Preferential issue means when we offer equity shares or any other security to selected people privately. Basically, public offer means you are making an offer to everybody. Whosoever want to purchase the shares of the company, they can purchase. But when you make offer to only selected people, A, B, C, D, that is known as preferential issue, where you don't offer the shares to public. Now, when you make preferential issue, there is a proper rules given in chapter 5. And this we are going to study in this upcoming topic. Now, preferential issue does not include ESOP, sweat equity shares, depository receipts, or foreign security. We all know preferential issue is a separate category. ESOP is a separate category. Sweat equity is a separate category, which we already know. Preferential issue is different. ESOPs are different. Sweat equity shares all are different. Now, which entities are ineligible to make preferential issue? If the promoter director are fugitive economic offender, then you're not eligible to make preferential issue. Don't you think this is same in IPO, FPO, right offer everywhere? So if your company's promoter director are fugitive economic offender, your company is not allowed to make preferential issue. Secondly, if your company has not paid any pending payment of SEBI or stock exchange, then your company will not be allowed to make preferential issue. So what are we saying? That if you have any dues pending to be paid to SEBI or stock exchange, government ka paisa nahi diya, you have not paid SEBI's money, you will not be eligible to make preferential offer. But if that matter is going on in the court and court have admitted the appeal, basically SEBI is asking some payment from you which you have not paid, and you filed an appeal in the court, and if court accepted that appeal, in that case you will be eligible to make preferential issue if appeal is admitted by the court and appeal is going on, which means you are not the defaulter. Appeal is going on. In that case, we will wait for the court's judgment in order to give you a tag of defaulter. So if appeal is admitted, then right now you are not a defaulter. So in that particular case, right now you can make the preferential offer. Are we clear with this? Acha. Okay. Now, what are we saying, guys? Yes, we are saying that you cannot make preferential offer to anybody who sold the shares of the company in the last 90 days. So we are saying that anybody who sold our shares in last 90 days, which means they don't want our share. Why would we make preferential allotment to them if they sold shares in 90 days? It's like last 90 days they didn't want our share. They sold our shares. Why would we give shares to them now? So if anybody sold their shares in the last 90 days, in that case, we cannot make preferential offer to that particular person. Now, if promoter have sold their shares in the last 90 days, then all promoter group become ineligible to get the preferential issue, which means can't kare one promoter, bhukte all promoter group, which means what does this mean? It means that if one promoter sold the shares in last 90 days, then not only that promoter will be ineligible for preferential offer, but all promoter will be ineligible to get the preferential offer. Okay, so if one promoter sold shares in last 90 days, entire promoter group will become ineligible to receive the preferential offer. But this restriction will not apply if the promoter sold their shares due to some compulsory situation. For example, if the promoter sold their shares due to invocation of pledge by bank or PFIs, which means you have taken some loan from bank or PFI, and bank and PFI invoked that pledge, and if due to that you sold your shares, promoter sold their shares in the 90 days, in that case, that is a genuine case. They will not be disqualified to receive preferential offer. Secondly, if there is an interstate transfer between promoters under SAST regulation. What is SAST? Under takeover regulation, if one promoter is selling shares to another promoter, which means there is interstate transfer only within the promoters only, among the promoter, even in the last 90 days, in that case, in these two cases, there is a genuine case. So that's why in that case, you will be eligible to receive the preferential offer. Next is, if your promoters, they had the warrant. What is warrant? Warrants give you right to purchase equity shares. They can be converted into equity shares. You had warrant, which means you had right to purchase equity share, but you did not exercise them. So basically, it somewhere shows that you don't want equity shares of the company. You had the warrant, but you did not exercise them in the last 1 year. In that case, you will be ineligible to receive preferential offer for next 1 year from the date of warrant ki expiry. So basically, if you had warrant but you did not exercise that warrant, then for next 1 year you will be ineligible to receive the preferential offer. Then you cannot receive preferential offer for the next 1 year. These are the ineligibility, in which case you cannot make preferential offer if your promoters are fugitive economic offender, if any dues is pending to be paid to stock exchange, exception if appeal is filed. If anybody sold the shares in 90 days, they cannot get preferential offer. If promoters sold the shares in 90 days, all promoters cannot receive preferential offer. Two exceptions are there. And lastly, if promoter had warrants but they did not exercise them in the last 1 year, then they will be disqualified to receive the preferential offer. Okay. Next is some conditions to make preferential issue. If a company wants to make preferential offer, they have to follow this 6 condition. First is, we have to obtain pen from everybody whom we are making preferential offer, that is proposed allottee. If we are making preferential offer to Mr. ABCD, we have to obtain pen card from Mr. ABCD. We have to comply with all the SEBI LODR regulations and listing. Basically, we should be a compliant company. We should not be a defaulter company. So we must be in compliance with all the listing agreement and LODR regulation. Secondly, all the shares should be in demat form. We cannot make preferential offer in physical shares. We have to make sure that it is in demat form. Most important, we have to take approval of the shareholders by way of special resolution. Without SR approval, you cannot make preferential offer. You need the approval of shareholders by way of special resolution. And lastly, you have to make sure that when you make preferential offer, all the shares that you offer in preferential offer are fully paid at the time of allotment. Fully paid at the time of allotment means installment not allowed, pay later not allowed. If I am allotting you shares by making preferential allotment, you have to pay all the money upfront at the time of allotment. We have to make sure that when we are allotting shares, they pay the full money at once. No pay later option is there, no installment option is there. We have to make sure that all the preference shares are fully paid up. And last point, whenever we make preferential offer of new shares, then we have to get it listed in the stock exchange, and for that we have to apply to stock exchange on the same day when we will send the notice of general meeting. To pass the SR, you have to do general meeting, and on the same day on which you will send the notice of general meeting, that same day you have to apply to stock exchange for getting in principle approval. That's all about preferential offer. We are done with 3 topics, that is basically fast track, FPO, right offer, and preferential offer. The next topic that we are going to do is QIP, that is qualified institutional placement. Okay, and it's a very easy topic, QIP, very small and easy topic. So the first point is I open IDR. Okay. What is QIP? QIP is basically qualified institutional placement. It means issuing shares to QIBs. Who are QIBs? We have done in lesson 2. They are big investors like insurance companies, mutual fund, banks, PFIs, etc., etc. So they are big investors. So when we issue eligible securities to QIBs on private placement basis, we are not offering shares to everybody. We are offering shares only to QIBs, that is known as qualified institutional placement. Acha, what are eligible security? Eligible security is basically example equity shares, convertible debentures, non-convertible debentures, or any other security, preferentials. All this will come in eligible security. So when we offer equity shares, preference shares, debentures to QIBs only, that is known as QIP. We are not offering shares to anybody else except for QIBs. Acha, even this can be done by making offer for sale. QIP can be done by, if you want, you can do QIP by issuing new shares, or if you want, you can do QIP by issuing existing shares of promoters, that is known as offer for sale. You can go for offer for sale also. Now, some very important conditions in order to make QIP. First is you need to take approval of special resolution. So if a company wants to make QIP, then we need the approval of special resolution. And in that special resolution, we have to specify two things. Number one, QIP ka relevant date. Who are the QIBs and what is the relevant date? Relevant date is very important here for the purpose of making QIP. Now the question is, what is relevant date? If you are issuing equity shares, then the relevant date will be the date of board meeting when you considered this proposal. If you are issuing convertible securities like convertible debentures or any other security, then right now let's say they are debentures, but in future they will be converted into equity shares. In that case, relevant date will be either the date of board meeting or the date when it becomes convertible into equity shares, the date when holder become entitled to convert it into equity shares. Let's say today on 8th December 2025, you did a board meeting to make QIP. So if you are doing QIP of equity shares, then today's date will be relevant date because today we did the board meeting. Okay? Now let's say if we are issuing convertible debentures, which will be convertible into equity shares after 5 years. After 5 years, then let's say 8th December 2030, it will become convertible. So in that case, in case of convertible debentures, the relevant date will be either today's date, 8 December 2025, that is date of board meeting, or the date when it become convertible into equity shares, date after 5 years when it will become convertible, that is 8 December 2030. ठीक है, इक्विटी शेयर्स के केस में today's date of board meeting will be relevant date. Convertible securities या convertible debentures के केस में date of board meeting or the date when it becomes convertible. That's it. Now, what are we doing? We are doing conditions for making QIP. The first condition is you need to pass special resolution. Second thing is that SR is valid only for 1 year, which means you have to complete the allotment within 365 days. 365 days means 1 year. So basically we are saying that special resolution will be valid only for 1 year. So you have to make sure that you do complete whole process of QIP and you complete the allotment within 1 year. Otherwise, you have to pass a fresh SR. And lastly, SR not required if you are doing offer for sale only to meet MPS. MPS means minimum public shareholding. Remember, we studied in lesson number 2. Lesson number 2 lesson number 3 or lesson number 4 we studied that minimum public shareholding is 25%. Minimum, which means public should hold minimum 25% of every listed company. Let's say our company mein public shareholding is only 20%. So just to increase the MPS, we are making offer for sale to QIB. In that case, SR not required. Special resolution will not be required. So generally, in order to make QIPs, you need to pass SR. But if you are making QIP through offer for sale, just to meet minimum public shareholding, in that case, SR is not required. Okay? Next, what are we saying that? Second condition to make QIP. The QIP, if we are making QIP of shares, then those shares should be of same class which is already listed for 1 year. मतलब पुराने shares होने चाहिए. The class of shares which we are issuing to QIBs, it should be of the same class which is already listed for 1 year, which means those shares, those class of shares should be old, should have already completed 1 year of listing. Next is, if two companies are getting merged, then old company ka period will also be counted. In order to count this 1 year, the listing period of transferor company will also be counted. Let's say there was old company X Limited. Okay, they listed their equity shares for 7 months. After that, X Limited merged with Y Limited and became XY Limited. Now the new company XY Limited is holding this equity shares for, let's say, 5 months. Will we say that 1 year is completed? Yes, because we will include the time period, listing period of this old transferor company also, transferee company also. So we will say that it has been listed since, it has been listed for 7, 8, 9, 10, 11, 12. 12 months, which is 1 year. So in that case, this requirement is fulfilled. Lastly, this 1 year requirement is not applicable if we are doing QIP just to meet the minimum public shareholding. Why we are issuing shares to QIBs? Just to meet the minimum MPS. If that's the case, then there is 1 year rule does not apply. It's not necessary that that class of shares should be listed for 1 year. It's not necessary if we are making QIP just to meet the minimum public shareholding. Done. Next condition to make QIP is your promoter and director should not be fugitive economic offender. The same condition we did for right issue also. The next one is preferential issue also. The next one is all your QIPs must be listed on the same stock exchange where your equity shares are listed. So you can list your QIP only on those stock exchanges where your equity shares are already listed. Let's say your equity shares are already listed in BSE and NSE. Then this QIP shares you can list in BSE and NSE. You have to comply with securities contract rules, and lastly there should be minimum 2 weeks gap between two QIPs. Let's say today I completed one QIP, then immediately within 2 weeks I cannot start another QIP. I have to wait for 2 weeks. Only after completion of 2 weeks I can start another QIP, which means there should be minimum 2 weeks gap between two QIPs. With this, we are done with the topic of QIP, and with this, we are done with like 4 out of 9 topics of this particular remaining topics. We have done fast track, we have done right issue, we have done preferential issue, and we have done QIP, qualified institutional placement. The next one in line is your IDR and SME. Okay. So I hope you all are doing amazing. And so there are few lessons in your subject of CMSL from which you can expect more than one question, and this is one of them. So I would say ICDR, LODR is very important, and apart from that, this lesson is also very important. So the name of this lesson is share-based employee benefit and sweat equity shares. In short, we call it SBEB. In short, we call it SBEB and SES. So whenever I'll use the term SES, just understand that I'm talking about sweat equity shares. So now basically this lesson specifically talks about when company gives shares or benefit to employee in the form of shares or security. So it's like we are saying to employee, oh, for your hard work, we are appreciating your hard work by giving you some shares of the company. So basically they will feel a part of the company, they will get a little ownership in the company. So that's all about SBEB and sweat equity. Earlier, there were two separate regulations relating to SBEB and sweat equity shares, which is now merged, and in 2021 new regulations were introduced, common regulations for both share-based employee benefit and sweat equity shares. So first of all, applicability. In which particular case this particular regulation will be applicable? So this regulations will be applicable first of all to every listed company. Okay, ma'am. So SEBI regulation, as we all know, these regulations are made by SEBI, and SEBI regulations are applicable to listed companies only. SEBI regulations are not applicable to unlisted company. So first thing, ma'am, these regulations are applicable to all the listed companies who are listed in India. Secondly, this regulation specifically talks about giving shares or giving benefits to employee in the form of securities. So total 5 schemes, and 6th one is sweat equity shares. 6 things are covered in this chapter, 5 schemes. The name of that scheme is ESOS, ESPS, ISPIS, SAR, JEBS, and REBS, RBS. Okay. So if I'll say ESOS, just understand we are talking about employee stock option scheme. If we are talking about ESPS, then we are talking about employee stock purchase scheme. SAR means stock appreciation right. JEBS means a general employee benefit scheme, and RBS means retirement benefit scheme, RBS. So only if a listed company is giving any of this scheme to employ, this 5 schemes, ESOS, ESPS, SAR, JEBS, and REBS. So if listed companies giving these 5 schemes to employees, or companies issuing sweat equity shares to employees, then only this regulations will be applicable only in these 6 cases. Otherwise, this regulation will not be applicable because this regulation specifically talks about this scheme These schemes are known as share-based employee benefit schemes. These schemes are known as share-based employee benefit scheme or sweat equity shares. SES means sweat equity shares. So first of all, applicability, this scheme will be applicable to listed company who are either issuing sweat equity shares or they are giving these schemes, following schemes, these 5 schemes: ESOS, ESPS, SAR, JEBS, REBS. Now, these schemes are giving basically benefit to employee either directly or indirectly. They involve share. See, if we are giving benefit to employee in money form, in monetary form, or in any other form, then that will not be applicable. In that case, that will not come under this regulation. This regulation will become only when we are giving benefit to employee in the form of shares or in the form of security. Let's say you are giving housing accommodation to your employees. This scheme will not be applicable. Are you understanding? Because shares are not involved there. So this scheme will be applicable only if company is giving any of the scheme where these 3 conditions are fulfilled. First condition is that scheme is benefiting employee. Second condition is that scheme involves shares or securities. That schemes involve giving shares or security of the company. And third one, that scheme is either set up by the company or it is funded by the company or it is managed by the company. So we are saying that if some other trust, some independent trust is giving shares of the company to employees, then will this scheme be applicable? Will these rules be applicable? No. These rules will be applicable only and only if any of these schemes, either they are set up by the company, matlab company made that scheme, or funded by the company. Company did not make that scheme. Let's say there is a trust. Trust made the scheme, but company is funding this scheme. Funding matlab providing money. Third, or it is only managed by the company. Let's say there is a scheme made by trust, funded by trust, only company is managing it. Then only this rules will apply. This regulations, sorry, this SEBI regulations will apply only if these 3 conditions are fulfilled. Number 1, that scheme is for the employee benefit. Number 2, that scheme involves security. And number 3, that scheme is set up or funded or managed by the company or your group company. Company or group company. Acha, can you give employee benefits to your group companies also? Yes, you can. You can give. Let's say this is Tata Motors. If Tata Motors is giving ESOPs, let's say ESOPs or employee share-based benefit to its own employees, will this scheme be applicable? Yes. Can we do that? Yes. Tata Motors is giving, let's say it has an associate company name Tata Communications. We are giving employee stock options to employees of Tata Communications, our associate company. Is that allowed? These regulations will be applicable? Yes. Let's say we are giving ESOPs to our holding company Tata Sons. We have a holding company Tata Sons. We are giving ESOPs or share-based benefit to our holding company employees. Will this regulation be applicable? Yes. Can we do that? Yes. Or let's say we have a subsidiary Jaguar and Land Rover in UK. We have a foreign subsidiary Jaguar and Land Rover. So we are, agar we have a subsidiary outside India, we have a subsidiary company outside India. Let's say Tata Motors have a subsidiary company in UK, Jaguar and Land Rover. Now, in that case, if we are giving employee stock options to employees of Jaguar and Land Rover, can we do that? Yes, we can do that. Will this scheme be applicable? Will this law be applicable? Yes, this law will be applicable. Are we clear with this? So, we are done with what applicability. And lastly, if you are issuing shares to your employees under this scheme and if these regulations are applicable, then preferential issue regulations will not applicable. Remember, ICDR chapter mein we studied rules for preferential issue yesterday. So yesterday I sent you a video. In that video we discussed that there are some ICDR rules for making preferential issue. So those rules will not apply here because we are already complying with SEBI, SBEB and SES regulations 2021. In that case, preferential issue wale rules will not apply. That's it. Are we clear with this? Now, most important thing is this chapter revolves around employees. This whole chapter talks about giving benefit to employees, giving shares to employees or giving share-based benefit to employee. The biggest question is who is employee? Isse you can expect a case law question in your examination that who is employee. So you can expect case law question. You need to understand who all will be included in the definition of employee and who all will be excluded in the definition of employee. So who will be included in the definition of employee? Your company's employee who is designated as employee by the company. Doesn't matter you are working in India or abroad working exclusively for your company. Exclusively for your company matlab, let's say I am working exclusively for Yeshas, then I am Yeshas, I will be considered as Yeshas ki employee. Are you understanding? But let's say I'm a freelancer. I'm working for 5 companies. Then will I be considered as employee? No. I'm a freelancer. I'm working for 5, 10 companies. I will not be considered as employee. But let's say I'm working full time for Reliance. I'm working exclusively for Reliance. Then I'll be considered as employee of Reliance. So employee means employee who is working exclusively for the company. Doesn't matter you're working in India or abroad. Let's say Reliance have one office in USA also, and you are working in USA wala office. Are you understanding? Then also you will be considered as employees. And the point is, you should be designated as an employee by the company. Let's say we hired Rahul in Reliance as a software engineer. So we hired Rahul as a software engineer. So in that particular case, he is designated as employee. We designated him software engineer. So we designated him as an employee. In that case, he will be considered as employee. Secondly, your own company's employee will be considered as employee. Who will not be considered as employee? You can say freelancers. Freelancers is like they're working for 4 companies. They are not employed. Secondly, your directors are also your employee. Even directors are also considered as your employees because they are also working for the company. Doesn't matter you are whole-time director or you are part-time director or you are non-executive director. So every kind of director is included except for independent director. Why? Because we say that they should not have stocks in the company. They should not have shares in the company. Otherwise, they will become biased. They will no more be independent. That's why IDs are excluded. So who are included in employee? Any director, no matter you are whole-time director or you are part-time director or you are non-executive director, but excluding ID. Excluding ID. Just remember, when we talk about definition of employee for the purpose of share-based employee benefit, then all the kind of director will be included. ED, NED, working, full-time, part-time, every kind of director. ED, executive director, non-executive director, full-time, part-time. Except for IDs, IDs will not be included. Okay. Lastly, even your group companies ke employee will be covered. Your subsidy ke employees, your holding ke employees, and your associate ke employees, doesn't matter working India or abroad. Just like I give you example of Tata Motors, for us, our company ke employees are also employees. To them also we can give share-based benefit. Our subsidy Jaguar ke employees ko bhi we can give share-based benefit. Our holding Tata Sons ke employees ko bhi we can give share-based benefit, and our associate Tata Communications ke employees ko bhi we can give share-based benefit. So what are we saying? That we are saying that you can give share-based benefits to employees of your subsidy, employees of your holding, employees of your associate. Doesn't matter they are working in India or abroad. Lastly, if there are contractual employees, you know, nowadays there are gig workers, there are contractual employees. Will they be considered as employees? Biggest question. The answer is yes, they can be considered as employee only if, number one, they are designated as employee by the company. Secondly, they are working exclusively for our company. So let's say Ori, you know Ori, I hope you know Ori. Let's say Ori specifically work as, let's say, designer of Reliance. Okay, but he is not on a payroll basis, he is on a contractual basis. So, but he is working only for Reliance Industries, he is not working for any other company. So Ori is working as a, let's say, designer only for Reliance Industries. He's a contractual employee, not on payroll. Will he be considered as employee? Yes, if he is designated as employee by the company. Are we clear with this? But the condition is he should work exclusively for our company. If he is working for 10 companies, then he will not be considered as employee. With this, we are done with definition of employee. One most important thing, if you are promoter or promoter group, then you will not be considered as employee. Why? Because when you are promoter, you have control over the company. You are owner of the company. How can owner be the employee of the company? Concept will get destroyed. So that's why we are saying that promoters or promoters group will not be considered as employee. And lastly, any director or any person who is holding more than 10% equity share, matlab you are big shareholder, you are major shareholder of the company, you already have 10% ownership of the company, matlab you have significant ownership in the company. In that particular case, you don't need this chindi pundi shares, ESOPs and ESOS. So the point of giving ESOS is those employees who don't have shares in the company or who don't have too much representation in the company, to give them benefit. If you already have 10% shares of the company, you don't need that benefit. So employee does not include three people. Very important. Number one, independent directors. Number two, promoters and promoters group. And number three, big shareholders. Big shareholders means those shareholders who are holding more than 10% shares in the company already. And this is your definition of employee. And this definition of employee applies only for these 5 schemes. Remember, we did ESOS, ISPIS, SAR, JABS and RABS. JABS and RABS. Okay, these 5 schemes are very important for this chapter, and this definition of employee applies only to these 5 schemes. Acha, this definition of employee does not apply to sweat equity shares. This chapter is divided into 2 parts. First part is your this 5 schemes. Second part is your sweat equity shares. Different definition of employee is given for these 5 schemes, and different definition of employee is given for sweat equity shares. So when we talk about this definition of employee, this definition applies only to these 5 schemes. There is a separate definition given for sweat equity shares, which we'll study in the topic of sweat equity shares. Are we clear with this? Now, basically, we have to do certain definitions, but before doing, we have done definition of employee. Before doing other definitions, first we will study about the process. Now, guys, whenever a company wants to issue any of these 5 schemes, what is the process that we have to do? Now, this process is what whenever company has to issue or launch these 5 schemes. What schemes we have already done? What are those 5 schemes? ESOP, ESOS, ESPS, SAR, JABS and RABS. JABS and RABS. Okay, so there are these 5 schemes under this topic of share-based employee benefit regulations. Now, if a company wants to launch any of these 5 schemes, then what process we have to follow, that is given here. There are 2 options. Either company can directly give these benefits to employees, or company can hire a trust. Company can make a trust and ask the trust to give this benefit to employee. So it's like either let's say I want to distribute chocolates to my students. Either I am distributing chocolates to my student myself, or let's say I hired Ramu and I said, Ramu, distribute one chocolate, two chocolate to each of the students. So that is direct route and trust route. Direct route means this is company, let's say we are talking about employee stock option scheme. Okay, so employee stock option में first we will give this option to employees that you have option to purchase shares of the company. So here no middleman is there. Company is directly offering shares or options to employees. Okay, now company, if they want, now employees, if they want to exercise the option, they can directly apply to company that we want to exercise the option, and then company will issue shares to them. But in the indirect route, through trust route, we don't directly offer shares or options to employee. What we do, we make a trust. We do what? We make a trust, and that trust is known as employee welfare trust. Okay? Now, we ask this trust to give options to employees, to give options or shares to employees. Are we clear with this? Now, don't you think trust will be give shares to employees only if trust itself have shares? Company can to directly issue shares to employees in the direct route. So in the direct route, company already can issue new shares. So company can directly issue new shares to employees. But through trust route now, first company will issue shares to trust, and then trust will give those shares to the employees. Okay? So in this particular case, first company will issue shares to trust. Basically, trust have to acquire shares. Now, how they will acquire shares? First thing, they need money to acquire shares. From where they will get money? They will get loan from the company. Okay? So in order to purchase shares of the company, they take loan. So first company will give loan to them. Imagine they took 100 crore loan, 100 crore rupees loan. Now with that money, they will buy the shares of the company. They have 2 options to buy the shares of the company. Either they can purchase new shares directly from the company, or they can purchase shares from stock market, which is known as secondary acquisition. So they can purchase shares from stock market through secondary acquisition. Are we clear with this? So what are we saying? That trust will need money to buy shares. For that, trust will take loan from the company, and then trust will purchase shares. 2 options are there. trust can either purchase shares directly from the company or trust can purchase shares from the stock market. Done. Now we have shares. Okay. Now we will give option to employees, and now if employees wants to exercise the option, they will not contact company, they will apply to trust. So now if the employee wants to exercise option, they will apply to the trust, and after that trust will transfer them shares, and then employee will make payment to the trust. Through that payment, trust will repay the loan of the company. So this is the process where company is not directly transferring shares to employees. First we are transferring shares to trust, and then trust is transferring those shares to employees. So this is whole process of trust route. Okay, so basically what is the major difference between direct route and trust route? Now in direct route, company is directly issuing fresh shares to employees, that is direct route. Trust route mein na, company is not directly issuing shares to employees, or company is not directly giving benefit to employees. And now coming towards the process of implementation through trust based scheme. Acha guys, if I hope I am audible. Yes. Now guys, what are we doing? If company directly offers scheme to employees, then no such hard and fast process is there. But if company wants to go through trust route, then some process is given. First thing is you need the approval of special resolution. If there is no special resolution, then you cannot implement this scheme. So first thing, if you want to implement the scheme through trust route, then you need to pass special resolution and you need to take decision upfront. First thing, when you will pass shareholders resolution, you have to take a decision. Do you want to go for direct route or do you want to go for trust route? Okay. Now, if can you change later? Ma'am, can I change from direct route to trust route or trust route to direct route? Yes. But if you want to change later from direct route to trust route, then you will need fresh SR again, provided it is not harmful to the employees. You can shift from direct route to trust route only if two conditions are satisfied. Number one, SR is passed, and number two, it is not harmful to the employees. Are we clear with this? Now, hi Pradyumna, good evening. Ma'am, live is glitching. Ma'am, please take PIT regulations. PIT is a small chickadoo chapter, so I'll upload a video just like I uploaded the video for ICDR. Same way I'll upload the video for PIT also. Yash, is that fine, Yash? Ma'am, live is glitching. My internet is fine, I guess. Let me check my speed. Is it fine now? Okay, Amulya, yes, we will. I can plan. For which lessons? For which lessons do you want? Just let me know in the chat box. Is it fine? Is it still glitching or is it fine? I think it's fine. It's fine. Na, ठीक है. If it glitches again, if it happens again, then let me know. SAST. ठीक है. Fine. Okay. Coming back to the topic. Now, we were doing, if you want to go for trust route, then first you need to pass SR. Secondly, it should not be harmful to the employee. And if In the trust route, remember we studied in the trust route you have two options. We studied that in the trust route you can how will trust get the shares? Trust have two options. Either they can purchase shares from the company or they can purchase shares from the stock market through secondary acquisition. So if they purchase shares from the company, then it's fine. But if they purchase shares from the stock market or they take it as a gift, in those two particular cases, if secondary acquisition is there or gift is there, in that particular case trust route is mandatory. That you cannot do through direct route, and of course that's not possible. Direct route mein company itself will thodi purchase its own shares through stock market. So if you are purchasing shares from the stock market or you are taking it as a gift, in these two cases you cannot go through direct route, you have to compulsory go through trust route. Once trust can run multiple scheme. Let's say there is one employee welfare trust. Let's say there is one Infosys ka employee welfare trust. So Infosys has main one employee welfare trust. Can this trust launch multiple scheme? They can launch multiple ESOS scheme, ESPS scheme, JABS scheme, RBS scheme. The answer is yes, but we should maintain proper separate accounts for each scheme. One trust can maintain multiple scheme, but separate books and accounts should be there for every scheme. Next is, whenever company appoints trust, we have to enter into a deed called trust deed. It's an agreement between the company and the trust. It should be in writing, and that document is known as trust deed. The format of trust deed is given in Schedule 1, and we have to file the trust deed with stock exchange. Once again, whenever company appoints trust, we execute a document called trust deed, form in Schedule 1 and file it to stock exchange. Or agar if later we make any changes in the trust deed, the changes also have to be filed to stock exchange. Who can become trustee? Very important. That trustee should not be related to the company. Basically, that trustee should be independent. So if you are a director KMP promoter or relative of director KMP promoter, then you cannot become trustee. Or if you are holding 10% or more than 10% shares of the company, then you cannot become trustee. Simple means you should not be connected to the company. You should be independent. So if you're director, KMP promoter or their relative, you cannot become trustee. Or if you're already a major shareholder, you yourself are holding more than 10% shares of the company, then you cannot become trustee. Now, trustee can be either individual person or a company. Individual person, matlab I can also become trustee, or a company, Yeshas Academy, or trustee company can also be there. XYZ Trust Limited. So trustee company can also be there. So if trustee is a human being or individual or one person company, then minimum two trustees should be appointed. And if trustee is a company, then one trustee is enough. Trustee cannot vote. Trustee is just appointed to hold the shares for the benefit of employee. They cannot vote on their own. And trustee should make sure that SR is passed. Shareholder approval is taken. Trustees should make sure that proper special resolution is already passed before starting the scheme. Trustee should not deal in derivative, buy options, futures. Trustee cannot do derivative. He can only do delivery based transaction. Basically, now the shares of the company that is held by trust is for the benefit of employee. Trust cannot trade in that security. Free trading is not allowed. Trust cannot buy, sell, buy, sell, buy, sell. No. And derivative to bilkul nahi. Options, futures. Trust cannot do trading, cannot do derivative trading. They can only do delivery based transaction. That too only for eligible transactions. Delivery based matlab ki you are taking the delivery of the shares. You are not doing intraday. You are not doing derivatives. And secondly, company can lend money to the trust for buying the shares. Of course, trust ke paas paisa kahan se aayega? From where will trust bring the money? Company will give loan to the trust. Are we clear with this? And all the shares held by trust will not be counted towards minimum public shareholding. Remember in SCRA we studied that every listed company should have a minimum public shareholding NPS of 25%, but these shares which are held by trust, it will not be included in minimum public holding because it is not public holding. Whatever shares is held by trust, it is known as non-promoter, non-public holding. We said trust is neither promoter nor public. वो बीच का है. It is neither trust. It is neither promoter nor public. So it is a non-promoter, non-public holding. Now, very, very, very important limit, guys, limit on secondary acquisition. This says ki a company, a trust can maximum how much they can purchase from stock market. Okay. So as we all know, trust needs shares of the company so that they can give it to the employees. ठीक है, तो from where trust will purchase the shares? Trust can purchase the shares either from company or from stock market, and that if trust purchase shares from stock market, that is known as secondary acquisition. So there is a limit on secondary acquisition given कि per year annually this trust can acquire maximum 2% of paid up share capital through secondary acquisition. This limit applies only for secondary acquisition कि every year trust can purchase how much shares of the company? Maximum 2% of paid up share capital from stock market. Maximum 2%. This is 1 year ki limit. Now, ma'am, imagine this year trust purchased 2%. Next year again, trust purchased 2%. And the next year, trust again purchased 2%. So total, how much it will reach? 6%. But that is not allowed. There is a total limit also. There is an aggregate limit also, that overall पूरा every year मिला के at any point of time trust cannot purchase more than 5% of paid up share capital from secondary acquisition. Overall at any point of time the total secondary acquisition should not exceed 5% of paid up share capital. Meaning, if first year we purchase 2% from secondary acquisition, is it allowed? Yes. Second year again we purchase 2% from secondary acquisition, is it allowed? Yes. But now third year we can purchase maximum 1% from secondary acquisition, because total secondary acquisition should not exceed 5% of paid up share capital at any point of time. Now this 5% is further bifurcated in two categories. As we all know, there are 5 schemes in this chapter: ESOS, ESPS, SAR, JABS and RABS. Okay, ESOS, ESPS is given in part A, part B, SAR is given in part C, and JABS and RABS is given in part D and part E of the scheme. Now, there is a limit given for first 3 schemes. ESOS, ESPS and SAR के लिए overall maximum you can acquire 5% from secondary acquisition, and for JABS and RBS you can acquire maximum 2% from secondary acquisition. ठीक है, तो for ESPS, ESOS and SAR, how much you can acquire? Maximum 5% from secondary acquisition at any point of time. And for JABS and RABS, how much you can acquire? Maximum 2% from secondary acquisition. But दोनों का combined, not 7%, दोनों का combined also maximum 5% you can purchase through secondary acquisition. Now let's take an example. If company already purchased 2% for JABS and RBS, now we are left with only limit of 3% for remaining 3 schemes. Why? Because the overall limit is 5%. I hope you understood this. Now, ma'am, can we buy unappropriated shares? The answer is yes. Now, what do you mean by unappropriated shares? Unappropriated shares means when you purchase shares from stock market but do not specify it to any scheme. You purchase shares from stock market but don't tell whether it is for ESPS, ESPS or ESOS or SAR or JABS or RBS. This is known as unappropriated shares. Means you simply purchase shares and you think I can use it for any of the scheme. You don't appropriate to any particular scheme. You don't tell okay, these shares I will use for ESOS scheme. You have not linked it to any particular scheme. Those shares are known as unappropriated shares. Can we purchase shares without appropriating it to particular scheme? Yes, you can. But there is a condition. If you purchase unappropriated shares, then lastly by the financial year end, you have to appropriate it. Matlab, let's say today on December 25, if I purchase unappropriated share, by the financial year end, that is by March 27, next next financial year, not this financial year end, by next financial year I have to specify the scheme. I have to tell if these shares will be used for which particular scheme out of these 5 schemes. So I have to appropriate within next financial year. Now let's say if I am not able to appropriate it even within the next financial year, then I will get one more financial year provided with the approval of NRC or CC. If there is NRC in the company, then NRC. If there is CC, then CC compensation committee. So if I am not able to appropriate this unappropriated shares within the next financial year, then if I get the NRC or CC approval, I can appropriate it within the second next financial year. Now there is a limit of minimum holding period of 6 months before you transfer it to employees. So whenever any shares are bought through secondary acquisition means through stock market. If company purchases any shares from stock market, company must hold those shares for minimum 6 months before it is transferred to employees. This is a requirement. Why? Because to restrict immediate purchase sale. If we will allow immediate purchase sale, they can do fraud, promoters can play with it. If we will turant allow, okay, now you purchase, now you sell, now you purchase, now you sell, isme then they can do some fraud, they will find some loophole. That's why there is a requirement, if you purchase shares from stock market, you cannot sell it immediately. You have lock-in period of 6 months. If you purchase shares from stock market, you have to hold it for 6 months, and after holding it for 6 months, thereafter only you can sell it to employees, or you can give it to employees under any of this 5 scheme, except when transfer is transferring to employee on exercise. But if it is necessary under this rules, if any employee is exercising any of the 5 schemes and you are following the rule, then only you can transfer it to employee. Otherwise, for any other case, you cannot sell it before 6 months. You have to hold that shares for 6 months. After that only you can sell it. Okay. Now, can we do off market transfer? Off market matlab, can we sell it other than stock market? The answer is yes, of course. Usually trust buy shares for whom? Trust buy shares for giving it to employees under this employee benefit scheme. So can we sell the shares other than stock market? Yes, of course, yes, but only to employees under employee benefit scheme. So whatever shares trust is holding, they can transfer it to employees under any of these 5 schemes, ESOS, ISPIS, JABS, RBS, or this. So they can do it off market transaction only if it is for the employee benefit. Secondly, 3 more cases are allowed if they are participating in open offer. This we have studied in takeover regulations. If in takeover regulations, promoters are making open offer, or company is making buyback offer, or company is making delisting offer, or company is giving any exit offer. If company is saying, oh, I will purchase the share, if company is giving either open offer or buyback offer or delisting offer or general exit offer, then in this 4 particular case, trust can sell those shares to the company. Okay. Now, when can trust sell shares otherwise prohibited? See, there are this 7 cases given. Only in these 7 cases trust is allowed to sell the shares. Apart from the 7 cases, trust is not allowed to sell the shares. Trust is not allowed to do trading. Just understand, whatever shares trust is holding, they cannot trade on those shares. They are for the benefit of employee. So only 7 permitted use are given. The shares held by trust can be sold only for the 7 permitted uses. You cannot use it or you cannot sell it for any other purpose. First one is, of course, for employees ESOP funding. Sorry, ये नहीं है. See, this thing we already studied. Employee benefit transfer के लिए we can use employee benefit transfer. मतलब under this 5 scheme we can transfer the shares to employee. Otherwise that, in which case we can sell those shares? First case, if let's say in order to purchase shares under ESOP, employee need money, employee don't have money. So in order to help employees, we can sell those shares to fund their ESOP. मतलब employee को ESOP खरीदना है, employee wants to purchase ESOP but they don't have money. So what we can do, we can sell those shares in the stock market to get the money, and that money we can give as a loan to employee to help their funding. So we can help employee for ESOP funding. We can use that shares for SAR settlement. SAR settlement means, this you will understand in the SAR topic when we will do stock appreciation rights. Stock appreciations mein na, they get shares. So for that purpose, we can give them shares. Next is for emergency for JABS and RBS scheme. So what happens now? JABS and RBS schemes mein na company keeps some shares as an emergency fund to help employees with some emergency like medical emergency, some other emergency situation or their retirement benefit. So in JABS and RBS scheme now, we keep shares so that we can provide benefit of those shares to employees under JABS and RBS scheme, which is emergency fund for employees and which is retirement fund for employees. So let's say any employee suffers some accident, they need immediate money for operation or for hospital payment. Now this trust can sell the shares in this fund, whatever shares are there in this fund, JABS scheme, RBS scheme, we can sell those shares to get the money so that we can give that money to employee for emergency under JABS and RBS scheme. So for emergency under JABS and RBS scheme, we can sell shares. Next is if we are participating in 4 offers given by company: buyback offer given by company, open offer given by company or promoters, delisting offer given by company, and exit offer given by company. In order to participate in these 4 offers, because they are by company only, in that case we can sell the shares. Lastly, remember first thing, trust take loan from the company. Now in order to repay the loan, we don't have money. For that purpose, we can sell the shares so that we get the money to repay the loan. Lastly, if the scheme is winding up, all the ESOS, employee benefit schemes are closing. All the schemes are closing. All the schemes are winding up. In that case, we can sell the shares. And lastly, if we get a special SEBI approval. But if you want to take special SEBI approval, you have to apply to SEBI, tell the reason, give 1 lakh fees, then SEBI will give you approval. In that case, you can sell the shares. You can sell the shares. You means trust. Trust can sell the shares only in this 6 cases, 7 cases, otherwise not. So we can sell the shares for funding emergency fund of JABS RBS, for funding ESOPs, for SAR settlement. तो ये 3-5 scheme वाले point हो गए. Secondly, we can sell shares to participate in buyback, open offer, delisting, exit offer given by company. We can sell shares to repay the loan of the company. We can sell shares if a scheme is winding up. And lastly, we can sell shares if we apply to SEBI to get approval of SEBI and SEBI gives approval, provided we have given the reasons to SEBI and 1 lakh fees to SEBI. This is a very star mark important point, in which cases trust can sell the shares. Apart from these cases, trust is not allowed to sell any shares apart from these 7 cases. Now, of course, you need to be in a compliance with insider trading regulation. Make sure, because here insiders are involved, na, employees are insiders also, na. So what if employees know some oopsie unpublished price sensitive information? In that particular case, we have to make sure that when we are launching these 5 schemes, we are also complying with insider trading regulations. Are we clear with this? Okay. Now, whenever company wants to launch any of these 5 schemes, company have to make a committee. That committee is known as compensation committee. Compensation committee. Are we clear with this? Compensation means something that we give to employees. So now whenever we launch these schemes, we have to make sure that we make a committee which is known as compensation committee for administering all these 5 schemes. Now they will decide which employee is eligible to get this benefit of this 5 schemes. Not everyone automatically qualify. This committee will decide which employee is eligible and which employee is not eligible. Acha, is it mandatory to constitute CC, compensation committee? Yes, it is compulsory, compulsory to constitute CC for managing the schemes. Are we clear with this? Now, if company is using trust route, then CC can delegate implementation to the trust. Main is CC, and then CC can delegate its power to the trust. Are we clear with this? Now, trust CC mein who will be there? Directors will be there. Some of the directors will be present in the compensation committee, and if there is nomination remuneration committee in the company, then NRC can be designated as CC. So what are we saying? Ki if already there is NRC in the company, no need to make a separate CC. NRC only can act as a CC. Now, a very easy point. What are the functions of CC? So basically, the main function of SEBI is to formulate the terms and conditions of the scheme. Who design the schemes? CC. So CC designs all the terms and condition, T and C, terms and conditions of the scheme. For example, eligibility, vesting period, exercise price, lock-in period, price formula, trust management, everything about the scheme A to Z is fixed by compensation committee. Are we clear with this? Acha, what is the duty? 3 more duties are given. They have to make sure that nobody violates insider trading regulations, means nobody is doing insider trading, nobody is doing any fraudulent transactions or unfair trade practices, and lastly, everybody comply with SEBI PIT regulations and fraudulent and UTP trade regulations. Remember, we have a whole chapter on PIT regulations and fraudulent and UTP regulations. So the CC has to make sure that everybody, trust also, company also, employees also, everybody is complying with insider trading regulations. Are we clear with this? Now some shareholder approval requirement. The first thing is, remember these 5 schemes are there, we already know: ESOS, ISPIS, SAR, JEBS and REBS. So if a company wants to launch any of these 5 schemes for the benefit of employees, we need to get it approved by special resolution. Whenever a company wants to pass a special resolution, we have to give all the details in the explanatory statement. So we have to attach a statement where we will give all the details about these schemes, and that statement is known as explanatory statement. So what details we have to give in the explanatory statement? In explanatory statement, we have to tell about everything about schemes: who are eligible, which employees eligible, how many number of options we are given, what is vesting period, what is exercise period, how price is determined, formula, everything about schemes will be disclosed in the explanatory statement. Are we clear with this? Now, in special resolution, in the point is कि we know that if we want to launch any of these 5 schemes, then we need to take special resolution. Now, in certain cases, we have to take one more special resolution. See, if you are launching any of these 5 schemes, one SR you need. Secondly, if you are doing secondary acquisition for that scheme, then you need one more SR, separate SR. Separate SR means one more SR you need if you are doing secondary acquisition. And in that special resolution, you have to specify the percent, how much secondary acquisition you are doing. Are we clear with this? ठीक है? Acha. Next, if you are granting this schemes not to your own employees but your holding or subsidiary employees, then you need one more SR, separate SR. Matlab 1 plus 1, 2 SR. So if you're giving this benefits not to your employee but to your holding or subsidiary employee, then you need one more separate SR. Okay, and if you are giving it to identified employees of 1% or more of the issued capital in 1 year. Now guys, 1% of these listed companies matters a lot. And if ESOP ke andar, usually it's not 1%, but if to any identified employee, you are giving 1% or more shares under this scheme in single year, ek saal mein, then you need one more special resolution. If within a single year, if you are giving 1% or more shares to the identified employee, then you need separate SR. Okay? Are we clear with this? And last point, guys, if you are doing preferential issue or QIP due to which your overall share capital increased, that means your capital expansion is there. Capital expansion means due to some issue, let's say your total share capital, paid up share capital increase. You did some preferential issue or you did some QIP due to which your share capital expanded. And after that, you are maintaining that 5% wala limit. Remember that 5%. Maximum how much secondary acquisition you can do, 5%. Then for that purpose also, if you are doing capital expansion, then in that case also you have to take a separate special resolution. Can we change the terms and conditions of the scheme? Only if 3 conditions are satisfied. First, we need SR. Secondly, we can vary only terms of those schemes which are unexercised. And thirdly, it should not be harmful to employees. We can vary or change the terms and conditions of the scheme only if 3 conditions are satisfied. SR is passed, schemes are still yet to be exercised, and it is not harmful to the employees. Are we clear with this? Okay, but if you are doing changes by complying all the law, you are not violating any law. In that case, for the changes, SR will not be required. SR will not be required. Acha, when you are giving notice of the general meeting, in order to pass special resolution, you need to call general meeting, and when you are giving notice of the general meeting, you have to make sure that you give all the details of variation, rational, and list of employees who are benefiting. All the details in the notice for employee variation. All this is talking about the employees variation. Can you change the price of the schemes? The answer is yes. You can reprice unexercised ESOPs. These three schemes, ESOS, ESPS and SAR. Can we change the price? Yes. But we can change the price only if the original share price has fallen down and the scheme become unattractive. For example, under ESOP scheme, we give you right to purchase one share for 80 rupees. Now, let's say market price of that share has fallen to 50 rupees. So, market price is only 50 rupees. Why would anyone purchase this ESOP for 80 rupees? No one, right? So, if the market price has fallen, due to which these schemes become unattractive, number one, in that case, we can change the price. Number two, we have to make sure that change in price is beneficial for the employee, not harmful for the employee. And lastly, SR should be passed. Three conditions: change in price should be approved by SR. It should not be harmful to the employees. And we can change the price if market price has fallen. So to cope up with the market price, we can reduce the price of the schemes also. Acha. ठीक है, are we clear with this? अच्छा, winding up we will do, but before doing the winding up, first we will start with ESOS one by one. One by one we will start with these 5 schemes. So basically 5 schemes are there. 5 schemes are there. We'll study about these 5 schemes: ESOS, ESPS, SAR, JABS and REPS. Are we clear with this? These 5 schemes we'll be doing. Now guys, first of all, what do you mean by ESOS and ESPS? First we'll be doing definitions of ESOS and ESPS. Yes. So very important, what is the difference between ESOS and ESPS? So the first difference between ESOS and ESPS is in ESOS, we are giving options to employees that they have option to purchase shares of the company in future. In employee stock purchase scheme, we are directly offering them shares today only. So the difference between ESOS and ESPS is that in ESOS, they have right to buy shares in future, let's say after a year, after 6 months. And in ESPS, they have right to purchase shares of the company today at a discounted price. Okay, this is the major difference between ESOS and ESPS. So in ESOS, companies granting options to employee, that is known as employee stock option or stock option. Now, this we can either give direct route also or through trust route also. Now, ma'am, what is ESPS? In ESPS, we are not giving option. Rather, directly we are giving shares to them. If you want shares, you can purchase now at this discounted price. So that is ESPS. Okay. Now, this ESPS scheme can be implemented as a part of IPO also or other than IPO also. So if company is doing IPO means certain shares can be offered to employees at a discounted price. So that is known as ESPS. ESPS can be implemented along with IPO also or even without IPO also. We want to alag se separately launch ESPS scheme, we can do that also. Acha, majorly ESPS scheme can be implemented through trust where they do secondary acquisition. Secondary acquisition means where the trust purchase shares from the stock market. Now guys, if you want to compare the difference between ESOS and ESPS, the simple difference between ESOS and ESPS is that in ESOS, we are giving options to employee that they will have right to buy shares in the future. But in ESPS, we are directly offering them shares. You can purchase shares now. In ESOS, they will shares they will buy in future. But in ESPS, they are shares they are buying now in the present. Okay? So in ESOS, they buy shares in future at a fixed price. But in ESPS, we offer them shares now at a discounted price. They can purchase shares now at a discounted price. ESOS can we do it through trust? Yes. ESPS, can we do it through trust? Yes. Acha. ESOS, can we implement it along with IPO? No. Options you cannot give along with IPO, but ESPS you can implement along with IPO also. This is the easy and major difference between ESOS and ESPS. So now if you have understood what is, this is the definition of ESOS and ESPS. After that we will study about This 4 schemes. So the first scheme that you have to study is your ESOS. Okay, so we already know now what is ESOS. ESOS means we are giving options to employer. Now some rules regarding ESOS. First rule regarding ESOS, we have to give full implementation process along with ESOS. ESOS may, when we are launching this scheme, we have to disclose full implementation process in advance. Secondly, we cannot offer it without making SEBI required disclosures to grantee. Grantee means the person to whom we are giving these options. We cannot implement this ESOP without making all the disclosures. Next is company is free to set any exercise price, means there is no requirement, there is no law of calculating the formula or any way of calculating price. Company is free to set any exercise price. And lastly, there is an Ind AS regarding this pricing. There is an accounting standard. The name of that accounting standard is Ind AS 102. We have to follow that. So what are we saying? That pricing may you are free to decide any exercise price. What is exercise price? Exercise price means the price at which they have right to purchase the share. So let's say I'm giving you option today that you have option to buy 100 shares of Yeshas Academy Limited after 1 year at the price of 200 rupees each. So this is known as employee stock option, and this 1 year is known as waiting period. In law, it is known as vesting period. Vesting period matlab, I'm giving you option today, but you have to wait for 1 year, and after this waiting period of 1 year, you will have right to purchase 100 shares of Yeshas Academy Limited at the price of 200 each. In this case, this price of 200 is known as exercise price. Exercise price. This period of 1 year waiting period is known as vesting period. Okay, so company is free to decide any exercise price and company has to follow Ind AS, but minimum vesting period should be 1 year. In ESOS, you cannot give the vesting period of 6 months, 3 months, 9 months. The minimum vesting period should be 1 year, and company can also prescribe lock-in as per its own wish. It is up to the choice of the company. May means it is up to the choice of the company. If company wants, company can prescribe lock-in period also. Ki ye ESOP wale shares you will not sell for 6 months. Company can prescribe lock-in period also. Are we clear with this? Are we clear with this? Now, most important. Let's say right now I have ESOPs. ESOPs means I have just option to buy shares. Is it share? No, options are not shares. After vesting period, when I exercise my option and I get it converted into shares, then I will become the shareholder. Right now, I am just option holder. Option holder means I have right to purchase shares, but these are not shares. So if I am option holder means I am not holding shares as of now. I am holding just option. Will I get any voting right? No. Will I get any dividend? No. Will I get any benefit, right issue, bonus issue? No, because it's not share. Options are not shares. So if you're option holder, before you exercise your right, you will not get any voting right, any dividend right, or any benefit on the shares. Only you will get this right after allotment of shares. When you convert these options into shares, and you get allotment of shares, then only you will get voting right, dividend right, and all other benefits. Last point about ESOS. Ma'am, I have options. Then some amount we have to pay in advance to buy the options. Okay. Now let's say after 1 year waiting period, exercise period has waiting period has completed. Now I have right to purchase the shares of the company. Now I have right to exercise my ESOPs. Now I have right to convert my options into shares. But if I don't exercise my right, then what about the advance money that I paid? In that case, company will forfeit the amount that I already paid. But let's say company only did not give me option because I did not meet some conditions. So basically you have to be eligible. You have to meet some conditions in order to be eligible to convert your ESOPs into shares. That is decided by compensation committee. But let's say if I'm not eligible and after 1 year waiting, they did not give me a right to convert it into shares only. In that case, it's not my fault. So in that case, they will refund my money which I paid while purchasing the options. This is all about ESOPs. Now about ESPS. Now when we talk about ESPS, all the points are same only. We have to follow Ind AS 102. We are free to decide any ESPS price. Don't you think this is same like ESOP? Yes, this is same like ESOPs also. And ESPS must include full details of implementation like eligibility, price, allotment, lock-in, etc. So basically, whenever company will launch the scheme, in the scheme we have to give the full details about the whole process. Same, everything is same. But ESOP may minimum lock-in was not prescribed. It was up to company. Company can fix any lock-in. But in ESPS, minimum lock-in should be 1 year from the date of allotment. Matlab, the date when I purchase share under this scheme, for next 1 year I cannot sell it. It will be locked in for a period of 1 year. And if it is I purchase the shares as a part of public issue and at the same price of the public issue, then 1 year lock-in period will not apply. Meaning, remember we studied that ESPS can be implemented as a part of public offer. So if I purchase shares under ESPS as a part of public offer at the same price, not at the discounted price, at the same price at which public is purchasing, in that case lock-in period will not be required. So that's all about ESPS. That's all about ESPS. Let me know in the chat box if we are clear with ESOP and ESPS, that is Employee Stock Option Scheme and Employee Stock Purchase Scheme. Employee Stock Option Scheme and Employee Stock Purchase Scheme. Yes. So the next scheme that we have to do is SAR scheme. Delisting SAST, ठीक है, fine, okay Amulya. I will upload it. Instead of taking live, rather if I upload it, it will take less time in the recording as compared to live. So I'll upload it, it will be better for you. Okay, so the next topic that we have to study is SAR scheme. Now, what is SAR? SAR, SAR. It is just a right where you don't actually get the delivery of the shares, but you are given the increase in price of the share. For example, if I give you stock appreciation right at a price of 200 rupees for 1 year. So let's say after 1 year, stock price increased from 200 to 250 rupees. In that case, this rise in price of the share is known as appreciation. Appreciation means increase in price of the share. So this share price increased by 50 rupees. So I will get benefit of 50 rupees either in cash or in the form of share. Okay. So this is known as stock appreciation rights. What do you mean by SAR? Stock appreciation right means employee get right to receive the increase in the share price for specific number of shares. So these are the benefits given by the company to its employee. So let's say I am the employee of company Yeshas Academy Limited. Now Yeshas Academy is giving me SAR at the price of 200 rupees for 1 year. So 200 rupees may imagine I have bought the shares. Imagine I have not actually bought the shares, but just imagine I have bought the shares at 200 rupees. I'll wait for 1 year. After 1 year, if the share price becomes 350, let's say 350, then how much it increased? It increased by rupees 150. Now that benefit I will get, that increase in price. I will not get actual delivery of the shares, but I will get that increase in price. Now 350, if the 200 increased by 350, increased to 350, which means total how much it increased? It increased by rupees 150. Now I will get this 150 rupees from the company either in cash. Company can give me 150 rupees cash. Cash matlab monetary form mein, they can transfer it in my bank account, or company can give me 150k shares. Instead of giving cash, they can give me rupees 150k shares. This is known as cash settled SAR, and this is known as equity settled SAR. So many S, very confusing. Okay, so what are we saying? That if company gives me money for the income that I have earned, for the increase in price that I have earned. If company gives me money, that is known as cash settled SAR. And if company gives me shares for that rupees which I have earned, or for that increase in price, then it is known as equity settled SAR. And mostly under SEBI regulations, na, equity settled SAR are covered. Okay? So what is SAR? SAR is basically right to receive the increase in the share price, which is known as appreciation for specific number of shares. Okay? Now you don't get any upfront payment or upfront shares. If I purchase SAR, company is giving me SAR for 1 year. For 1 year, let's say today we are giving 2025 mein, for 1 year, basically, which I can exercise after 1 year. So today I'm not getting anything. Today I'm not getting any payment of money. Today I'm not getting any shares. When will I will get it after 1 year. So no upfront payment to employee, and it can be settled in two ways, either in cash or by shares. So in this particular chapter under SEBI regulation, mostly equity settled SAR are covered. Okay? Now, what do you mean by equity settled SAR? Equity settled SAR means where it is settlement is done through allotment of shares. Means whatever how much I earned, instead of giving me money, they will give me utne ka shares. Okay? That is known as equity settled SAR. Now, those SAR which does not involve dealing with share, matlab cash settled SAR, cash settled SAR, those are not covered in these regulations because here shares are not involved. Now, if in order to launch SAR, we make a scheme, and the scheme which talks about SAR, under which we grant SAR, under which we give SAR to employees, that scheme is known as SAR scheme. Who are SAR grantee? The people, the employees to whom we offer SAR is known as SAR grantee. Grantee always means the person who get it. So those employees who get SAR is known as grantee. They are known as grantee. Are we clear with this? Acha. In SAR now, are they eligible to get payment upfront? No. They will be eligible to get the payment of increase in price only after the vesting period. Let's say vesting period is 1 year. So after 1 year only they will get the payment, or they will get the right to receive that increase in price. Okay, so they become eligible to receive the appreciation value only on vesting and exercise. Matlab after vesting period, when you exercise your option, then only you will get that benefit. Okay, now what is SAR price? The base price fixed on the grant date. Remember this example. In this example, what is SAR price? In this example, SAR price is rupees 200. That is the base price at which I am granting you the SAR. This is known as SAR price. What is SAR price? SAR price is the base price which is fixed on the grant date. Are we clear with this? Now, what is appreciation? How do you calculate appreciation? Appreciation is equals to market price minus SAR price. Acha. Don't you think in this example, same thing we did? Let's say the SAR price is 200. After vesting period of 1 year, the market price increased to 350. How do we calculate appreciation? We simply did 350 minus 200. So appreciation is your 150. So how do you calculate appreciation? Appreciation is equals to market price. In our example, 350 minus SAR price 200. So the appreciation is your 150 rupees. I hope this is clear. Trust we already know. Some more definitions are given. If company is implementing the schemes, then we have to appoint a trust properly made under Indian Trust Act to implement any of this scheme. Acha, what do? They hold shares, they purchase shares, and they transfer shares, and they manage any of this scheme. So basically, I think we are done with all the definitions also. Only few. Acha, appreciation. We all know what do you mean by appreciation. Appreciation means that increase in the market price. So how do you calculate appreciation? Market price minus SAR price. Market price minus SAR price. That is known as your appreciation. So basically, we are done with almost all the definitions also. Now coming to some special points specifically for SAR. Specifically for SAR, first thing, SAR can be two types, either cash settled or equity settled. But under this regulation, we are mainly talking about equity settled SAR. And whenever we will launch SAR scheme, we have to give the full implementation process in the scheme. So first thing, whenever we will launch this scheme, we have to give the full details in the scheme. Secondly, we cannot launch SAR scheme without doing all the disclosures to the grantee. Matlab all the required disclosures, all the information regarding SAR, we have to disclose to grantee. Grantee means the person, the employees to whom we are giving the SAR. Minimum vesting period is given 1 year. Just remember, ESPS के लिए भी minimum vesting period was 1 year, and for ESOS also minimum vesting period was 1 year. Same vesting period is there. Remember, for ESOS also minimum vesting period 1 year. For ESPS also minimum vesting period 1 year, and for SAR also minimum vesting period 1 year. Acha, okay, this is minimum. Now company can opt for longer SAR also. If company wants, company can specify longer vesting period also. Now, before settlement or allotment. Now, let's say today 2025 December mein you got SAR with the vesting period of 1 year. 1 year, which means when you can get the benefit of that SAR after 1 year, that is December 2026. So before you exercise the option and before you get the allotment of shares, you are just a SAR holder, you are not the shareholder. So before you exercise your right or before settlement, you will not get any voting right, you will not get any dividend, or you will not get any share benefit. That's all about SAR. Now the last two scheme is your JABS and RBS. What is JABS and RBS? Now just understand, imagine this is company or trust. Either company implement these two schemes, JABS and RBS, directly or through trust. Just imagine this is company and this is bechara employee. This is bechara employee. Now this employee is scared. What if I need some emergency fund? Let's say example, medical emergency. Some emergency can arise, na, family emergency, medical emergency, etc. Some accident happens, suddenly I need 2 lakh rupees for operation. From where will I bring? Secondly, he is worried about retirement funds. Retirement matlab after 50, after 60, when I will retire, how will I manage my expenses? So he is worried about these two funds. So company launched two schemes. One is JABS and one is RBS for the benefit of the employee. JABS means General Employee Benefit Scheme. RABS means RBS means Retirement Benefit Scheme. ठीक है? So both are same. The only thing is कि JAB is used for emergency fund of employee and RBS is used for retirement fund of the employee. So what are we saying? Company or trust make a fund. So imagine this is the fund, and they make a fund. They put money or shares in this fund, and this fund is used for the benefit of, for the medical emergency or for any emergency of employee. Then this fund is known as JABS, General Employee Benefit Scheme. And on the other hand, if we launch a scheme, under that scheme we made a fund. In that we have put money or shares, and this fund, if we will give to the employees for the retirement benefit, then it is known as RABS, RBS, retirement benefit. That's all. So we will do the definition of JABS and RABS. JABS and RABS found funny, but it means General Employee Benefit Scheme and Retirement Benefit Scheme. First thing, what is JABS? JABS is the scheme made by company for benefit of employee only for any medical emergency or any other emergency. ठीक है? Only for emergency fund of employee. ठीक है? तो JABS is a fund made by company for which in that fund there are shares and money which we use for employee welfare only for these purposes. Any emergency, for example, healthcare emergency, hospital, sickness, accident, disability, death, all are emergency na. Scholarship के लिए भी we can use. So this JABS का money we can use only for the following purpose: for the healthcare, hospital, sickness, accident, disability, death, and scholarship of employee. Okay. Now what is RABS? RABS only for retirement benefit. After retirement, for example, pension, gratuity, IT rules, it's just like that. Okay. Now what is RABS scheme? RABS, retirement benefit, is a scheme made by company where we use the shares in this fund only for providing retirement benefit to employee. That's it. JABS and RBS is pura same to same, copy paste. The only difference is the shares in JABS fund can be used only for emergency of employee, and the shares and money in the RBS can be used only for the retirement benefit of employee. That's it. That's the only difference between JABS and RBS. JABS is like a welfare fund of employee during while they are in employment. RBS is like benefit for employee after their retirement. Okay? Otherwise, etc. All other thing is same about the JABS and RBS. Now, some other points about JABS. First point about JABS is that JABS must include complete details. Whenever we will launch a JABS scheme, in that JABS scheme, we have to give complete details about the implementation. Secondly, JABS scheme cover only following emergency benefit of employee: healthcare, accident, disability, death, scholarship, or medical or any emergency. That's it. Okay. Now, most important 10% ki limit is there. Shares, the JABS shares must not exceed 10% of the total assets of schemes. Okay. So imagine this is the overall fund and shares of the schemes of the JAB scheme. Now, out of this total asset, here in the scheme, imagine cash is also there, shares are also there, other investments are also there. So what are we saying? Out of total asset of the scheme, maximum 10% can be the share of our company. Okay? So you cannot completely rely on the shares of our company in this JABS scheme. Out of the total asset of the scheme, maximum 10% should be the shares of our company. Other things, rest cash should be there. Let's say total asset in the scheme is 100 crore, or let's say 10, बहुत ज़्यादा हो गया 100 crore, let's say 10 crore. Now, out of 10 crore, maximum 1 crore should be the shares of our company. The rest 9 crore should be in the form of cash or bank balance or any other investments. Okay. So, maximum 10% of the total asset of scheme should be in the form of shares of the company or our holding company. Now, this asset we will take either book value or market value or fair value, whichever is less. Acha, total asset, how we will take? Total asset, we will take either which value we will take, market value we will take, or book value or fair value, whichever is lower. We will see total asset at book value, total asset at market value, total asset at fair value, whichever is lower will be taken into account. And lastly, we need certification from secretarial auditor that this 10% limit is not exceeded. Whenever we will launch JAB scheme, secretarial auditor who is practicing CS have to sign and give that yes, company is complying with the 10% limit. It is not exceeding the 10% limit, and this certificate must be played at the time of adoption of balance sheet. The time when balance sheet will be adopted by the shareholders, at that particular time, we should place this certificate also, certificate given by secretarial auditor for consideration. Now, talking about RABs, most of the things are similar with JABs. The only difference. Hello everyone, how are you all? I hope you're doing great. Let me know in the chat box if I'm properly visible and audible to all of you, so that we can start our today's session of derivative. Hello everybody, how are you all? Quickly let me know in the chat box if I am properly visible and audible to all of you, so that we can start our today's session. In the previous session, there was a power cut, so due to that, automatically the live class ended, and then I had to create the link again immediately after, like within 10 minutes, power came back. So then I created the link again now. So let's start again. We really hope for the next 1 hour at least, the power should not go. Yes. Quickly share the link of the class to all your friends so that we can start our derivative practical. So few things, derivative is very important for your examination, and approx 10 to 20 marks question can come from practical questions. You have to practice in examination. Do carry calculator for all the calculations. Make sure calculator is must. Carry calculator in your theory paper also, in your practical paper also. For all the examination, you need to carry calculator. Okay, I have given this PDF. I have sent this derivative ka practical PDF already in the Telegram groups. If you're not in the Telegram groups, you can text me. I'll add you in the Telegram group, and this PDF of derivative practical is also there. So without further ado, let's get started. First thing, okay, today's derivative session will only be live. Today's derivative session is going to be live only. So do share the link to all your friends so that everyone can join, and do inform that. Do inform everybody. Great. So now guys, today we are going to study what do you mean by derivative and how to solve derivative practical question. For that we have to understand, see, whenever we talk about a transaction, there can be two type of transaction, spot and future or forward. Spot means when everything happens today only, on the same day. Let's say I contracted with Chetna to purchase 100 grams of sugar. So I contracted with Chetna to purchase what? 100 grams of sugar at the rate 50 rupees each. At the rate 50 rupees each. Now, when we enter into contract today on 10th December, so on the same day she will deliver me the sugar, and on the same day I will make her the payment. So everything happens on the same day. This is known as spot delivery transaction. This is known as spot delivery transaction. Spot delivery means same day delivery, same day payment. Everything is happening in the present, today only. Nothing is, nothing has to be done later in the future. Today I entered into contract with Chetna to purchase 100 grams of sugar. Today contract happened. Today she delivered me the sugar, and today I made the payment. This is spot. Now, what do you mean by future or forward contract? Future means, let's say I entered into contract with Chetna to purchase 100 grams of sugar at the rate 50 rupees each. But we entered into contract today, that is on 10th December. But the delivery and the payment, has to be made after 3 months. After 3 months, let's say on 10th of March. This is known as forward or future transaction. Forward means when we enter into contract today, but it has to be performed on future. We are not performing now. We are just making a deal today. So I am making a deal, Chetna deal. Today I am making a deal with Chetna that Chetna, I will buy 100 grams of sugar from you at the rate of 50 grams, 50 rupees each gram. Sorry, let's make kg. That will sound more logical. So I entered into contract with Chetna. I will purchase 100 kg sugar from you at the rate of 50 rupees each kg. But I said, Chetna, this you have to give me after 3 months on 10th March, and on 10th March I will make you the payment. This is known as forward or future contract, because we are entering into contract today, but it has to be performed on future. Acha, spot mein what was happening? Today only we entered into contract, and today only we performed the contract. Everything happens spot. So spot, you understood what is spot transaction. In this chapter, we are not going to study about spot transaction. We are going to study about forward or future transactions. Okay. Now, let's take an example. This is Chetna is seller here, and I am buyer here. I am buyer, Chetna is seller. In this particular case, now let's time travel. Now let's say today is 10th March. Let's time travel, and we are 3 months ahead. Now today is 10th March. On 10th March, Chetna will purchase 100 kg sugar from market. Chetna will purchase 100 kg sugar from market and then sell it to me, because remember, she has to sell me 100 kg sugar. Now let's say current market price of sugar is 60 rupees each kg. Current market price is 60 rupees each. Chetna will have profit or loss. Tell me, think about it and tell me. Very basic transaction. I entered into contract with Chetna to purchase 100 kg sugar at the rate 50 rupees each. We have contracted where Chetna said she will sell me sugar at the rate of 50 rupees each. 50 rupees each gram after 3 months. Now, after 3 months, the current market price of sugar is 60 kg. Now, don't you think Chetna will suffer loss? Why? Because she has to purchase from the market and she has to pay 60 rupees. She has to purchase for 60 rupees per kg, and she will sell it to me at the rate 50 rupees per kg. So, she will suffer loss. How much loss, ma'am? 60 minus 50, that is 10 rupees per kg ka loss she will suffer. 10 rupees per kg, and total I purchase 100 kg, so total 1000 rupees ka loss she will suffer. This is all about forward or future contract. Are you understanding? Forward or future contract. Now, acha, what is the difference between forward and future contract? See, when we these kind of deal privately outside stock exchange, this is known as forward contract. So let's say me and Chetna privately we entered into this future contract that okay, I will purchase 100 kg sugar from Chetna after 3 months. We are not doing this through stock exchange. We are doing this outside stock exchange. So it is known as forward contract. But if we will do this transaction through stock exchange may be lot of future trades are available. If we will do this through Bombay Stock Exchange, through National Stock Exchange, through stock exchange, if I will purchase future ke contracts, then it will known as future contract. The only difference between forward and future is if you enter into that future wala transaction outside the stock exchange, it is known as forward contract, and if you do it through stock exchange, then it is known as future contract. I hope you are clear about forward and future contracts. Okay, so now guys, in this particular transaction, forward contract, don't you think here, if after 3 months, no matter what is the current market price of the sugar, Chetna has to sell me sugar. So many S are there. Oh, I'm very confused between sir and sure. I hope you ignore that. So after 3 months, no matter what is the current market price of sugar, Chetna has to sell me 100 kg of sugar and I have to buy 100 kg of sugar. So in forward and future contract, it becomes obligation for both the parties to perform. You cannot deny later on. Later on, you cannot back off. Later on, you cannot say, no, I will not purchase. You have to purchase. So what are we saying here? Let's take an example. I purchase 100 kg sugar from Chetna. Okay, I entered into contract to purchase 100 kg sugar from Chetna at the price of 10 rupees per kg. And we said that, okay, I will purchase this on 31st March, matlab after 3 months. So after 3 months, doesn't matter what is the current market price, it is the obligation of both the party to perform, because we entered into contract already today in December. Already we entered into contract. Okay, now after 3 months, we have to perform no matter we are having profit or loss. Okay, doesn't matter you are getting profit or you have to suffer loss, you have to contract. It is compulsory, it is obligatory once you entered into future transaction. So after, when the expiry date will come, you have to perform. When the exercise date will come, you have to perform the contract. Okay, now in this case, in the same example, I entered into contract with Chetna to purchase 100 kg of sugar at the price of 10 rupees per kg. So we entered into contract at what price? At 10 rupees. Okay, this is known as exercise price. This is known as what? This is known as exercise price. Okay, and when we have to exercise it after 3 months on 31st March, this is known as exercise date or due date, you can say. Okay, now let's say on due date, on 31st March, we have time traveled and we have come to 31st March. The current market price of the sugar is 15 rupees per kg. Now, don't you think Chetna have to purchase it from the market by paying 50 rupees, and then she has to sell it to me and she will get only 10 rupees. So it will be her profit or it will be her loss? Yes, you got it correct. It will be her loss. How much loss? Ma'am, she has to purchase from market at current market price of 15 rupees and she will sell it to me for 10 rupees. She will suffer loss of 5 rupees per kg. How? Loss of seller. What is the loss of Chetna? 15 minus 10, that is 5 rupees per kg ka loss she will suffer, and total 100 kg sugar was there. So total loss suffered by her is your 500 rupees. Let me know in the chat box if this much is clear so that we can move forward. If this is clear so that we can move forward. Yes. Yes. Okay. So now, yes. So let's take an example. Just like we took the example of sugar. Acha, first thing, forward and future contract you can do in anything. You can do in shares, you can do in securities, you can do in currencies, US dollar, yen, pounds. You can do in commodities, sugar, wheat. You can do in metals. you can do in gold, silver, copper, anything, any commodity, oil, crude oil, all these things, everything में, anything में forward and future contract can be done, be it whether in security or currency or commodity or anything. So can we do future forward contract on sugar? Yes, you can do. Same way you can do future forward contract on shares also. So let's just replace sugar with shares. So let's say this is me. I entered into a future contract to purchase Reliance का share. ठीक है, to purchase Reliance का share. How many number of share? 100 shares of Reliance. At what price? Let's say 2000 rupees per share, but not today. After 3 months on 31st March, this is known as a future contract because we are not performing it today. We are performing it in future after 3 months, that is on 31st March. Now, after 3 months, doesn't matter what is the current market price of Reliance, both the party will be under obligation to perform the contract, no matter who is suffering loss, no matter who is getting profit. Now, you got this transaction. Here, I entered into transaction to buy 100 share of Reliance at the price of 2000 rupees after 3 months on 31st March. After 3 months, this is a future contract. Now, let's time travel. Now, let's say today is 31st March. 3 months completed. Now today, let's say current market price of Reliance is 2100 rupees. It increased by 100 rupees. Okay. So now let's say today, current market price of Reliance is 2100 rupees. Price increased. Yes. Price increased. What was our exercise price? Our exercise price was 2000, and what is the current market price? The current market price is 2100 rupees. Now don't you think so? This seller who sold future contract, this seller has to purchase the shares at the current market price and has to sell me at the agreed rate. Seller agreed to sell me at 2000 rupees. Now he has to sell me at 2000 rupees, and for that he will purchase at the current market price and then he will sell me at the exercise price. Who will get profit? Who will get loss? Calculate the profit and loss. Very easy, ma'am. Now seller has to purchase at 2100 rupees and he will sell me at 2000 rupees. How much loss he will suffer? He will suffer loss of 100 rupees per share. Are we clear with this? Because he has to purchase at 2100, he has to sell at 2000. So how much loss he will suffer? 100 rupees per share. And total how many shares were there? 100 shares were there. So into 100, total 10,000 ka loss he will suffer. Okay. And don't you think his loss is my profit? In future contract, one party's loss is another person's profit and one person's profit is another party's loss. Now, don't you think I can do the same thing? I got the share. I purchased the share at the rate 2000 rupees. Now, I can sell it at the current market price. The current market price is 2100 rupees. So, I can sell it. So, I will simply get 100 rupees profit per share. So, total 100 shares may I will get 10,000 ka profit. So, in this particular future contract, seller will suffer the loss of 10,000 total and buyer will get the profit of 10,000. So, seller's loss is buyer's profit and buyer's loss is seller's profit. I hope this is clear to you. Now, let's say case 2, scenario 2. Ignore case 1. Let's ignore case 1 as of now. I have removed case 1. Now, see only case 2. Look at case 2. Let's say after 3 months on 31st March, the current market price of Reliance is 1500. The current market price has fallen down. Okay. Now, this seller will say, balle balle. Seller will be super happy. Seller will be like, oh, I have entered into contract to sell Reliance ka share at 2000 rupees and current market price has fallen down to 1500 rupees. Which means what he will do, this seller will apply his brain. He will purchase the share at the current market price. He will purchase it for 1500 rupees and then he has to sell it at the agreed price. Whatever price, exercise price was fixed, he has to sell it at the agreed price, which means he will purchase for 1500 rupees and he will sell it for 2000. Guys, he will have profit of 500 rupees per share and total 100 shares. How much profit he will get? He will get 50,000 ka profit. So how much seller will get profit here? Seller will get profit of 50,000 rupees, which is buyer's loss. So in this case, buyer will suffer the loss of 50,000 rupees. Are we clear with this? Are you okay? Basically, now in this particular future and forward contract, you will be given this question where number of shares will be given, buyer seller will be given, current exercise price will be there, and current market price will be there, and then you have to calculate the profit and loss of each party. That's all you have to do. So I hope you understood this. It's simply like calculating profit and loss. It's like calculating profit and loss. Because forward contract, once you enter into future or forward contract, it becomes obligation on you to perform on the due date. It becomes obligation for both the parties, for the buyer also, for the seller also. So basically, if I entered into contract with a seller to buy 100 shares of Reliance at 2000 rupees after 3 months, which means after 3 months, I will also be obliged to purchase the share. I cannot say no. And seller will also be obliged to sell this 100 shares. Seller also cannot say no. And this is all about future and forward contract. This is all about future and forward contract. Quickly let me know in the chat box if this calculation of profit and loss for future and forward contract is clear to you. And then we will do for future and forward ke questions, and then we will do option ke questions. Okay, so we are done with the concept of future and forward. Let's do some questions. Option we will do later. Call option, put option we have to do. Call option and put option. But before that, I want to do one question with you. Okay, now okay. Yes, everybody, let me know in the chat box if this is clear to you. Yes, okay. Now, we will do some question of future. See only question number 1. Ignore everything else. Ignore everything else. Just see point number 1. There is a question given. In this question, they are telling you that you are buying future contract. ठीक है? So you are buying future contract. ठीक है? Now, the exercise price is 200 rupees and the current market price on the due date is 210 rupees. That's it. Don't see anything else. Don't see anything else. Okay. Yes, you can get additional question on derivative, Amulya. I'll send it in the group. Now, come here. What are we saying that in the first point, you are entering into future contract to buy shares and the exercise price is 200 rupees and the current market price is 210 rupees, which means I entered into contract to buy at the rate exercise price. What is exercise price? 200 rupees, which means I have right to buy in future. In future, I have right to buy at the rate 200 rupees. Exercise price means at what price I have right to buy. That is exercise price. At what price we entered into contract. Now, I am the buyer. Okay, I am the buyer. Now they are saying that current market price on the due date is 210. Matlab, let's say the future is for 3 months. After 3 months, the current market price is 210 rupees. After 3 months, the current market price is 210 rupees. In that particular case, let's say this is the seller. Seller has to purchase from the market at 210 rupees and has to sell it to me at 200 rupees. So seller will suffer loss of how much? Seller will suffer loss of 10 rupees per share, and that will be my profit. So how much profit I will get in this? 10 rupees. Very simple. Don't you think, like, ma'am, extremely simple? Yes, it's very simple. Basically, I have right to purchase the share at 200 rupees and the current market price is 210, which means I can sell it in the market at the current market price 210. Simply, I will get the profit of 10 rupees. And you know one thing, guys, in these kind of transaction, you don't take delivery. These are not delivery based transaction. You just settle the difference between. So what do you mean by this? Basically, I will not get the delivery of the share. I will just get the profit or the loss difference. We settle in the differences. Okay, so let's say here, what are we saying? Yes, I will not get the share. It's not like I actually have to get the share at 200 and then I will sell it at 200. Basically, it gives me right to purchase share at 200, and I have right to sell it at the current market price. So it will be settled in difference, means simply they will directly give me the profit of 10 rupees, and the seller will suffer the loss of 10 rupees. So in this particular question, they have to tell you, you have to calculate profit and loss. Acha, profit and loss of whom? Of buyer. So we simply calculated buyer will get the profit of 10. So if it's profit, I have written plus, and if it's loss, I have written minus. I hope this is clear to you. Let's do one more question of future ka buy. So do question number 6. You have to do question number 6. See only the question number 6. See only question number 6. Don't see any other question. In question number 6, I have bought a future contract at the exercise price of 200 and the current market price is 60. Which means, imagine I will buy at 200 and I will sell at 260. In short, exercise price means 200, means I have right to buy at 200, and current market price 260 means I can sell it at 200. Seedha I will make 60 rupees ka profit. So how do you calculate profit and loss? Profit will be your plus 60, means you will get profit of 60 rupees. Are we clear with this? Very easy, ma'am, understood. Let's do one more future ka buy question. That is question number 15. Only see question number 15. Don't see anything else. Now in question number 15, I have entered into a future ka buy contract, which means I have entered into future ka buy contract. I am buying. What is the exercise price? 200, which means I am buying at 200 rupees. At what price I am buying? Exercise price. So I am buying at 200 rupees, and then current market price is 150, which means I am selling at 150. So you have to calculate profit and loss. So very simple, I am buying at 200, I am selling at 150. So in this case, I am suffering loss of 200 minus 150. That means I am suffering loss of 50. That is minus 50. Minus 50. Acha, last question I want you to calculate. Phatak se, I am entering into future ka buy contract at 200 rupees exercise price. So basically I am entering into contract to buy at 200. I am entering into future contract to buy at 200, and after 3 months, the current market price is 140, which means I am selling at 140. I am buying at 200, I am selling at 140. So what is my profit and loss? Very simple. Buying at 200, selling at 140 means loss. How much? 200 minus 140, that is you will suffer 60 rupees ka loss. You have to suffer 60 rupees ka loss. I hope everybody is clear with this. It's very easy to calculate future mein profit and loss. But till now we have done only future ke buy contracts. Now we will understand future ke sell contracts. Acha, in this 4 transaction you were buyer. In this 4 transaction na, I was buyer, because you are buying na, you were what? Buyer. Now same we will do future ke sell transactions, which means you are seller. So think from the point of view of seller. Okay, I will highlight it with green color. This is future ka sell transaction. Okay, and this is, I will highlight it with another color, pink color. This is future ka sell transaction. This is future ka sell transaction. This is future ka sell and future ka sell. 4 questions are there with respect to future sell transaction. Now you have to think from the point of view of seller, because in this question you are not buying future, you are selling future. Okay, so in this I have entered into future contract to sell one share at the price of 200. Exercise price is 200, which means I am selling at 200. So if I am selling at 200, at what price I am buying? I am buying at the current market price. So I am buying at 230 and selling at 200, just opposite. Okay. Achha, when I was buying at the exercise price and selling at the market price. But when I am selling at the exercise price and buying at the market price. Just ulta, just opposite. Okay. So I entered into a contract to sell a share at 200 rupees, means I am selling at 200 and I am buying at the market price. So I am buying at 230, selling at 200. Am I getting profit or loss? If you get the answer, you can drop the answer in the chat box before me, if you're able to calculate before me, and it's very simple to understand. So basically, buy at 230, sell at 200. I am suffering a loss of 30 rupees. Your answer is minus 30. Next question, I want you to calculate and drop the answer in the chat box. I'm entering into a future sell transaction to sell at 200 and I am buying at market price, that is 300. So how to read the question? See, in the question they will tell you that you are entering into future transaction, you are buying or selling, that they will tell you in the question, and they will tell you exercise price and they will tell you current market price. These two price will be given in the question. Now you have to do your analysis that you are selling at the exercise price always. Okay, so you are selling at the exercise price, then buying at the market price. So I am buying at 300 rupees and selling at 200 rupees. In that particular case, what will be? There will be loss of 100 rupees, not profit. Why? Because I'm buying for 300 rupees and selling for 200. That's how profit. It's loss. It's loss of 100 rupees minus 100. Guys. Now see, whatever transaction we enter into, that we do at exercise price. Okay? So if here it is written we are selling, then we are selling always at the exercise price. So we are selling at 200 and we are buying at 300. So here we will suffer loss of 100 rupees. Are we clear with this, Amulya and Priya? Next is one more question for you, question number 20. So if we are doing future ka sale transaction, we are selling at the exercise price 200 and then we are buying at the market price. Okay, this is your exercise price and this is your market price. Now, I am selling at exercise price, which means I am selling at 200 and which means I am buying at 100. Simple, buying at 100, selling at 200. So I am getting a profit of 100. So it is plus 100. Same way last, I am selling at 200, market price is 250, which means I am buying at 250, selling at 200. Seedha I am suffering a loss of 40 rupees. With this, we are done with future K contracts. Simply this question will come where they will tell you whether you are buying future or you are selling future. They will tell you whether you are buyer or you are seller. Then they will tell you two prices. One is exercise price, one is current market price, and then you have to calculate profit and loss. Ma'am, chindi, very easy. If future contract ki practical question will come, now we can easily do it. It's very easy. Okay. Now, guys, exercise price na is also known as strike price. Strike price. So if if instead of exercise price, if question mentions strike price, just understand strike price means exercise price only. They both means one and the same. Strike price means exercise price only. Now, coming towards option. Option, I wanted to be very focused. We are going to understand option contracts, that is call option and put option. Bas, yahi hai. See, आपके derivative ना mainly three topic is there: future, call option, put option. इसी से question will be there: future, call option, put option. We are done with one pillar. We are done with future contract, which is very easy. I hope you're finding it easy. Next is your call option and put option. If you understand call option now, you will easily understand put option because it's just opposite. It's just opposite. Okay. So main we will try to understand call option first. Now, call option. Let's just understand options first and then we will understand call option. Option is same like future contract. The only difference is that in future contract, both the parties are under obligation to perform. Both the parties are under obligation to perform. In future, on due date, they both have to perform. There is no option. It's obligation. कि करना पड़ेगा, खरीदना पड़ेगा. So it's like obligation. But in option, the buyer gets the option. Matlab in future, buyer will have a choice. Option means choice. Buyer will have a choice to either perform the contract or to not perform the contract. Matlab, it is not obligatory for buyer to perform. One party will have choice. One party will have choice. So, if this is an option contract, then it will be performed at the choice of one person, that is at the choice of buyer. Let's just understand this with the help of example. Let's say I am buyer, Ishika ma'am, and let's say Amulya is seller. I am buyer and Amulya is seller. So now in this particular case, let's take an example. I entered into contract with Amulya. Just understand, me, I am the buyer. I entered into contract with Amulya to purchase one share of Reliance at the rate of 2000 per share. Now this 2000 rupees is known as exercise price. Okay? When on 31st March, after 3 months, you will say, ma'am, this is same like future only now. Yes, it's same like future. Just one small difference is there. Not small, but one difference is there. Now, after 3 months, on 31st March, are we both under obligation to perform it? No. One party will have choice. Who will have choice? Always option buyer. Always option buyer has a choice to make. Now, after 3 months, on 31st March, I can make a choice whether I really want to purchase this one share at 2000 rupees or not. If I want, I can exercise my option and I can choose ki yes, give me one share of Reliance at 2000 rupees. I can exercise my option to purchase one share of Reliance at 2000 rupees. Or if I don't want, I will not exercise the option. I will simply say to seller, no, I don't want to purchase. Leave it, scrap it, put it in dustbin. This contract in dustbin. Ek contract dustbin mein gaya chapak. Matlab simple. Are we clear with this? Now here buyer has the option to execute the contract and seller has to obey the buyer. Okay Prabhu, jaisa aap kahe. Okay sir, whatever you say. So it's like Dobby and it's like Harry Potter. Buyer is Harry Potter and seller is Dobby. Jo Harry Potter bolega wo Dobby karega. So buyer has the choice to make. Buyer can either say yes, I will buy, or buyer can say no, I don't want to buy. Whatever buyer will say, seller has to perform. If buyer says, yes, I want to buy this one share of Reliance at 2000, then seller don't have option. Then seller has to sell it. But if buyer says, no, I don't want to buy, then it's okay. Seller, no need to sell. So basically in this option contract, one party has the choice to execute the contract. Now, let's take this example further. So what option I have? I have option to buy one share of Reliance at 2000 per share on 31st March after 3 months. Now let's time travel. Now let's say today is 31st March. We are now 3 months ahead. Today is 31st March. On 31st March, which is also known as due date, the current market price is 2500 rupees. ठीक है, मतलब मार्केट में रिलायंस का शेयर इज अवेलेबल एट 2500 रुपीज. मार्केट प्राइस इज 2500 rupees. Tell me, should I exercise my option or not? Imagine, I have right to purchase something at 2000 rupees when the same thing is available in market for 2500 rupees. Oh my God, the current market price is 25. Matlab, if I'll go in market to purchase this share, na, it will be available for 2500 rupees. But I have right to buy this share for 2000 rupees. Should I exercise my option or not? Yes or no? Apply normal business mind. Profit and loss. Should I exercise the option or not? The answer is yes. Why? Because I'll get profit now. The thing which is available in market for 2500 rupees, I can buy it for 2000 rupees. Of course, I will exercise my option. So in this case, the first question is, will the option buyer exercise his option or not? So the answer is yes, he will exercise his option. And in this case, how much profit I will get? Simply, I have right to buy at 2000 rupees. So I can sell it at the current market price. I will buy it for 2000 rupees and I will sell it in the market at 2500 rupees. So in this case, I will get a profit of 2500 minus 2000 rupees, which means option holder will get a profit of 500 rupees. Acha, now, in this case, I am the buyer of option. I am known as option holder. In your exam, now these two words will be given, option holder and option writer. The person who buys the option is known as option holder and the person who sells the option is known as option writer.
not option seller. Option writer is legally known as, option seller is legally known as option writer. So in this case, I am option holder, Amulya is option writer. Now tell me, I will get a profit of 500 rupees? Yes, because in our option contract, I have right to purchase at 2000 and the current market price is 2500. So I can buy at 2000 and I can sell at 2500 rupees. So I'll get a profit of 500. My profit is option writer's loss. Just understand, option buyer's profit is option writer's loss and vice versa. Option writer's loss is option buyer's profit. Okay. Now, if I am getting a profit of 500, which means Amulya is suffering loss of 500 rupees. This is OH means option holder, OW means option writer. What is option holder ka profit? 500 and what is option writer ka loss? 500. I hope you got it right. Now let's take another scenario, case number 2. Let's say after 3 months on 31st March, current market price of Reliance fell down to 2000, fell down to 1500 rupees. Oh my God. Let's say after 3 months, now the market price of Reliance is 1500 rupees, which means market mein Reliance ka share is available at 1500 rupees. And I have option to buy Reliance ka share at 2000 rupees. My question is, will I exercise my option? Acha, just understand, I have right to buy this bottle at 2000 rupees, but market mein this bottle is already available for 1500 rupees. Will I exercise the option to buy this for 2000 rupees? Of course, no. Now, when the same thing is available in market for 1500, why would I exercise my option to buy the same thing for 2000? So in this case, I had option, but I will not exercise the option. So I will say to seller, no, I don't want to buy. So you don't need to sell this in this case. So if the current market price falls down to 1500 rupees and I have right to buy at 2000 rupees, the point is I will not even exercise the option. I will not even exercise the option. Why would I buy something for 2000 when the market price is 1500, when the same thing is available in the market for 1500? So in this case, I will not exercise the option. And this is known as option contract. So option and futures are same. Everything is same. The only difference is in future contract, both the party have to perform. It's obligatory, compulsory to perform. But in option now, one party, who that one party? Option holder. Option holder have the choice. If he wants, he can exercise the option, or if he wants, he can ignore the option. I hope you understood this very clearly. Now, just one thing. Ma'am, don't you think I am in a better position here? Bechara seller will cry, literally. Seller will cry. Here, I am in the better position. Why I am in a better position? Because I have option. Don't you think you will get that option at a cost? Of course, yes. For example, you take life insurance. So life insurance is like insurance company saying, don't worry, if something happens to you, I will pay you your this much amount, 1 crore rupees. I am in a better position if I take life insurance. But don't you think it comes to the cost? I have to pay some premium to the insurance company. Yes. Same way, in this case, who's taking risk? Seller is taking risk because option is with the buyer. So in this case, buyer has to pay some premium, correct? So in order to buy this option, I have to pay certain amount, non-refundable amount, that is known as premium. Just like you pay insurance premium now. So here to buy this option, you need to pay premium. Now let's just include premium also in this same example. Copy paste same example, just include premium. Just include premium. Now in this same example, my and Amulya example, in order to buy this option to purchase one share of Reliance at 2000 rupees, I paid total premium of 100 rupees per share. Kitna premium I paid? I paid premium of 100 rupees. It's non-refundable. It's non-refundable. You are paying premium. It's like you are buying a lottery ticket by paying 100 rupees. So even if you don't get lottery, lottery purchased you for 100 rupees, that 100 rupees will not come back. Okay. So now I paid premium of 100 rupees. Same question. I have right to buy Reliance ka share at 2000 rupees. So here 2000 rupees is known as exercise price. Now same example. Let's say the current market price of Reliance after 3 months is 2500 rupees. After 3 months, the share price increased to 2500 rupees. So now I have right to buy it at 2000 rupees and the market price is 2500 rupees. The question is, will I exercise my option? Of course, yes, na, I'll get profit. I'm having profit, so I will exercise my option. So I will buy for 2000 rupees and then I will sell it in the market at the current market price. So I will sell it for 2500 rupees. How much profit I will make? I will make 500 ka profit. 2500 minus 2000. I will make 500 ka profit. But wait, we have to calculate net profit. I will say, although I made 500 profit, but don't you think in order to purchase premium, in order to purchase option, I paid premium of 100 rupees also. I paid premium. So net off karke how much profit I made? In reality, I did not make 500 profit. I only made, yes, you are correct, 400 ka profit. Why? Because you have to deduct premium also. 500 ka profit, gross profit I made, but 100 premium I paid, 100 premium I paid. So how much profit I made? I made profit of 400 rupees. Are we clear with this? So what is the option holder ka profit? Option holder ka profit is plus 400, and what is option holder ka profit? Is option writer ka loss. So if option holder is getting profit of 400, then option writer is suffering loss of 400. Are we clear with this? ठीक है? Acha, you will say, ma'am, this option writer has to purchase the share from market at the market price, that is 2500, and then sell it to me at 2000. So option writer is suffering 500 ka loss na, but option writer is getting 100 rupees premium also na. So net of option writer is suffering loss of 400 rupees and option buyer is getting profit of 400 rupees. I hope this is clear to you. Now let's take another scenario. Now let's say you have bought call option at an exercise price of 2000 rupees, which means I have option to buy one share of Reliance at 2000 rupees. And after 3 months, the current market price fell down to 1500 rupees. Oh my God, the market price is 1500, which means the share is available in the market for 1500 and I have right to buy it for 2000. My question is, will I exercise my option? The Reliance ka share market mate is available for 1500 and I have right to purchase it for 2000. Will I purchase it for 2000? I am full. Why should I purchase it for 2000 when it is already available in the market for 1500 rupees? The question is, will I exercise my option? The answer is no, I won't exercise my option. Will the option buyer exercise the option? No, I will not exercise the option. Why would I suffer loss now? So here market price has fallen down, so I will not exercise the call option. Now please understand what is my loss. You have to tell me what is my loss. Can you think about it? What is my loss? You will say, ma'am, no profit, no loss. Now, I did not exercise the option only. No profit, no loss. But think about it very clearly. Did I pay something? Yes, in order to buy the option, I already paid a premium of 100 rupees. So even if you don't exercise your option, your loss will always be your premium amount which you already paid. Are you understanding? Even if you don't exercise the option, the premium amount will be your loss. So how much will be option holders loss here? So option holders loss will be 100 rupees premium ka and option writers profit will be 100 rupees premium ka. I hope this is clear to you. Option holders loss is option writers profit. With this we are done with call option. With this we are done with call option. Nahin, Chetna. I think you are doing piche wala. So yes. Here, how much will be loss of option holder? 100 rupees. Okay. Acha. Okay. ठीक है. Now, very quickly, Chetna, there is only 100 ka loss in this second case. Okay. Now, quickly we will do put option. So, Just a second. खुल जा सिम सिम, खुल जा सिम सिम. Just a second, there is some technical problem. I'm really sorry for it. What happened, brother? Please open. No. Derivative is different and option is different, Chetna. You cannot combine both the questions. Derivative is a different type of contract and option is a different type of contract. Why is it not opening? Guys, it's not coming. I don't know why. I'll try for one more time. If it does not happen, then we are done with like call option ka concept. We have to do put option ka concept and then we have to do questions of call option, put option. That's all in your derivative basically. What should we do? Let me try it one more time. Uh, Let me try to restart this. Some problem is there, guys, with my iPad, so I'm not able to connect it. Is it okay if I upload the remaining of the remaining topic? It will not take much time, maximum like 30 to 40 minutes, maximum 1 hour. Not 1 hour, I mean less than that only for all the topics. Is it okay if I upload the recording of the remaining topics? Hello, hello, hello. Let me try one last time. One more time. मैम जस्ट गिव अप नहीं होगा. बड़े ऑप्टिमिस्टिक हो. रॉक ऑफ 9957 आ गया. देखो रॉक ऑफ बड़ा लकी है हमारे लिए. रॉक ऑफ ने बोला मैम छोड़ दो, नहीं होगा, और वैसे ही हो गया कनेक्ट. ये रीस्टार्ट करने से हुआ है, सो आई रीस्टार्टेड दिस अगेन. ठीक है, पता होता तो पहले ही रीस्टार्ट कर लिए होते. रॉक ऑफ बड़े लकी हो. मैम गिव अप जैसे ही बोला ना उसने, मैम गिव अप, इतनी हंसी आई मुझे. और लकीली एग्जैक्टली उसी टाइम पे कनेक्ट हुआ है. तो दैट्स अ वेरी ऑप्टिमिस्टिक ऑफ यू, रॉक ऑफ. व्हाट्स योर नेम बाय द वे? ठीक है, कमिंग बैक टू द टॉपिक, वी आर डन विद कॉल ऑप्शन. ठीक है, नाउ वी हैव टू डू द पुट ऑप्शन. So now we have to do put option. So call option we have already done. Basically call option means what? Call option means when you buy the option to buy share. ठीक है. अच्छा, put option means when you have an option to sell the shares. That is known as call option and put option. Now everybody very quickly, call option and put option. See, name itself suggests call means aane do, call option. Call option means when you have right or option to buy share. You have option to what? Buy. Call means buy. When you have option to buy share, that is known as call option. And when you have option to sell share, sell. When you have option to sell share, that is known as put option. Call option means buy, put option means buy. Option to buy share, put option means option to sell shares. Okay. Now, let's say this is me, Ishika ma'am, and this is Amulya. Now, I purchased one call option of Reliance का share from Amulya. Now, please understand, in this particular case, I am option holder, Amulya is option writer. I am option holder, Amulya is option writer. Now, in this particular case, I have purchased what? Option, which means Ishika ma'am has option to buy Reliance ka share after due date, whenever will be due date. Let's say it's a 3-month call option. Matlab, after 3 months, I will have option to buy one share, and if I choose my option, then Amulya has to sell the share. Or let's take another example. In the same example, if I purchase put option. I am purchasing one put option. Okay. In the same example, let's understand put option. If Ishika ma'am is purchasing one put option from Amulya, ठीक है? तो I am purchasing one put option on Reliance का share from Amulya, ठीक है? तो who's purchasing? I am purchasing. So I am option holder and Amulya is option writer. Now, what do you mean by put option? Put option means after 3 months, I will have right to sell Reliance ka share to Amulya at the agreed price. Let's say agreed price is 2000 rupees, means 2000 rupees. So, call option means when I have right to buy the shares on the due date. Put option means when I have right to sell the shares on the due date. So, if I have option, put option means after 3 months, if I want, I can sell Reliance ka share to Amulya at 2000 rupees. I have option. And if I exercise my option, then Amulya, who's option writer, has to perform the contract. Let's understand with example. Guys, we are already done with call option ka question. Okay? Now we will do put option ka question. In put option, let's say Ishika ma'am is the buyer and Amulya is the seller. Now I purchased, kahan gaya? Yeah, I purchased what? I purchased one put option. I purchased one put option. Now, what do you mean by put option? Put option means I have right to sell one Reliance ka share at 2000 rupees on 31st March after 3 months. Okay, and Amulya agreed. ठीक है. Now, in this case, who's buying the option? I am buying put option. I am buying put option, so I have to pay a premium. So let's say I am paying premium of 100 rupees per share. Understood? So I am buying put option. Put option means I have right to sell Reliance ka share at 2000 rupees on 31st March after 3 months and pay. I paid today. When you enter into put option, now when you purchase put option, that time only you have to pay a non-refundable premium amount of 100 rupees. So in order to purchase this option, I paid a premium amount of 100 rupees. Now please understand, this 2000 rupees is known as exercise price. This is known as exercise price, or this is known as strike price. This is known as exercise price or strike price. Now in this particular case, let's take an example. On 31st March, after 3 months, let's time travel. Today is 31st March. The current market price is 2500. Acha, what is our exercise price? Our exercise price is 2000 rupees. Now please understand, this is a put option. Put option means you have right to sell for 2000 rupees. You have right to sell for 2000 rupees, which means you will buy at current market price. Are you understanding? So I can buy at current market price from the market for 2500 rupees and I have right to sell it for 2000 rupees. The point is I have option. Please tell me, will I exercise my option or not? Should I exercise my option or not when the current market price is 2500 and I have right to sell it for 2000 rupees. I have right to sell it for 2000 rupees because I have put option. My question is, will I exercise my option? Yes or no? The answer is, will I exercise my option? The answer is no, I will not exercise my option. Why? Why would I purchase? I have to purchase it at a market price. The market price is 2500 rupees. So why would I purchase at 25 and sell it for 2000? It's like apne pair pe kulhari marna. So I will suffer loss now. That's why I will not exercise my option. In that case, what will be my profit or loss? So I did not exercise the option, but still there is some loss that you suffered is the premium amount that you already pay. So when you don't exercise the option, still your premium is always your loss. So in that case, what is my loss? Option holder, that means Ishika ma'am's loss is 100 rupees and that 100 rupees is options writer profit. So in that case, Amulya's profit will be 100 rupees. Now let's take another scenario. Ma'am, what if the current market price after 3 months of Reliance fell down to 1500 rupees, which means I have exercise price of 2000. Exercise means I have purchased put option, which means put option means I have right to sell it for 2000 rupees, which means I will buy it from the market at the market price. So I will buy at the market price and I will sell it at the exercise price because it is a put option. Are you understanding? My question is, will I exercise my option? If I have right to sell this share for 2000 rupees and the same is available in the market at the current market price of 1500 rupees, Will I exercise my option, yes or no? The answer is yes, I will exercise my option. And what is my profit? You will say, ma'am, I will buy at 15, kahan gaya? Yes, you will say, ma'am, I will buy at 1500 rupees, I will sell at 2000 rupees. सीधा सीधा 2000 minus 1500, 500 का profit I will get. ठीक है, तो you will calculate profit 500, but I'll say wait, इसमें से you will minus premium also ना. I paid 100 rupees का premium already. So what is my net profit and loss? My net profit is 400 rupees. Sorry, not 600, 400 no? Pile 400, yes. So in that case, my net profit will be 400 rupees. My profit is option writer's loss. No need to calculate again. Seedha, just opposite. My profit is your loss is my profit. So I am having, option holder is having profit of 400. So what is option writer's profit and loss? Just opposite. Don't apply your brain. Just opposite. I am plus 400, my profit is 400, so option writer ka loss will be 400 minus 400. With this, we are done with the question of call option, put option, done. That's all about derivative. Derivative mein mainly 3 type of practical questions are there: future wala, call option wala, and put option wala. That's it. Okay. Now we will do some question. There is one number sheet given. Isse we will calculate profit and loss in options contract. Future wale we have already done. Now let's do acha. In the question, what data will be given? In question now, it will be given. I will highlight it with a different color, with the blue color, very dark. Okay. I will highlight it with red color. Okay. Orange. Now guys, please listen. We will be doing option holder ke call wale questions. So this orange wale questions will be doing. Okay. This put wale baad mein will do. First we'll do call wale questions. Call option. First we will do call option ke questions and then we will do put option ke question. So come to question number 2, orange. See only orange color. Question will give you data whether you are option holder or you are option writer. ठीक है, so you are option holder, which means you are purchasing the option. Secondly, question will tell you whether you are purchasing call option or put option. First we are doing questions of call option. Call option means you have right to purchase the share at the exercise price. So question will tell you what is the exercise price, and then question will tell you what is the market price on the due date, current market price on the due date. And in options ke question mein premium will also be there. How much premium you paid to purchase the option. This much data will be given in the question. Now you have to calculate profit and loss. You understood what data will be given in the question? In question, they will tell you whether you are option holder or option writer, whether it is a call option or a put option, how much premium you paid, what is the exercise price, and what is the market price. Okay. Now, call option mein you have option to buy at the exercise price, which means I have option to buy at 200 rupees. Which means if I buy at 200 rupees, I will sell in the market price. So I have right to buy at 200 rupees and sell at 220 rupees. Please tell me, first question, will I exercise my option or not? Acha. In options ke questions, don't directly calculate profit and loss. In options ke questions, first check whether I will exercise my option or not, whether the buyer, option holder, will exercise the option or not, and then calculate profit and loss. So always the first question is, will I exercise the option? Yes or no? The answer is yes, I will exercise the option. Why? Because I have right to buy at 200, sell at 220, बढ़ रहा है. So if I am getting profit, then yes, I will exercise the option. Now, how much profit I will get? You will say, ma'am, 220 minus 200, सीधा 20 rupees का profit. Yes, but that's gross profit. 20 rupees ka profit you had, but don't you forget that you already paid a premium of 5 rupees. So you will further deduct 5 rupees. So it will be 20 minus 5. What is your overall profit? Your overall profit will be 15 rupees. Acha. In case option holder has a 15 rupees ka profit, so what will be the profit and loss of option writer? Just opposite. In this case, if I have to make one more column of option writer, I'll simply write here minus 15. What will be the profit and loss of option writer? Minus 15. So option holder ka plus 15, option writer ka minus 15. That's it. Next, see question number 4. In question number 4, you are an option holder, which means you purchase the option of a call option. Call option means you have right to buy the share at the exercise price, which means you have right to buy at 200, so you will sell at 250, 240. I have right to buy at 200, I will sell at market price 240. Will I exercise my option? Of course, yes, because I am getting profit. What is my gross profit? 40 rupees, but in that I will deduct the premium. So my net profit is plus 35 rupees. My net profit is 35 rupees. So if option holder ka profit is 35 rupees, that is option writer ka loss. So option writer ka loss will be 35 rupees. Are we clear with this? Let's do one more question. One more. ये वाला कौन सा क्वेश्चन करेंगे? 12 वाला क्वेश्चन करेंगे. सी क्वेश्चन नंबर 12. ये जो ऑरेंज कलर है ना, दिस ऑरेंज कलर, सी दिस ऑरेंज कलर. We will do question number 12. You will tell me the answer in the chat box. I am option holder. I purchased call option. ठीक है, call options means right to buy the share at exercise price. Exercise price is 200 rupees. मतलब I have right to buy at 200 rupees. ठीक है, तो I have right to buy at 200. So I will sell it at the market price. So I will sell it at market price 180. So is it having profit or loss? Will I exercise the option? The point is no, I will not even exercise the option. The question is why? Because why will I purchase something for 200 when it is already available in market for 180? So in this case, I will not even exercise my option because I have right to buy at 200, but the market price fell down to 180 rupees. So will I exercise the option? The answer is no, I will not exercise my option. But what is my profit and loss? Even if I didn't exercise my option, don't you think I have already paid the non-refundable premium money? Yes. So that premium is my loss and option right is profit. So what is my loss? The 5 rupees premium that I already paid. So what is the loss of option holder? Minus 5. Loss of 5 rupees. And option holders ka loss is option writer ka profit. That's it. Acha, rest call option ke questions you can do. Same questions are there. You can just go through it once. I'm pretty sure you can calculate all the profit and loss on your own. Okay, with this we are done with call options wale question. Now we will be doing put option ke question. All the questions are same. You can just go through it. Answers are given here. You can just tally it. Now we will be doing, guys. Now we'll be doing put option ke question. Everybody. Now we'll be doing put option ke question. Now put option ke kaun se questions hai? Put option ke questions are call, put, all the questions that I have highlighted with the yellow color are put option ke questions. One by one we'll be discussing those. First one is you are an option holder, which means you purchase the option. Now you purchase put option. Put option means you have right to sell at the exercise price, which means put option means you have right to sell the share at exercise price 200. Exercise price is 200, which means you are selling at 200. Are you understanding? You have right to sell at 200 because this is a put option. It's not a call option, it's a put option. So I am option holder, which means I purchase the option, and I purchase put option. Put option means I have right to sell the shares at 200 rupees, and the current market price is 270, which means if I have to buy, I will buy for 270 and sell for 200. The question is, will I get profit or loss? Should I exercise my option? If something which I can buy for 270 and I can sell it for 200, will I exercise that option or not? If I have option to buy at 270 and sell at 200, will I exercise that option? Of course, no. Why? Because why would I buy something for 270 and sell for 200? I will suffer loss now. So in that case, I will not exercise my option. This is the best thing about option contract, that you have option whether you want to execute or not. So I will not exercise my option. Are we clear with this? Now calculate profit and loss. Even if I didn't exercise the option, I still suffer the loss of premium amount, which means will I exercise the option? The answer is no. What is my loss? Option holder ka loss is minus 5, which is premium ka amount, and the amount which is option holder ka loss is option writer ka profit. If option holder is suffering loss of 5 rupees, then option writer will get a profit of 5 rupees, premium wala. Now let's do one more question. You purchase put option. Put option means right to sell the share at exercise price. Question will tell you exercise price. Exercise price is 200 means you have right to sell something at 200 rupees, but the market price is 290. Matlab market mein if you'll go and sell, it will be bought and sold for 290, but you have entered into put option contract. Put option means you have right to sell this share at 200. Will you sell this at 200 when the market price is 290? Of course not now, because otherwise you have to purchase from the market at 290 and you have to sell it for 200. 90 rupees ka loss will be there. Why would you suffer that loss? The point is, will I exercise my option? The answer is no. So still, what is my loss? Premium ka amount is my loss. So what is my loss? Minus 5 rupees premium ka, and that is option writer ka profit. Option holder ka loss minus 5, option writer ka profit plus 5. Now let's do one more question. Let's say I purchased put option and I paid 5 rupees premium and the exercise price is 200 and the current market price is 190. This is your question. Now you calculate on your own and you tell me first yes or no whether we will exercise the option or no or not, and secondly profit and loss. What is option holders profit or loss? Just understand, put option means we have right to sell at the exercise price. Exercise price and current market price will be given in your question. So if I have right to sell this at 200 rupees and the market price is 190, which means I can buy at the market price, I can buy at the market price, and I can sell it at the exercise price. So I can buy it for 190 and I can sell it for 200. Will I exercise the option? The answer is yes, I will exercise the option. Secondly, what is my profit? I will buy at 190, sell at 200. So my profit is 10 rupees. But wait, that is my gross profit. Usme I paid premium also 5 rupees now. So 10 rupees may say you will deduct 5 rupees ka premium. So ultimately my net profit is plus 5 rupees. So what is my profit? My profit is plus 5 rupees and my profit is option writer ka loss. So I option holder will have profit of 5 rupees. So option writer will have 5 rupees ka loss. Same way you can do other put option ke question. They are same. Just amount is different. Just to make you practice. Same. Copy paste. Copy paste question are there. Just numbers are different for your practice. Otherwise concept and everything is same. Now guys, in one more question. In this question, if you can see, we were discussing only from the point of view of option holder. See, option holder, option holder, option holder, option holder, option holder, option holder. Okay. In all this question, they were asking you to calculate profit and loss for option holder. Now we will be doing question where we will be calculating profit and loss for option writer, option writer, option writer. Are you understanding? Okay. Now we'll be doing question from the point of view of option writer. And I want to tell you one thing, and it's good to listen to Ishika ma'am. I'm telling you. Guys, please listen. Even if in question, if they will ask you option writer ka profit and loss, what will be easy for you? First, calculate option holder ka profit and loss and just do opposite for option writer. See, if you will directly think from the point of view of option writer now, you will come towards wrong answer, wrong conclusion, and it will take a lot of time and it will be very confusing. Trust me, I'm telling you, it will be very confusing. So what you do? Just the way you think for option holder now, same way you calculate first profit and loss for option holder. Option holder ke liye you calculate profit and loss, and if question asks you for option writer, then just do opposite. Just do opposite. Let's understand this with the help of example. ठीक है. So question is asking you profit and loss for option writer. ठीक है. We will think about option writer later. First, I want you to calculate profit and loss for option holder. Imagine this is option holder. Imagine this is option holder. Now let's say call option. ठीक है. So I purchased call option at the exercise price of 200 and the current market price of 210, and I paid premium of 5 rupees. These 4 data will be given in your question. Acha. Now what do you mean by call option? Call option means I have right to buy at the exercise price. ठीक है. तो call option means I have right to buy at 200, which means I will sell it at the market price, so I can sell it at the current market price. So I have right to buy at 200. I can sell it for 210. Will I exercise my option? Think about it. I'll get profit now. So will I exercise my option? The answer is yes, I will exercise my option. Now calculate my profit. I will get सीधा I will buy for 200. I will sell for 210, 10 rupees ka profit. But wait, माइनस प्रीमियम, ठीक है। तो ओवरऑल आई विल हैव प्लस 5 रुपीज का प्रॉफिट। हु? ऑप्शन होल्डर, ठीक है। तो ऑप्शन होल्डर विल गेट 5 रुपीज का प्रॉफिट। नाउ इफ द क्वेश्चन आस्क यू व्हाट इज द प्रॉफिट एंड लॉस ऑफ ऑप्शन राइटर, देन डू जस्ट ऑपोजिट। इफ ऑप्शन होल्डर इज गेटिंग 5 rupees का प्रॉफिट, देन ऑप्शन राइटर विल सफर लॉस ऑफ 5 rupees. So ऑप्शन राइटर का लॉस 5 rupees. Simple, 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 easy to calculate. Now let's do one more question. Let's do this one. Which one? Sixth question. Let's do sixth question. It's a put option का question. Put option. Okay. So it's a question of put option where the exercise price is 200 rupees. Market price is 190 rupees and premium that you paid is 5 rupees. This data will be given in the question. Now, one thing, I have right to sell the shares at the exercise price. Exercise price is 200, which means I have right to sell it at 200 and the market price is your 190, which means I can buy it at the market price. Okay? So put option means I have right to sell at the exercise price and I can buy it at the market price. First tell me, will the option holder exercise the option or not? Will the option holder exercise the option or not? Of course, yes. We can buy it for 190 and we can sell it for 200. So total 10 will we exercise the option? Yes. So how much profit will be there? 10 rupees, 200 minus 190, but minus premium. So overall option holder will have profit of 5 rupees. So that will be the loss of option writer. So if option holder will have profit of 5 rupees, then option writer will suffer the loss of 5 rupees. Are we clear with this? Are we clear with this? So if in a question now, if they will ask you to calculate profit and loss of option writer, then don't directly go for option writer. First calculate profit and loss of option holder and then just reverse it and that will be your profit and loss of option writer. I hope you understood this question. That's all about basically your call option, put option and your what? Future contract. Now guys, some past exam question I will discuss. Similar, everything is similar. See this past exam question, very much similar, almost same. 2 points I will discuss, 2 points I have already solved the answer here, so you can just cross check it. This is a past exam question. No new concept will be done. Your whole concept of derivative is done. Whole concept is done. Now just we need to practice the question. That's it. So there's this question of June 2019. Now they are asking you what are option contracts. So there's a theory question from lesson number 2. You can go and read the definition of option contract. So along with practical, now they can ask you derivative ki theory also. So you can just read it from the material. Now you have to calculate profit and loss for each investor. Okay, you have to calculate profit and loss. Now first one, Mr. X. Imagine Mr. X writes. Acha, question will be given whether you are buying option or you are writing option. Write means you are option writer. Writes means whether you are option holder or writer, you are option writer. ठीक है? Which option you are writing? Call option ki put option? Call option. ठीक है? What data we got? Whatever data we are getting now, we will put it in the table. So let's make a table. Now in question number 1, you are option holder or option writer? You are option writer. ठीक है? Whether it is a call option or a put option, it's a call option. ठीक है? Now let's take the data. Exercise price is 60, premium is 12 rupees and market price is 62. Question में 3 data is given. एकदम easy. Just put it in the table. Exercise price is 60, premium is 12 and current market price is 62. ठीक है? So this data is given in question. It's a past exam question. Let's just put it in the table. Exercise price 60, market price 62, premium 12. This is given in question. This is given in question. Now first you need to calculate whether we will exercise the option, yes or no. Second, option holder ka profit and loss, and third, option writer ka profit and loss. Easy ma'am. ठीक है? It's a call option. Call option means you have right to purchase at the exercise price, which means you can sell it at the market price. So if you have right to buy at 60 and sell at 62, will you exercise the option? The answer is yes, we will exercise the option. What is our gross profit? Gross profit is 62 minus 60, that is 2 rupees ka gross profit. I can buy at 60 and I can sell at 62. So 2 rupees ka profit is there. But wait, you paid premium 12 rupees. You paid premium 12 rupees. So वैसे तो gross profit was 2 rupees, बट उसमें से इफ यू विल माइनस प्रीमियम ना, -12 रुपीज का प्रीमियम ना, अल्टीमेटली इवन दिस यू विल कम इन 10 रुपीज का लॉस. सो व्हाट इज ऑप्शन होल्डर का लॉस? ऑप्शन होल्डर का लॉस इज 10 रुपीज. सो इफ ऑप्शन होल्डर का लॉस इज 10 रुपीज, सो ऑप्शन राइटर का प्रॉफिट विल बी 10 रुपीज. फर्स्ट यू कैलकुलेट ऑप्शन होल्डर का, देन यू कैलकुलेट ऑप्शन राइटर का. ठीक है. अच्छा, इस क्वेश्चन में, इन दिस क्वेश्चन, whether they are asking you to calculate profit and loss for option holder or option writer, they are asking you to calculate for option writer. So option writer ka your final answer is option writer is getting a profit of 10 rupees. That's all. Same way, two more question are given. I'll discuss one more and rest two you can try on your own. I have already given the answers here. Now, Mr. Y buys put option. Now Mr. Y buys put option. Buys means you are option holder or you are option writer. You are buying option. You are buying option, which means you are option holder. अच्छा, which option you are buying? Call option ki put option? You are buying put option. ठीक है मैम. Two data we got from question. What? Number one, that you are option holder. Secondly, which option you are buying? Put option. ठीक है. Now let's just check three things from the question. Premium, exercise price and current market price. Three data will be given in question. Let's just think, see the question. Exercise price 80, question में given. Premium 8.5, okay, ठीक है. And current market price 60. We got all three data from the question. Now let's just put it in the table. Exercise price 80, premium 8.5 and market price 60. Now you can easily calculate. See, this data is given in the question only. Now let's calculate. So it's a put option. Put option means right to sell at the exercise price. So if it's a put option means you have right to sell at exercise price 80, which means you can buy it at the current market price. So you have right to buy for 60 rupees, sell at 80 rupees. My question is, will you exercise your option? Yes or no? Will the option holder exercise the option when you have right to buy at 60, sell at 80? Will you exercise the option? The answer is yes, we will exercise the option. Now calculate the profit and loss for option holder. If we will calculate for the option holder first, then guys please understand. So yeah, we have right to buy at 60 rupees, sell at 80. So gross profit is 80 minus 60, 20 rupees ka you are getting a gross profit. What is your gross profit? Your gross profit is 20 rupees. But wait, usme you are paying 8.5 rupees premium also. So you will do minus 8.5 rupees premium. So ultimately, what is your net profit? Your net profit is 11.5 rupees. Are we clear with this? So what is the option holder ka net profit? Option holder ka profit is plus 11.5 and option holder ka profit is option writer ka loss. So in this question, option writer will suffer a loss of 11.5. But question mein for whom they are asking? In question they are asking profit and loss for option holder. So option holder ka profit, your final answer is your plus 11.5. Are we clear with this? Same way, copy paste. Two more questions are there. Just numbers are different. Otherwise, concept is same. I hope you can read this question and calculate it. Just take out 5 data from the question. Whether you are option holder or writer. First data. Second data. Is it a call option or is it a put option? Third, what is premium amount? Fourth, what is exercise price? And fifth, what is premium price? You will get this 5 data from the question and then you can calculate the profit and loss. That's all. Now guys, there is this one more question. Yes, I will discuss this question. I'll discuss. ठीक है, एक हार्ड क्वेश्चन डिस्कस करते हैं. ये सब पास एग्जाम क्वेश्चन है. ये तो इजी है, ये तो सेम है, ये भी सेम है. कुछ नया अगर है तो ये थोड़ा नया क्वेश्चन है. आई थिंक सो. एक सेकेंड. नहीं, ये भी सेम ही है. बस ना आपको क्वेश्चन, सॉरी, ओनली थिंग इज दैट यू शुड अंडरस्टैंड हाउ टू रीड द क्वेश्चन एंड अंडरस्टैंड द क्वेश्चन. ठीक है. 1 1 1 1 1 1 1 1 1 1 1. This is also same. ठीक है. I will discuss two more questions, and this PDF is already with you, where I have solved all the question myself by making the table. You can just go through it. If you have any doubt in any practical question, you can telegram me or you can Instagram me and you can ask me. I will make an audio note and I will send you. Amulya, I have to reply you. I've seen your message. I'll reply you today. Okay. Now, coming towards one question. This is June 2023 ka past exam question. Now in this question, Rossif wants to invest in the shares of blue chip company Bakwas. However, due to expected outbreak of war, investors are Bakwas. Okay. Acha, wait. Before doing this question, I want you to do one thing. Usually, when do you buy call option? When you feel that market is bullish and when you feel that Reliance ka share will go up, then you buy call option. And when you feel that price will come down, then you buy put option. So generally, when do you buy call option? When you feel that in near future prices are about to go up, then you buy call option. And if in the near future you feel that prices will come down, then you buy put option. Okay. So now let's just understand that in this question, you expect this price will go down in the future. So if you expect that war is about to break and due to war price will go down, which option you should buy? Call option you should buy or put option? You tell me. If you feel price might go down in the near future, price might go down, will you enter into will you purchase will you purchase call option or will you purchase put option? Answer is very simple. Whenever you expect that prices are going down, then you will purchase put option. Okay, so in this case your answer will be he should buy which option? Put option, because he expect the prices to go down. So this kind of question will come. If you expect price to go up, you should buy call option. If you expect price to come down, then you should buy put option. Now second question, if the present future contract are traded at 100, now you have to read this. Ghuro isko, stare at this green highlighted part. Stare at this green highlighted part. You know, they have given it in a very technical language, in very simple word. What does this mean? This means 100 rupees is exercise price. That's it. Matlab itna technical they have given. In very simple word, if I have tell you what is this, this is your exercise price. Seedha, simple. So what they have told you, they have told you that future trades at 100. Future trades at 100, matlab after 3 months, let's say 3 months ka future hai, to after 3 months you can trade it at 100. Matlab this is exercise price. If future are trading at 100, options also 100. Okay, so here this is your exercise price. If this kind of statement will come in your question, you have to think logically and you have to apply your brain and you have to understand that this 100 rupees is your exercise price. We got one data. Okay. Secondly, which option you are buying? You are buying put option. We got it. Okay. You are option holder. You are buying put option and exercise price is 100. Now we need two more data: premium amount and current market price. Okay. At the cost of 1.5%. 1.5%. What is cost of 1.5%? This is premium. So question is same, you know, just they has given in different language, a little difficult language. So if this will come, na cost is given. The cost means premium amount. So here if future is traded at 100 rupees, 100 rupees means this is your exercise price. 100 rupees is your exercise price. What is happening? Okay, so in this case 100 rupees is your exercise price, and if the question says cost is 1.5%, then it means it is premium amount. Okay, it is premium amount. Now 1.5% of what? 1.5% always of the exercise price. Here question says 1.5% of strike price. Strike price means exercise price only, which is 100. Are you understanding? Strike price means exercise price, which is 100. Now what is cost? Cost is 1.5% of strike price, means 1.5% of 100. So 100 ka 1.5% will be 1.5 rupees only. Okay, so your premium is how much? Your premium is 1.5 rupees. Now, question tells you that market price after World War. World War was declared, not World War, war was declared, and after war market price fell down to 97. Matlab price after war came down to 97. What is this? Current market price on the due date. Now you got the market price on the due date. You got all the data. You can easily calculate profit and loss now. Are you understanding? The first thing is, remember you first table, the table that we make, whether you are option holder or option writer. You are option holder. Which option you are buying? पुट ऑप्शन, ठीक है. व्हाट इज एक्सरसाइज प्राइस 100, what is current market price 97, and what is premium? Premium is 1.5. Easy. Now you calculate profit and loss. We got this data from the question. See, exercise price 100 means put option mein I have right to sell it at 100. Current market price is 97, which means I can buy at 97, I can sell at 100. The question is, will I exercise my option? The answer is yes, I will exercise my option. Now what is my profit? So if I'll calculate my gross profit, my gross profit is I will buy at 97, I will sell at 100. So my gross profit is 100 minus 97, that is 3 rupees. But wait, in that I have paid premium also. So minus 1.5 premium ka. So my net profit is 1.5 rupees. That's all. Easy peasy. Ma'am, can we solve this question? Are we getting confident on this question, how to calculate profit and loss? Are we getting what is my net profit? My net profit is 1.5 per share. My net profit is 1.5 rupees per share. Now wait, there is one more data in the question. Question tells you that what will be the gain on itna option. Matlab you are not buying one option, you are buying 1,50,000 option contract. This is not rupees. You are buying 1,50,000 option contract. So in Acha, sorry, one correction. Rupees 1,50,000 के option contract you are buying. अच्छा, one option contract. One option contract is of 100 rupees. So basically, how many options you are buying? 1,500 options you are buying. How many options you are buying? 1,500. So एक option में how much your profit you are getting? 1.5. So into you will do 1,500 rupees. So total how much profit you will get? You will get 22500, 22,500 का profit in total 1,500 shares. One share में basically one option में you are getting 1.5 का profit per option. One option में you are getting 1.5 का profit. So 1,500 options में how much profit you will get into 1,500? That is your total profit will be 22,500. ठीक है. अच्छा, now this question is also same. You can go through this question on your own. This question is also same. Copy paste. Just you have to extract the data from the question. December 23. This is also same. This is also same. This is also same. This question is different. One different hedging question is there. This is a little technical. I want to discuss this before we end the session. I'll just take 10 minutes more very quickly. This is a little different question. That's why I'm discussing this. Rest of the questions are same. So you can solve it. And I have given the PDF also. We will discuss this question. It's hedging ka question. Hedging ka question where first we buy something and then we sell something to cover our profit and loss. Hedging means when you buy one share and you sell another share to cover your profit and loss, to cover your risk, that is known as hedging. So here what happened now, there is a person Agrawal, Ishika Agrawal, purchases 1,000 shares of AB Limited. Matlab we purchased 1,000 shares of AB Limited at a price of 20 rupees. ठीक है, मतलब here we are not buying call option put option. This is not call option put option. No, we are done with call option put option. This is another type of question. In this question right now I am buying 10,000 shares of a company at 20 rupees each. Total how much I am paying? 20 into 10,000, which is your 2 lakh rupees. ठीक है. Now he also obtained a complete hedge of shorting 400 Nifty. Now, what do you mean by shorting? Shorting means selling. See, if you feel कि no, Reliance price will fall down. If you feel that Reliance price will fall down, then what do you do to cover your risk, to cover your loss? You sell down Nifty because Reliance is a part of Nifty now. So what you do? You trade in Nifty. So you bought one share and to cover your loss, you sold Nifty. So it's like you bought one share, you sold another share. Are you understanding? So you sold 400 Nifty at 1,200 rupees each. Are we clear with this? What I did two things. I purchased 10,000 shares at 20 rupees and I sold 400 Nifty at 1,200 rupees. I did two things. Are we clear with this? Yes, ma'am. Now he closes out. Matlab same day I have closed it. Matlab intraday. Same day, at the end of the day, I sold the shares. I sold this 10,000 shares that I bought, and the same day I purchased this Nifty which I sold. Short sale means now I'm selling 400 Nifty at 1200 rupees, and by end of today's trading day, I will purchase that many number of share at the closing price. Are we clear with this? Same day we are closing out the transaction. Now, when we are closing today's closing price, when we are closing today's market, when today's market closes, at the time closing price of share is dropped by 2.3% and closing price of Nifty is dropped by 2%, you have to calculate profit and loss. Now, please understand here what's happening. If you bought share of AB Limited at 20 rupees and they are telling you in question that by the time when the market closes, your closing price fell down by 2.3%, which means 2.3% of 20, matlab 2.3% se gir gaya, it has fallen by 2.3%. Basic maths, what will be the closing price? 20 minus 2.3% of 20. Okay, so you will simply do 20 minus 2.3%. If you will calculate, the answer will be 19.4, which means you are purchasing at 20 rupees and you are selling at 19.4. Okay, so I purchased 10,000 shares at 20 rupees. Total, how much I paid? 2 lakh rupees, and I am selling at 19.4 rupees. Sorry, this is wrong. This is wrong. This, अच्छा नहीं, हाँ, this is correct. हाँ, ठीक है. So I am purchasing at 20 rupees, which means I'm purchasing 10,000 shares at 20 rupees. So I'm paying 2 lakh rupees and I'm buying at the closing price. So I'm buying at 19.54, and total how much I paid for 10,000 shares? 10,000 shares into 19.54, which means 195,400. How much loss I suffered? I purchased for 2 lakh, I sold for 195,400. So I suffered a loss of 4,600 in this share. Now let's talk about Nifty. Nifty, when I purchased, one Nifty was of 1200 rupees. I purchased Nifty at 1200 rupees, but when the market was closing, then it fell down by 2%. So what will be the closing price? Closing price will be 1200 minus 2%, which is 1176. Which means I sold Nifty. I was sorting Nifty. Sorting Nifty means I sold at 1200 rupees, which means I will buy at the closing price. Okay. So I am selling Nifty at 1200 rupees and I will buy Nifty at the closing price. Closing price will be 1176. Okay. So I am selling 400 Nifty at 1200 rupees. So how much price I will get? How much money I will get? 4,80,000. And at what price I will buy? I will buy at the closing price 1176. How many Nifty? Same 400 Nifty. So at what price I am buying? I am buying at 4,70,400. So I am buying at 470 and I am selling at 480. What is my profit? My profit is 9,600 in Nifty. So Nifty mein I had a profit of 9,600 today. Shares mein I had a loss of 4,600 today. If you will set off this, overall my final profit is 9,600 minus 4,600, which is 5,000 rupees. This is my overall profit in this transaction. This is another kind of transaction. ठीक है. अच्छा, one more question. December 2020 का last question of derivative. ये थोड़ा सा अलग है, so I'll quickly discuss this. 5 more minutes. December 2020 का question. This is a little different. This is a little different. Now, please understand one thing. Let's say now, I'll tell you one thing. One particular thing. Let's say I purchased what? Call option to buy one share of Reliance at 2,000 rupees. ठीक है. So I have so usually when do you purchase call option? When you feel now that share price are going up. When you feel that share price are going up, then you purchase call option. So I purchased this call option by paying premium of 10 rupees. How much premium I paid? 10 rupees. ठीक है. So usually now in this call option means, let's say this is a 3 months ka call option. So in that case, after 3 months, I have right to buy Reliance ka share at 2,000 rupees. And usually I will buy call option only when I feel ki oh, share prices are going up. Now let's say after 1 month, I saw share price are going down. Now I am scared. Meri phat gayi. I'm like, no, share price are going down. What should I do? What should I do? Then I have one more option. What I can do, if I don't want this option anymore, I can sell this option to someone else. Are you understanding? So let's say I already paid how much premium? 10 rupees. Now let's say I don't want this option. I don't want this option. I can sell this option to Priya at a premium of, let's say, 6 rupees. Which means now simply I have given my option to Priya. Now Priya is the option holder. Are you understanding? In that case, did I exercise the option? No. Before the due date only, due date will come after 3 months. But let's say just after 1 month only, if I feel no, share price will not go up, it will go down, I can sell my option. Okay. So now I am selling my option. बस 5 मिनट में आ रही हूँ, 5 मिनट. ठीक है. So what are we saying? That we are saying that if I am buying call option for 3 months, which means after 3 months I have right to buy the shares. But if I don't want this option anymore, I can sell it to someone else. I can give this option to someone else before the due date. So let's say after 1 month only, I don't want this option anymore. I sold this option to Priya at a premium of 6 rupees. Okay. Now in this particular case, did I exercise the option? No. What is my profit and loss? Simple. My loss is 10 rupees ka premium I paid to get the option, and I gave my option to Priya at 6 rupees ka premium, which means she gave me 6 rupees premium. So overall my loss is 4 rupees only. Are you understanding? I am not exercising my option. Before the due date only, I am giving my option to someone else. So when I purchase the option, I purchase it for 10 rupees. When I gave this option to Priya, I gave her at a premium of 6 rupees, which means my loss is 10 rupees minus 6 rupees, that is 4 rupees. Can you understand this? Quickly let me know in the chat box if you can understand this. Quickly let me know in the chat box. Quickly let me know in the chat box if you can understand this. Acha, now if you understood this same concept ke upar one question is there which we will solve. Quickly let me know in the chat box if you can understand this. Okay, now please understand. First we will see only put option. कॉल ऑप्शन को एक बार हटा दो या कॉल ऑप्शन को अलग कलर से वी विल डू. दिस इज कॉल ऑप्शन वाला पिंक कलर से हाईलाइटेड. पुट ऑप्शन. ठीक है. Okay. So the thing which are highlighted with yellow color are for put option, and the things which are highlighted for with pink color are for call option. You want to do call option first or put option? Let's do call option first. So what are we saying? You are buying options on Nifty. So you can do trading in Nifty also, just like you do trading in shares. Na? Same way you can do trading in Nifty also. So what are we saying? That let's say you bought call option, okay, of what price? Oops, sorry. You are buying call option of 11,300 rupees. ठीक है. पूरा क्वेश्चन पढ़ते हैं. Let's say Nifty index was traded at 11,025. What was the market price of Nifty on 1st February? 1st February में market price of Nifty was 11,025 on National Stock Exchange. ठीक है. Now you got a put option of at the price of 10,800, which is the expiry date is 28th February. And which is available at 50 rupees. So now here it is given which is available at 50 rupees, matlab 50 rupees premium you are paying. So how much premium you are paying for buying put option? You are paying 50 rupees premium for put option. ठीक है ma'am, understood. Now you also bought one call option at an exercise price of 11,300, which is available at 30 per share. 30 per Nifty, 30 per Nifty. Now what is this 30? This is the premium for call option. Are we clear with this? So now we are buying one put option. Now put option mein what is the premium? 50 rupees, and we are buying call option also. Call option mein what is the premium? 30 rupees. ठीक है. Now Ganesh, you are Ganesh. Ganesh is a trader in the stock exchange. He purchased 2 lot of put option and 1 lot of call option. He is not purchasing one Nifty. He is purchasing 2 lot of put option. Now what is lot, ma'am? Lot is nothing but a group of shares or group of Nifty. One lot में 75 Nifty is there. Are we clear with this? So basically, if I have to tell you in simple and easy language, you are buying what? 2 lot of put option. you are buying 2 lot of put option. ठीक है, तो put option how many lot you are buying? 2 lot. Now lot is nothing but a group of nifty. One lot में 75 nifty is that, और 2 lot में double nifty will be there, 150 nifty. ठीक है, तो you are buying 2 lot of put option. 2 lot of put option means how many nifty actually, for how many nifty you are buying put option? One lot में 75 nifty is there, तो 2 lot में 2 into 75, which means 150 nifty is there. Again, you are buying call option also. You are buying call option also. Acha, how many call option you are buying? You are buying one call option. ठीक है मैम, understood. You are buying one lot of call option. एक lot में how many nifty are there? One lot में 75 nifty are there. So basically how many nifty का call option you are buying? 75. ठीक है, तो how many nifty you are buying? 75 nifty में call option you are buying, and 150 nifty में put option you are buying. This much is clear? Yes ma'am, because we are buying 2 lot of put option and 1 lot of call option. ठीक है, तो 1 lot is equals to 75 nifty, 2 lot is equals to 150 nifty. Now let's read the question further. Now in this particular question, we are saying that on 22nd February, 22nd February means before due date. What was the due date? Due date was 28th February. Before due date only, Nifty was trading at 10,850. मतलब Nifty was trading at lesser price, lower price. So you decided to square off this transaction. What do you mean by square off here? Square off means you are selling your option to somebody else, okay, before the due date only. You did not wait till due date. Before the due date, you are selling your option to someone else. Now, at what price you sold your option? You sold your call option at 80 rupees and you sold your put option at 5 rupees. Now, please understand, this is premium. 80 rupees and 5 rupees is premium. Simple. Let's talk about put option. At what price I bought put option? If you will see the question, I bought put option at 50 rupees and I bought call option at 30 rupees, which means put option में I bought it for 50 rupees, call option में I bought it for 30 rupees. This is call option and this is put option. Okay, now simple, please understand, 50 rupees, 30 rupees is your premium, which means in order to buy put option, I paid a premium of 50 rupees, and in order to buy call option, I paid the premium of 30 rupees. Now, I did not exercise my option. I did not wait till due date. Before due date only, I sold the call option at 80 rupees and I sold the put option at 5 rupees. ठीक है, तो in this particular case, I am selling put option for 5 rupees. I am selling put option for 5 rupees and I am selling call option for 80 rupees. Now, please understand, it's like I paid 50 rupees premium for buying the option and I got 5 rupees premium for selling the option. What is profit and loss? I bought for 50 rupees and I sold for 5 rupees. My loss is minus 45 per Nifty. Per Nifty, ठीक है? Minus 45 per Nifty. Into total, how many Nifty were there? 150 Nifty were there, so into 150. So if I'll do calculator, minus 45 into 150 is equals to, my loss is minus 6750. Understood? Next, let's talk about call option. When I bought call option, I paid a premium of 30, and when I sold call option, I got a premium of 80. Now here I am getting profit. I bought for 30 rupees and I sold for 80 rupees. Now I am getting a profit of 80 minus 30, that is plus 50 rupees in 1 Nifty. Total, how many Nifty I purchased? 75 Nifty. So we will do 50 into 75. 50 into 75. Seedha, I will get a profit of 3750. Are we clear with this? Now, ultimately, I got a profit of 3750 and loss of 6750. So, what is my ultimate profit and loss? 6750. My ultimate loss is minus 3000 rupees. I hope we are clear with this. My ultimate loss is minus 3000 rupees. I hope we are clear with this. And one more thing. You know, when you do trading now, you have to pay a brokerage also. Brokerage is the fees that you pay to your stock broker for trading. And in this, you paid brokerage 100 rupees per lot के transaction में, you know, and buy and sell means you paid brokerage while buying also, you paid brokerage while selling also. ठीक है, तो you paid premium, sorry, brokerage is the brokerage that you pay to your brokers for trading, for buying and selling. So for every buy and for every sell per lot में you have paid 100 rupees का brokerage. So total how much brokerage you have paid? You have bought 2 lot of put option and you have sold 2 lot of put option. How many put option you have done trading? 4. Why? 2 lot of put option you have bought, then 2 lot of put option you have sold. After that, call option, how many you bought? 1 call option you bought and then 1 call option you sold. Total how many lot में trading you have done? 2 plus 2 plus 1 plus 1, which means 6 lot में you have done trading. Buying and selling मिला के, ठीक है? 2 lot of put option you bought, then 2 lot of put option you sold, then 1 lot of call option you bought, then 1 lot of call option you sold. Total 6 lot में trading is done. So how much total brokerage you paid? You paid 6 lot में 100 rupees का brokerage, which means you paid 600 rupees का brokerage. That is also your loss. Brokerage is also your loss. So total how much loss you suffered? Your total final loss is minus 3,600. That's all about this question. So your answer will be, what is my final loss? Your final loss will be minus 3,600. With this, we are done with all the derivative practical. Rest of the questions which you can see in this PDF are same, just numbers are different, and you can practice this on your own. We are done with the whole concept of derivative. I would request you to just go through the theory of derivative from lesson number 2, secondary market in India. Please let me know whether this lecture was helpful or not, so that we can end our today's session. Yes, everybody, and all the very best for the tomorrow's mock test. Just try to do time management. If you find any question difficult, do it in the last. Give some space for it. Do it in the last. First, try to solve those questions in which you're confident, or those questions that you know. Okay, that's it for today, guys. I'll see you all tomorrow. Please drop me a quick message in the chat box if you understood this particular topics in this session. This derivative session was helpful for you, so that we can end our today's session and we will continue this. I will upload rest of the topics in YouTube, and I will send the link in the Telegram group. Acha. Takeover and mutual funds ka short notes and revision video, short revision video I will record tomorrow, and tomorrow I will record it and send it in the Telegram group. ठीक है? इसके अलावा, apart from this, if you need the revision or the notes of any other lesson, drop me a message कि मैम इस lesson का भी please notes. I will try to send every chapter notes, and revision also I will try to prepare as many lessons as I can. You can just let me know which lesson do you want first, or which lesson revision do you want. I will upload it and I will send you the link in the Telegram group. ठीक है? For any doubt, you can contact me over Telegram or Instagram. All the very best for the tomorrow's mock test. I hope you do well. Do let me know after the mock test how was it, how it went, and that's it for now. Yes, I will send additional question for derivative and mutual fund. That's it for now, and I'll see you all again very soon for the module 1 classes in January. Yes, till then, keep learning, keep growing. All the very best. Take care. Bye bye.